Because they came out with their earnings today. There's a Donald Trump component to the offshore wind story as well. When we speak to the CEO tomorrow, nevertheless, we'll see how those shares react at the open, Guy.
Okay, here we go. Time for the Wednesday session. What are we going to see delivered by European equities? First thing this morning, a few surprises yesterday. Let's see what we get today. We're expecting a positive story at the open, and here it is. Time for the European trade to get underway. FTSE 100, absolutely flat as a pancake. We're going to watch that one quite carefully. There's an interesting shell story that we're going to be needing to integrate into that market. There's a few earnings as well. Some of the house builders are out with figures as well today. That may be trickling down into the 250. Stock 600 up by, let's call it 0.1%. FTSE getting a little bit of traction. Maybe we'll see the stock 600 tick higher. The IBEX is up by 0.4% at the moment. Let's see what happens with the DAX. Beaten up with the tech sector yesterday. SAP's been a massive driver of that market, along with the defense names recently. Does that continue today? What happens after we saw that beaten up yesterday? Do you buy the dip in European tech after yesterday's news? The CAC 40 is up by 0.3%. We'll give the DAX just a moment to get itself going. What are we seeing in the sector story? Val, over to you.
Some of them are flat, some of them are green. Currently, we don't have any in the red. We have 11 sectors in the green. At the top of the basket is construction. We also have technology performing pretty well, so it doesn't seem like they're picking up from those negative CoreWeave results yesterday out of the U.S., so tech is trading decently okay. I want to also highlight that energy, while the sector itself is trading little change, we are seeing a big move lower when it comes to Vestas. Okay, I say big, it's down 2%, but at least big for how the market is opening up this morning. But sector focus, looking pretty decent.
Looking pretty decent. I have to say the ones that are standing out to me, at least this morning when it comes to both the Stock 600 and the FTSE 100, is that healthcare is right back in the driver's seat. I'm looking at Novo Nordisk, AstraZeneca, Sanofi, Roche, Novartis. A lot of the fears from the last couple of weeks in terms of the drug pricing, in terms of the tariff risk, seems to be reversing today. But maybe that's all that it is. Maybe it is simply, Guy, just a reversal from the beating they've taken.
Defense has come back a little bit over the last couple of days. Took a bit of a beating over the back end of last week into the beginning of this week. We're starting to see some of that maybe coming back a little bit, which is interesting as well. Some of the retailers are on the front foot in Germany by the looks of things. Not seeing that kind of tech trade coming back. SAP at the moment, I've yet to see SAP open. I've yet to see Rheinmetall open. Some of the autos are not open as well. I want to see where SAP trades after being dinged up, as you say, yesterday in the session. We don't have those numbers at the moment. Looks like the auto sector in the DAX is going to be lower. So we're waiting to see exactly what the DAX does, but it looks like it's taking a while to get SAP open this morning, which I think is, I don't know, could be quite interesting. It's not necessarily the positive sign that you would have hoped for after the stock got beaten up as badly as it did yesterday, and we still don't have a trade. It's taking a while to get the DAX open, and SAP looks like the reason for it. Are we out of the woods yet on that narrative?
Have a little more faith in the Germans. They still have 15 seconds for the index to open up. Maybe we see a little bit more reaction there.
All right, well, we can think about the next catalyst potentially for European stocks, which is maybe more on a geopolitical front with Russia and U.S. meeting in Alaska on Friday. We just got some news crossing the tape that Zelensky will have a bilateral meeting with Germany's Merz today. So a lot of this narrative continuing, and I want to bring this question to our guest sitting around the table, Marina Zavolok, the Chief European Equity Strategist at Morgan Stanley. What kind of catalyst could we get from geopolitics into European equities?
Yeah, I mean, I can't predict what will happen with the conclusion of these talks, but I think if we think about expectations into the talks, we have had some sectors move. The earlier in the year, when there was a lot of anticipation of these peace talks and a lot more kind of priced in for this, it was especially a couple of themes that captured investors' imaginations. It was the idea that Ukraine could be rebuilt if there's any peace deal, and the idea that gas prices in Europe could go down if Russian gas flows resume to Europe. Obviously, you would need a lasting, more than a ceasefire, a lasting peace deal for those things to happen, and it's highly complex. We don't think it's easy, but if the talks go well, let's say in that scenario between the U.S. and Russia, and then let's say then the U.S. and Ukraine, then you could see those pockets of the market, like construction stocks on the rebuild story, for example, chemicals on the lower gas. Those could move. We've already started to see them move a little bit. And to the point you were just making, defense has sold off in anticipation. I think that's a really great buy the dip opportunity.
Buy the dip in defense. Excellent. Okay,
Yeah.
So these valuations on defense, many people are still saying that they're still quite stretched. When it comes to further catalysts for defense, it would come from these infrastructure spending being maybe spent a bit quicker than expected coming out of Germany that would help boost defense stocks further.
Yeah.
What else are the positive catalysts you have an eye on?
I think when people look at valuations in defense, there's a very big misperception out there because it's mostly journalists kind of looking at defense these days that hadn't looked at them for many years. And you're looking at valuations on a 2% of GDP defense spend number because analysts cannot put 3% into their models until they know exactly what that money is going to be spent on. So when we get the German budget, for example, in September, when we start to get the projects details coming out, then you're going to see analysts run that through their models and very significant earnings upgrades in the defense sector, and then valuations will come down, suddenly will look more reasonable. I think also whether or not these talks go well on Friday, Europe still needs to rearm. So there's been a bit of a sentiment dip on the back of the talks, but that in my opinion, is a buy the dip opportunity, and that will pass.
Well, speaking of buy the dip, Marina, just as you were speaking on the defense piece, I want to take a quick moment and highlight what we're seeing in the tech space as well. SAP shares have officially opened higher by about 2%. We'll see if it recovers the almost 7% loss from yesterday. But as I was looking at some of these numbers, I realized that SAP trades at about circa 235 euros in terms of the share price. Apple shares trade at about $230. So I'm going to take the conversion out for a second. They're trading around the same level for an everyday investor who wants one share. When you think about tech from a European versus American perspective, how do you think about asset allocation from that point of view? These are both the mega weights or the heavyweights in their respective indexes. If we're talking about the end of American exceptionalism or perhaps a bigger push into Europe, do you think about tech?
Yeah, I mean, Europe tends to get left behind from investors thinking about tech. People usually think about that for China and for the US. I think about tech in Europe as highly, highly idiosyncratic, first of all. So as far as enablers of AI, you have pockets of that, and we especially like software, more so than semis. So we're overweight software, we're overweight business services, which has some adopter enablers as well, kind of software driven. We're underweight semis. So that is, we think semis in Europe are a lot more cyclical than the semis you have in the US that tend to be more AI driven. But I think the tech story that probably doesn't get enough attention in Europe is on just overall adoption, because we have about, on our calculation, 70% of the index are AI adopters, most of them pretty moderate or high adoption, and the low-hanging fruit in Europe from productivity improvement potential from our demographic challenges is significant.
When you talk about the bid into tech here, one of the big hurdles and detriments or bear cases for American tech is their exposure to the geopolitics, their exposure to other international markets, namely China.
Yeah.
Because Europe is still developing its tech sector, because Europe is perhaps a little bit more insulated, does that actually make them a better bet when it comes to tech because of that more domestic focus?
No, I wouldn't say necessarily. I mean, parts of the European tech sector are highly China exposed as well. So semis, for example, that's one of the reasons that we're underweight the sector, is very high China exposure. Software is a bit more resilient in that regard, so that's correct.
What's the argument for buying European equities at the moment over US equities?
I think you don't.
Okay.
I mean,
so does the gap widen out? The last 3 months, Europe has underperformed quite significantly.
Yeah, I mean, we made a call in March
Yep.
that Europe had peaked
Yep.
versus the US tactically.
Yep.
At the time, people thought I was crazy because that was kind of the peak of euphoria around,
Yep.
fiscal spend and all of that. I think we're maybe a third of the way of giving back that outperformance that we had earlier this year. There's a very nice indicator that we track, which is the kind of like-for-like discount of Europe versus the US. So sector neutral, take out Mag 7 because we don't have anything like that.
Yeah.
And that discount tends to, it's been widening, but it's been widening in a range over 10 years. And when you get to the bottom of that range, it means Europe can outperform the US. That happened last December. When you get to the top, that means Europe euphoria relative to the US has gone too far. That happened in March.
Yep.
We're now 1/3 of the way down. We're kind of like rolling down the hill.
Does it always revert down to the bottom before?
Yeah, I mean, not in a straight line, but yeah,
Okay.
it reverts down to the bottom. We're 1/3 of the way rolling down that hill. And I think the big story is, number one, we don't have as many AI enablers, and AI enablers are driving the earnings growth in the US more so than anything. FX is having a really big issue. So when you look in local currency terms, we have 0 earnings growth. The US has 10%. Very hard to motivate people to buy Europe with those, those optics.
Is there if you're worried about the market going too far in the States, does Europe offer safety? I appreciate that we're probably going to revert back down. I'm curious to know how quickly that would happen as well.
Yeah.
Do you buy on the way down, weirdly, in terms of a risk management option?
I think you buy pockets of Europe. We really like the banks. As I mentioned, it's a really great time to get into defense because of this dip that we've just had on sentiment rather than fundamentals. So there's definitely, in software, there's been a dip as well. I don't think that's justified. So you get into pockets, but then you have a lot of very cyclical, low pricing power, China exposed sectors in Europe that are going to continue to struggle. So that includes the likes of luxury, semis, metals and mining, even energy. We have quite a lot of cyclicals in our index.
Yeah.
Marina, we just had a viewer IBS about a question that they want to pose to you about how intertwined U.S. tech is with this European defense story. So the infrastructure spending, the defense spending happening in Europe, is that something that the U.S. tech companies can capture?
Oh, I mean, that's an interesting question. I would say not yet, but maybe down the line in like 2-3 years' time. I think at this stage, Europe needs to focus on kind of restocking, it's rearming in kind of basic terms. But there is a very significant question about the longer term innovation driver, let's say, from defense spending, because if you look at other examples of where defense spending has ramped up around the world, it tends to be tied together with innovation. But I would think, as with rearming and just equipment purchases, Europe will increasingly want to do a higher proportion of that, rearming and innovation in-house in Europe.
In terms of, if the US goes to the moon, what is the gravitational effect on, if the US equity markets go to the moon, what is the gravitational effect on Europe? Even though it's cyclical, what is the ripple across into global markets? It's not even just...
No, it's positive. No.
Right.
If the U.S. goes to the moon, it is positive for global markets. And let's not forget that Europe's exposure to the U.S. is 1/4 of revenues. So we do have exposure to the U.S. as well, so we benefit from that. So it does have a positive gravitational pull. It's just that Europe doesn't, underperforms on the way up.
Yeah, the gap widens. Marina, great to see you. Thanks so much indeed for stopping by to see us. Marina Zavlok, Chief European Equity Strategist, joining us from Morgan Stanley. Let's take a quick look at the core 6 this morning. We're expecting maybe some core weave effect into names like Schneider Electric. You're seeing a little bit of that. In fact, you could argue you're seeing some of that because you do have a significant underperformance of Schneider versus other areas of the market. Interesting to see chips maybe doing better than maybe some of the data center stories that we are watching on the back of that core weave narrative. Novo's up, LVMH is up. You're generally seeing a bit across the markets. It's interesting that SAP has come back, but it's still not completely come back after the losses that we saw yesterday. We're just talking a lot about defense. Let's carry on that conversation. Chloe Mellie's here with the details.
Good morning, Gary. Yeah, let's start with defense. So we've got a wall of green this morning in defense. Rheinmetall, Hensoldt, and Leonardo are all up this morning by a little bit. Not a massive jump, but we are up 2.5% for Leonardo, the biggest gainer there. This is the same story that we saw yesterday with Donald Trump casting doubt on the ability to kind of, agree with Putin on Ukraine. Moving on to SAP. SAP is coming back. This is a reversal of those software stocks getting hit from this AI threat. So we have SAP up a little bit, about 2% this morning. Moving on to Evolution. Evolution is taking quite a bit of beating this morning, down almost 7%. This is because the executives were secretly filmed discussing the entering banned markets and having games distributed in banned markets like Sudan, Iran, and China. So it is getting a little bit hit today on the back of that. And then finally, Beazley. Beazley is an insurer, specialty insurer, and it's also down this morning, 5.5%. It cut its guidance this morning. It said that the long-term fundamentals for insurance were there, but until then, the market was quite soft. So it is down this morning on the back of that.
All right, Chloe Melly from our equities team walking us through some of those early movers. We thank you so much. Coming up on the program, we're going to bring you a conversation with one of the CEOs. We'll talk to Leonard Birnbaum, the CEO of German power grid operator E.ON, about the company's earnings report. That coming up next. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday, only on Bloomberg. Context changes everything.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back to the opening trade. About 18 minutes into today's session, green on the screen across the board. The DAX rebounding just a little bit after taking a beating yesterday, both on the defense front and the technology front. This morning, it is your outperformer, but I'm going to say not by much compared to yesterday's trade down, or excuse me, higher by about 0.7% this morning.
Let's talk about one big German stock that is out with details this morning. The utility giant E.ON out of Germany, warning that the country risks falling behind on its shift to cleaner energy amid counterproductive regulations and what it calls, quote, vague political pledges. The warnings come as the company reported first half adjusted earnings before interest and tax. They were up 14%. The operating line looks pretty good at 3.82. The EBITDA line about 2% ahead of consensus. The company's CEO is Leo Birnbaum, and he joins us now. Leo, thanks very much indeed for your time this morning. Always appreciate speaking to you. These are decent numbers, and the market certainly sees them ahead of consensus. We're all waiting for the big investment decision that you're going to be making. You're telling us that that's going to come at the beginning of next year. Kind of feels like you're waiting for the politicians to make some decisions. What do you need to see to be able to deliver the kind of investment that Germany needs right now in its infrastructure?
Yeah, we are actually waiting for two decisions that have to be made. One, on the political side, what is it that we really need for an energy transition which is not only sustainable but also cost efficient? And we expect that after the summer, after the review by the German government on the ongoing course of the energy transition, they have started a monitoring process. So that's the one side. So what do we really need? What do we want? On the other side, we see that no matter what politics decide, the need for infrastructure is unbroken and the trend is clearly upward. And here we need to see a better regulation so that after 2028, the current regulatory period is until 2028, so in the years 29 following, we can significantly increase our investments, and that requires a different regulation. So we're waiting for politics to decide on the course, but irrespective of that, for us, the growth story is unbroken, so we are now waiting for the final determination of the future regulation, which then tells us how much we can invest. Okay. But it is important to say that until 2028, the growth case is basically unbroken.
Okay. If you could answer both of those two questions now, and I'm sure you've kind of got an idea of what you think the answer to those questions look like, how much do you think you need to invest? Give us a hint of the scale of the kind of investment that we're talking about here. Your investors are trying to figure out, they're trying to extrapolate forward, they're trying to get an idea of what you are thinking about what those numbers look like. Give me a ballpark kind of figure. What does it look like? I don't want you to jump the gun here, but you must have a number in mind.
Yeah, but I don't want to give you now a precise number because that obviously would be a guidance to the market, which we can only give based on the regulation. What I can tell you is that over the last 4 years, we have doubled our overall investments. We've actually, and if we look at the projections of Eurelectric, our industry association, or the BDW, the German association, we understand that we need to double or triple infrastructure investments versus the historic position for at least 2 decades. So we have a massive growth opportunity in front of us. Now, we as E.ON, we are now on a run rate of 43 billion in our rolling investments planning. We assume that this is going to go up, but if we look at the demand drivers, everything is pointing towards higher demand. Data centers, battery factories, e-mobility, e-transport, everything requires even higher investments than we are currently seeing right now. So the question is, can we finance those higher investments? And that depends on regulation, and this is why we are so adamant on this point this morning.
Leo, hi, it's Valerie from London. I want to ask on that point there. We talked about growth trajectory of your business. I've been reading that the German energy and economic minister is currently preparing a report on German future electricity demand. Do you expect that to be as bullish as what you just said there in terms of demand for your products?
No, quite the opposite. I expect a report which will show that there will be higher electricity demand going forward. It's clear we are electrifying, but it will be lower than the projections that we have seen so far. There's a famous number, that's the monitoring, which I just mentioned on the political decision we're waiting for. We have currently a number of 750 terawatt hours of electricity demand in 2030 on the table. I expect the number to come out smaller, lower. Actually, however, to be very clear, that has a big impact on renewables. If we need less electricity, we need less renewables, that's clear, but it has basically no impact on infrastructure because first, we are on a catch-up mode, and second, for infrastructure, what matters is not the energy consumption, but the peak demand in the market, and the peak capacity is still increasing. We are seeing more megawatts, so in that sense, if we get a lower report by the minister, it will mean an adjustment which will make the energy transition more affordable, but it will not change the growth picture for E.ON.
And when it comes to that infrastructure fund that you spoke about by the German government, it seems a lot of that money is going into other industries, such as railway industries. Do you think E.ON is going to directly benefit from this infrastructure fund?
No, only indirectly. If economy is developing better, that's obviously also good for the infrastructure provider in the country. But to be very clear, I don't want subsidies from the state. I don't want money from an infrastructure fund. What I want is a regulation which allows me to earn the margin that I need to make the investments which the country needs. And so therefore, I'm not asking to get a piece of the cake from whatever billions the government is allocating. I am asking for a regulation which reflects the risks that we have to take and the investments that we have to make.
Leo, it's Creedy in London. On that note, when it comes to the regulation story, I mean, we've talked about some of the measures that have been put forward to the German government, arguably to the European Union as a whole. But walk us through the kind of timing on all of that. Investments, at least when it comes from E.ON, are expected to kick up between now to 2028, for example. That is a very long time frame. What is the lag time between getting some of those regulatory hurdles eliminated or at least softened for you and actually speeding up the investment process?
So we operationally, we are in a position that we could ramp up at any time, basically at any time. If we get the clarity, the process is currently that we're in a consultation phase on the regulation. There is a time frame which has been communicated by the regulator. Until the end of the year, that should lead to most clarifications, which would then allow us to revise our plans going forward. And we have always communicated to the market that if there's a ramp up, possible, we could deliver against that ramp up starting already in this regulatory period in 2027-28. So we need 1 year of lead time to significantly ramp up versus what we are doing today. And that is actually, I think, pretty acceptable in an industry where we are talking always about timeframes of decades.
All right. Leo Birnbaum, CEO of E.ON, we thank you so much walking us through some of those earnings and investment plans, and regulation plans as well. We thank you so much for your time this morning. Coming up on the program, we're going to get another earnings conversation. Nordic Semi, those shares are rallying in a big way, higher by about 12% this morning. Their results beating analyst estimates across the board. We're going to speak to the CEO next on this very program. Again, earnings season coming in thick and fast. In the meantime, the broader indices green on the screen across the board. We did see some weakness in the tech story yesterday as well, a little bit of a rebound this morning, but again, not to the same extent that we saw in yesterday's trade. The DAX is the notable outperformer, higher by 0.7%. We can thank SAP for that move. Stick with us. This is Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, on the road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome back to the opening trade. About 30 minutes into today's session, green on the screen across the board. The outperformer is the DAX, higher by 0.7%. I think this is significant that we're seeing a rebound in this index. It's been under quite a bit of pressure, not just in the last 24 hours, but in the last couple of weeks as well. That defense unwind hasn't actually helped the index as a whole, despite being the outperformer of Europe for the first 6 months of the year. Today, momentarily coming back onto that track, Guy.
Volumes are quite light. We are mid-August. That is what you would expect. 100-day average well below that. A lot of members higher than lower. Certainly there's a bid back into this market today. In terms of the 52-week highs and lows, there aren't many lows. So let's talk about the highs. What kind of stocks are we seeing at 52-week highs today? PKO out of Poland. Ryanair, interestingly enough, it's really, look at what we saw yesterday, the CPI print in terms of aviation fares in the United States. That's really quite significant. There's demand certainly here in Europe. Ryanair up 0.8%. And Bilfinger, in terms of the German construction story, again, just kind of moving forward and forward. That stock not up by much this morning, but kind of just incrementally inching higher and higher through these 52-week highs, Val.
Well, here's what else you need to know this morning. Yesterday's inline U.S. inflation report is bolstering the case for traders betting that the Fed will cut rates in September, with some seeing an increased possibility of an outsized reduction. Ukraine's president has reiterated that he won't cede the Donbass region to Russia and push for Kyiv to be included in talks as Trump and Putin prepare to meet on Friday. Vladimir Zelensky and European leaders are set to hold a call with U.S. leaders to discuss negotiations later today. And finally, Treasury Secretary Scott Bessent has dismissed the possibility that Chinese investments in the U.S. could be part of any trade pact. When asked if China would make similar billion-dollar pledges like Japan and the EU as part of their trade agreements, Bessent said critical industries needed to be, quote, reshored away from China. Pretty.
It's a fascinating one to talk about those comments because he's really saying China and the framework for China does not apply, doesn't follow the same kind of lead that you're seeing from Japan, Korea, Indonesia, even Mexico, arguably, again, on national security concerns. And this was such a sticking point when it came to the conversation between the United States and Japan specifically because of the whole Nippon Steel kind of investment, this idea of do you want that foreign direct investment and at what point is that a national security concern? And it works for everyone else but China.
Tells you where the mentality is around China. The China deal is different, and maybe that's why it's so much harder to reach in terms of the emphasis that is being placed on that. We've talked about the fact that all the trade deals are going to be done by October. That feels hard for the China deal. The China deal feels like it's going to remain not a deal, but a fluid situation that is going to kind of just continuously evolve
for perhaps the next 3 years.
Without necessarily a clear end game in sight there.
And I think the Besson comments might also show that instead of wanting some investment deal, what they really do want is these agricultural purchases. They want purchases of energy as well. We know that's something that's Trump brought up this week, the purchase of soybeans. So it just could mean that there are other priorities when it comes to the U.S.
The Chinese are sending very different messages on that. They're building an energy infrastructure that is not based on the United States. They certainly don't want to harness their economy to that narrative. They're buying soybeans from Argentina, from other places. They're trying to move away from the U.S. agricultural story. It feels like that's what the U.S. wants. That's what the Chinese want. The Venn diagram overlap here is not that great.
So where they are diversifying, especially on agricultural products. Well, the one thing that is irreplaceable is the American consumer. There is no other one country that has that much kind of expenditure with China, and that's actually the concern on the American side as it is with the Chinese. And a good chunk of that ultimately is the tech story, as well as it kind of feeds into the broader U.S. consumer and the broader kind of industrial build out there as well. There's one company in the tech space that we need to give some attention to this morning, and that is Nordic Semiconductor. Shares rallying this morning over in Oslo to the tune of 14%, a massive beat when it comes to their second quarter. I'm pleased to say we're joined this morning by the CEO, Vegard Wollan of Nordic Semiconductor. Vegard, a pleasure to have you on the program. Thank you so much for joining us. Just walk us through these numbers when it comes to what's driving this quarter.
Thanks a lot and good morning. Yes, we did see Q2 becoming a strong quarter for Nordic. It is happening as our products relatively mature, and our products actually at the moment are still competing extremely effectively in the markets we are participating, both with our larger customers and in the broad market. And this is for electronics connectivity products in the consumer segments and industrial healthcare, so broad markets. Geographically, we see that there isn't anything disruptive happening, but there is a gradual recovery happening in all geos and the markets we are participating in. As you know, we are a global leader of ultra-low power wireless solutions. And what's probably to add to that is that we have seen Asia and North America probably leading a little bit the gradual recovery from the semiconductor downturn in 23 and 24. We now do see some clear improvement also happening in Europe, which is very positive.
Vegard, I'm looking at some of your numbers here. Your revenue, massive beat. Gross margin, very, very big beat, in fact. But the capital expenditures is the number that sticks out to me here. I'm looking at $9 million. A year ago, that was $2.5 million. Your estimates from Wall Street coming in at $6.7 million. Can you just walk us through the confidence with which you're pushing and you're investing in terms of CapEx right now?
Yes, we are in the midst of a very large product portfolio renewal cycle, which we are really excited about within Nordic, which means, like in our core businesses in the short-range segment, we are renewing our portfolio, which is actually back from 2015, 16 to 18 in the launches of what we currently have in production. We started in November last year launching what we call the 54 series, which is the start of a complete renewal of that. With that also comes the needs to update and optimize and further improve our manufacturing equipment and manufacturing capabilities as we are moving these products to high volume production with our supply chain partners. And the CapEx is a bit irregular from a quarter to quarter point of view. We do have our certain KPIs and investment levels we want to be at within a year, and we are well within that at the moment. But we do now see that in the second quarter we did actually fairly large investments to support the production ramp coming for these new products in the coming quarters and throughout 2026.
Vegard, good morning. It's Guy. Are you being affected by tariffs?
So far, I think it's fair to say that we haven't seen any major impact, neither positively nor negatively. We can obviously not rule out that wouldn't affect us and impact us in the coming time. I think the overall semiconductor industry, it's clear that it's built on a very open economy and open trade over the last 20, 30 years. So there are changes happening to that. It is, though, a relatively even playing field. Many of us are using the same manufacturing partners, manufacturing countries are certainly concentrated around certain areas, certain countries. So it's a relatively even playing field from that point of view.
In terms of the trends that we're all watching at the moment, where do you think the big boost for Nordic will come in the future? Is it robotics? Is it the cell phone industry? Where do you see your next big market coming from in terms of how you are positioning this company? What is it that you think will be the big driver that takes Nordic forward from here?
Yeah, it's a great question, and I think how we look at it, and I'm quite happy with that answer. It isn't a single product and a single killer application which is requiring us to deliver on our fairly high growth ambitions, which I think you have noted. So we expect to see existing products being even more broadly adopted. The wireless connectivity megatrends just continuing in that space and within consumer electronics, certainly with some new products and some new elements happening there. If there is probably one area which still is of extremely high focus and interest for us, it is probably within the healthcare segment and the way that we see artificial intelligence, machine learning, and really high compute power happening in the edge device and locally in the healthcare type product. The drive and the execution and the new products that we may and very likely will see in the coming time in that space is really encouraging for us.
Vegard, are you looking at any potential acquisitions to grow your business? I see that earlier in the summer you acquired a U.S. startup based on cloud-based software. Is there any other pockets of potential M&A activity you're looking for?
Yeah, that's a good question. If you ask my HR team, they would say, please no more acquisitions throughout this year. we did actually announce two now about just over a month ago, two US company, a very small company, Newton AI, which is bringing us software in the edge AI space, extremely powerful but lightweighted solutions, targeted solutions, exactly for the market we are participating in with edge node, high compute intensity. And as you said, we also acquired Memfault in the US, which is a cloud lifecycle management company. With that, we obviously need to consolidate and integrate and deliver with those two acquisitions we just made. But we have our radar active at all points in time. There isn't any strategically specifically missing at the moment, but we are actively and opportunistically looking at that all the time.
For other opportunities you might be looking at, you did mention that Asia as well as North of America, you saw some decent growth in. How are you viewing the broader risks of this trade deal that we were just speaking about between the U.S. and China having some impact on your business when it comes to China growth?
We actually see that. So we are not exporting lots of products directly into North America. We are typically with our customers and end customers for Nordic, which is we are in a B2B setting business wise. We are obviously mostly shipping our products from our country of origin where we are manufacturing to their contract manufacturers and subcontractors. That is to some degree a landscape where we do see some customers actually executing change at the moment, but it isn't like you can do big changes, particularly not in semiconductor manufacturing, but neither in electronics device manufacturing in a heartbeat. These cycles and these changes do take some time, but we do see some gradual changes happening there, and we are closely supporting our customers and working with them as they may move from a manufacturing destination A to a manufacturing destination B. So that is a lot of our focus at the moment. We focus at what we can do something about relative to trade policies and tariffs, and that is truly to be strengthening and continuing building our resilient supply chain, as well as supporting our customers where they choose to manufacture.
Vegard, great to catch up. Really appreciate you running us through the numbers and the outlook from here. Vegard Wollan, the CEO of Nordic Semi, out with numbers today. Coming up, Volodymyr Zelensky will be in Berlin later today to take part in a video conference. The European leaders are going to be talking to Donald Trump, this ahead, of course, of the summit between Trump and Putin that is going to be taking place in Alaska this Friday. We'll talk about what's at stake next. This is Bloomberg.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachian Zahran, and this is Bloomberg.
Welcome back. You're watching the opening trade. Volume is a little bit light, but equity markets are higher. Volatility is down. Equity markets are higher. As you can see, it's a pretty decent picture across Europe this morning. A little bit of a comeback in some of the tech stocks that got beaten up yesterday. Defense is also making a comeback, which kind of takes us on to what we're going to talk about next, and that is what is happening with the Ukrainian situation. Bloomberg has learned that Ukraine's Volodymyr Zelensky is going to be going to Berlin later today. He's going to be taking part there in a video conference, which is going to be including the President of the United States, Donald Trump. We think the VP is going to be there as well. European leaders are going to be on that call. This, of course, comes ahead of the Russia summit Friday, which is going to include the President of the United States and Vladimir Putin. Nobody else. Let's talk about what's at stake with the call today. We think it's at 2 p.m., 3 p.m. Berlin time. Greg Sullivan joins us on that to talk about it and the significance of Zelensky's comments about not ceding land in Donbass. Let's talk about that first of all. The land story, I think, is really interesting at the moment. Zelensky is saying this is a red line. How hard is that red line, do you think, on not ceding land?
These are very important comments from President Volodymyr Zelensky. As you said, he's not going to be at the table in Alaska. Neither will his European allies. So they're really trying to telegraph red lines. Now, this is not a new comment from Zelensky. He has been pretty clear that he's not willing to cede sovereignty or territory. He does not want to make concessions to the aggressor in this war. So he's really trying to lay out for Trump red lines. The worry being that President Trump will go meet President Putin. They'll agree to a deal that later Europe and Ukraine will say, no, we can't agree to this. And that raises a host of other questions about U.S. support going down the road, as well as U.S. engagement in NATO. So they are trying to avoid that worst case scenario.
Greg, European leaders and Vladimir Zelensky have said that they'd be willing to directly talk to Vladimir Putin and even take on some of the security guarantees that the U.S. has provided, given there is that American backstop. Do you think the narrative changes around land cessation if the U.S. provides those securities guarantees for years to come?
So that is a key question here. The security guarantees haven't really been coming up in conversations out of the White House ahead of this summit, but they are crucial to Ukraine in stopping this war. Ukraine has been very adamant that they need security guarantees. Otherwise, what's to prevent Russia from restarting the war down the road, especially if they do have this bridgehead in the east, which Zelensky noted they would use for further aggression down the road. So Ukraine has been focused on security guarantees. That's critical for Europe, but the U.S. has been reluctant to say that they would provide those security guarantees. So that is a key question in stopping this war, as much or more so than the land, which obviously Trump seems to think will resonate with Putin. So those will be key questions coming out of the talks, both with the European leaders and then later with Trump and Putin in Alaska.
Well, you just briefly spoke about that phone call that we are expecting between Europeans and Zelensky with President Trump going to be taking place this afternoon, London time. What do you think the main message from Europeans to Trump is going to be?
Well, there's two real things. First is that they want to telegraph red lines. They want to make sure that Trump understands what they can't agree to in a deal unless Trump makes that deal with Putin and then puts Europe and Ukraine in a very awkward position where they have to say, no, this is not acceptable, risking the ire of President Trump. So they want to make clear those red lines. They also want to send the message that there needs to be discussion of security guarantees for Ukraine. And they want increased pressure on Russia to stop the fighting. Europe has long said that they would like to see an unconditional ceasefire before the start of any real negotiations to end the war. So those are the key messages that they are trying to take to Trump, given that they are not at the table when the actual Alaska summit happens.
All right, Bloomberg's Greg Sullivan walking us through what we can expect from that conversation today. We thank you so much. We should also mention there's another big conversation happening between two leaders. According to the FT, U.S. Vice President J.D. Vance is planning to meet with Reform UK leader Nigel Farage. Now, this is interesting. We had a conversation this morning about what a working holiday is, because J.D. Vance is supposed to be in the Cotswolds having a nice time, but he's meeting with leaders across the board.
You're either working or you're on holiday. It's kind of the way it goes.
Either or.
Maybe JD Vance is changing changing that European culture one meeting at a time.
Well, I mean, maybe to that point, he at least the Times was reporting that he did try to schedule a meeting with Kemi Badenoch, but their schedules did not align. Maybe she is on holiday and is not working that holiday.
that would do it. I think what stood out to me, though, is the fact that he is at the end of the day meeting with Nigel Farage, and this goes into a conversation, and that we kind of knew that from a political standpoint they may be aligned, but the fact that he is meeting with other parties, other leaders in the UK, given that the legal battle between the Starmer administration and Donald Trump is ongoing. Donald Trump sued Starmer for backing or kind of door knocking.
It feels like there's a bit of a loving going on between the White House and the UK at the moment. You've just seen Trump coming and to his golf course.
Sure.
Very happy. You've got the Vice President holidaying in the Cotswolds. The UK got a deal early on. In terms of where the relationship is least fraught, it does feel as if the relationship between the UK and the United States is probably where it is least fraught at the moment. How does that show up in reality and kind of action on the ground? I don't know. Maybe the UK economy is better positioned as a result of all of this. It's hard to see that, certainly in the data that we are getting at the moment. But I think it is going to be interesting to see whether this is a longer-term story, because the details have still got to be worked out in terms of the trade deal that is happening here. They've got to be worked out with everybody, but they've still got to be worked out largely with the UK. So I don't know. It doesn't feel as if the Biden administration felt a little bit more hostile to the UK. The Trump administration feels less hostile towards the UK.
Yeah, and I think it's just putting Reform UK even more on the global political map. JD Vance is obviously taking their chances at political power seriously. Maybe that's why they're having this meeting.
Does that work against you, though? Does that work against you or for you? I don't know. That's the hard thing. How is Trump perceived in this country? Is he perceived as a positive or a negative? Therefore, it could be taken either way from a political point of view here in the UK.
A lot of things to monitor today. We also have some data points to monitor. None of them are very big ones, I have to caveat with. But later today at noon, we have U.S. mortgage applications. Later at 3:30, we also have oil inventories. And then later in the evening, we have the Bank of Canada summary of deliberations from their previous meeting. We also get another round of Fed speak, which I think this will be quite interesting. We want to hear from them what they still think about those payroll revisions from a few weeks ago and what was their reading on U.S. CPI. We did hear from some Fed members yesterday. Schmid saying tariffs seem to be having a limited impact on inflation. That was also commented on by Barkin. We spoke to the Wall Street Journal saying inflation will be more moderate than people think. So it does seem to be like there is a dovish tilt to Fed members in their speech.
Well, they're all job interviews, aren't they? Every speech now is a job interview, listened to by the White House. Everybody's on the list. Who wants to be the next Fed chair?
I mean, they're even getting pressure from the Treasury Secretary, who is arguably in charge of these interviews for Fed chair, calling for the Fed to be considering a 50 basis point rate reduction in September.
You asked that question to a Treasury Secretary in the past, they go, monetary policy, nothing to do with me. Nothing to do with me. Go and talk to the Fed chair.
It's a new world, Guy.
I'm very aware of that. But it does seem as if, I think in some ways it's genius, tactically genius. Put everybody in the list, make everybody kind of go through that hoop and see what the result is. Maybe at the end of it, you result in a 50.
Is all this talk, though, of 50 or potential cuts or all this political pressure doing the job that they want anyway? Like, is the effect of the 50 already showing up in these markets?
Well, we'll see in the September meeting, right? I mean, if it has more dissenters. I mean, Powell had 2 dissenters at the last meeting. If you have 3 or 4 coming from Fed governors, you really start to doubt the Fed chair's position.
But if you want 25, you ask for 50, right? Isn't that the Trump way?
Yeah. He should have said 75, right?
Go big and then basically
hit
pull
100
it back.
to get to 50.
Yeah.
I mean, but at the end of the day, when it comes to things like financial conditions, for example, the stock market, as we've highlighted multiple times, it's on a roll. Credit spreads are on a roll. The dollar's weakening, yes, but it's coming back as well. Isn't everything fine for the U.S. economy at the moment?
That is what the vol markets are telling us. We have the VIX at year-to-date lows. Vol declined across assets yesterday. For the markets, the big takeaway is that the tariff impact on inflation is minimal, and we're moving on.
Yep, nothing to see here. Never going to happen. Might show up a little bit later. We'll worry about it then. Anyway, don't miss our interview with the Treasury Secretary. He is going to be joining Bloomberg Television a little bit later on. Scott Besson joining the surveillance team later today at 12:30 p.m. UK time, so just after noon. So we're looking forward to exactly what he has to say on that interview process and those 50 basis points that he would like to see. All of that coming up. The Pulse is next, though. Francine Lacroix in the chair. This is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Global stocks hit a record after U.S. inflation data fuels bets on a Fed cut next month. The Treasury Secretary says 50 basis points should be in play. Treasury Secretary Scott Bessent also rules out the possibility that Chinese investment in the U.S. could be part of any trade deal. Plus, Ukraine's president says he won't give the eastern region of Donbass to Russia as Donald Trump and Vladimir Putin prepare to meet on Friday. Now, first thing is first to the markets, and a lot of focus, of course, on some of the AI stocks. There's a couple of valuation concerns. We'll get to that in a second. The main story, of course, driving all of risk assets is, of course, expectations that the Fed will cut in September. This is after the inflation data yesterday actually not rising as much as expected, and so there's a lot of hope that the Fed, this is from investors, that the Fed will actually move to try and support the labor market. S&P futures practically unchanged. Of course, we look at the U.S. 10-year yield at 4.2597, Brent crude 65.92. The focus is on Friday. There's talks in Alaska between President Putin and President, of course, Donald Trump. President Xi is another story, which we'll get onto because of Evergrande. But let's also check what the market is doing here in Europe. Now, it is a little bit of a quieter week compared to the earnings bonanza that we had last week. So the focus once again on currencies, with the FTSE gaining some 0.2% and the DAX gaining 0.5%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Treasury Secretary Scott Bessent has dismissed the possibility that Chinese investments in the U.S. could be part of any trade pact. Now, asked if China could make similar billion-dollar pledges like Japan, South Korea, and the EU as part of their trade agreements, Bessent said critical industries needed to be, quote, reshored away from China. Now, he did not specify whether those industries were semiconductors or pharmaceuticals, but it does come after Donald Trump announced another 90-day pause on Chinese tariffs. Well, let's bring in Ross Matheson, our chief Asia correspondent. Ross, thank you for joining us. I mean, there's a lot of talk, of course, on tariffs. What did we learn about how Scott Bessent sees the world when it comes to China?
Well, it's interesting to see this development because obviously a big part of a lot of these trade frameworks have been pledges by companies and by countries to invest in the US, to bring in factories, but also to invest in sectors like energy and infrastructure. And that's been something that's helped some of these countries write the ledger, at least, in Donald Trump's eyes. But Scott Bessent making clear that for China, pledging investment is not going to be part of the equation. And that's really because this reshoring effort is about narrowing supply chains, giving the US greater control of supply chains, and particularly in sensitive areas. And so they don't want Chinese investment coming in those sectors because this is all about getting China out of those supply chains and getting greater US control. So it's unsurprising in some ways to see this, but obviously that narrows the options for China. You can see that Bessent and Donald Trump, they've been talking about they still want to see more action from China. This perceived question around fentanyl and chemical supplies coming in to the US that are being used to make drugs. And also they want yet more action on rare earths. Donald Trump has extended this trade truce, but it's still a little bit tenuous, and there are fewer options in a way for China in all of this. And Scott Bessent was just making that very clear.
Ross, can you give us a sense of how much revenue we think the U.S. is getting in right now? I know we have a great story saying, look, the U.S. July tariff revenue has increased, but it still failed to halt a wider budget gap. I mean, can we understand whether the Trump administration wants to increase tariffs really as a move of just even financing and funding, for example, the Big Beautiful Bill, and whether they're succeeding in that?
Well, that's right, because Donald Trump's message was we're going to get all this extra tariff revenue, as he calls it, custom revenue coming in, and that's going to really help them when it comes to the budget deficit. And so there was a better figure in July. It was up 270%-ish over the prior year. It was $28 billion, and certainly it's going in the right direction. But the problem, as you say, is the budget deficit is not going in the right direction for a variety of factors. One is just the amount of interest they've got to service on their debt. They've also got a lot of challenges for the deficit when it comes to Medicaid and other social programs. And this revenue, in the end, it's not a massive amount. It sounds a lot, $28 billion, but it's still a bit of a drop in the ocean when it comes to the broader budget deficit. And it's never really going to replace everything else on the cost side that is blowing out this deficit. And as you say, Donald Trump's Big Beautiful Bill recently passed, coming into force. There are a lot of concerns, obviously, amongst economists and bankers that that's only going to further blow out the budget deficit. I mean, that was Elon Musk's big criticism of it. For all of the efforts to cut spending and to help improve things, this bill doesn't do that. And so this increase in trade revenue, what do you want to call it, tariff revenue or customs money, it's not going to do what Donald Trump said. And that's, you know, for him, possibly a bit of a difficult one to square as time goes on.
And Ross, finally, I mean, we know that Donald Trump is upset with Goldman Sachs and the chief executive. Unclear whether this is because of a bank that the chief economist wrote talking about, you know, the sweeping tariff agenda and what that would do to inflation. But this is, again, unprecedented.
Well, he's certainly got form when it comes to criticising various big banks. He's done that quite a bit. He's accused some banks of debanking clients for political reasons. Now he's coming for Goldman Sachs over what he says is their commentary on trade. It's a bit unclear exactly what that was, but Goldman Sachs has written a note, a research note, where they were warning that the impact on consumers absorbing the costs of higher tariffs is still yet to be really felt. And a lot of economists have said similar, because the real tariff rate is only going up. And as these trade deals or frameworks are stacking up, that's only going to increase. So there will probably be more of an impact as time goes on. Goldman Sachs was pointing that out, and that seems to have irritated Donald Trump, and of course holding fire then on social media against Goldman Sachs. But equally at the same time, he's just recently had talks with Goldman Sachs of being part of the business for, you know, any IPO for some of these big housing giants, these mortgage giants in the US. And so he probably does need them in the tent. It's unclear if this impacts the broader Goldman relationship, but certainly it's just yet another example of Donald Trump criticising big banks in America.
Ros, thank you so much. Ros Matheson there, of course, covering all of the tariff and Bessent news. Now, yesterday's inflation report bolstering the case for traders betting that the Fed will soon cut interest rates, with some seeing an increased possibility of an outsized reduction. Joining us now, Nanette Hesha-Feiderb, Lombard Chief Investment Officer for EMEA at Lombard Odier. Nanette, as always, thank you for being with us. How do you see the reading yesterday? Because I know there's also a call for a 50 basis point cut, but when you also have the Treasury Secretary actually trying to get in there, I mean, the pressure is really on.
It is, but I have to say the following. Yesterday's headline CPI was obviously cheered by equity markets and just simply by financial markets, thereby perhaps getting ahead of themselves with a 50 basis points possibility in September by way of rate cuts. But I have been concerned to see that services inflation actually was not headed the right way. And if you are taking away energy prices, it is really services that will matter, because the goods inflation is only going to come through. I'm afraid that right now goods inflation is reflective of an effective tariff rate of 9%, and this effective tariff rate by the United States is going to jump to 16% over the coming months. So I think that it's too premature to think about a realistic possibility of a 50 basis points cut, and our base case remains a 25 basis points cut in September.
What happens after the 25 basis point cut? Is there a danger that actually inflation then shoots up? I know there's also this worry about stagflation. I don't know whether it's now too late to actually do something concrete about it.
Well, I do think that after the first rate cut, there is going to be an increased focus on the real economy in the United States. There as well, some delay of the impacts by tariffs on the real economic activity. The labor market report will be absolutely critical at the beginning of September. And I am expecting that further rate cuts will come around because of the slowdown of the real economic activity in the U.S. 25 at each of the FOMC sessions by the end of the year.
Nanette, what's your take on earnings season? Again, how do they get impacted by what the Fed does next?
Earnings season has been overall good. We have had certainly a few sectors that were really driving the very good numbers. IT is one of them, communication services, but also financials. But then there have been less buoyant numbers on a whole range of other sectors. So my anticipation is that Q3 numbers are not going to be quite as good as the second quarter. But generally speaking, I think that investors will still focus on this is not going to be a recession here. We are going to have only cyclical slowdown, and generally speaking, we are still having rate cuts that are helping equity markets to continue grinding up.
Is there a point in that when actually there's concern that markets face a correction, or at the moment do they just go up and up?
I think there's a bit of complacency, Francine, and so we cannot exclude that further negative macroeconomic surprises might actually give a little bit of a damper to sentiment, which has been, normalizing in the recent months. Is not as expected if we look at some of these tactical sentiment indicators, but I think that investors should really at this moment not get ahead of themselves either. It's an okay environment, but we ought to be expecting a little bit more of just negative news ahead.
Nanette, when you look at some of I think a lot of economists and also maybe a lot of investors were expecting, as you say, things to go a certain way. Is this because the economy is more resilient? Is it because inflation takes time? Or where do you see the biggest concerns longer term that maybe market are ignoring right now?
Well, I think there is this point about delayed effects. So some of these are only going to come through over the next quarter, whether it's on the real economy or whether it's on CPI. But generally speaking, I'm comforted by the fact that long-term inflation expectations have been extraordinarily stable. 10-year break-even inflation rates in the U.S. around this 2.3 level, all unchanged. And I do expect that real yields in the United States are going to continue coming down. That is helpful for also risk assets. So altogether, I think that these are the things that will matter, especially when you take account of U.S. valuations in equities, which are remaining quite full.
I know there's a number of stories today with AI, some of the valuations, but also maybe a little bit of M&A. How do you deal with tech stocks and AI right now?
Well, we continue to hold this positive view on technology. It's nearly a structural theme, Francine, rethinking how the global society is using technology in their everyday lives is going to just permeate through all sectors of economic activity. I think that theme is just going to continue driving very good earnings and also returns in the sector. We continue to be positive on it.
Nanette, thank you, as always, for joining us. Nanette Heshaf-Feiderb, Chief Investment Officer for EMEA at Lombard Odier. Coming up, CoreWeave disappoints as the tech company comes under pressure to keep up with the rapid AI expansion. We'll bring you that story next, and this is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Cloud computing company CoreWeave has delivered a disappointing earnings outlook reflecting margin pressures from a rapid AI data center expansion. Well, joining us now is our very own Tom McKenzie. Tom, thank you for joining us. I mean, is there a worry about what they will deliver, or is it just that they're disappointing investors because we were expecting so much from CoreWeave?
The stock has performed very well. This is an AI darling, but the stock did drop yesterday 10%. And that really reflected some of those expectations, those stretched expectations, some might argue, but also the fact that on one of the key lines that came through from the earnings was the losses, and losses coming in much higher than the estimates, increasing about 40% in the quarter. They did actually beat top line in the quarter. They raised their forecast, but the losses came in much higher than the estimates as they spent on things like acquisitions and they spent on building out data centers. This is a company that actually build the physical data centers that partner with the likes of OpenAI and Microsoft, on which they then build and then use their models. So their key clients continue to be there for them. And I think the silver lining for this company is that they still have a backlog of about $30 billion US. But there's a cost, of course, to providing and supporting that backlog, and that's the build-outs that's needed to kind of work through that backlog. So that will be supportive for them. The demand is still there, but there's a cost to that, and analysts and investors just taking note of that yesterday.
Tom, what can you tell us about this monster bid from Perplexity trying to get Chrome from Google?
Well, it's bold, it's audacious. Perplexity is obviously a minnow compared to Alphabet, but they clearly have the ambition. They've been nipping at the heels in terms of the search market and trying to carve out some of that away from Google. This is an AI search company, Perplexity, making this $35 billion or thereabouts bid for Chrome, making it official on Tuesday. Some of the analysts have come out and said this is well below the actual value of Chrome. Some analysts have suggested the value should be around $100 billion. Perplexity itself is valued at about $18 billion. It said it would fund this with other investors, but it speaks to the ambitions of Perplexity AI, and it's a reminder as well that Google and Alphabet are under pressure after this ruling by a US judge that they have pursued these monopolistic practices and antitrust ruling, that they need to break up the business. And part of that solution may be spinning off Chrome. And Perplexity have put their bid in.
Tom, thank you so much. Tom McKenzie there with the very latest on some of the AI stocks. The next edition of Bloomberg Tech Europe with Tom airs this week. That's at 6:30 a.m. London time on Friday. Now, stocks climbing to a record after the latest U.S. CPI report showing cost of tariff-exposed goods did not rise as much as feared. The reading bolstering bets on outsized rate cut from the Fed next month. Joining us now, Jane Foley, head of FX strategy at Rabobank, and Mikhail Msikar, equity market senior strategist for EMEA. So we have everything covered, equities and the dollar. What's happening to the dollar, Jane? What will happen?
Well, we did see that move yesterday on the CPIs. The market thought, yeah, you know what, there's nothing in that CPI that can potentially prevent the Fed from easing in September. But, you know, the CPI debate is going to carry on. I mean, it could still be quite early days for coming to the conclusion that we're not going to see a big tariff bump in inflation. So that debate is going to persist. Yeah. But, you know, assuming we do get that interest rate cut from the Fed in September, you know, we are going to move on into next year. And, of course, sort of clouding the view, if you like, on inflation is there going to be politics? Is there going to be partisan politics, particularly at the Fed as we move into 2026? And if we do see that, then we probably have a more dovish Fed and potentially a weaker dollar too. But, you know, I think this has been an interesting couple of weeks for the dollar. We saw that short covering position a week or two ago, and I think that has been a healthy move. It's cleared out a lot of stretched positions, a lot of stretched shorts in the dollar. But, you know, I still think we can get to 120 in euro dollar, but not until maybe next spring.
Jane, does it make a material difference to dollar if we have 50 or 25 in September?
I think it will, because I think everyone's going to be talking more about, is this more of a political
emergence,
move? Or, you know, and we had Besant, obviously, last night calling for, you know, 50. But, you know, many economists will say, no, you know, the Fed actually could wait and take stock. And, you know, some economists saying, well, look, you know, there might be fiscal stimulus on the way because of tax measures from Trump. So from that point of view, you know, there is enough arguments either way to argue that the Fed should be in sort of Powell's camp and should be, you know, a little bit more careful. Equally, you know, you can look at the labour data and say, yeah, you know, they're a little bit behind the curve. They definitely need to go 25. But I do think it's pushing it to say that they need to cut rates aggressively from this point.
I feel like it's incredible how we're normalizing, right? The Treasury Secretary weighing in actually on monetary policy is quite incredible. Mikhail, I mean, meanwhile, equities are like having a party.
Yes, Francine, they're having a party, but at the moment, nothing says that it's not justified. I mean, the earnings season was very good. The economy is still holding up. The Fed is under pressure to cut rates, as we just discussed. I don't see a reason why they would cut like very aggressively, because the economy doesn't need it. And even if inflation is still stable and tariff hasn't fed into the numbers yet, or maybe they won't. then it's still going to cut rates because they don't need to be that high. Yeah. So overall, investors are responding. Positioning is still low on U.S. stocks. I mean, if you look at the Bank of America Fund Manager Survey that was published this week, investors are still underweight U.S. equities. You can see discretionary investors are still very neutral position on U.S. equities. So there is room there again.
Jane, I mean, there's so much to ask you about because the ECB, I mean, you actually think that they're completing their easing policy. I mean, they seem to have, if they locked it and done, they're in a better place than all other central banks.
I mean, that's our central view, but obviously this is an evolving situation, particularly given the threat from tariffs. The German economy has still got a very stagnationary tone. I mean, if you look at the Bloomberg forecast for German growth this year, I think it's around about 0.2%, so pretty low. And, some economists are saying, look, the impact from tariffs, they could potentially push Germany into recession. Not our central view, but, that risk is out there. So from that point of view, there is the possibility that if they do anything, it could be moving again. But for now, we think that they're quite happy to hold steady, and see what the economy brings, see what comes through from the tariffs into the economies.
What happens with sterling? I mean, we had a pretty stunning second vote actually last week for the Bank of England, and so it just feels like the MPC is much more uncertain.
They are much more uncertain, and who can blame them? Because look at even the inflation data that we've had this week; it's still above that level. Look at the wage inflation that we had yesterday. Wage inflation in the UK still around 5%. Now that is not 3%. That is not 2%. It's still too sticky. So the labour market yesterday, gave sterling a boost because the market thought, it's still too much wage inflation there for the potentially for the Bank of England to go again in November. So November is still very much undecided. It's not as definite as perhaps it would appear just a week or so ago. But what's also going to happen into the autumn is the budget, and that's going to draw attention straight back into the difficult fiscal position that the UK has, and I think also to the difficult growth position that the UK has. And I think those sort of negative sentiments around the budget and the likelihood of tax hikes rather, and the impact of that on growth potential could actually knock some of the more bullish sentiment in sterling that we've seen over the past week.
Yeah, and we don't have a date for budget yet, so it'd actually be delayed, so maybe the overhang will last even longer than we think. Miguel, that means, is there anything else that we're watching? I want to ask Jane, of course, about renminbi in China, but is there a UK equities play, or are they just too international?
Well, in the UK, it's a bit of a strange market. You see, the domestic stocks are still kind of spooking investors just because we don't know about taxes, what's the government going to do by the end of the year, and people don't want that exposure at the minute. So they're kind of avoiding them. As for the international stocks, the FTSE 100, which generates like 3/4 of its revenues outside the UK. It's all about how the sterling is going to move. So it's all about how the Bank of England is doing, how the tariff are going to impact. Those stocks are still super cheap. They're still paying hefty dividends. So for the cohort of investors that are focused on income and value stocks, well, the UK is still a market to go to.
We also have, it's Jane's world translating into equities. Jane, what happens to renminbi right now? Many questions about Evergrande, but also just tariffs, question mark.
Yeah, and I think in the first part of the year, people saw some better data in terms of GDP for China, and that was like, that's encouraging. But there is also a lot of pessimism about some of that fading during the second part of this year. So, for instance, the fiscal stimulus could fade, and we could have more sort of trade issues. I mean, we know that China's got an awful lot of issues with respect to overcapacity, really, within the economy. And if we do see a slowdown in growth coming through, for Q3, for instance, then I think the renminbi, could be hit a little bit. But move into next year, maybe a little bit firmer. But then that is also probably on the assumption that the dollar might weaken again if the Fed turns dovish.
And am I right in thinking you're also looking at Brazil basically as is it a dollar play, but also more domestic concerns?
It's sort of both. There's a massive tariff clearly on Brazil, and although I think exports with the US is something like 12% of the total. There could still be a negative play back into the Brazilian economy, and also what is certainly worrying our Brazilian strategists there is the impact that could potentially have on FDI. So US FDI into Brazil is important. If that is somehow effective by the sentiment between the two countries, then that could have a negative impact on the value of the currency in Brazil too.
Great. We've gone around the world in like 10 minutes. So thank you both for joining us. Jane Foley, Head of FX Strategy at Rabobank, and Mikhail Sikar, Equity Market Senior Strategist for EMEA. Now, coming up, Volodymyr Zelensky says Ukraine will not cede the eastern region of Donbass to Russia as he prepares for talks with Donald Trump and European leaders today. We'll look ahead to that next. And this is Bloomberg.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive. Getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacquet here in London, and these are your top stories. Global stocks hit a record after U.S. inflation data fuels bets on a Fed cut next month. The Treasury Secretary says 50 basis points should be in play. Treasury Secretary Scott Bessent rules out the possibility that Chinese investment in the U.S. could be part of any trade deal. Plus, Ukraine's president says he will not give the eastern region of Donbass to Russia as Donald Trump and Vladimir Putin prepare to meet on Friday. Now, J.D. Vance is reportedly set to meet with Nigel Farage, the leader of Britain's Reform UK party. The Financial Times says the meeting will take place while the U.S. vice president is in the country this week on a summer break. Well, we're now joined by Lizzie Burden, our UK correspondent. Lizzie, thank you for joining us. So why is J.D. Vance actually meeting Farage?
Well, like his boss, he's not the only one who mixes business with pleasure. He's renting this 18th century Georgian manor in the Cotswolds. And, of course, it's not natural for the vice president to meet with
with the Prime Minister. Donald Trump already did that when he was at Turnberry. He met with Keir Starmer. And now you've had Vance already meeting David Lammy, the Foreign Secretary at Chevening, and he's shown this curiosity about Nigel Farage, the Reform UK leader. We heard that he was asking Peter Mandelson, the UK ambassador to Washington, about him. So clearly, not only are their politics aligned, but he's also curious about his position in the polls as well.
I mean, it's interesting that he's not meeting the Conservative leader.
It is. Well, Kemi Badenoch's team and JD Vance's team say that it was just a diary clash. But of course, the tongues are waggling in Westminster. What's going on here? Because you've seen Vance meeting with Robert Jenrick, the Shadow Justice Secretary, and he's believed to still have leadership ambitions. You may think that it's because Vance is looking at the next generation of leader, because he himself sees himself as the successor to Donald Trump. So whether that's Jenrick or whether that's Farage, it seems that he's putting these bonds in place early.
Lizzie, thanks so much. Lizzie Burden there, our UK correspondent with the very latest, of course, on JD Vance meeting Nigel Farage. Now, earlier this week, Norway's $1.9 trillion sovereign wealth fund divested from 11 Israeli companies and terminated all contracts with external managers in Israel. The chief executive, Nikolai Tangen, told us the fund is continuously evaluating ethical aspects of its investments.
It's important for us not to be political. We are an investment fund. We have one overriding goal, and it is to make money, of course, within the mandate we have from the ministry. Now, we divested from these Israeli companies, not because they were Israeli, but in this case, because we wanted to simplify the portfolio management we did in Israel. So these were companies which were not in the index, and we decided to take home the asset management. We discontinued 3 external relationships with external managers, and then we decided to do it ourselves, just to kind of simplify what we are doing and how we deal with this.
Are you evaluating at all changes to some of your responsible investment strategy as part of this, Nikolai?
Well, we are continuously evaluating this. We also have a separate entity called the Council of Ethics, which is looking into more, ethical aspects of our investments. And then, in terms of being invested in Israel, that's a political question. It's not a decision that we do. So what we do is to make sure that we invest in Israel in a responsible way.
Well, the Norges Bank Investment Management Chief Executive Officer Nikolai Tangen, they're speaking with Danny Berger. Now, Bloomberg understands that Ukraine's Volodymyr Zelensky is traveling to Berlin to take part in video conference talks with President Trump and European leaders today. Those talks come ahead of the U.S.-Russia summit on Friday in Alaska. We're now joined by Greg Sullivan, our Russia editor. Greg, thank you for joining us. The Ukrainian leader has made his position very clear to Donald Trump and Vladimir Putin. He's not giving up control of Donbass.
Yes, those very important comments from Zelensky here. They're not new comments. He has repeatedly said that Ukraine cannot cede its territory or its sovereignty to Russia, but they are very important coming because he will not be at the table for that summit on Friday in Alaska. Instead, it will be just Trump and Putin, and Zelensky obviously worries that they will come to some agreement that he will not be able to accept. So he's trying to telegraph to Trump that this is a red line. But again, it's not new, partly because Russia is trying to take this territory. It would be very unpopular with people at home, but also it would be a bad look. Russia has not been able to take the entirety of the territory militarily, so it would be essentially conceding a victory to the aggressor in this war that they have not been able to achieve yet.
So, Greg, what are we expecting from today's meeting between Trump, the EU, and Volodymyr Zelensky?
Again, this is an important meeting for European leaders and Ukraine because they are not going to be at the table. Europe does see the war in Ukraine as part of its own security concerns, and they want to make clear to Trump that there are certain red lines that they cannot agree to. Europe's nightmare scenario would be that Trump and Putin agree to some framework for a deal that is totally unpalatable to Kyiv, let alone Europe, and that puts them in the awkward position of having to say no to Trump and risking his ire, which of course would raise questions about U.S.'s continued engagement in supporting Ukraine. Ukraine has relied on the U.S. support, but also the U.S.'s continued engagement in NATO. So to avoid that potential scenario, they're trying to telegraph to President Trump what they see as red lines, as well as encourage him to ratchet pressure to Russia to come to a ceasefire before any real negotiations can agree to, and also to raise the issue of security guarantees with Ukraine, which we have not heard a lot about from the White House so far.
Greg, will anything actually come out of the Alaska summit?
So the White House and other senior officials such as Secretary of State Marco Rubio have sort of tamped down expectations. President Trump himself has said that he's willing to walk away with no deal if he doesn't think a good deal can be reached. He's called this a feel-out summit. He wants to test the boundaries of what could be possible, feel out where a potential alignment with Putin could be or what potential deal is there. Obviously, the Kremlin has signaled that there is potentially room for deal-making with the White House, with the foreign envoy Steve Witkoff. But it's also clear that the White House is having this meeting. They'd like to walk away with some sort of tangible deliverable from this, whether that's a framework for a potential future agreement or even potential future talks or an agreement to keep talking. There will be some effort to try to get to something. Now, again, whether that's palpable to Ukraine and its European allies, that remains to be seen, as does whether they get to any deal at all. That will have to wait for Friday.
Greg, thanks so much. Greg Sullivan there, our Russia editor. Now, coming up, we'll get more on Ukraine with Tinatin Akhvelidiani, research fellow at the Center for European Policy Studies. That's next, and this is Bloomberg.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Well, Ukraine's president says he will not give the eastern region of Donbass to Russia as Donald Trump and Vladimir Putin prepare to meet on Friday. We're now joined by Tinatin Akhvelidiani, research fellow at the Center for European Policy Studies. Tina, thank you for joining us. What do you think will happen at the meeting in Alaska on Friday?
I mean, this is a very big question. I don't think anybody really knows about it. What we for sure know that we can hardly call these a ceasefire talks, because for the ceasefire talks, that we have to have at the table both parties engaged at the war. Currently, Ukraine is definitely not invited, and these ceasefire cannot be discussed without Ukraine at the table. So, as a matter of fact, this will be simply a bilateral meeting between the President Trump and President Putin, and this already comes across as a concession to President Putin, because that's exactly what Putin wanted, to get attention of of President Trump and to potentially also delay the sanction threats that President Trump was actually putting on him just a few days ago. And also what we know is that whatever these talks will discuss, we know that this will definitely shape European security architecture. And for this reason, another I think that weakens the credibility of this meeting is that Europe, again, is not invited to be at the table. European Union is not invited to be the part of these talks, which again weakens the credibility of this bilateral meeting.
Yeah, Tina, I mean, I guess the fact that they're actually meeting today, we also understand that, President Zelensky is actually going to Germany to take part in these talks with Donald Trump. Does that give it some kind of legitimacy? I mean, is this just trying to lobby, President Trump not to do anything stupid?
It's definitely an attempt, an endeavor of such, but President Zelensky is still not invited in talks with President Putin, right? And these things are just evolving as we speak. These calls, these are online meetings, while the meeting between the President Trump and President Putin will take place actually in person. But it's very, very good that, of course, the EU leaders and President Zelensky is, really trying their best to show the leadership, to really, enlighten President Trump's approach to this, that, we should not really West should not be giving political win to President Putin, but rather it should be a coordinated approach to convince President Trump that the forces can be united in the interest of United States, in the interest of the foreign policy that has been historically formed for the United States and American people, not in the interest of President Putin. So far, what we see is that President Trump is really playing the game of President Putin, not of himself.
Tina, is Europe standing strong? Are they standing united, or is there a risk of fracture?
I mean, the risk of fracture is already happening because we saw the communique that was released yesterday after the meeting of the leaders that took place on Monday. And we saw that Hungary didn't wish to be associated with this joint letter, although the letter basically stressed the very important messages. This is the way European Union sees any talks to shape or any talks to be discussed when it comes to the ceasefire or European security architecture, but already seeing internal divisions, which is not new. Hungary has not been backing up the joint common EU opinion when it comes to the common foreign and security policy, so this was not unexpected, although other 26 countries are standing strong together, and also this time we're going beyond the European Union, right? Because European Union is not the security union, not yet, at least for now, it's also like forming this coalition of the willing, which is a wider sense of Europe and the like-minded countries, and we have in mind here UK, we have Canada, we have Norway and other like-minded countries who are sharing the position how European security architecture should be shaped, and also how should we treat the violations of the international law, which Russia has done now far too many times.
Tina, do we have an idea of what the relationship between President Zelensky and President Trump is like? We all remember the humiliation that he faced in the White House. How important is it that the two get along now? And actually, is it counterproductive for President Zelensky to say he won't give anything up before Alaska?
No, I don't think it's counterproductive. I think what President Zelensky has been showing is really a good leadership, because he had the same consistent messages, unlike President Trump, that, he is aspiring for the lasting peace. And the lasting here is really the key word, because we've seen Russia signing a lot of ceasefire deals, which Russia has then violated in a matter of hours and days, and we have a long history of that. And of course, Ukrainians, President Zelensky knows it, and of course he wants to avoid such a situation when talks happen for talks in a Russian style without any conclusion that can be credible, or there is a ceasefire deal which can never be implemented at the first place. So he shows here the leadership. He, of course, shows what the Ukrainians want, because he represents 40 million people, right? We're talking about the country that has been fighting for the democracy, for their choice, for their European choice. Of course, President Zelensky has to voice what the people want and has to show the leadership. And I think this is really not a counterproductive, because, as I said, the fact that this meeting is taking place is already a concession to President Putin. So something has to be done. And here is the European Union, Ukraine, and of course like-minded countries have to show their very strong position and their leadership.
Why Alaska? I mean, this is U.S. soil. It's one of the questions that we had. It seems like, again, a big win for President Putin to show up on U.S. soil.
yeah, this is a USL, but it's also like showing that these countries are still neighbors. This is, showing that, hey, this is very much Putin's line, right? We have things in common. We are here, two more or less like-minded strong men, strong two white men. We are sharing, the land. We are very close to each other. And yeah, why don't we just focus on the common interest rather than divisions? Except historically, United States and the Russia back then Soviet Union have really diverged on many values, right, and many interests. So this is another tweak or a trick that President Putin wants to, trick President Trump into.
Tina, thank you so much for joining us. Tina Ahveljani, there's research fellow at the Center for European Policy Studies. Now, a European rocket critical to the continent's goal of reducing its resilience or reliance on Elon Musk's SpaceX has launched successfully. The Ariane 6, which had its debut in July 2024 and is a centerpiece of Europe's space ambitions, lifted off from French Guiana yesterday. The rocket deployed an Airbus-made satellite into a polar orbit for weather forecasting and climate monitoring. Now, the Danish wind turbine maker Vestas says it's sticking to its full-year earnings guidance as the company navigates tariff impacts and shifting energy policies. The company is a major supplier to the U.S., where President Donald Trump has cut support for renewables. Despite this, the company's chief executive has said that the company sees good order momentum in Europe, the Middle East, and Africa. While Europe's renewables output has boomed in recent years to help meet climate goals, but investments in battery storage have struggled. The problem is that storing electricity and selling when prices are high is much harder than other commodities. Now, a growing number of commodity merchants have started investing in utility-scale batteries, seeking profit from extreme volatility in European power markets. Now, for more, we're joined by Will Mathis, our energy and climate reporter. Will, thank you for joining us. Why are batteries interesting for traders?
Because this is an incredible opportunity to access volatility. The electricity market is probably the world's most volatile commodities market. You see in a pretty normal basis, in the middle of the day, we have prices going very low, zero, or even negative, and then just a few hours later, they can go up to 200 euros a megawatt hour or higher, because you've got too much production in the middle of the day, and right now, no way to store it. And then in the evening, you've got a lot of demand. People are, turning on their ovens to cook in the evening, watching TV, and you need more supply. So these commodities traders see an opportunity to store power when it's cheap, or even get paid to store the power and then sell it at a high price later.
So, well, why are the investments happening now?
For one, the price of batteries has come down so much that it's become more economical to do this. And Europe has seen just a tremendous expansion of solar power in recent years, especially a few years ago. We had the energy crisis, gas prices were really high, solar panel prices were coming down, and investment happened way faster than anyone was predicting. And now there's so much supply, and so that arbitrage opportunity has gotten really good. And so people who saw this coming a few years ago are well placed to actually take advantage of the trade now.
Well, thanks so much for joining us, Will Mathis, there, our energy and climate reporter. Now, President Donald Trump says he's considering a lawsuit against the Fed chair, Jay Powell, over cost overruns in the central bank's headquarter renovation. In a Truth Social post, he called Powell's handling of the project incompetent and damaging to the economy. And President Trump's pick to lead the Bureau of Labor Statistics recently suggested suspending the monthly jobs report and publishing only quarterly numbers. While speaking with Fox News last week, E.J. Antony said the Fed could not conduct monetary policy when the monthly report was unreliable and misleading. The White House confirmed Antony had floated the idea of a suspension, but says it still expects to get a monthly report. Now, Singapore is set to sell an eye-watering variety of luxury items confiscated from money launderers who were convicted in the country's biggest laundering case. Well, Deloitte will manage the process of selling the non-cash assets after police handed over more than 460 pieces of luxury goods and 58 gold bars. Now, the proceeds from the sale of the seized assets are to be put in a de facto bank account of the Singapore government. Well, that's a story you don't read every day. Now, AI stocks have driven markets higher, even as other sectors grapple with tariff tariff concerns. But CoreWeave shows that rally has limits too. The company, which leases computing power to AI firms, has posted a major or a more than 20-fold jump in losses in its second quarter earnings. Well, Ed Ludlow, co-host of Bloomberg Technology, now joins us. Ed, thank you for being here and welcome to London. Again, large capital spending is one of the hallmarks, of course, of these big bets in AI. Why have CoreWeave's results concerned investors?
Yeah, I don't know that it's a panic. I mean, it's a stock that was up astronomically over 2 weeks just before earnings. And, you know, there's a specificity of what CoreWeave does, right? It builds data centers that handle very specific AI functions, largely inference for people we care about, like OpenAI and Microsoft. And they're trying to keep up with demand, but to do that, they got to spend. And something that we talk about a lot less than we should probably is that we've been obsessed with capital expenditures figures, absolutely obsessed with them, because we see them as a signal that the AI build-out has legs. It will keep going. But one thing that's happened in raising CapEx for names like CoreWeave and the hyperscalers and Meta as well, is it's just more expensive to build data centers now. Supply chain has made that complicated, particularly with China. And so, you know, they're basically saying we're going to spend our way to growth. They're showing top line growth as well, but it's a little bit much at the moment for the market.
Ed, how do you read it? I mean, this is a wider race, right, of trying to build data centers and to get on top of it. I mean, again, what's the bigger read into this?
Yeah, because of how much capital it takes to build a data center and how long it takes to build one, you have to commit to that in advance. A year is a pretty good time frame. The difference with CoreWeave is that we call it a neo cloud. It's not just a big old data center in the middle of nowhere in the United States somewhere, like the hyperscalers have that does general computing. It handles training and inference workloads. To date, a lot of their early success has been on the training part. But what happens if that goes away and a lot more AI companies are running inference? They're running the models that they've spent all this time in capital training. There isn't yet the firm evidence that CoreWeave's there yet in that market. Luckily, I'm going to speak to the CEO in a few hours' time. I'm going to ask him.
That's exciting.
You know, can you kind of solve that one for the market, this transition point? But right now, it doesn't matter where you look. The investment cycle has a staying power that, in my brief career, I've never seen anything like it.
Yeah, and I guess, Ed, I mean, the bigger point to everything you're saying is that we don't really know who the winners are yet of AI, right? So this is changing all the time.
No other than, you know, Microsoft, Alphabet, the parent of Google, and Meta showed astonishing AI-specific revenue growth in the most recent quarter.
Yeah.
Amazon did not show that specific top-line growth contribution from AI, and the market punished them for it. That's kind of where we're at, but we're increasingly, of course, interested in the private companies and OpenAI's data, which is not revenue necessarily, it's user base. They're up there too.
Yeah, and then we can have a whole conversation about China and the fact that they're only 3 to 6 months behind, whereas I think a couple of years ago, the lagging between Western AI companies and China was so much difference. Okay, the other story we're watching out for is, of course, Perplexity making this massive big bid for Chrome.
Yeah, if your viewers and audience want some light relief this August, go on social media and look at my face when I read the news out on the show yesterday. It's a surprise. It's a bit audacious. Speaking to sources, I'm pretty confident Perplexity doesn't have $34.5 billion, but the idea is that they would get investor commitments. It's in the context of a DOJ antitrust situation in the courts, and on the basis that Google would be forced to sell Chrome and the underlying code base, which we just don't know.
There's a lot of talk. I mean, Tencent is coming out, you know, saying that it's crediting a lot of the growth in games and AI, which is leading to a profit beat. What can you tell us about Tencent?
Yeah, so like, don't underestimate how big Tencent is in the games market as a developer, as a publisher. But the read across of AI is your development costs come down a lot. You get more profitable making video games. You know, GPUs that go into data centers for training AI models, they have their origin in the video games industry. They go into computers that develop video games, and they're just getting better at that. You know, also it makes for better games, which, you know, drives engagement. Tencent also weren't explicit, but it's a much friendlier environment in China right now. Remember that the government, for largely cultural and socioeconomic reasons, heavily restricted the video games industry. That's not happening, and Tencent's had several quarters of momentum based on that, off the back of it.
I mean, does a company like Tencent, can they actually sell freely their games to the West?
Well, some good examples of Wukong is a good example of a Chinese game I've played a lot. Yes, remember that the way the video games industry largely works is you have a parent that owns a portfolio of studios. Those studios are all over the place. Tencent has quite a large footprint in Silicon Valley, where I live. The short answer is yes. That's a different story, though. Does Tencent have a competitive title that's sold into Western markets? Hit and miss, yeah.
Okay, interesting. And thank you so much, Ed Ludlow, their co-host of Bloomberg Tech, who's also interviewing the CoreWeave CEO a little bit later today. You can catch that interview on Bloomberg Tech. Now, a couple of things we're watching out for today in the daybook, 12 p.m. UK time. This is NBA mortgage applications, and we have U.S. oil inventories at 3:30 p.m. We did have a report from the IEA talking about peak oil and the dynamics in oil as we're looking for a little bit of subdued growth across the globe. Then 6:30 p.m. UK BOC, summary of deliberations, and then we do have a lot of Fed speakers. The Fed's barking, repeating some remarks on the economy, and then we also have Goolsbee speaking a little bit later on at a luncheon. Now, the interview, also not to miss, is the one with the U.S. Treasury Secretary, Scott Bessent. This will be extremely interesting, especially after yesterday he said the Fed should go for a 50 basis point cut in September. I haven't heard a Treasury Secretary before this one really weigh in without any concern about independence as we have now. He joins Surveillance later today at 12:30 p.m. UK time. Up next, Bloomberg Brief. A lot of the focus will be on global stocks, again, extending their rally fueled by mounting expectations of Fed interest rate cuts, and this is continuing to lift global equity markets and pushing bond yields lower. Equity markets rallying as so far modest rises in inflation bets mean that the Fed could resume rate cuts next month, but also move more aggressively to protect the labor market, showing signs of strain. This is Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that three-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's
5 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know this morning. Risk on rate cut bets. Global stocks hit a record high after inflation data lift expectations of Fed easing. Could that be a jumbo cut? Treasury Secretary Bresson says the Fed should be open to a half-point cut next month. And President Zelensky and European leaders gear up for a call with President Trump ahead of the U.S.-Russia summit. So it was the 16th record high for this S&P 500 yesterday. We're up more than 1%, and we add some weight to it this morning, just about 0.1% for S&P. NASDAQ, that also hit a record too, up about 0.25% this morning, all after the inflation data. Even though some of the services look sticky, even though core was running a little bit hotter, but never mind, this is a market that was gearing up for a much worse number. So in that, you got a rally on the front end of the curve yesterday. That continues this morning. We're down by 2 basis points. We're pricing at about 97% odds that we'll get a cut. The long end, though, that interestingly was under pressure yesterday. Turns to a rally this morning, but the 10 and 30-year yield down by about 3 basis points at 425.58 for your 10-year yield. Let's look at some of the stocks moving in the pre-market this morning. With that is Valerie Taitel. Hey, Val.
Good morning, Danny. Let's start with CoreWeave. Out with results, and investors are very concerned about their run-up in costs. Their costs have increased 20-fold over the quarter as they race to build out this AI data center capacity. The stock is down 9% in pre-market trade. Note, though, Danny, the stock has quadrupled since its IPO back in March, so maybe a bit understanding that it gives some of those gains back on these disappointing results. Let's move on to fast food. The fast casual chain Cava cutting its sales guidance on the back of a softer diner. Now, this kind of chimes with what we've heard from Sweetgreen and Chipotle, that the U.S. diner is pulling back on restaurant spending, whether they're fretting about tariffs or increased inflation is really remains to be seen. But Cava losing 24% of its price in pre-market trade. Lastly, let's go to the digital asset sphere. Circle is falling in pre-market. This is the company that backs the stablecoin USDC, the second biggest stablecoin out there. The shares are falling over 5%. Danny, this is due to an announcement of a share offering. They're going to be announcing or offering $10 million worth of shares later today, and the CEO is involved in that share sale. Danny.
Valerie, thank you very much for that roundup. We'll catch up with you later in the hour. Also this hour, in just moments, Tim Graff of State Street will join us, where he sees cracks in the U.S. economy, and we'll discuss this record rally in stocks with J.P. Morgan Sitara Sundar later in the hour. Markets, though, are betting on a near certainty that the Fed will be cutting in September after yesterday's data. Tim Graff of State Street writes, easing this year keeps rates in restrictive territory, and sustained high or higher U.S. rates could derail risky assets, echoing the 2022 correction. Tim Graff is head of EMEA Macro Strategy at State Street Global Markets and joins us now. Tim, so a market pricing in cuts, but is it your assumption, just given that we will get cuts and still remain in restrictive territory, that we won't go neutral or accommodative?
Yeah, I think it's not just my assumption, it's the Fed's assumption, right? There's not a single kind of long-term or a short-term dot, I should say, that's not above the long-term dot. So, one cut, 2 cuts, still has Fed policy by the Fed's own definition and by every member's definition of it in restrictive territory, which is why I think we will start to see that accommodation come through starting in September, probably at least one more cut this year, if not a third cut by the end of the year, but certainly in line with the 2 cuts that the Fed projections have for the end of this year.
It's the assumption by the Fed, Tim, but is it the assumption by risk markets? With stocks at an all-time high, are they pricing in something different?
I don't think so. I think they're pricing in the continuation, in my view at least, of the soft landing of the U.S. economy, which, to be fair, you probably do need further easing to ensure. We are not yet in the camp of looking for a recession, certainly not a deep recession. But I think to avoid those outcomes, to avoid kind of the scenarios you alluded to in that quote I had, you do need to start to think about resuming the path of easing and getting policy rates back towards not even easy territory, but just to neutral territory to ensure the stability and health of that soft landing.
One of the crazy things, Tim, is that tariffs don't seem to be anywhere as the driver, either where our assumptions are about the economy right now or where the market is going, we thought that it would be the main driver. We thought it would drive everything at this point, Tim. Does it reinforce itself at some point, or does it just remain a sideshow for now?
I think the really key thing here is we adjusted our expectations quite dramatically already, whether it's looking at market pricing for inflation in inflation swaps, that they priced in the effect of tariffs quite quickly around the time they were introduced. The Fed themselves at the June meeting, I think this is what's really important about policy, the Fed really raised their inflation forecast at the June meeting to a level that they might actually overshoot now on that forecast. It's going to take really strong readings from core PCE for the remainder of this year for that inflation forecast to be realized. And this is, there's still residual seasonality, I think, in a lot of the inflation data. This is the period where seasonally inflation tends to be a little bit weaker. So it's not that tariffs aren't having an effect, it's that that effect was, I think, calibrated for a long time ago. And the fact that you're getting data like yesterday, which doesn't look great, but also is not as worrying as what those elevated expectations were, I think that's why you're seeing the reaction in risk markets. It's not to say it's great, but it's not nearly as bad as how markets and the Fed themselves adjusted for that expectation.
Tim, there's also a lot of politics happening, not behind the scenes. At this point, it's very much so happening in front of us. A new appointment, we'll see if he gets confirmed. The head of BLS was speaking on Fox Business yesterday, saying that maybe we should suspend jobs data. The Wall Street Journal also has a story out saying that Trump has been complaining that the jobs report is designed to hurt him, and he is specifically taking aim at those large revisions, saying that he doesn't want large revisions in the data in the future. Tim, again, not something that's bubbling up to the market surface, and there's the quote from E.J. Antoni there saying about through less timely quarterly data. But Tim, does this concern you if there are adjustments to how and when and how the data is collected and just in general those monthly job reports?
Look, I think for 20 years, you could make the claim that revisions to payrolls always kind of threw you off balance, right? You get the initial read, and then for the next 2 months, you have to figure out whether that was right or wrong. But nevertheless, that initial read is what markets trade off of. And I think it's a fair critique to say that the size of the revisions, especially over the last couple of years, given declining response rates, especially to BLS surveys, it's an issue. And data quality, we should always strive to improve data quality. But there is a concern, I think. There's enough institutional inertia at these places that I think the wildest fears are maybe a little bit overblown. But the probability that institutional credibility is weakened, I think, is probably higher than it was a month ago. And so it is something we should be concerned about, but I don't necessarily think it's something we should be panicked about, because as long as the work that's being done to improve data quality is apolitical, which, again, we can maybe argue whether that will be the case or not, but there's a good chance it will be apolitical. If there's data quality improvements, that is to the good. We do need to account for some of these institutional concerns, though, for sure.
Tim, is the long end accounting for them? Because after CPI yesterday, throughout the day, you saw the long end drift higher. How much of that was about the inflation data itself and some of the makeups of it versus some of the institutional credibility concerns that you're talking about?
Yeah, it's a really good point. A little bit of both, I think, but I think the long end seems to be responding more to these headlines about who's going to get appointed to the Fed, who might be the candidates for Fed chair. That especially, in recent weeks has been, I think, the focal point for the long end. If it's more of, say, a MAGA candidate, you get the long end selling off. If it's, the converse, where you have someone like Waller who's mooted last week as the favorite, then it rallies back. I think that is the key right now for the long end. It's not to say the inflation data is unimportant. It clearly is. But when it comes to bringing in that long-term risk premia in U.S. rates, the institutional credibility argument, I think, is best expressed that way.
Well, Tim, if we can just bring this whole conversation right back around, if there is a vulnerability in risk assets in stocks to get something that looks like 2022, what is the ballast? Given what you're saying about some of the concerns in duration, where do you seek shelter?
Yeah, it's a good question. I mean, for right now, cash still offers you decent yield until the Fed does ease. And so if you really are concerned about that very, very short term, that's probably a good place to hide. Now, overall, we actually still really see quite risk-seeking flows. And I don't suspect there's going to be anything that really knocks us off target on that for the next few weeks. And so maintaining allocations to equities probably is fine for right now, particularly, the usual names that you probably spend a lot of your day talking about. Those tech names that have strong balance sheets, strong earnings potential, and great future earnings prospects are probably, they're not safe havens, but they're probably not bad places to hide out.
Just quickly, you said for now. When does it become not for now?
Yeah, sure. Fair question. I think early Q4 is when you'll probably start to see data in either direction. I think there's two sales scenarios here, right? Where inflation could take off because of tariffs. I'm not a huge believer that that's going to happen. But more, I think, worryingly, the slowdown in the labor market. By then, you will have a better sense of whether this is kind of a false flag, like last year's rise in the unemployment rate was, or if we are really seeing the labor market cracking. That's where I think risky assets have a problem.
Fair enough. So the catalysts come in September. We can go to the beach for now. So that's good news for this August. Tim, thank you so much for joining. Tim Graff of State Street. Let's get you some other top stories that are trending on the terminal this morning. Global oil markets are on track for a record surplus next year as demand growth slows and supplies swell. The latest IEA report says inventories will accumulate at a rate that surpasses the average buildup during the pandemic in 2020. Elsewhere, India and China are restoring economic ties strained by a clash at the border in 2020. Prime Minister Narendra Modi will be meeting Chinese Premier Xi Jinping for the first time in 7 years, a sign that India is drawing closer to other BRICS countries following President Trump's new tariffs. And the latest twist in the Musk versus OpenAI court fight, a U.S. district court ruled that Elon Musk must face claims by OpenAI that his attacks on the startup amount to years-long harassment campaigns. A trial in Oakland federal court is scheduled for March. Coming up on the show, Besson suggests a jumbo cut in September. More on that, and don't miss an interview with Scott Besson coming up later on U.S. programming. You're watching Bloomberg TV.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller, the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Next week, Bloomberg is live at the Jackson Hole Economic Symposium, bringing you news and interviews with Fed leaders and other economic experts. Tune in for continuing coverage leading up to a special episode of Surveillance, August 22nd at 9 a.m.
I think the real thing now to think about is, should we get a 50 basis point rate cut in September to make up for the delay and the lack of data.
Treasury Secretary Scott Bessent speaking after yesterday's benign inflation report. He was speaking on Fox Business in a wide-ranging interview. Let's unpack some of it with Bloomberg's Jill Desis. Jill, great to see you this morning. It's interesting to see it's not just President Trump upping the pressure for jumbo rate cuts, it's Scott Bessent as well.
Yes, that's right, Danny. And I think, obviously, while you have markets pricing in a rate cut for the next meeting, certainly I think this jumbo size cut 50 basis points, a bit out of expectation there. So it does feel like that pressure is ratcheting up a bit. I thought what was really curious about Scott Bessent's comments there is that he's really kind of doubling down on what has been this broader criticism that the Trump administration has had towards some recent data. So his comments he was making right after that inflation report, as you mentioned, but he also cited, when he was making the case for a 50 basis point cut, the revised jobs figures. So pointing specifically to those May and June figures as saying, look, if we had that data earlier, if we had those revised figures earlier, then we should have started cutting rates earlier. So I think that, kind of tying all that in together and that package of how exactly the Trump administration is, one, piling pressure on the Fed to cut rates, but also two, pointing to some of its, issues with some of the recent economics data, I think, kind of paints a fuller picture there.
It wasn't just the data that Bessent talked about. He also dismissed that China may invest in the U.S. as part of a trade deal. Jill, let's take a listen to that.
I think your initial question, Larry, was could China do a buyout like this? Yep. And my sense is no, because a lot of the buyout or the funds from the buyout are going to go to critical industries that we need to reshore, and a lot of those need to be reshored away from China.
Jill, it's different than the approach to other countries, which is invest in the U.S. and maybe you get a better deal. What is the differing approach with China as we get that 90-day extension?
Yes, that's right, Danny. Well, I don't think that these comments are really all that surprising at all. I mean, I think it makes much more sense for the U.S. We clearly have seen the playbook with the European Union, with Japan, with South Korea, with countries that do have much closer sort of diplomatic ties as allies, certainly to the United States, saying, open a multi-$100 billion investment fund and then invest in the United States, and maybe you get a more favorable deal. China, though, obviously a major economic partner with the United States, but also a strategic adversary. And of course, the United States has longstanding concerns, national security concerns around China, has talked, at length, both of this administration and the Biden administration, prior administrations, about ring-fencing certain industries, that concern about China's development of advanced technologies and such, and how exactly that sets up China, as, sort of that competitor with the United States on a global scale. So I think it does make sense that, an investment pathway for China is not available in Trump's eyes or in Bessent's eyes as maybe it is with other nations. What I do think that leaves open the question of is, we've got this pause in place for the U.S. and China to continue hashing out, rules over how exactly their trade relationship is going to look. But ultimately, what kind of concessions do you make? I mean, China continues to, have in its back pocket that idea of its control over rare earth supply. Obviously, that's been at issue throughout negotiations this summer. But then, where exactly do you go from there? I think that it's a really, really open question here. Maybe you expand this out another 3 months or so, but I'm not sure how much that actually gets wrapped up by the time this truce once again hits a deadline in November.
Jill, it was also just a busy day for officials on Fox yesterday because the new appointee, we'll see if he gets confirmed to the BLS, E.J. Antoni, was on Fox 2. And Jill, this is what he said. Until it is corrected, the BLS should suspend issuing the monthly jobs report and keep publishing the more accurate, though less timely, quarterly data. Jill, there was also reporting from the Wall Street Journal that Trump has been taking aim at the revisions specifically because he thinks they hurt him politically. What could all of this look like? And is this possible to do?
Well, Danny, I would point out that in other major economies around the world, sometimes you do see cases of, governments not publishing data and then coming out with it later. A really prominent example to me is China, the world's second largest economy, which just a couple of years ago actually stopped publishing some data on youth unemployment and then brought it back several months later. There's several other economic indicators, that they held off from as well. Look, I think, at this point, obviously the Trump administration has taken quite a lot of issue with the severity, the magnitude of those revisions. We also know that Trump often likes to criticize, numbers that he doesn't necessarily like. We'll see what happens with this BLS nominee, but ultimately, yeah, I think lots to unpack there.
So much to unpack. Jill, thanks for doing it for us. Jill Desis. And tune in 7:30 a.m. Treasury Secretary Scott Bessent will be on Bloomberg Surveillance. Stay with us.
Opinion, at least, the reason that the U.S. is so creative and innovative and has so much interesting development and has, most of the largest trillion-dollar businesses is because we have the best capital markets. And capital market development is really what creates the funding in order to pursue ideas. So in America, any idea you have, there's a market for it. Right? So building markets like the securitization markets in the U.S., really allowed for non-financial companies to get into the financial industry business. And that was really a derivative of making the securitization market so competitive. So building securitization markets and continuing to grow markets and figuring out how to continuously fund ideas, I think that's going to be the next stage of growth for these markets.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Watching Bloomberg Brief, I'm Danny Berger in New York. Let's take a look at the front pages this morning. What's making headlines on the major publications? First up, a Wall Street Journal exclusive that AI startup Perplexity has offered to purchase Google's Chrome browser for $34.5 billion. Sources there saying that several investors, including large VC funds, had agreed to back the transaction in full. Next up on the Washington Post, President Donald Trump deploying the National Guard in D.C. on Tuesday night to what he says to curb crime. It does remain unclear what new directives the D.C. police would receive from their new federal managers. District officials said that they were still in command of the department. The White House, however, continued to project clear control. And on the New York Times, German Chancellor Friedrich Merz and Ukrainian President Volodymyr Zelensky, along with several allies, will be hosting President Trump for a video call later today. All of that comes ahead of a Trump-Putin summit in Alaska on Friday. Let's talk more about that summit and that phone call. Joining us with the latest is Bloomberg's Greg Sullivan. Greg, what are we expecting from this phone call today?
Well, there's a few things. One, it's obvious that President Volodymyr Zelensky and the European leaders will not be at the table at the summit on Friday. That will be a summit only between President Trump and President Vladimir Putin. For European leaders and for Kiev, that there's a potential nightmare scenario where there's a deal that is agreed to that they ultimately can't accept, that just crosses their red lines. So they are trying to telegraph to President Trump what those red lines are, what ahead of time, and try to press their own concerns about security guarantees, potential red lines, and also trying to convince Trump to ratchet up the pressure on Vladimir Putin rather than accept a bad deal. So this is a very important phone call for them. Their only chance to try to leverage influence with President Trump ahead of his meeting with Putin.
Greg, only a minute here, but what are the expectations for Friday? How has the administration been speaking about this?
Well, from the White House and the administration in general, we've heard them tamp down expectations. President Trump himself said that he's willing to walk away if there's no deal to be had, called it a feel-out meeting where he's going to assess the possibilities for a deal. But we also know that if the White House is willing to put Trump and Putin in a room together, they probably want something tangible to walk away with, whether that's a framework agreement or a deal to keep talking or just a step in the next direction. They want something to show. Whether that happens or not, we'll have to wait and see on Friday. But for now, they are tamping down expectations.
Greg, thank you very much for that update. That is Bloomberg's Greg Sullivan. Oil markets, they are weaker this morning, not necessarily in anticipation of that, but after the IEA casted a gloomy outlook for the months ahead of surpluses that would rival that of COVID. Okay, coming up, global stocks are at a record high. We're going to catch up with JP Morgan's Sitara Sundar. That's coming up next on your Bloomberg Brief. Stay with us.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico this way or that way. It will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
Jumpstart your trading day with 2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Bloomberg Open Interest.
Every trading day.
Only on Bloomberg.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Wednesday. Risk on rate cut bets. Global stocks hit a record high after inflation data lifts expectations of Fed easing. Could that be a jumbo cut? Treasury Secretary Bessent says the Fed should be open to a half-point cut next month. And President Zelensky and European leaders gear up for a call with President Trump ahead of the U.S.-Russia summit. The 16th record high for this S&P 500. We were up more than 1% yesterday. We add to that this morning after a CPI-fueled expectations. 97% odds that we'd get a rate cut, up by 1/10 and 2/10 for the S&P and NASDAQ. For this bond market, it is a rally this morning. It was a rally yesterday, but really only on the front end, but it goes across the curve this morning. We are lower by 3.5 basis points for your 10-year yield at 425.39. Let's look at some of the stocks on the move this morning. With that is Valerie Teitel. Morning, Val.
Good morning, Danny. Let's start with CoreWeave. There was a pretty disappointing result out after the bell yesterday, talking about costs surging 20-fold. This has really shaken investor confidence in their margins. We're seeing that stock trade down 9.2%. This could all be about this really big race to spend to build those data centers, and we're seeing those margins struggle off the back of it. Now, note, CoreWeave has quadrupled since its IPO since March, so it puts that 9% drop just a bit in perspective. Let's move on to the dining sector. Some bad news when it comes to guidance on how diners are spending. We've seen the fast casual restaurant chain Cava drop 23% in the pre-market, warning of softer sales ahead, warning of this soft consumer. This is a very similar picture that we've had painted by the likes of Sweetgreen and Chipotle, all warning that consumers are still focused on inflation and pulling back on restaurant spending. Next, let's head over to the digital asset space. We're seeing the likes of Circle fall in pre-market trade. Now, this is off the back of a round of share sales happening tomorrow. The CEO is involved in this share sale, so it's jittering the stock at the moment, down nearly 5%. Remember that Circle is one of the stablecoin issuers. They back USDC, the second largest stablecoin on the market. Danny.
Val, thank you very much for that update. That is Bloomberg's Valerie Teitel. Now, with stocks at an all-time record, JP Morgan Sundar Sundar writing, quote, "We see near-term pain and long-term macro gain in our macro outlook. We expect investors to look through near-term weakness and focus on a 2026 recovery." I'm pleased to say Sitara joins us now. She's head of alternative investment strategy at JP Morgan Private Bank. Sitara, wonderful to see you this morning.
Lovely
Thanks for
to
joining.
see you too.
So how much of that is in the price of these expectations for 2026 if risk assets are already at all-time highs?
So it's a question that we've been asking ourselves, honestly, pretty consistently since we've seen a pretty monstrous rally since the lows in April. But the bottom line for us is we still see mid-single-digit upside through next year. We actually just upgraded our S&P 500 price target to 6,650 to 6,750, which means about 5% upside from here. And when we think about global markets, we actually upgraded some of our forecasts there and actually narrowed some of our ranges, given that we're seeing a little bit more clarity on the policy side and on the economic front side. But then the underlying question is like, where is that constructive outlook coming from, and where is that bullishness coming from?
Exactly where I was going to go. So where is it coming
Read
from?
your mind. So there's a couple of pillars of it. One, the biggest thing for us is that we're expecting that upside to come from earnings growth. We're not waiting for a gift from the Fed. We do expect the Fed to cut about 100 basis points over the next year, but some of that is already priced in. So we're expecting earnings growth to be led not just by tech and comm services, of which we've seen pretty healthy growth even in this past earnings season, but financials and other parts of the market too, utilities too. So we're starting to see a little bit of that breadth, and we expect to see that breadth continue over the next year, one. Two, we're actually starting to see really positive green shoots on global IPO and M&A activity as well. I think people forget about the capital market activity story when they're talking about public markets, and we're starting to see green shoots. And honestly, if you look at May and June, it's actually the strongest IPO and M&A activity months that we've seen globally since May of 2022. So positive signals there. And then finally, I would dispel the notion that equity markets are complacent right now, because that's the other pushback that we've gotten. And what we're actually seeing is pretty firm delineation from an earnings perspective and even from a return perspective on the areas that are what we would think are a little bit more immune to tariff risks, some of the more secular areas of the market, tech, really software versus semis, but remains to be seen on what the underlying impact of tariffs are going to be to semiconductors versus the discretionary side, in the more consumer-oriented sides where there's a little bit more uncertainty as to what the impact of tariffs are going to be and the smaller cap areas. We're leaning into large cap. We're still avoiding small cap in public markets at that time. We would prefer to take that exposure in private markets.
There have been a couple people that have looked at this earnings season, and I would say JP Morgan and Neil Dutta are among them, who have said that companies for now are absorbing any sort of price hikes in their margins. I think the Goldman stat was about 2/3 of companies are. And at some point that ends. If that does end, do you assume it comes in the form of just higher prices, a little bit of stickier inflation, or is it weaker growth as consumers push back and maybe there's less spending by companies and cost cuts and layoffs?
Yeah, so I think two things. One, we still think that there's time and the margins are healthy enough and more robust than they were even in the 2018 period when we experienced this kind of trade war dynamic and even prior to that. So we still think there's a healthy enough margin that the time for those decisions to be made with at least certain companies and especially those secular growers, there's more time to be able to make that decision. Two, right now, you're right, we haven't seen as much of a pass through to the consumer as we've seen in prior trade wars. But if you were to ask me, which you have, we likely are going to see the pass-through come through higher prices and therefore a little bit stickier inflation, which is the number one question that we've been asking ourselves too. We believe that we're in the midst of a regime shift where we're going to see moderating economic growth. Rates are going to come down but stay more elevated than the prior cycle. And inflation is likely, at least in the near term, going to inflect a little bit higher given the impact of tariffs. Still not at a level where we're concerned about stagflation and like 1970s type of stagflation risk. But in that type of environment, we've been really talking to clients about ensuring that the building blocks of their portfolio evolve in lockstep. Because the seasons are changing, right? You change your wardrobe. If the season is going to change, if the regime is going to shift too, the building blocks of your portfolio should change as well.
Well, to that point, because the space that you cover, alternatives, it's often said is, a really good way to diversify when things are volatile, but things aren't really volatile right now. Stocks are kind of melting up. Bonds have been trading in a tight range. Are we going to get to a place again, is this what you're saying, that volatility might rear itself and you need that diversification?
Yeah, I think there's like two things. One, the inflation, it's like market volatility versus economic volatility. Market volatility, it's definitely subsided, but when you look at the VIX and the MOVE index, still at elevated levels versus history. So that volatility is there. But the inflation volatility, we don't actually expect to go anywhere anytime soon. We still expect to see that. So there are pockets of alternatives that actually can provide you inflation resilient income within your portfolio because we're still seeing volatility on the long end of the curve within the core fixed income space. So those longer duration bonds are likely not going to be able to protect you as well in an inflation shock versus an economic shock. So what does that inflation resilient income look like within alternatives? Infrastructure is a key area, not just in providing that income, given the focus on resilience of that income because of multi-year contracts that are backing those cash flows, but also the secular tailwinds that we're seeing within that space, acceleration of power demand and the acceleration of CapEx that we expect to see within the infrastructure ecosystem, not just within the US, but globally as well.
All right, Sitara, we're going to have to leave it there. Thank you so much for joining this morning.
Thank you for
really
having me.
Appreciate it. That is Sitara Sundar of JP Morgan. Let's now get you some other top stories that are trending on the terminal this morning. Global oil markets are on track for a record surplus next year as demand growth slows and supplies swell. The latest IEA report says inventories will accumulate at a rate that surpasses the average buildup during the pandemic in 2020. Tencent topping quarterly revenue estimates and turning its attention to the AI race. China's most valuable company boosting its spending on AI in an effort to integrate the technology into more services and content. And Texas Democrats are considering their options amid reports that they could return to the state as soon as this weekend. The move would end a standoff where more than 50 state representatives left in a bid to block controversial new congressional maps backed by President Trump. Coming up, CoreWeave comes up short, shares down by 9.33% this morning after a disappointing outlook. That conversation coming up next. Stay with us on your brief.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
We published a story recently about the explosion of robotic companies and innovation in China. I think we said there's something like 50 or 60 robotic startups in China. Are we behind, and should we be concerned about that?
I think as far as the state of innovation, no. Most of those robots aren't built for work, for the things that, which is the entry point for these robots today. They can do some interesting things. A lot of times it's backflips or making coffee or something, but not really useful work. These robots can pick up to 50 pounds on our next generation. So they're great for the education of robotics, getting people interested. But as far as humanoids, they've got to check that safety box before they can come into any of the facilities here. And that's a big bar that we haven't seen much of out of the Chinese robots.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
The tariffs and trading wrapped up by the end of October?
That's aspirational. The big trade deals that aren't done aren't agreed. Switzerland's still around. India's been a bit recalcitrant. I think we will have agreed on substantial terms with all the substantial countries.
Treasury Secretary Scott Bessent doubling down on his statement to the Nikkei, saying that substantial trade deals should be largely wrapped up by October. Let's get the latest with Bloomberg's Brendan Murray, who covers trade for us. Brendan, what do these comments suggest as to where China and U.S. talks are?
Well, the comments from Bessent on China suggest that there's a fairly narrow path for the U.S. And Beijing to reach some sort of trade deal. If he's basically taking Chinese investments in the U.S. off the table, then that leaves, it leaves the two sides with a lot to sort out. Remember, we heard President Trump ask China to buy more soybeans, purchase American exports, and we didn't hear anything from China in the aftermath of that. In fact, Xi Jinping had a call with the president of Brazil, which is a big soybean exporter. So what we're seeing is with the extension, the 90-day extension that President Trump signed off on for this China tariff truce, where it's getting more and more difficult to see how they're going to come together and agree on anything that you could call a trade agreement.
Brendan, there continues also to be this rupture between the U.S. and India, and we are seeing some normalization of ties, it would seem, between India and China. How is this dynamic evolving?
Yeah, exactly. So as the U.S. becomes more of an antagonist in the global trading system, these countries that depend on trade are trying to realign themselves with each other. China and India had a falling out over some security and border issues, and they look like they're trying to patch some of that up now. And of course, we've had the BRICS countries in recent days show more and more signs of unity. So as the U.S. Kind of draws this tariff wall around itself, other countries are not retaliating for the most part, and they're trying to, as they would say, diversify their trading relationships with other countries and get on with what they have been doing for the past couple of decades. But there's a big question as whether that will be successful without the U.S. as sort of the main driver of a global system that's geared toward low tariffs.
All right, Brendan, thank you very much for that update. Brendan Murray. And again, don't miss our interview. Secretary Bessent will be speaking with Bloomberg Surveillance at 7:30 a.m. New York time, 12:30 p.m. in London. Let's now turn to this corporate earnings season. Shares of CoreWeave getting hit following a double-digit after-market dip this morning, down by 9.25%. They had a disappointing earnings outlook as rapid AI data center expansion adds to margin pressure. Bloomberg Tech host Tom McKenzie joins us now. Tom, I thought these companies have to spend. What differentiates between the market punishing those spends and rewarding it?
Yeah, Danny, that's part of the challenge, isn't it? Because this is a company with a huge backlog as well in terms of orders that they have to spend to, of course, ensure that they can meet that backlog, $30 billion for CoreWeave. But also the spending comes at a cost, and there's an expectation story here as well, because this is a stock that's, up 3 times since the IPO back in March. They actually beat in the second quarter, but the focus, it seems, for investors was on the losses, which came in at about 40% higher than the estimates. They've been spending heavily on acquisitions. They've been spending, of course, on building out capacity to meet that demand. And when you hear the CEO, Michael Entrata, talking about that demand, he says it's not letting up. And of course, we've had that reiterated in the recent earnings season from the big cap spenders in terms of the likes, of course, of Meta and Amazon and Microsoft, all continuing, Alphabet as well, to double down in terms of their capex spend, of which CoreWeave is going to be a beneficiary and remains a beneficiary. Key clients include OpenAI and Microsoft. But it seems the losses are there. They stood out, certainly for investors. Maybe a bit of profit taking as well, given the run-up that stock has had. Longer term, there is still that question as to how long this capex spend is going to continue. Most analysts seem to think this is still a 2026 story in terms of the momentum will still be there. Longer term, the question marks may be raised again for CoreWeave, but for now it's the cost of having to build out to meet that demand that they're seeing. A silver lining again could be that pipeline, that backlog of orders of around $30 billion.
Elsewhere in tech, Tom, this one raised a lot of eyebrows. Perplexity making a $34.5 billion bid for Google's Chrome. Does Perplexity have $34.5 billion, Tom?
No, they do not, Danny. They do not have $34.5 billion. They're valued at about $18 billion. They had recently raised about $100 million, but they say that they would pile in other investment from other private sources as part of this bid. I think it's a reminder that Perplexity AI is a real contender in terms of at least nipping at the heels of Google search, and Google's most recent results, Alphabet's most recent results suggest that they're still obviously generating huge amounts of revenue from that key part of the business. But Perplexity AI, which is the app, of course, with the AI search functions in it, is starting to carve out, at least around the edges, market share. It's gained a lot of custom and a lot of users. It's bold, it's ambitious. This could be a question that won't be resolved potentially for years, certainly months, because Alphabet has said that they are going to, of course, contend and push back against this legal finding from this US judge back last year, which found these these monopolistic practices and anti-competitive practices, and part of the prescription could be the breakup of parts of the business, including the spinning off and the breakup of Chrome. Again, Alphabet says it will push back on that in terms of its legal response. So that could take months and years to resolve. I think it's a reminder that the search part of Alphabet is still facing some of a challenge, some of a threat from some of these incumbents, and that Perplexity AI, with this additional 100 million that's raised, is very ambitious. They also made a bit of a play for TikTok as well. So they're a player to watch, certainly in terms of the search AI business.
Yeah, it's just been amazing to watch how something as mainstay as Google search really can get challenged by the changes happening in AI. Tom, fantastic reporting. Thank you for joining us, Tom McKenzie. Kava shares, those are also under pressure this morning. They are down almost 24%. It's the fast casual dining company. It slashed its annual sales outlook after a sharp deceleration last quarter. Let's get more from Bloomberg retail reporter Katie Linsell. Katie, what went wrong?
Yeah, so for Kava, this really shows that we've been seeing this fantastic story from this company really growing at a fantastic pace. But really, they're not seeing the same confidence from the US consumer that they've been used to so far. So US consumers are actually starting to get very worried about inflation, very worried about tariffs. And when we see that kind of environment, the first things that they start to pull back on are fashion and dining out. They're not looking at the sort of nice to haves, they're looking at the must haves. They're really cutting back their spending. And so for Kava, that means even though, you know, they are innovating as much as possible, they're bringing out different kind of dishes, they're still expanding their stores. We've seen that they've had to really cut their outlook for this year. They're looking, rather than the 8% sales growth, they're looking at 6% sales growth. And they've seen a really sharp deceleration in the second quarter. So, yeah, it really shows for Kava that things are starting to get real. It's not that same kind of growth story that we're used to there.
Well, to that point, Katie, and you were saying this of consumers pulling back. We were just looking there. It's not just Kava, it's Chipotle, it's Sweetgreen, which more recently also gave a disappointing outlook. When we evaluate them, something like a Chipotle, a lot of the conversation has been, do they need to change their strategy? How much of this is just about individual company strategy versus a consumer where fast casual doesn't give them the value that they want in a value-seeking environment?
So I think overall it is a difficult environment to be in. As I was saying, consumers are pulling back from dining out, which costs extra. You know, why not spend your money on your groceries and cook at home and dine much more cheaply that way? And that's something we're not just seeing in the US, but also in other geographies. Having said that, we've also got a difficult environment more broadly for food and grocery and snacking, with more and more consumers using these weight loss drugs, which means that shoppers are looking for sort of smaller portions, healthier portions. I do think the Kava broadly is hitting the right tone there. You know, their sort of combination bowls are known for proteins and salads and healthy foods. But really, this is proving to be a more tricky environment broadly for these kind of brands. So they've got to be very clever going forwards.
Katie, thank you very much for that. That is Katie Linsell. And by the way, in a sign of the times, both Wendy's and McDonald's are cutting back on their breakfast items, the maple bacon chicken croissant and the McGriddle, because apparently people are pulling back by not eating out and having fast food for breakfast. So sorry, go get your McGriddle while you still can. Okay, coming up, we're going to set you up for your trading day. There's Fed speak. There are high-level talks on deck over Russia, Ukraine, all of that coming up next.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
You're watching Bloomberg Brief with Danny Berger in New York. Let's get you set up for your trading day on this Wednesday. First up, don't miss our exclusive interview with Treasury Secretary Scott Bessent 90 minutes from now at 7:30 a.m. Eastern Time. We're also going to get some Fed speak that comes from Barkin, Goolsbee, and Bostic. Finally, President Zelensky and European leaders are gearing up for a call with President Trump ahead of Friday's U.S.-Russia summit. Some stocks on the move pre-market. CoreWeave had a larger than expected loss, spending a lot on AI and data centers, so margins looking poor. Shares down almost 10%. Kava also cutting its revenue forecast. Diners spending less on fast casual restaurants, down 24%. Finally, Circle down after a post-market offering of a combined 10 million shares along with its shareholders. Let's take a look at the bond market as we head to the end of the hour. It is a rally underway across the curve, but that's not what we got yesterday. Yesterday, it was the front end, which continues to move lower, but it was a long end yields that moved higher. In fact, the 230s curve moved to its steepest since January of 2022, whether that was driven by underlying components of CPI, maybe stickier services, or concerns about various government institutions like the BLS. Maybe a combination of them both, but we are seeing a 10-year yield up about 3 basis points, just under 4 at 4.25 on the dot. Your 30-year yield lower by 4 basis points at 4.8353. All right, that's it for Bloomberg Brief. Surveillance up ahead. This is Bloomberg.
break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We certainly have seen signs of very rapid risk-taking.
The bulls will say there is further room to go.
From a technology and an innovation standpoint, it is still hard to beat the U.S. markets.
The big picture for the equity markets, it's about profits, profits, profits.
The equities are just focusing on the profit story, and I do think that there's some durability.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Wednesday at all-time highs. The S&P 500 closing above 6,400 for the first time in market history. As inflation data leaves investors locking in bets for a September rate cut, the Treasury Secretary, Scott Bessent, joining the program later this morning, making the push for the Fed to go big.
Well, really, when it comes to the Trump administration, you can expect the ethos is go big or go home. But he is calling for the Federal Reserve, really signaling that they should actually cut, Jonathan, by 50 basis points in September. He's highlighting the fact that we had this weaker than expected labor report. And then he went on to say the real thing now is to think about is should we get to 50 basis point because they could have been cutting in June and July had they had those revised figures at the time.
So the good news, limited tariff pass-through relative to what was expected. That can change in the coming months, but let's work with that for now. The bad news, the potential for demand destruction and maybe tighter margins in corporate America. This is something we all read repeatedly in yesterday's research. Evidence building that companies are tolerating a margin squeeze. How that develops in the months to come, absolutely critical.
It is critical, and there's nowhere else to really look at how critical this is than Detroit. Look at what the big auto companies are telling you. Ford, they're taking this right down when it comes to the tariffs. Right now, they are absorbing it. What does this mean for car prices in 2026? And that is why everyone is looking at the end of the year and 2026 for potentially this adjustment and inflation and higher prices to hit goods.
The counterpoint is, what does it mean for the labor market if they have to cut costs? That's another problem, which is why we've got to wait for more data. Early September, another payrolls report. A week later, another CPI report, and then we get to that September meeting, and the pressure is building on this Fed chair to make a move.
It's building on this Fed chair to make a move because you see constant calls, even coming from the Treasury Secretary, that they should go big with this 50 basis point cut. We also need to know whether or not there's going to be, if they don't make the cut, if there's going to be another dissenter at that meeting. Will Steve Myron be able to get confirmed in time to be in that meeting? And then you have other individuals that they seem to be throwing in the mix for Fed chair. Potentially, they're signaling if you maybe want to get on this list and have an interview with the president to maybe run the Federal Reserve, you should put your hand up and dissent at the next meeting.
And not the only thing we need to discuss with the Treasury Secretary later on this morning at about 7:30 Eastern Time. Also need to talk about what's going on with trade, what has happened with trade, and what on earth happened earlier this week with NVIDIA. How did we come up with this agreement between NVIDIA and the government?
This is a great question. It seems to be potentially just this conversation in the Oval Office between the president himself and Jensen Huang. The president saying, well, I want 20% then of those chips that now I'm allowing you and giving you the export licenses to go back into China. And then I think Jensen Huang ran the numbers in his head and was like, oh, it's a little high, even though we need billions of dollars coming from China. How about 15%? And then that's how the deal was struck.
And that's where we are right now. All-time highs on the S&P 500. Equity futures had some way to the rally, up by 0.2%. Coming up this hour, we'll catch up with Jeff Yu of BNY with stocks at all-time highs. Jeanette Lowe of Strategas as pressure builds on the Fed to cut rates. Plus, we'll speak to the former BLS Associate Commissioner, Michael Horrigan, as Trump names a new BLS head. We begin this hour with stocks at fresh record highs on Fed rate cut optimism. Jeff Yu of BNY writing the following. July CPI figures may not have generated too much of a surprise, but the prospect of global stagflation continues to linger. Jeff joins us now for more. Jeff, welcome to the program, sir. Are you seeing evidence that companies are tolerating margin squeeze, and how do you anticipate that will develop in the months to come?
Well, I think it's one of those counterfactual things, right? The fact that the tariff impact is not showing up outright in CPI figures, or well below what markets were expecting, shows it's being absorbed somewhere, and that clearly is going to be a sign, and based on some of the earnings reports as well, that it's being absorbed by individual companies. But they're hoping that by holding down, let's just say, the income erosion for households, that can keep demand going, because at the end of the day, you need household demand to continue to drive earnings higher, as much as the AI-based and CapEx as well. So I think these factors putting together support that view. Having said that, look at the BOE, look at the RBA, and let's see what the Fed says. Stagflation still is an issue globally.
So, Jeff, we've got to understand how this rebalances in the months to come, both domestically here in the US and globally, as you say. The stagflation prospects in America are well discussed. What about globally? What is it that you see globally?
Well, let's take the Reserve Bank of Australia, right? And similar to the Bank of England, there was quite a divergence of views on where the labour market's heading. And the best manifestation of that is you're seeing clear loosening in the labour market. And we're seeing that in the US as well. Not enough jobs growth and compared to strong cycle, but that is not translating into softer wages. You look at median pay-as-you-earn wages in the UK, 5.7% year on year for what is supposedly a soft growth economy. So that's where the divergence is. So you're not seeing labour market softness translate into weaker wages, and that means people still have spending power, at least those with a job, and that will result in stagflationary outcomes.
Jeff, when it comes to the CPI yesterday, services prices still went up. They propelled what was going on in core. Can the Fed just ignore that?
I think it's difficult for any central bank to ignore, but once again, you can't prove the counterfactual, because if you let things, let's just say, run a bit too much and hold off on easing, then you may end up, having too tight conditions, when the cycle really begins to turn. But I look at the US number, services inflation, for example, just above 2%. That's actually pretty benign. It's more than twice that level in the UK, for example, and it's higher when you look at non-tradables inflation in Australia. So the Anglosphere right now really faces a services inflation issue, but that just goes back to the wage issue. Wages, the strongest input into services inflation, they're still quite robust right now. So how do you square that circle? A challenge globally.
So are you basically saying that the Fed doesn't have the all clear in September?
I think right now it doesn't have the all clear. We're certainly confident that they can move later in the year for December, for example. But we concede right now, given what they've seen with the labour market, some of the revisions, there is a strong chance that they will have to act in September as well. But you can't prove the counterfactual. And I think right now, look at what the RBA did, look at what the BOE did. So the BOE was like split down the middle almost, but they're more willing to cut than not cut right now, just so that further up ahead towards the end of the year, they don't want to be caught out.
And Jeff, look at how the bond market's responding to it. The bias to reduce interest rates. Let's focus on America. Look at the reaction yesterday. Yields lower at the front end of the curve. Further out along the curve, they start to bleed a little bit higher. The curve starts to steepen. Jeff, what do you make of that dynamic?
So our data is showing that short utilization, so people are anticipating some steepening in the 7 to 10 year part of the curve, that is really moving. So they don't want to go too far out the curve, and international investors, to be frank, they'd actually come back in and buy longer dated bonds, right? Because they're seeing a weaker dollar, they're seeing higher yields, happy to own that. But you have this, the 7 to 10 year part, which is relatively more liquid. I think that's what, based on our data, clients are identifying as the best part to price in some stagflation risk. So this is the part we need to watch really, really carefully.
So Jeff, just to be clear, when you say stagflation risk and pricing that at the long end of the curve, that's more steepness?
Absolutely. So bear steepening is a risk we identified for this year. That will continue, and even before we talk about the fiscal issues, but also from the US side, look at where the dollar is as well. We need to talk about pass-through inflation from the dollar, not the tariff side of things, but the fact that euro dollar is 116, 117 going against my view, but just general imports will be more expensive. And at the other side, it's actually loosening financial conditions for EM because they want stable exchange rates, but you're worried about overvaluations. We saw Bank of Thailand, for example, cutting rates to 1.5%, close, to the conventional 125 lower bound for them if you exclude the COVID period. So that's already becoming an issue for APAC. So maybe they don't want too weak a dollar either. So different dynamics are coming into play here.
Well, let's just stay on top of foreign exchange. We're seeing that story play out again this morning. Euro dollar back to 117.24, a move of 0.4%. Jeff, what is it about the data policy mix here stateside that continues to contribute to this dollar weaker story?
So real rates, it's as simple as that. So when you have inflation running at where they are right now, but the market is pricing in Fed easing, then the real rate trajectory is going to be softer, right? So it's going to be barely 1.5% if you look at terminal trajectories. I go back to an extreme case, Thailand. Yes, they're at 1.5%. Their latest inflation print, negative 0.7, right? So that's high real rates in Europe as well, right now. So Spanish inflation 2.7 is high, but German inflation at target 2%. So that's flat right now. So I think to offset that, Europe really needs to just manage their growth expectations, manage inflation expectations. So I'm probably a bit out of consensus here, but I think they need to cut in September as well on the ECB side, just to match where the Fed is, because their export engine, they've got issues right now.
Well, Jeff, when it comes to the exchange rate, what's the line in the sand for the ECB?
So I think they should have passed the line in the sand, for example, because in June, their assumptions were anchored at, I think, 111, 112, that kind of a level. Where we are right now is beyond the 75th, probably close to the 90th percentile of their exchange rate assumptions. So in the September forecast, I'm actually expecting the ECB staff projections to highlight next year they're going to miss targets, especially at these levels. So I think we're well past the line in the sand now.
Expected more rate cuts. Jeff Yu of BNY. Jeff, thank you, sir, with the latest. That's the view on both Europe and the United States. Here in America, the focus on the Federal Reserve. We continue to expect Fed cuts to resume in September. That was Citi yesterday, Nomura. The Fed likely to cut in September. Neil Dutta, good friend of this program over at Renmac. September is a lock. That was the consensus view yesterday after inflation came in.
And we don't even have all the data yet. The Federal Reserve is going to come out and say we'd like to see the totality of data. We still have one more jobs print and one more CPI print before the Fed meets. And potentially, is there anything in those data points that would put the Fed off course to what the market is expecting? What happens if they don't cut and the market has lined up basically thinking this is fully baked in?
The Jackson Hole coming up. Another opportunity for the Fed Chair Jay Powell to set expectations. That's about a week or so away. The latest story in the market, record highs and up another 0.2% on the S&P, with an update on stories elsewhere with your Bloomberg Brief. Here's Yahara Arnott. Hey, Yahara.
Good morning, John. President Donald Trump will take part in a conference call today with Ukraine President Volodymyr Zelensky and European leaders. Sources telling us here at Bloomberg that Zelensky will travel to Berlin for the call, which is being hosted by German Chancellor Friedrich Merz. It comes ahead of Trump's meeting with Russian President Vladimir Putin on Friday in Alaska. Meanwhile, AI startup Perplexity offered to buy Google's Chrome browser for $34.5 billion. The offer comes as Google faces U.S. antitrust proceedings that could require it to sell the web browser. Baird analyst Colin Sebastian says Perplexity's offer vastly undervalues the asset. He estimates Chrome's value is closer to $100 billion. And Treasury Secretary Scott Bessent, who's joining our program later this morning, suggested the Fed should be open to cutting 50 basis points at its September meeting. Bessent cited the revised payrolls data that showed weaker job growth and came out 2 days after the central bank's last meeting. He also said he was hopeful Trump's pick for the open Fed board position, Stephen Myron, will be in place in time for that September meeting. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara later on this morning, and more from the Treasury Secretary at 7:30 Eastern Time. Do not miss this conversation. Just a few hours away, right here on Bloomberg Surveillance. Up next on the program, betting on the Fed to go big.
The CPI was completely in line with expectations. How we've characterized the sort of tariff-related pass-through, the evidence is that it's happening, but it's happening slower than I think many people expected.
Up next, we'll catch up with Jeanette Lowe of Strategas, live from New York City this morning. Good morning.
astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Equity futures positive this morning by 0.2% on the S&P 500, up again on the Nasdaq by 0.3, and the rally continues on the Russell. Small caps up by 0.7. In the bond market, yields lower across the curve. We're down by about 2 or 3 basis points at the front end of the curve at 370. Yields higher over the last several days on a 10-year maturity, just a little bit lower this morning, down by 3 or 4 basis points. We're back to 425. Under surveillance this morning, betting on the Fed to go big.
CPI was completely in line with expectations. How we've characterized the sort of tariff-related pass-through, the evidence is that it's happening, but it's happening slower than I think many people expected. The broader story here that we're still seeing is that it's very concentrated within goods, it's happening slowly, and outside of that, inflationary pressures look very manageable. So I think for a Federal Reserve, that is a very good sign.
So here's the latest this morning. Inflation data leaving the door wide open for the Fed to cut interest rates next month. The Treasury Secretary, Scott Bessent, saying a 50 basis point cut should be on the table. Bloomberg's Mike McKee joins us now for more. Mike, good morning.
Good morning, John. I think I would put it that the CPI report maybe unlocked the door, but it didn't leave it wide open yet because, as you mentioned at the top of the show, we still have a number of inflation reports and a jobs report to come before the Fed's next meeting, and there are some worrying signs. A dangerous mix, Inflation Insights' Omer Sharif puts it, because services inflation is rising, and services inflation is still something the Fed has to keep in mind. They've got to worry about that as well as goods inflation. Omer also points out that of the 75 goods items ranked in the CPI report, 65% of them actually did rise in price. That is the highest in 30 years. So there are some signs that tariffs are bleeding into the numbers. Overall, you look at unemployment, 4.2%, and inflation running 3%. And it's not a guarantee that you're going to want to be cutting rates in September. We'll have to see if the numbers confirm that when we get to the beginning of the next month.
And Mike, just to build on that, things can change in the months to come. At the moment, limited signs of tariff pass-through relative to what was expected. And a lot of economists are suggesting that perhaps companies are absorbing this on margin. But that can change in the months to come. And Goldman, who took a lot of stick yesterday from the president, actually predicting that's what's going to happen. Mike, I wonder what you think of this. They're saying consumers in the US have absorbed an estimated 22% of the tariff cost through June, but their share will rise to 67%. They said this on American businesses. They've absorbed around 64% of the cost of tariffs so far, but their share will fall to less than 10%. Mike, how's the Fed going to grapple with the fact that this could rebalance again in the months to come?
Well, I think they're already looking at that. Some of the Fed officials who even are voters like Albert Musalem is talking about that. And Raphael Bostic is talking about that we're going to continue to see inflation ramp up for consumers because prices are going to go up. Companies were waiting to get official tariff levels, which only went into effect a week ago. And now they can plan for what they're going to do with prices. And we've seen companies already starting to do that, like Procter & Gamble. Prices are going to go up. Americans are going to pay more. And companies are probably going to try to keep their margins reasonably stable in order to keep these kind of valuations in the stock market.
Mike, do you sense that a lot of people in the market are treating this as an event and policymakers are thinking about it as a process?
Yes, I think that's what you're seeing in the futures market when they're starting to price in maybe 2 rate cuts. That's not going to happen. The Fed is going to be looking at maybe 1 and then see how things play out, because it is going to be a process for them. They don't have to cut rates right now. That's the argument that even some members who are looking for a rate cut have made, because inflation is still high, still above their target.
Mike McKee, we'll touch base with you a little bit later this morning. Thank you, sir. Jeanette Lowe of Strategas, a bed company, the team over there writing the following: debate now is not about whether to cut rates in September, but by how much. Jeanette joins us now for more. Jeanette, welcome to the programme. Also a big question about who's going to be on the committee by the time we get to the middle of September, and whether Stephen Myron can be confirmed by then. What are you telling clients about the prospects of that happening?
Yeah, I mean, so this is something that's kind of interesting, because we think that the Trump administration would definitely like him to be on the Fed board before the September meeting. And the question also is, do they want him on the board before September 12th, when the dot plots and the forecasts have to be submitted? So if the Senate's not coming back until September 2nd, we've looked at, prior cabinet appointees early on in this Trump administration, as well as Myron's appointment earlier this year to the Council of Economic Advisors. And in general, it takes about 13 days for a cabinet member to be appointed. So if the Senate comes back on September 2nd, that does give enough time for him to be on the Fed board by the September 16th, 17th meeting, but it may not give him enough time to be in time for September 12th. So that might mean that the Senate Banking Committee has to come in earlier to get this confirmation process moving, to at least hold the hearing in advance, so then they can start moving to a committee vote when they come back officially from recess, and then move to the Senate floor.
Jeanette, how likely is that they're going to move this quickly?
I think it might depend on whether or not there's pressure coming from the Trump administration. If he asks them to treat this like a early cabinet member early on in the administration. Obviously, Marco Rubio was, confirmed quite quickly with only, I think, 5 days. So it's going to depend if there's some pressure there to actually get this moving, since obviously it's not usual for members to be called back from recess early. But I think that's where there's going to have to be that pressure point, is whether or not that occurs, to get the Senate to actually move and try to advance this a little bit more quickly.
And when it comes to Steve Myron, he has the benefit of already going through this process. What's the likelihood of E.J. Antoni getting confirmed to run BLS?
Yeah, I mean, I think that there's probably going to be, deference to the administration about getting his appointees in place. We haven't really seen any major pushback significantly from a few Trump nominees overall. And I think the other thing to kind of watch too with the Fed appointment is watch a senator like Tom Tillis, and see if he might actually start to raise some questions. Does he also, have a no vote in committee that could slow down the process? I think that's something else to kind of watch out for. But I think if in terms of the BLS appointee, there's going to be an effort to try to get his appointees to the positions. That's obviously been a fight within the Republicans and the Democrats in the Senate, and whether or not they should have abandoned recess in the first place, because there's been such a lag in getting some of these nominees confirmed.
When it comes to Antoni, though, there's been a lot of pushback in conservative economic circles about his nomination. And when you look at who's on the Senate Committee on Health, Education, Labor, and Pensions, it's some Republicans, where he cannot lose a single vote, that haven't had a problem with voicing their concerns with the Trump administration. I'm thinking of Bill Cassidy, Ron Paul, Susan Collins, Lisa Murkowski. Do you think he really can get out of committee?
Well, I think obviously, as we've seen in the past, what happens in the hearing is most important. So if there is information that comes up in the hearing, that could change how those senators view the nominee and their ultimate vote on the decision. But as we've seen in the past, some of these same senators have had issues with prior Trump nominees, but then when push comes to shove, they actually do vote them through committee, and they do vote them through on the floor. So I think the hearing will be quite instructive, but it's always something to kind of keep in mind.
Given even conservative economists think this individual is highly biased and politicized, are clients telling you that they're concerned about the accuracy of the data going forward?
I think this is starting to become a conversation. We're starting to hear some questions about whether or not there could be some politicization coming now with the numbers, and whether or not people can feel like they can trust the numbers as much. It's not an overt concern at this point, but I think that that's obviously going to be something that's going to be in the back of investors' minds, just thinking about whether or not there is some option going down the road. And now that we've had this argument come up with the past BLS commissioner and with the past jobs data, whether or not there could be some sort of either manipulation or the ability to put someone in there who could have a sway on the data.
Jeanette, when you engage with clients, if I could just jump in, forgive me. When you engage with clients, are they worried about this? Is this something that comes up repeatedly or something they're comfortable with at the moment?
At the moment, I think it's not a significant concern. I think obviously how things play out over the next couple of months will have a bigger impact. But of course, you are hearing questions just about whether the process might have a change now that we're seeing some movement. We're seeing a shakeup at the BLS, things of that nature. Obviously, there are also some clients who think that, some reform is necessary. So I think that there's also kind of like, let's do a little bit of a wait and see approach to this and see what might happen as this new individual comes in.
Jeanette, thank you. Appreciate your time as always. Jeanette Lowe there of Strategas, a bad company. We'll talk more about the BLS in just a moment. There are some people who think that things need to change. How much they need to change and who needs to change them, very different things.
Yeah, that's the big question. Basically, the Trump administration has done a good job in the sense of changing the narrative. There's been a ton of pushback within conservative economic circles that this person should just not be running the BLS, highly politicized. He was basically brought up by Steve Bannon, and the president went with it. But they've managed to change the conversation. Well, actually, maybe we need to look into what actually is going on with the statisticians and how can we get better data so we don't have massive revisions.
Confirmation. Is it going to be hard?
I think it's going to be hard. I don't know why everyone thinks this is going to be smooth sailing when you look at some of the members on the committee, that he cannot lose a single Republican vote. These are people who've had no problems in the past voicing their concerns up against the Trump administration. But then people push back on me and say there are a lot of people who had issues with RFK. There were some questions about Pete Hegseth. And these were individuals that the president was still able to get through. So it depends, I think, how much senators and the Trump administration are willing to fight over this position that, Jonathan, most people in Washington never pay attention to or care about.
Coming up on the program, we'll continue the conversation. We'll catch up with the former BLS Associate Commissioner, Michael Horrigan, as the accuracy of the monthly payrolls report comes under greater scrutiny over the past few weeks. Plus, we'll touch base with Danny with your morning movers and a disappointment in the AI space. CoreWeave is down by close to 10% in the pre-market. Live from New York City this morning. Good morning to you all. You're watching Bloomberg TV.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road.
we're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows, up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Solid gains in yesterday's session. We add to them this morning, up another 0.2% on the S&P 500. On the Nasdaq 100, up by 0.26. On the Russell, up by 0.6. We're 3 hours away from the opening bell. With your morning movers, here's Danny. Hey, Danny.
Hey, John. Some movers to get through this morning for earnings. We had CoreWeave reporting after the bell yesterday, falling almost 10% this morning. They talked about really robust AI demand. The problem for them is margin pressure. They are spending a whole lot, things like acquisitions, beefing up data centers. It meant that their costs were higher than expected, and that sent shares lower. Meanwhile, Circle, those shares also falling. This is the stablecoin issuer. Shares falling 4% this morning. The company and some shareholders, including the CEO, giving an offering of 10 million shares. It's odd because they only IPO'd 2 months ago. Usually there's a lockup period, but when stocks gain enough since the IPO, that lockup period can be a little bit fungible, and shares are up more than 400% since they IPO'd. Finally, Kava also reporting earnings for them. It was a cut to their outlook. At a decline of 24%, if this sticks throughout the day, it'll be the worst single day for Kava on record. The CEO saying that there are more headwinds versus last year, that the consumer is less ebullient. The question is this a wider consumer trend of some weakness with some of the other fast casuals like Chipotle and Sweetgreen also giving less than enthusiastic earnings, John?
Danny, appreciate the update. Thank you. That stock getting hammered. It's down 24% in the pre-market. As Danny suggested, it's not just Kava, it's Sweetgreen. It's other companies too.
And Neil Dutta yesterday put out a note and saying these are one of the places where you see a lot of people in Midtown Manhattan go and get lunch. I wonder if they're staying at their desk or they're not going out and getting lunch, or potentially more people are starting to work from home again. Remains to be seen.
Signs of tighter margins, demand destruction. Small signs, but starting to build. On our radar this morning, our top story, Treasury Secretary Scott Bessent dismissing the possibility that Chinese investments in the US could be part of a trade deal. Bessent saying, quote, "My sense is no," citing the need to reshore critical industries away from the country.
He has consistently said, similar to what actually Biden administration officials would say, we want to de-risk from China, not decouple. But that doesn't mean that they want Chinese money flowing into the United States, especially when it comes to some of these critical industries. This is why China is so different than any other trade deal this president is going to strike. When it comes to other trading partners, he wants to see investment in the United States. But we're talking about allies, the European Union, the United Kingdom, Japan, South Korea, Switzerland, they're still dealing with. Not when it comes to China. This is a completely different ballgame.
This is a very strange dynamic, and the Treasury Secretary, I think, has articulated and framed the situation quite well. You have a situation where China has historically, over the last several years, the last decade for that matter, been the biggest trade partner, one of the United States. At the same time, they are the biggest military competitor of the United States. This is a different situation. It's not the same as the relationship with Japan several decades ago. This one is critically different.
Critically different and still intertwined, though. And I think really you can see that when it comes to the rare earths. U.S. military and our defense industrial complex matters on how quickly we can get those rare earth magnets. And right now, China owns that market. So for the U.S. military also to de-risk from China, we need to make sure, the United States needs to make sure they're getting rare earths elsewhere.
That's the latest on trade. The latest on Goldman. President Trump calling out Goldman Sachs CEO David Solomon, saying the bank made, quote, a bad prediction about the impact of tariffs on markets. His comments coming after Goldman economists published a note in the last week saying consumers will bear the brunt of tariff costs.
So the president clearly didn't like this note coming from Jan Hatzius, who has been their chief economist since 2011. And Jonathan, we've been talking about this note all week. Basically, what the economists at Goldman are saying is that the U.S. consumer has only so far absorbed 22% of tariff costs, but that share will likely rise to 67% by October if the later tariffs have the same impact over time as the to get hit with a bigger bill later in the year. And the president certainly didn't want to hear this.
This is a forecast. And by definition, as a great friend of mine, Steve Major, over the years, would always tell me a forecast cannot be wrong. Basically, this is a forecast for later on in the year. They're right so far in that at the moment, if you look at the data yesterday, it looks like companies are absorbing this through margin. But what Goldman is essentially saying, communicating to clients at the moment, is that's going to change in the months to come. Now, you can disagree with that, but that's the call.
Basically, Goldman is saying this is the state of play right now, but at some point it is going to hit companies. They are going to crack, and they're under incredible margin pressure, and they're going to have to pass this along. I still go back to what Ford is doing. We haven't seen the uptick in auto prices. Of course not. They're holding on to that right now. They're absorbing that tariff impact. But what's going to happen when they announce new cars in the fall and they hit the market in 2026? Prices are set to go up.
Brutal for Solomon and for Hatzius.
Yeah, saying he should
get back to DJing?
He said he should focus on being a DJ. You know, there's always going to be some sort of, I think, mocking when it comes to the president. But the crux of the issue he had to do with tariffs, but then he couldn't help himself, I don't think, because, you know, David Solomon, you know, DJs once in a while, I think in the Hamptons.
The lesson here is don't give it any oxygen and just try and ignore it for a while and hope it goes away. Let's get to the latest on tech. I think this came from the Wall Street Journal in the past 24 hours. AI startup Perplexity making an offer to acquire Google's Chrome browser for $34.5 billion. The move coming as Google faces antitrust proceedings that could require it to sell the web browser. Guess who? OpenAI has also expressed interest in buying it.
Okay, so when it comes to Perplexity, shoot your shot, as one of the producers said to me this morning. I'm calling it a Hail Mary. Obviously, no one thinks that Perplexity is going to be able to buy Chrome. First off, they don't even have the money for it. But they are getting ahead of what Judge Mehta is set to come down with, which is basically remedies for Google, because they think Google is monopolizing this market. Now, Google, Alphabet, they say that they are going to push this back for the courts, so this could take years. But you do probably see a lot of sharks wanting to circle Google Chrome because of what is happening right now at the DOJ.
Watch this space. Let's stick with Washington with a different story. President Trump's pick to lead the Bureau of Labor Statistics, E.J. Anthony, suggesting the agency should suspend its monthly jobs reports. The former BLS Associate Commissioner, Michael Horrigan, writing, suspending the current employment statistics has very serious implications. Michael joins us now for more. Michael, welcome to the program, and thanks for making some time for us this morning. We appreciate it. Let's just start with a question I think a lot of people ask. From the outside looking into what happens on Wall Street and what happens at the BLS, why the massive revisions? Why the massive revisions, and why is this data so prone to revisions all the time? Can you walk us through the process and why that's the case?
Sure. Well, so first of all, the numbers that come in from establishments, the Bureau gives firms 3 months to report. So there is a first, a second, and a third closing. So that's a natural part of the process. Second, there's seasonal adjustment. With the arrival of new information each month, there's the Bureau does a seasonal adjustment on those numbers, and that's another source of revision. Now, in this particular case, yes, the revisions were large. The May numbers, for example, went from 144,000 down to 19,000, and the June numbers went from 147,000 down to 14. But this is not necessarily unusual at various points in the business cycle. And one of the points I'd like to make is that if you go back to September 2008, we had some pretty big changes that occurred in that particular period. In September, with the first closing, it was, remember, that was the beginning of the Great Recession. There was a decline in payroll employments of 159,000. The next month, in the second closing, that came in at a negative 284. And with the third closing, it came in at a negative 401. So to me, part of the issue here is not the size of the revisions. It's the fact that revisions do happen. It's what do the size of these revisions represent about the economy? Are we at a shifting point in the economy in terms of the labor market being weak? And I think there is a lot of evidence to suggest in the last year that there has been weakness in general in the labor market, except in two sectors, healthcare and social assistance. But a lot of the other sectors that you look at have either been negative or growing very, very slowly. So to me, the big question is that whether or not the economy is in a shift. And let me just say, overall, I worked at the Bureau of Labor Statistics for 33 years. These numbers were not manipulated. There's not an ounce of political motivation at the Bureau of Labor Statistics. And I don't care which president assigns or appoints which commissioner. With the folks that I worked with, whether it be Bill Beach, Erica Grosjean, or Erica McIntyre, they are dedicated to the basically putting out the best and highest quality data that there is. And the charges that these data were politically motivated, absolutely not true.
So, Michael, the process that you just communicated, I think was clearly communicated. I would ask you, though, whether you do believe there is a problem that ultimately needs fixing, whether because they're prone to revisions that we can somehow improve the process. What would your reaction to that be?
So, first of all, the Bureau in all of its programs tries to have continuous innovation. One of the problems that the Bureau has and the statistical system has in general is that they're starved for resources. Budgets for the statistical agencies have been declining in real terms for many, many years. Despite that, let's take a look at this particular survey. In this survey, they have different methods of reporting that they've introduced over time. So, for example, they have an electronic data interchange center where firms can report very easily in terms of on a spreadsheet into the EDI center, and that accounts for a greater and greater percentage of the reports coming in. A second type of reporting that they've introduced is called web reporting, where firms, these are large firms that have, they could have thousands of establishments that they're reporting for, and what they do is they create a form that allows them to fill out their form from their own payrolls and submit it, making the process much, much easier for those firms. Now, the issue, I think, is in the percent of data that's collected in the first month, the second month, and the third month. And one of the things that the Bureau has tried to do is to increase those percentages over time. And so now they're up to 70% for the first month reporting. They're up to about 91% for the second month, and they get up to about 95% at the third closing. So one question that I think is natural is, could we make that first closing percentage higher? Are there other innovations, other resources that we could bring to bear?
Also, Michael, could you just make the surveys mandatory?
Well, one of the problems with making them mandatory is that it then may have an effect on the quality of the data, because what you part of what happens when you make them mandatory is that firms will say, all right, I'm going to answer this particular survey, but I'm not going to answer any other one that's not mandatory. That would be one impact. The other is some firms will, yes, okay, it's mandatory, I'm going to answer it, but they're not going to give high quality data.
Is there a way to incentivize some of these firms to make sure that they are not late in their responses?
Well, yes. I mean, I think this is what the Bureau can do in terms of what they've done in the past, is to modernize data collection and to try to increase the response rate for the first closing. It's hard to do if you don't have resources. I mean, you talk about incentivizing firms. How do you do that? And what is the, what kind of resources do you have to do that if your budgets for doing all of your programs are declining in real terms?
Michael, just a final question from us. How much difference can one individual make at the BLS? This is a large organization. You've talked about the integrity of all the people that work there. How much difference can one person make?
I think one person can make a big difference. So, for example, are people going to think that, gee, the commissioner can come in and say, I don't like those revisions, let's make them smaller? I really doubt that. There's too many people that stand behind the data and the development of the data. I think a new commissioner could do things that are a lot more subtle. Hopefully, the new commissioner, to give this person a clean slate, will come in and say, let's look at the various ways in which we can improve the data. But if the first move you make is to suspend the CES that the markets depend on, that the GDP for BEA depends on the industry employment levels in order to do value-added GDP by industry, that the JOLTS data which is very popular. They depend on CES for controlled totals in terms of how they produce the estimates. There'll be no state and local. So I think, yeah, one person can do a lot of damage. And if that first move is to suspend the CES, I think that's a really bad move. And in addition, the suggestion to replace it with the QCW means that when those data come out on a quarterly basis, they're already 6 months old. So everyone's going to be going out of their mind trying to figure out if the economy is at a turning point when the data on employment are over half a year old. So I think there's a lot of things that the commissioner could do that could damage the Bureau.
We'd love to have this as an ongoing conversation with you, because no doubt this story is not going away. The former BLS Associate Commissioner, Michael Horrigan there, really thoughtful stuff there.
Absolutely, and you can understand from him the details that go into this and the fact that he does not think that, one, these were politicized reports, they were touched by the commissioner. He believes in how the process works. But what's interesting there is he also is offering solutions on ways to make the data better. One of those is getting resources and making sure there's funds there at the BLS. Right now, there is pretty much a hiring freeze across the federal government from the Trump administration.
This conversation will continue in the next hour. Let's give an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara. Hey, Yahara.
Hi, John. Israeli Prime Minister Benjamin Netanyahu says he won't agree to a deal to free only some of the hostages held by Hamas, signaling a partial ceasefire deal is no longer possible. Speaking to Israeli television, Netanyahu said an agreement would have to meet Israel's terms, including the dismantling of Hamas and demilitarization of Gaza. Meanwhile, global oil markets are on track for a record surplus next year, according to the International Energy Agency. Oil inventories are set to grow at a rate of 2.96 million barrels a day as demand growth slows to less than half the pace seen in 2023. The IEA saying that, quote, something will have to give for the market to balance. And a judge has ruled that Elon Musk will have to face claims by OpenAI in court that his attacks on the startup amount to a years-long harassment campaign. It's the latest twist in a court fight that has played out since last year when Musk accused OpenAI of abandoning its founding purpose as a charity by accepting billions of dollars in funding from Microsoft. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. More from Yahara in about 30 minutes' time. Up next on the program, the Fed staying on target.
This economy is not going to spark a huge surge in unemployment. And I think the basic point is by the end of the year, we think maybe 4.5% unemployment. We think over 3% of inflation. They're missing their inflation target by more than unemployment. Therefore, they shouldn't be cutting.
Up next, we'll catch up with James Egelhoff of BNP Paribas, live from New York. This is Bloomberg.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive. Getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Coming into Wednesday, a record highs, and there's some more weight to it, up another 0.2% on the S&P 500, on the Nasdaq 100, up 0.2% also. In the bond market, 6 consecutive days of high yields on a 10-year maturity. That grind continued through yesterday's session, reversing some of it this morning. We're down by 3 or 4 basis points on a 10-year maturity to 425.19 at the front end of the curve, down 2 to 370. And the surveillance this morning, the Fed staying on target.
And one of the things that Jay Powell pointed out is he's not looking at payroll growth, he's looking at the unemployment rate. This economy is not going to spark a huge surge in unemployment. And I think the basic point is by the end of the year, we think maybe 4.5% unemployment, we think over 3% inflation. They're missing their inflation target by more than unemployment, therefore they shouldn't be cutting.
That's one view. Here's another. Traders boosting Fed rate cut bets following the latest inflation data. James Egelhoff of BNP Paribas writing this. Our base case is a Fed on hold, adding the following. Should the FOMC become convinced that the unemployment rate is likely to rise quickly and sharply, we think it would respond with 3 consecutive 50 basis point rate cuts. James joins us now for more. James, good morning.
Good morning. Thanks for being here.
Thank you for being here. Long-held view that this Federal Reserve stays on hold. How finely balanced is that call now?
We've been looking all year for the Fed to be fighting inflation and managing an economy that's going through a soft patch in growth because of high tariffs and tight immigration policy. So this environment doesn't surprise us. What we saw with the last payrolls print was an economy that's a bit less stable than what we and the Fed, we believe, had anticipated, and it's increasing the risk that the economy might be veering off into recession. If we are seeing a cyclical recession, we think the Fed would respond with gusto and would switch from inflation fighting mode to recession fighting mode. It could cut 3 consecutive 50 basis points.
It's one data point, one more payrolls report, enough to convince you that this is either a cyclical slowdown or a structural shift?
Well, it wouldn't just be one. So we'd have the last one as well, and we'd have the overall environment, including the dislocations associated with tariffs. We think it's a tough call for them, which is why they haven't made it yet, why they've been signaling open-mindedness to shifting off of hold, but why they haven't tied their hands to do so. So we think they're going to make a holistic review of the data once we get to September and make the best judgment they can.
When it comes to the labor market, the other concern for a lot of economists is actually the supply and demand picture. How is that playing into your call?
Well, I think it's important to make a distinction between a cyclical slowdown, which is where we see an accumulation of slack in the labor market, and a structural slowdown in the labor market that's being driven by a decline in supply. This year, we've seen a crackdown in immigration, and it appears that may have resulted in fewer people coming to this country and some people leaving. Fewer people participating in the labor market. If the labor market is slow because there are fewer people in it, and there's no accumulation of slack, cutting rates into that doesn't accomplish anything in our view other than creating more inflation. So the Fed is going to struggle to make that assessment.
How testy do you think this next meeting can be if they do not cut and you have someone like Steve Myron there?
So it's possible that we might see dissents either way. We see several who dissent at the last meeting, and we might have one more joining, depending on how the confirmation hearings go. We've also seen some more strident hawkish voices come out, indicating that they favor keeping policy on hold. So it's possible Powell will face a polarized committee where achieving a consensus, a unanimous outcome may not be possible.
The good news came yesterday is that the relative tariff pass-through to goods inflation, relative to what was expected, is rather muted right now. A lot of people wrote yesterday that that was evidence that companies were absorbing the costs associated with tariffs. What's your assessment of things so far, and how do you expect that balance to shift in the months to come?
What we think matters is not the absolute level of inflation that we get from tariffs, it's how sticky it is. Our view is that we were going to have elevated inflation running well into 2026 as the inflation from tariffs spills over into services. And we saw at the last print, we saw an uptick in core services inflation, where we saw airfares, among other categories, that are starting to tick up. And that suggests that inflation might run hot well through next year. We think that's not great news. While it is good news that businesses are absorbing some of the tariffs for now, we think ultimately there's a lot of uncertainty about the timing. And we think if it's not now, it's probably later.
The argument that some on the committee at the Federal Reserve are making right now, Governor Waller included, is that you can look through that. It's a one-off hit. Other arguments might be that you could see some second-round effects further down the road. What would you put more emphasis on at the moment?
Well, the committee up to this point has come out in the favor of the latter camp, that they're worried about the second-round effects. They're not convinced they're going to happen, but they can't rule them out. And given the experience we had during the pandemic and how costly that was, there's a very strong disinterest in repeating that experience. That's been the view so far. The challenge at this point is that it's going to involve a greater balancing act between managing the risk of entrenched inflation and managing the risk that you have the labor market begin to weaken more abruptly.
If prices go up, can consumers absorb it?
Consumers can absorb it, and they have been to some extent so far, and that's been part of why the economy has been going through a soft patch. It is likely to result in a softness in growth going forward as consumers confront higher prices. We tend to think that with a stable, robust job market, with low unemployment, and with easy financial conditions, we're well placed to avoid a recession. But it's not a certain call. There's a lot of uncertainty around that.
As John mentioned at the top, your base case is an FOMC on hold. How does that feel when the entire market has baked in a cut?
Ultimately, our role as economists is to read the data, to read the Fed's reaction function, and to make our best assessment. It's not to simply read the Bloomberg screen and tell you what Fed funds futures are telling us. Ultimately, the market has at several points priced in intermediate cuts back around April after Liberation Day. It is priced in very low levels of cuts. The market does move around. The Fed is open-minded to the idea of easing depending on the data, and so it makes sense to us that the market would price in some probabilistic estimation of further easing, which might be very large, depending on how the data come out.
Just finally, you keep talking about the data, I think about 5 times in that one response. How dependable is the data at the moment?
We think the data is reliable. We think there's no evidence that there's an integrity issue with the data. We're seeing a multi-decade pattern of decline in response rates, a lack of modernization of the data, and there's a possibility that at turning points in the economy, and we might be at one, that the data is slow to show that pivot. And that's one of the things the Fed has been concerned about, is that the data and the revisions we saw last month might be telling us about something that happened some months ago to the economy we're only learning about now. So that there's opportunities to improve the data, to improve the technical mechanisms by which it's created, and we look forward to learning more about that.
James, appreciate it. Thanks for dropping by. James Egelhut there of BNP Paribas. A finely balanced decision going into September. They're looking for on hold at the moment, but that can change with payrolls in the first week of next month.
That jobs report coming up next month is going to be incredibly important for this FOMC.
September 5th, I believe. Then a week later, CPI, and then about a week later, the Federal Reserve convenes. Coming up next, the second hour of Bloomberg Surveillance with Liz Ann Saunders of Charles Schwab, Libby Cantrell of PIMCO, and the U.S. Treasury Secretary, Scott Bessent. That conversation about 34 minutes away.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Why is Baltimore so important to you? It's our state's largest city. And if your state's largest city is not thriving, your state can't thrive. And that is just a mathematical equation, because the only way this is going to be Maryland's decade is if it's Baltimore's time. And so that's why we did focus on things like being able to extend the Orioles lease and make sure the Orioles could be here for 30 years. It's the reason we focus on things like the Preakness and keeping the Preakness in Maryland for generations to come. While we've invested in the convention center, the reason we focused on housing and getting rid of the vacant housing, the reason we focused on violent crime. And now Baltimore is having amongst the most precipitous drop of anywhere in the country when it comes to homicides and non-fatal shootings and carjackings and auto thefts. So if you can have Baltimore thriving, your state is going to thrive.
So if somebody's watching this and they're not from Maryland, but they want to know a little bit about Maryland, what would you encapsulate in a paragraph or two about what people should know about the state of Maryland?
I would say Maryland really is American miniature. You tell me what you want to do. And no matter where you're standing in the state of Maryland, I can tell you where to have a world-class experience within 2 hours. We're the home of innovation. We're the home of Johns Hopkins University, the home of the NSA, the home of NIST. We have so much to offer in the state of Maryland, and I think it's one of the reasons that people are so excited about the growth trajectory we're on.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
CPI was completely in line with expectations.
The economy has been kicking along. Things have been going well.
It kind of went to stall speed somewhat.
Growth is slowing down. The economy is going to be slower in the second half of this year.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning to you all. The second hour of Bloomberg Surveillance starts right now, and your scores look like this. Record highs to kick off Wednesday morning. New all-time highs just around the corner if we hold on to these levels. Equity futures positive by 0.2% on the S&P. On the NASDAQ 100, up by 0.23. Just 30 minutes away, an important conversation right here in New York City in the studio alongside us here on Bloomberg Surveillance. We'll be catching up with the Treasury Secretary, Scott Bessent. A lot of questions for that man right there.
A lot of questions, especially since he already is signaling to the Federal Reserve that they should be cutting in September when they meet, not by 25 basis points, but going bigger by 50 basis points. And he says this is because the revisions show in June and July that they already should have been cutting when it comes to the labor market. And he's going to want to make the point that the inflation data, how they see it, was very benign. Yes, we saw an uptick in services, but their concern was that tariff impact. And we're not seeing that just yet, Jonathan, play out when it comes to all the goods.
They're raising lots of questions about whether we can trust the data. That's going to be a conversation a little bit later this hour. There might be a new BLS chief. We've got a pick. We'll see if he can get confirmed. We just had a conversation in the previous hour about the process, the difficulty of understanding why we see all these revisions, clearly communicated by a former BLS employee.
Yeah, it took us really into the room and all these statisticians and how they go about their work and why he and a number of other economists and people think that the data is secure and that there's integrity when it comes to this data. The question, though, the Trump administration has made is they made it about this one individual who people are still questioning whether or not he's going to be able to get Senate confirmation. There's been a tremendous amount of pushback from conservative conservative economic circles in Washington, D.C. The Trump administration has tried to change the narrative about, well, we just don't want as many revisions. We don't want big revisions. We need better data. The problem they might have is the commissioner actually doesn't touch that data. They see the report about 2 days before it goes public.
Even though this data is prone to massive revisions, a lot is going to hinge on a payrolls report that comes on September 5th. BNP Paribas was just on the program, expecting the Fed to remain on hold in September. But if you get another weak report, they're looking for a sequence, not a one-off, but a sequence of 3 consecutive 50 basis point rate cuts from this Fed.
That's huge, that they would literally go from the FOMC on hold to then 3 consecutive 50 basis point cuts, not even the 25 basis point cuts that most people seem to think that is really the base case for the Fed come in September. The data the next month, and then of course, Jay Powell speaking at Jackson Hole is going to be incredibly important before that meeting.
That conversation with the Treasury Secretary, 7:30 Eastern Time. Futures at the moment doing okay, up by 0.2%. Coming up this hour, we'll catch up with Liz Ann Saunders of Charles Schwab as markets hit fresh all-time highs. Libby Cantrell of PIMCO as rate cut optimism is surging, and the man himself, Scott Besson, on the search for the next Fed chair. We begin this hour with stocks climbing after the latest CPI data leaves the door wide open for rate cuts. Liz Ann Saunders of Charles Schwab writing the following. Slightly hotter services inflation suggests the possibility that core PCE prints will be a little higher, though September is still clearly on the table for a Federal Reserve rate cut. Liz Ann joins us right now for more. Liz Ann, welcome to the program. Some confidence maybe that we're seeing limited tariff pass-through, but maybe I think recently some nerves emerging that perhaps we're starting to see evidence of demand destruction. How concerned, Liz, are you about that?
Well, one thing that I think needs to be pointed out when you look at what was perceived to be fairly benign core goods inflation, up only about 1.25% on a year-over-year basis, is what the direction has been. So many people forget that we were actually, with core goods, we were in deflation territory as recently as the second half of last year. So that's a full 3 percentage point more than increase from where we were at the latter part of last year, where you had core goods in deflation to the tune of -2%. So you've gone from -2% to 1 and change, and now you've got this hook higher on the services side. So I think this kind of data, inflation data, labor market data, you really need to dig under the surface to get a true sense of what the impact is. As to whether the Fed will cut, it depends on the next set of reports. I think the mapping to PCE suggests you could see a little bit of a hotter move. That doesn't tend to be as market moving as CPI and PPI, but that's what I'd be keeping an eye on.
Liz Ann, as you know, the range of outcomes is still really, really wide. The way things are right now, they might change in several months' time. We talked a lot. Michael McKee was on the program earlier, and we were talking about how much companies were absorbing at the moment and whether they pass it on in the months to come or whether they cut costs. Do you think September's still too early to draw any firm conclusions?
I think it is too early, but what I will say, and this has already been underway, and I think it will continue in the September and thereafter as it relates to the Fed, I think you're likely to continue to see a wider dispersion of perspectives from members of the Fed. Certainly when they're in the Federal Open Mouth Committee mode out there speaking, but even in things like the Summary of Economic Projections and particularly the dots plot, you're seeing that wider array. We had 2 dissents with the most recent meeting, the July meeting. I think that sort of dissent probability stays relatively high with a wider range depending on who the individual is on that committee expressing their views going forward. So I think that's kind of the name of the game, at least in the near term.
Well, if the tariff impact is mixed under the surface, when do you think we'll actually see it fully priced in?
Well, the problem is that this was not, a lot of people talked about the inflation impact being one-time in nature, a one-time price level reset. The problem is there's no one time as it relates to the implementation of tariffs. It has been such rifle shot on, off, delays, tariffs being used as a tool beyond just raising revenues or improving the trade deficit. So I think we've got the rolling nature of this. Several years ago, we talked a lot about rolling recessions. So we didn't think you were going to see an actual economic recession, but pockets of weakness at different times. I think that's manifesting itself in the inflation data too, meaning the rolling nature of it, where you see pockets of impact on the upside. You maybe get some pockets of offset on the downside, as opposed to anything that is one-time in nature. And I think that will also continue to be the name of the game, because there isn't anything one-time about how we're getting information on tariffs. And that increasingly makes it more difficult for companies to map out a longer-term pricing strategy.
Well, when it comes to the Fed, do they even have the luxury of waiting to see the full impact if the labor market, Lizanne, is weakening?
That would be the primary reason why September is on the table. The Fed has essentially inferred, not that they're ignoring the inflation side of their mandate, but the trigger to move back to easier policy per what they did last fall is probably more on the labor market side versus the inflation side, unless you have a major, major spike in inflation from here. That's precisely what happened last fall when the Fed did launch what became only 3 rate cuts, but they launched it with a 50, and that was because of pretty significant concerns, turned out to be somewhat unfounded, but significant concerns about the labor market. So the inflation data is going to be parsed like it always is, but I think it's the labor market side of their mandate that will ultimately be the trigger for what they do and by how much.
Lizanne, let's push some of this conversation into the equity market. Record high in the S&P, record high in the NASDAQ 100 as we kick off Wednesday morning. Beneath the index, how much adjustment are you seeing in individual equities to the prospect of so-called demand destruction when you hear about companies like Carver, like Sweetgreen, facing a bit of a consumer slowdown?
Yeah, there's a lot of consolidation happening under the surface, which if you're only looking at what the indexes are doing, I think you don't pick up on that. I've talked to a lot of people who say, oh, tech's the best performing sector. It's actually the second best performing sector on a year-to-date basis, comm services being the other, but they're often lumped together. But each of those sectors only has about, I'm rounding, 60% of their stocks in the same kind of breadth pattern as the index overall. In the case of the NASDAQ 100, all-time highs, but less than 50% of the stocks are at all-time highs. You've got only, actually, I think it's less than 30% of stocks within the S&P 500 have outperformed the index itself over the past month. And you don't get much above a third of the index over any trailing period, 1 year, 1 month, 3 months, 6 months. So there's a bit more weakness and rotation and churn happening under the surface. It's somewhat similar to what we have seen in periods in the past, both in 2023 and 2024. And I think the fuller story, not the real story, but the fuller story may be getting told under the surface of these cap-weighted indexes.
Do you think that narrow breadth and high concentration is necessarily something to be concerned about, Lizanne? I think that's the ultimate question for a lot of people. I hear people point it out all the time, and then we just keep grinding out new all-time highs. Is it necessarily problematic?
Not if the market continues to do well, but if you look at the early part of this year, the period between February 19th, which at that time was an all-time high, and the intraday low on April 9th, those areas of the market, the mega cap, tech-related, Mag 7, whatever categorization you wanted to use, those were the areas that had the bigger drawdowns relative to the index. So that period between mid-February and early April was one where the indexes were dragged down even more, but you did have some ballasts within the market in areas that had not done well. So yeah, you're absolutely right. If the market continues to do well and momentum is on the market side, I think the pain trade is still probably higher, but that could be a situation that unfolds fairly quickly and akin to what we saw in that mid-February to mid-April period.
Lizanne, appreciate your time, as always. Lizanne Saunders there at Charles Schwab on the US equity market, on the economic data and what we can expect from the Federal Reserve in a month or so.
Really challenging. She's saying it's a mix underneath the hood, and the problem is it's not going to be almost a one-time event. It's going to be rolling in terms of the impact. How difficult is that for economists, for this White House, and of course, the Fed?
As Mike said, this is not just a one-off event. This is a process, and it's the start of the process, and we ultimately need more data, and we'll get some more. September 5th for payrolls, a week later, CPI, a week later, that Federal Reserve meeting. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Here's Yahara. Hey, Yahara.
Hi, John. We're seeing shares of Circle falling 2.4% in the pre-market as a group of shareholders, including the co-founder and CEO, announced an offering to sell 10 million shares, a diluting event. The announcement came after the company reported better than expected revenue in its first earnings report. Circle went public in June, and shares have surged more than 425% through yesterday's close. Meanwhile, President Trump calling out Goldman Sachs CEO David Solomon, saying the bank made, quote, a bad prediction about the impact of tariffs and mocking Solomon's DJing hobby. This after Goldman economists published a note saying consumers will bear the brunt of tariff costs. And Treasury Secretary Scott Bessent, who will join our program this hour, suggested the Fed should be open to cutting 50 basis points at its September meeting. Bessent cited the revised payrolls data that showed weaker job growth and came out 2 days after the central bank's last meeting. He also said he was hopeful Stephen Myron, Trump's pick for the open Fed board position, will be in place in time for that meeting. That's your Bloomberg Brief. John?
Yahara, thank you. The man himself, about 18 minutes away. Up next on the program, casting a net far and wide.
We are getting the process underway. Obviously, it's going to be President Trump's decision, and we're not in a rush. There's a long list, and like I said, there's some great candidates.
What's next for the Federal Reserve? Libby Cantrell of PIMCO joins us next.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Jumpstart your trading day with 2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Bloomberg Open Interest.
Every trading day.
Only on Bloomberg.
Live from New York, welcome to the program. Another record high in yesterday's session. More on the cards later on this morning, potentially, with equity futures grinding higher again by 0.2% on the S&P, by 0.23 on the Nasdaq 100. Under surveillance this morning, casting a net far and wide.
I'm not really sure what the Federal Reserve is looking at because thus far we've seen very little, if any, price pressures from the tariffs. We are getting the process underway. Obviously, it's going to be President Trump's decision, and we're not in a rush. There's a long list, and like I said, there's some great candidates. The president said he is not going to fire Chair Powell.
It's the latest this morning. President Donald Trump ramping up the pressure once again on the Fed Chair Jay Powell to cut interest rates, at the same time searching for his replacement. Joining us now to discuss is Bloomberg's Mike McKee. Hey, Mike.
Good morning. It doesn't look like at this point we're going to have a major effect from the president's pressures because Jay Powell has the time he needs to. He's got a time frame already, and so if there are dissents, and I was just looking up when we saw the last kind of dissents. Now you go back to 2019, 4 meetings in a row there were multiple dissents, and Powell survived that just fine. I think at this point it doesn't really matter to him whether people dissent, especially if you add someone like Stephen Myron to the mix, who is going to come in with an axe to grind. So we just kind of watch what goes on, but I don't think it's going to affect what happens with the Fed overall's policymaking.
Mike McKee, rare to see governors dissent, though, on the FOMC. I recall a time, I'm sure you remember this, just after the great financial crisis, where they voted against the Bank of England Governor Mervyn King. A series of meetings in the years after that. I think it was over QE at the time, but that's another story. Mike, that's something we're used to at the MPC on the Bank of England. Is this something we've got to get used to over at the Federal Reserve?
Well, I don't know about getting used to it. It'll depend on who the chairman is and what kind of relationship they have with the rest of the committee. But you're right, we haven't had a significant number of governor dissents in many, many decades. The last time it really mattered was under Paul Volcker, when there was a regular group of 3 who voted against him, and then we got to a group of 4. And at that point, the administration, the Reagan administration, then decided that that was probably enough. Volcker decided that was probably enough, and he resigned. Now we've had Bowman and Waller dissent this last meeting, but it probably doesn't mean that there's any particular pressure on Jay Powell. It's just that they're expressing their views, and maybe we'll see more of that going forward. People have suggested that that needs to be done, that we need to hear more diverse views.
Michael McKee. Agreed. Some healthy dissent on the committee. Mike, thank you. To continue some of this conversation, Libby Cantrell of PIMCO joins us around the table. Libby, good morning.
Good morning.
Can you help familiarise us with the process for confirmation? We'll start with the Federal Reserve and then move to the BLS, something I've never talked about in my career. And maybe you haven't either up until now. The Federal Reserve first. How quickly can Stephen Myron get confirmed?
Yeah, I mean, it's a good question. So the first and most essential step in some ways is his hearing and then the committee vote at the Senate Banking Committee. That is not only the sort of the first step, but in some ways it is the most essential step, because that is where it only takes one Republican senator, assuming that no Democrats vote for Director Myron, to basically gum up the confirmation process. So you can't even lose one Republican vote and advance to the Senate floor. Now, I think that Director Myron probably will get, Chair Myron will probably get through that banking hearing and that vote. But again, that is going to be, again, not only the sort of the first step, but the most essential step. Then, in terms of this getting to the Senate floor, then you can only lose 3 Republican votes in order to get confirmed. I think that the BLS, nominee might have a little bit more of a difficult process. That is, he has to go through what's called the Help Committee, and there are some folks on the Help Committee that I think would not necessarily mind, as we were just talking about, mind gumming up that nomination process. So again, I think people are not necessarily focused; they're just so focused on the Senate floor process, where again you can only lose 3 Republican votes. But again, the committee, the committee process is actually the committee step is the most important one.
You were out with this risk the Trump administration has when it comes to the committee level issue, when it comes to someone like E.J. Antoni. Who on that committee, what senators do you think are willing to go up against the Trump administration for this position?
Yeah, so there are, I mean, I think this is where the composition of the committee really does matter. And for the Help Committee, there are 3 Republicans in particular that folks should keep their eye on. Senator Murkowski from Alaska, Senator Collins from Maine, and then Senator Rand Paul, none of whom are necessarily shy from necessarily opposing this president. You had both Collins and Rand Paul vote against the One Big Beautiful Bill. You've had Senator Murkowski sort of question the president. So they're going to take this process seriously. The advice and consent role of the Senate, I think that many folks think it's perfunctory, but it is not perfunctory. This is something that particularly for the independence of the Fed or the independence of the BLS, they're going to take this process seriously.
We've seen a lot of pushback from conservative economic circles when it comes to Antoni. Are you hearing from clients that they're concerned about him running the BLS and what this could mean for market confidence?
Well, I think we haven't heard about Antoni in particular, but just zooming out, I mean, the reliability and the veracity of data coming out of the BLS, whether it is under a Republican administration or Democratic administration, is just sacrosanct for investors. And so, I think that is going to be, a big focus, not only for our clients, but just for the markets writ large. So again, I think there's going to be scrutiny on this nominee, in particular at that Help Committee, that first step. That people may not necessarily expect.
When it comes to both these individuals, Myron and Tony, how quickly could the Senate move? Right now, everyone's on vacation.
Yeah, so, and again, we kind of got back to John's question. I mean, it is not impossible for Myron to get confirmed by the mid-September FOMC meeting, but wow, would it take a lot for the Senate? I mean, not to underestimate the Senate, but a lot would have to sort of fall into place for this conference.
Well, it is like molasses.
It is like molasses. And again, I just think that this advice and consent role of the Senate, I mean, again, it might seem like a distinction without a difference, given that, the president has been able to get all of his cabinet secretaries, for the most part, confirmed and relatively easily. But the bar that is applied to the independence of a Fed, for the Fed director, for Fed chair, Fed board, or for the BLS, I think is quite different. And so I don't think it will be perfunctory. So again, we think unlikely by the September meeting, but should he get confirmed, most definitely by the October FOMC meeting.
Shall we finish on trade? I'd love to know how your conversations have been going over the last few days with regards to the agreement with NVIDIA and the US government for a revenue share for sales into China. What do the discussions sound like at the moment?
Yeah, I think there are a lot of questions around the details of that, of that agreement. I think there is some concerns around the legality of that, just given the export clause in the Constitution and what have you. But I think, just sort of zooming out, our clients are looking for certainty. They're looking for clarity. And I think even though this is not necessarily something that folks had maybe anticipated, and I think, as we've talked about many times, they should have anticipated. The president is obviously has high conviction around tariffs and trade policy, and he really does want to sort of reset the global landscape. But I think that our clients are, in some ways, breathing a sigh of relief that there's a little bit more clarity, albeit tariffs are going to be set at a higher level.
But tariffs are one thing. The NVIDIA AMD deal is basically saying we have our export licenses for sale. Do you see this as the path forward for other companies?
Well, I think it remains to be seen. I think just broadly speaking, obviously putting a price on national security, and not to say that that's what's happening, but putting a price on national security is not something that I think that folks necessarily want to see. So again, I think that kind of the devil will be in the details. One thing that again, what we're just talking to clients about around trade, and I think that's just important to flag, is around the legality of all of these tariffs. As we all know, that this IEEPA case is being sort of adjudicated in the courts. We could see a ruling at any day in terms of kind of the legality of that. And so many of these things could, around export controls, around these investment deals, around tariffs, could at least be called into question yet again, given, sort of depending on where that ruling is.
Is it too big, too far along to strike down now?
I know about IEEPA, no, I don't think so. I think the courts have been very clear that they are going to rule on the basis of whether the president can move forward with tariffs under IEEPA. Now, he has a lot of other tariff tools, so if IEEPA is struck down, I think this is sort of the broader point for markets, that he has other tools that he can pursue. However, they don't have the same type of flexibility that IEEPA has. He can't just put them on and off. They're going to take longer. There's actually a process. Some of them actually even have to go through administrative process process. So they're more lengthy in terms of the tool and not as flexible.
Libby, it's good to see you,
Nice
as
to see
always.
you.
Thanks for being here. Appreciate it. Libby Cantrell there of PIMCO, the Treasury Secretary, just moments away. This could get messier on the trade front if the courts get involved in a way that some people anticipate.
And Libby nailed it, though. In terms of the markets, these rates can stay, but there's going to be a lot more work, Jonathan, on the back end if they have to go through 232 or 301 than just using enforcing this fluid, very easy trade law when it comes to IEEPA, but definitely can get messy if the courts say it's illegal.
We've got a lot to discuss in the next 30 minutes or so. Keep it right here on Bloomberg Surveillance on Bloomberg TV. Yesterday, some muted tariff pass-through relative to what was expected in the CPI report. That took the equity market to all-time highs on the S&P 500. This morning, firmer by 0.2%. Up next, the Treasury Secretary, Scott Bessent, on the trade negotiations with China and the surge for the next Fed chair. From New York, you're watching Bloomberg TV.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Bring you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
The record highs keep coming on the S&P 500. Another one in yesterday's session. More still to come. Futures positive by 0.2% on the S&P. On the Nasdaq 100, higher by 0.23. With 2 hours until the cash open, let's get you some morning movers. Here's Danny. Hey, Danny.
Hey, John. A big disappointment for CoreWeave after the bell yesterday, reporting earnings. Solid AI demand, but margins are under pressure, spending huge amounts of money on data centers, on acquisitions, and that sent shares lower 8.8% in the pre-market. Also, moving moving this morning in the pre-market session alongside CoreWeave. We have Venture Global, those shares up 10%, winning in an arbitration battle with Shell. The accusation was that they were selling LNG into the spot market and not honoring exactly some of the contracts they had with Shell. But again, Venture Global winning that battle, up 10%. Finally, this morning, rounding things out with Hanesbrand, it is official. They will be bought by Gilead. That is the Canadian activewear brand. But there were reports of this on Tuesday. Shares had run up 28%. The price tag on this, $2.2 billion, with a price tag of $6 per share. We're trading just under that deal price. But again, shares have run up a lot, so they've come down about 9.4% this morning. John.
Danny, thank you. Appreciate it. More from Danny in the next hour. We've got a lot to discuss. President Trump extending trade talks with China for another 60 days as both countries continue to iron out key differences. Joining us now to discuss that and a whole lot more, the 79th Secretary of the Treasury, Scott Bessent. Mr. Secretary, good morning. Good to see you.
Morning, Jonathan.
You're a cover model now. You're famous. Can we get that front cover up for Business Week this month? Mr. Secretary, I remember when you were just Scott Bessent and we could go for breakfast together, the three of us, and no one would bother you. What happened?
I don't know, but I hope it's not the curse of the cover.
Is this a top?
Historically, the being on the cover is a curse. So,
well, this equity market is not cursed. It keeps grinding out all-time highs. There is some confidence that we're settling some issues on the trade front. There's one issue that came up this week that we'd love to hear from you about, and that's NVIDIA. Where did this agreement come from? You've been quite innovative, this administration, on trade issues. Where did this come from? Who came up with it?
The president. The president, as I tell everyone, the president is one of the most open-minded people I know. He does everything at first principles. Why do we do things this way? Why shouldn't we do it the other way? And, you know, I think that this is a very unique solution, allows NVIDIA to expand into China. It can make NVIDIA chips the bellwether for Chinese technology, and then the U.S. taxpayer gets a share of that.
Keyword unique. Is it unique to NVIDIA and AMD, or is this a model for other companies?
I think we could see it in other industries over time. I think, you know, right now, this is unique, but you know, now that we have the model and the beta test, why not expand it?
What do you say to people who think we're putting a price on national security concerns by basically selling export licenses?
There are no national security concerns here. We would not sell any of the advanced chips. So the H20s, I don't know whether you'd say they're 4, 5, 6 levels down the chip stack. What we do not want here, Anne-Marie, is for Huawei to have a digital Belt and Road. Right, so we do not want the standard to become Chinese across the world or even in China.
Well, we have exclusive reporting that Beijing is now sending out letters to firms saying actually shrug off those H20 and use our domestic champions. Is this something you might discuss with your counterpart?
Sure, we can discuss that, but it also tells me that they are worried about the NVIDIA chips becoming the standard in China. Look, you know, NVIDIA is an incredible product. A lot of the technology in China is, you know, they're piggybacking, and I'll use piggybacking as a kind word for acquiring our technology.
Do you mean stealing?
Your words. And yes, that's what I mean. And the NVIDIA, Jensen Huang, just stays years ahead of them.
Criticism came from the Wall Street Journal editorial board, though, about this new unique policy. They say it's a step toward government control of private business. Are you concerned? Some of these policies are starting to look like the country you're actually trying to de-risk from. Central planning, basically, out of the Oval.
No, not at all. Because where we got was with this unfettered trade, we did not have secure trade or fair trade, and so now we are trying to make it secure. So you know you don't want to. We're not sending out the highest level chips, and you know we don't want to sell everything to everybody. So there is a need for intervention. And, you know, the Wall Street Journal just let her rip. Kind of bunch of grumpy old men over there. I was with them yesterday.
This is going to raise some revenue. What do you plan to do with it?
Pay down the debt.
It's all going to go to pay down the debt? Because we have heard some stories about the money going back to consumers, going back to citizens of the United States taxpayers.
Well, President Trump's talked about that. And, look, the the bottom 50% of wage earners in the one big beautiful bill are getting a lot of money back. No tax on tips, no tax on overtime, no tax on Social Security. Auto loans are going to be tax deductible. So I think if we could make a substantial dent in the debt repayment, then we could talk about a program like that.
Could you share with us the kind of numbers you're thinking about at the moment, just in terms of revenue raising? And not just the NVIDIA deal, I'm talking about the tariffs on top of that. What are we raising at the moment, month on month?
Well, Jonathan, I've been saying that we could hit $300 billion this year, and I think that number is going to be low. I think I always like to come in low and then surprise on the upside, but I think in the next days or weeks, I may have to move that number up substantially.
You've heard the debate playing out on Wall Street now for a number of months. Who's going to pay the tariffs? By definition, the importer will pay the tariff. The more important question here is who absorbs the costs, whether it's the foreign supplier, whether it's the domestic company here in the United States, or the end consumer. We got some data yesterday. You've seen it. We've all looked at it. Limited tariff pass-through relative to what was expected. Because of that, a lot of people are suggesting that maybe companies are absorbing costs in a way we didn't anticipate. Perhaps the pass-through will be more muted in the future. Are you comfortable with where things are now, or do you think things might rebalance in the months to come?
Jonathan, I think your framing there is exactly right, because that, obviously the tariff itself is paid at the port, but what if the producer in the other country has lowered their price the 10, 15, 20% so that there is no price change with the tariff? And obviously our largest trade deficit is with China, and China does not have the same profit objective that other Western democracies do. So that is an employment agency, and my view has been that they would continue to eat the tariffs. They are doing that. So I think what we've seen is likely to continue happening. I also think there are probably a lot of corporate margins that got very fat during COVID, and now we're seeing a return to normal pre-COVID margins.
You see this as some kind of redistribution between corporate America and maybe the consumer, Main Street and Wall Street?
I think this administration is all about Main Street, but Wall Street's hitting a new high. So it's this false equivalency. It's not either or. I tell everyone, I call it parallel prosperity. Wall Street's done great. Main Street can now do great.
Wall Street might do even better if the Federal Reserve cuts interest rates. The president was pretty clear yesterday, put out this comment, Jerome too late Powell must now lower the interest rate. Is it reasonable to give them a bit more time to draw conclusions about what's happening here?
Well, I think what we could see is that, first of all, what if the BLS data had been the higher quality and we'd had those numbers, Jonathan? So if we'd seen those numbers in May, in June, I suspect we could have had rate cuts in June and July. So that tells me that there's a very good chance of a 50 basis point rate cut. And I think President Trump is very good at giving these nicknames. And I think the reason that Jay Powell gets the nickname too late is because he wants to go into a series of rate hikes. He's not willing. He's not Alan Greenspan, who was very forward thinking. They try to be more data driven, which I think is a mistake, because I think we are going back into an economy like we had in the 90s. So, it's just very old fashioned thinking, but I do think we could go into a series of rate cuts here, starting with a 50 basis point rate cut in September.
A 50 basis rate cut in September, does that signal that the economy, though, is not doing well?
That signals that there's an adjustment and the rates are too constrictive. If you look at any model, that we should probably be 150, 175 basis points lower. So I think the committee needs to step back. I think probably one of the most politicized governors just went off the board, and that she was very, very political, I believe. And I think that
what did she do that gave you that impression? I'd love to know.
Sorry?
I imagine you're referring to Governor Kugler. What did she do that gave you that impression?
I think there's a lot of inside baseball. And look, Governor Kugler, you read what she was saying when Kamala Harris was running, that we needed rate cuts, we needed this, we got to foam the runway, and then all of a sudden, it was hard to know whether, TDS was it Trump dementia syndrome or Trump derangement syndrome or tariff derangement syndrome.
You get the opportunity to remake the Federal Reserve. The president gets the opportunity to remodel, reshape the Federal Reserve. And I'm not talking about the remodeling that maybe the current chairman's going through. We'll talk about that another time. I want to talk about the complexion and character of the committee. The changes that you're making at the moment. Stephen Myron, let's start with Stephen. How quickly can you get Myron confirmed?
We'll see. The president has great sway with Leader Thune. Leader Thune's been a great partner during the tax deal, and I think that he would like to see Stephen, who I've known for a long time, get on there as soon as possible. So I'm hopeful about the September meeting. And Jonathan, the president's concerned about the building and those massive cost overrun, which just tell you that there is no accountability at that organization. There's no oversight in terms of the spending. But the president and I are both concerned about the foundations of the Fed. The foundations of the Fed, and how did this happen, and why did it happen, and how did the leadership let it happen?
When it comes to Director Myron, do you expect him to stay on past the January term that expires from Kugler's seat?
I wouldn't expect that.
So who are some names you're thinking of the Kugler seat? Because everyone has been focused on who is going to fill the chairmanship role. Who are you thinking to fill that extra seat?
Well, Anne-Marie, we're working on the big list right now. I think there are going to be a couple more names revealed today. They're going to be private sector names. So we had a series or a list of current Fed members. We're going to have some private sector, very well respected,
like who?
Very well respected people, and then we will get to the second seat.
Can you give us some names, a little bit of a tease? Maybe people that have been on this program?
Well, I just did tease telling you there would be some private sector names.
Okay, when it comes to the Fed chair, though, can you give us a sense of how many names you're actually thinking about?
Well, I'm going to interview, I'm going to cast a wide net, 10, 11 people. And then there'll be a group of us who are meeting with them. And we want to talk about monetary policy. We want to talk about regulatory policy, which is very, very important because the Fed stepped, I think, big-footed the other regulators. The Fed's one of 3 regulators, Federal Reserve, OCC, and FDIC. And I think that they need to understand that they are one of 3. And then the third is the institution itself, which I think is what President Trump has been focused on quite a bit too.
After you do this process, how many names are going to give to the president, and when does he start those in-person interviews?
Yeah, we don't have a timeline. By putting Stephen Myron in, that gives us more time. And again, I want to cast a wide net. The president's very open-minded. Before he chose Jay Powell, Janet Yellen was interviewed. John Taylor was interviewed. 2 of them couldn't be more different. So they were under consideration.
I give you credit for coming up with a really credible list to replace the Federal Reserve Chair, Jay Powell. Without a doubt, I think most people that come on this program agree with that. What I want to talk about is the BLS now, because there's some controversy around this pick. I'm sure you've heard some of the concerns. E.J. Anthony had said the following earlier this week before getting the pick from the president. Until this issue with payrolls is corrected, he said, quote, the BLS should suspend issuing the monthly jobs report, but keep publishing the more accurate, though less timely, quarterly data. We'd love your thoughts on this. Is that something you'd support?
Not at all. And look, what somebody says when they're a private citizen is very, very different. I called for a shadow Fed chair, and now that I'm in the seat, I don't think we need to do that. And I was there when EJ was interviewed, and he is incredibly qualified. And I think the most important thing here is that we get back to the integrity of the numbers, because it just became okay, just like so many things in our government, for it to get sloppy. And EJ is precise. He has a doctorate in economics. I think President Trump put a lot of thought into this. He was very thorough in his questioning of him. So what we want is good data, because you can't make good decisions without good data. As I just said, it's very likely that the Fed would have been doing something else if in June, in July, if they had this data.
Well, let's talk about the data we've got. and the process we have and how we might improve that process. As you know, that data is prone to big revisions. In your career on Wall Street, we've all been dealing with this for a long, long time. Because of the process and the lag time in the responses, it is constantly reviewed month on month as you get more responses from corporate America. How can we improve that process so this data is less prone to these big revisions?
Well, I've been in government now for 7 months, and I can tell you that if we take the IRS, which I'm now the head of, they've been working on a tech upgrade since 1990. We brought in a young person to fix that. The tech upgrade has been underway for longer than he is old. So he wasn't born when the tech upgrade started. So, I just think like this idea that we're accepting this mediocrity in government, why don't we bring things into the 21st century? Why don't we bring it into the digital age? Because, I don't know about political bias one way or the other, but what I can tell you is that the sample response size kept getting smaller and smaller, and then they filled in the cells. And anytime you get judgment versus data, then things become qualitative and not quantitative. And I think EJ is going to do a great job of bringing back quantitative standards. I think these attacks in the press, I think are all wrong.
It's not in the press. It's even within conservative economic circles that don't think that he is credible to run the commission. Is the Trump administration open to putting more resources then to BLS, maybe lifting a hiring freeze?
Well, Anne-Marie, that's more of a Democratic idea that, we need more. It's always money. It's always money. It's, whether it's New York City schools, Chicago schools, DC schools, you get terrible outcomes. I think that he's going to sit back, look at the process, and how can we use technology to do this better? I got to Treasury, and it was shocking. We processed 1.5 billion payments a year, and 500 million of them, 1/3 of them, did not have what's known as a TAS, Treasury accounting symbol on them. And people were just hitting send, and it wasn't a gigantic leap just to try to get people to do their jobs.
This has big implications for how people view credible economic data, but also the markets as well. So let's talk about financial markets and the bond market. You've always been a 10-year man. The spread between the 2-year and the 10-year, I think, has been really stable over the last several months, where we've started to see some leakages between 10s out to 30s. That 30-year bond, as the Treasury Secretary, I remember you referring to yourself as the nation's top bond salesman. Yep. What's the usefulness of issuing a 30-year bond when it feels like at the moment we're outsourcing borrowing costs to what happens in Japan, what might happen in the UK, what happens in Europe? What's the value of issuing that?
That's a great question, Jonathan. And look, we are committed to keeping inflation expectations low, and this is a global phenomenon. Whether it's the 10 or the 30, the U.S. 10-year is one of the few 10 years where the yield is down on the year. So that tells me that there's credibility from Treasury, credibility from Fed, that the inflation expectations are well anchored, but there's definitely leakage from the Japanese have an inflation problem. I've spoken to Governor Ueda. My opinion, not his, they're behind the curve, so they're going to be hiking, and they need to get their inflation problem under control. In Germany, we saw a substantial spike in German rates in the past week also. So, our 30-year is getting dragged along with that. We've been refilling the Treasury General account, which during the debt ceiling standoff got run down, and we're doing that with short-term bills.
Do you see more reason then to pare back on 30-year issuance with all this in mind? And this is a change again for you now in the seat as you look at these developments and rethink things. How are your thoughts on that matter evolving?
Yeah, they are evolving, and we'll see where things go. I do think as we bring down this big deficit that we inherited, I think that the U.S., that the entire U.S. curve can have a parallel shift down relative to the rest of the world.
Do you think you can work with the Federal Reserve on this matter? So if we take the weighted average maturity of Fed holdings at the moment, I believe that's running at about 9 years. The issuance of the average maturity of outstanding bills, notes, bonds, that's closer to 6. Do we need to narrow that gap a little bit?
Yeah, look, I don't think the Fed needs to get back into the large-scale asset purchase business, and we've had very good demand, especially in the belly of the curve, which is where asset managers seem most interested now.
When it comes to other things you're working on in Washington, D.C., there's still this stock ban legislation that has been circulating around Congress. Is the president prepared to sign that bill?
I don't think we have the perfect bill yet, but I am going to start pushing for its single stock trading ban, because it is the credibility of the House and the Senate that you look at some of these eye-popping returns, whether it's Representative Pelosi, Senator Wyden. Every hedge fund would be jealous of them, and the American people deserve better than this. People shouldn't come to Washington to get rich. They should come to serve the American people, and it brings down trust in the system, because I can tell you that if any private citizen traded this way, the SEC would be knocking on their door.
Do you think it needs to extend, though, beyond single stocks? These individuals can still have ETFs and other products.
Well, what I used to do at my old firm was you could buy ETFs. They had to be widely held ETFs, so they couldn't be of a small size, and there was a long holding period. The House and the Senate, they're supposed to be working for the American people, their constituents. They're supposed to be making law, and they shouldn't be trading every day. I'm not going to name names, but there was one person in Congress who had 1,200 or 1,300 trades 2 years ago, and my hedge fund didn't have that many trades.
Do you think it needs to also extend to the executive branch and include the president and the vice president?
I think that they would be fine on the single stock and the holding period.
Maybe they're just great traders, Mr. Secretary. Do you not think they're just great traders?
It is a statistical anomaly. Warren Buffett wrote an essay once, and he talked about the zoo in Graham and Doddville, and if all the orangutans in that zoo kept typing the Bible, then there's something going on in that zoo. There is something going on Capitol Hill in terms of information leakage that is statistically not sound.
Do you think those restrictions should extend to the executive branch?
Sorry?
Do you think those restrictions should extend to the White House?
Well, they already extend to Treasury.
Have you spoken to the president about this? Is he comfortable?
Well, the president's come out in favor of this, and Hakeem Jeffries is in favor of this too. And I can tell you, if I were Congress and I were looking at my ratings with the American people, I would be pushing this, because again, it's an extractive class. You should not come to D.C. expecting to line your pocket. You should come to D.C. to do the people's business.
We couldn't agree more, and it's been greatly disappointing to see that there's tighter restrictions on how journalists trade than over some members of Congress in Washington.
Yeah, again, it is one of the things that I think we can do to get trust back into the system.
Just wanted to finish on the president's visit to Alaska going into the weekend. Anne-Marie's going to be there. What do you think we can accomplish this weekend?
I think the president has been thinking about this a long time. He believes, as do I, that this war never would have started if he had been president, and he is committed to ending the bloodshed, but not at any cost. Not at any cost. I think everyone has been frustrated with President Putin. We expected that he would come to the table in a more fulsome way. It looks like he may be ready to negotiate, and we've put secondary tariffs on the Indians for buying Russian oil, and I could see if things don't go well, then sanctions or secondary tariffs could go up.
What about China? They're the main purchasers of Russian crude.
Again, I'm not going to get ahead of the president, but the president is the best at creating leverage for himself, and he will make it clear to President Putin that all options are on the table.
So sanctions can go up, or they can also be loosened?
Sanctions can go up, they can be loosened, they can have a definitive life, they can go on indefinitely. There's this Russian shadow fleet of ships around the world that I think we could crack down on them. But Anne Marie and Jonathan, the one message I would leave you with, it's that President Trump is meeting with President Putin, and the Europeans are in the wings carping about how he should do it, what he should do it. But the Europeans need to join us in these sanctions. The Europeans need to be willing to put on these secondary sanctions. I was at the G7 meeting in Canada with President Trump, and the Europeans kept talking about Senator Graham's bill to do the secondary tariffs.
Yeah.
And I looked at all the leaders around the table and I said, is everyone at this table willing to put a 200% secondary tariff on China? And you know what? Everybody wanted to see what kind of shoes they were wearing.
I imagine the Germans went very quiet, and that's been a problem for a long time.
Yeah, it's put up or shut up time. The president is creating his own leverage. We need the Europeans to come in and help create more leverage.
Mr. Secretary, appreciate your time.
Good to see you.
You're enjoying this. I get the feel that you're enjoying this.
Sorry?
It's good to see you. You seem happy.
I think things are going well.
The Treasury Secretary, Scott Bessent. Mr. Bessent, thank you. We appreciate it, sir. From New York City, the conversation continues. The third hour of Bloomberg Surveillance just around the corner. We'll catch up with Xana Aronoff in just a moment.
Let's talk about this villa. Very traditional. A lot of things of the past.
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin, yang, 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress, a change during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human beings, for the world.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
We published a story recently about the explosion of robotic companies and innovation in China. I think we said there's something like 50 or 60 robotic startups in China. Are we behind, and should we be concerned about that?
I think as far as the state of innovation, no. Most of those robots aren't built for work, for the things that, which is the entry point for these robots today. They can do some interesting things. A lot of times it's backflips or making coffee or something, but not really useful work. These robots can pick up to 50 pounds on our next generation. So they're great for the education of robotics, getting people interested. But as far as humanoids, they've got to check that safety box before they can come into any of the facilities here. And that's a big bar that we haven't seen much of out of the Chinese robots.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
We certainly have seen signs of very rapid risk-taking.
The bulls will say there is further room to go.
From a technology and an innovation standpoint, it's still hard to beat the U.S. markets.
The big picture for the equity markets, it's about profits, profits, profits.
Equities are just focusing on the profit story, and I do think that there's some durability.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. The third hour of Bloomberg Surveillance starts right now, and your scores are shaping up as follows. All-time highs continue. We add to them. We're up another 0.2% on the S&P 500, up by 0.24 on the NASDAQ. In the bond market, check out the front end of the yield curve. The 2-year this morning down 3 basis points. The 2-year breaking 370, 369. The focus on Federal Reserve policy. The Treasury Secretary on this program just moments ago making the argument for the Federal Reserve to cut interest rates 150 to 175 basis points.
So basically, the Treasury Secretary is saying that when you look at the labor market data and you go back to look at the revisions, that the Fed should have already been cutting. They shouldn't have been waiting for September, which is why he thinks they need to be more aggressive when it comes to September. The question is, Jonathan, if they go 50 basis points in September, does this signal to the world that actually the U.S. economy is not on solid footing?
The good news at the moment is the tariff pass-through has been muted relative to what was expected. That's the good news. The bad news is that might change in the months to come, and that can change in a number of ways. Maybe you pass it on to consumers, or perhaps at the moment, companies continue to absorb the costs, but ultimately they start cutting costs themselves and unemployment starts moving in the wrong direction. These are the kind of things that can rebalance in the months to come, and the jury's still out.
We need to see the mitigation efforts when it comes to these companies that have been absorbing some of these tariff costs. I really keep coming back to the autos, because right now what you're not seeing in the data that car prices are going up. But what you do see when you hear from corporate America, especially out of Detroit, is that they are absorbing billions of dollars when it comes to some of these costs, and they have yet to pass it on. Does this mean we're going to see layoffs in this industry, or does this mean that your car, if you're looking to buy a new car at the end of the year going into 2026, is going to be high,
Imagine
heavier?
Cutting rates 150 basis points over the next 6 months or so, with equities already at all-time highs and credit spreads that tight. Coming up this hour, Oksana Aronoff of JP Morgan Asset Management. As investors add to the recent rally, we'll catch up with Erica Najarian of UBS as Wall Street banks face pressure from the White House, and Tom Porcelli of PGIM Fixed Income reacting to the latest read on inflation. We begin this hour with stocks higher as optimism grows over Fed rate cuts. Oksana Aronoff of JP Morgan Asset Management writing, the 2% inflation target is dead. The Fed continues to be in a very difficult spot, but the odds are so high for September now that I don't think they dare to disappoint. Oksana joins us now for more. Oksana, good morning.
Good morning.
What would disappointment look like in the next few months?
Well, it's really interesting to me, first of all, around some of the comments that preceded me here in this studio.
Let's talk about
the
them.
aggressive cuts. It's really fascinating to me, the entire rhetoric, not just Treasury Secretary, but there is this rhetoric out there that rates are restrictive, and yet, financial conditions are easiest that we've seen in years, as tracked by Bloomberg. Obviously, risk as at all-time highs, whether you look at equities, whether you look at credit spreads, are at all-time tights. Credit spreads are tighter than 99% of readings, over the last several decades. So it's not clear to me what a cut that is that aggressive going to do, by cutting at the front end of the curve. Like, what are we really hoping to achieve, right? We want lower borrowing costs for small businesses. We want lower borrowing costs for mortgage borrowers. But is that really going to occur if we continue to cut at the front end? But the long end is not moving off of the things that the front end is moving off. The long end is moving off of risk premium. There's a lot of uncertainty. The long end is moving off of the fiscal picture, which, by the way, July exposed some of the worst deficit-related data on record. And so the long end doesn't really care how much the Fed cuts at the front end. And so that's not really going to do anything for mortgage borrowers or small business borrowers.
In fact, it might push longer end yields up.
Exactly.
Even more.
We saw exactly that last year when the Fed probably was too aggressive with a 50 basis point cut in an environment that did not really warrant it from an economic standpoint. And the market said, I don't know what that is. And yes, that will provide a runway for more appreciation for risk assets And that's probably what a cut will do here, and that's where the disappointment comes in, right? So where we may see a sell-off if that doesn't come through. So I think the Fed is in a really difficult position because they know how to restart the economy that is slowing. This is the playbook that's been their playbook for over a decade. But they have seen that their efficacy with respect to constraining inflation is much, much less effective.
You think they're going to move in September, though? So let's talk about recent developments in the yield curve. Yesterday, we got the data. A lot of people thought September's a lock. Yields lower at the front end, higher at the long end. That's the steepness that you're talking about.
Exactly.
Do you expect that to continue?
I think the long end is essentially locked in this, 4.5% to 5%. It could go a little bit lower, but the tendency is towards the high 4s and ultimately possibly even a 5 handle on the 10-year because of the fiscal backdrop, because of the risk premium. Like, what is the 10-year Treasury? It is really the rate of growth plus the rate of inflation plus that long-term premium. And the long-term premium was dead for many years. It was essentially zero when the Fed and other central banks were in zero-rate policy. There was really nothing to see there, right? Everything was kind of stagnant, if you will, from a growth and inflation standpoint. That has changed. Inflation is alive and well. I think the 2%, it's really interesting to me that, core came in at 3.1, but the market is like, oh, this is great news. We should cut here. Like, several months ago or a year ago, that number coming in at 3.1 would have been a disaster because we thought we were on the trajectory down to 2.
Well, you think the Fed should just be targeting 3% anyway?
I think that's the reality of the world we are in currently. And I think ultimately, when some of this political noise dies down, I think the Fed will, and it's already seeing that the markets are accepting the 3% inflation rate, essentially, right? And so I think the Fed eventually will guide towards a range, not a 2% target, but more of a range in terms of their target. And I do think that has ramifications for the long end of the curve as well, just kind of anchoring it where it is even further and possibly, giving it a 5 handle, if you will.
If they cut in September, is that basically them admitting that we are now targeting a range of inflation? We're not even going to attempt to get it back to 2%?
I think that definitely is part of the, or should be part of the conversation, because the markets are definitely saying, we're okay with this. Let's cut here. That wouldn't have been the case in any other environment where unemployment was at 4.1 to 4.2%, where markets were marching ahead the way that they are, where consumer spending continued. Yes, it's a bit weaker, but it is still, continuing because layoffs are relatively limited, so consumers still have money to spend. In any other environment, this would not have been the sort of economic backdrop where you cut or, let alone cut aggressively.
Yeah, but what you describe, Oksana, just tells me equities are going to keep on going higher. Credit spreads are going to keep on grinding tighter. What's the counterpoint to that?
So, look, at the end of the day, some amount of inflation in the system is not a bad thing, particularly for the bottom of the cap structure, right? So the fact that equities are going to keep going higher is not a counterintuitive thing. Goosing them higher by cutting rates at the front end, that's a different story. And by the way, the Fed had this experience, a very different Fed, but had this experience in the 90s when in the mid-90s they cut initially in a similar environment, frankly, from an economic standpoint, probably the only other time in history where you can draw that parallel. And then they saw that next leg of a very rich stock market kind of started developing, and eventually they went back to hiking. And I think we are possibly seeing that play out. And we've said for a long time that the environment we're in is not like the prior cutting cycles where you just cut aggressively or where the Fed has cut aggressively. We're really more in a late 90s type environment where the Fed cut initially and then went back to hiking because inflation remained around that 3% target as opposed to around that 3% as opposed to their 2% target.
In the meantime, shouldn't I just keep dancing? Keep buying?
I think this is not bad news for risk, and we're definitely not against risk. This is not great news for bonds, though, because if we continue to see resilience in the economy the way we've had, yes, there is definitely some slowing, but I don't think there is it's appropriate to talk about an imminent recession at all. That is going to be challenging for bonds. We're also seeing, obviously, stubborn inflation. So maybe we're seeing somewhere down the road, maybe a stagflation light, but for right now, the economy continues to be resilient. And a resilient economy or even a stagflation light environment, neither one of those are great for bonds, particularly when valuations are this rich in credit. And by the way, again, being constructive on the economy overall, yes, balance sheets are generally in pretty good shape. But the reality is that the combination of very rich valuations and tremendous complacency, I mean, you guys wrote over the past few days the frenzy in the AT1 market, for example, you know, a somewhat nichier part of the market. We were buying it a couple of years ago when it was really trading at, you know, 70 cents on the dollar. Right now it's above par, and people cannot get enough. I mean, a great symptom of the kind of complacency and chase for yield that is happening out there. And I think a combination of complacency and price richness is just a bad combination for price stability going forward. And that's not saying anything around the fundamentals of those.
Does it feel like then we're at a top?
Absolutely. In credit, 100%. We are at a top. And I've always find it fascinating that there's so much appetite to understand where's the equity top. But in fixed income, the tops are so easily identifiable. I talk about this all the time. When rates are this tight, yes, you are at a top. And the question is simply whether you're going to be able to clip that coupon before the music stops, or is there going to be a price discovery, particularly in the lower rated part of the market, right, where that price discovery can beget more selling, and now you have an entire private credit ecosystem. How is that going to react as people possibly pull liquidity? So I think, again, combination of price, very rich price valuations in credit, and complacency is what's to be watched here.
Oksana, it's good to see you.
Thank you so much.
Great to catch up, and thanks for reacting to that interview with the Treasury Secretary a little bit earlier. Oksana Aronoff there of JP Morgan Asset Management with an update on stories elsewhere with your Bloomberg Brief. Here's Yahara Anand. Hey, Yahara.
Hi, John. Treasury Secretary Scott Bessent said interest rates should be 150 to 175 basis points lower. Speaking on our show in the last hour, he said the Fed should be heading into a series of rate cuts in the coming months, starting with a half-point reduction in September. Meanwhile, Ukrainian President Volodymyr Zelensky is rejecting Vladimir Putin's demand that Ukraine give up the Donbas region to secure a ceasefire. He's insisting that any talks must include Kyiv and its European allies to address both territorial and security guarantees. Zelensky says Donbas could be a bridgehead for a future new Russian offensive. And in sports, it was a banner night for the New York baseball teams. Pete Alonso crushed his 253rd career home run, passing Darryl Strawberry for the most all-time in franchise history as the Mets defeated the Atlanta Braves 13-5. And on the other side of the city, Aaron Judge homered to help lead the Yankees to a 9-1 victory over the Minnesota Twins. That's your Bloomberg Brief. John?
Yahara, thank you. Anne-Marie happier. I've just found out why. You just didn't mention it.
Yeah, exactly.
Yankees mug ready to go.
Yankees, I know, but it's been a little bit of a rough season. I just love how they also feel like they have to do the Mets. Everyone knows we just want to know about the Yankees.
There we go. Up next on the program, the Morning Calls Plus, Erica Najarian of UBS with the banking industry facing pressure from the president, Donald Trump.
Day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
We could have had rate cuts in June and July. So that tells me that there's a very good chance of a 50 basis point rate cut. I do think we could go into a series of rate cuts here, starting with a 50 basis point rate cut in September. The rates are too constrictive. If you look at any model, that we should probably be 150, 175 basis points lower.
That was the Treasury Secretary Scott Bessent just moments ago on this program, making the argument for rates to be more than 150 basis points lower at the Federal Reserve. Now, typically an argument like that might not carry much weight with Wall Street, but at a time when this is the individual interviewing potential Fed share replacements, then this is a view that becomes a little bit more important. That might be the threshold to get over the line to get the pick.
Or potentially, especially given how the Trump administration works, you aim high and then you're willing to take something a little bit under. You want to calibrate always to the extreme. So if he's calling for 50 basis points in terms of a cut in September, maybe then the administration will be happy if the Fed is able to at least cut 25 basis points.
Not a million miles away from what is priced over the next, say, 18 months. I think for a lot of people, they've got 2 in 2025, maybe another 4 in 2026. You get to 150. How quickly do they want to get there at the White House? And I think that's the ultimate question now. How big is that push? How aggressive will it be early next year?
And also the Treasury Secretary says this is about recalibration because he says rates are too restrictive. We've heard him talk about what's happening in terms of small businesses and Americans when it comes to the mortgage market. But Jonathan, if you are a Fed and you're cutting 50 basis points, basically, are you signaling that the economy is not very good? Last September, before the election, the Fed came out and cut 50 basis points, and the president was asked about it in New York at a crypto bar he was visiting, part of the campaign trail, and he said, well, if they're cutting by 50 basis points, you know what? The economy might not be very good. That doesn't sound like there's going to be the same argument they're going to use in 2025.
The stock market's at all-time highs in anticipation of some of this. We had some weight to the rally this morning, up another 0.2% on the S&P, on the Nasdaq up by 0.25, on the Russell up by 0.7. That's the price action. Here are your morning calls. First up, JP Morgan upgrading Capri to overweight, expecting revenue improvement and growth at Michael Kors. Your second call from Bank of America, cutting its price target on core weave to 168, saying near-term overhangs are putting pressure on shares. And finally, Piper Sandler raising its price target on Nvidia to 225, looking for another positive quarter for the chip maker. That stock is just about unchanged. Let's turn to the banks. President Donald Trump taking aim at Goldman Sachs CEO David Solomon, saying the bank made a, quote, bad prediction on the impact of tariffs. Joining us now to discuss is Bloomberg's Herman Chan. Herman, welcome to the show. I remember when it was Brian Moynihan the president went after. That was at the World Economic Forum earlier this year, and now it's David Solomon. How are these banks handling this criticism?
Look, bank CEOs get a lot of criticism. That just comes with the territory in 2025. So really, you just have to chalk it up to this is what's happening within the industry. Trump's commentary about bad predictions and estimates is one thing, but criticizing the bank CEOs for debanking is something else that might warrant a little bit more caution, and that's what we're expecting going forward.
So, Herman, just offer some detail on that, and I think you're absolutely right. The debanking issue, this is actually what the president brought up with Brian Moynihan at the start of the year when they had that brief conversation remotely at the World Economic Forum. What's actually been happening? What's the accusation and what's been happening?
Sure. The debanking issue really reflects the regulatory regime of the prior administration, right? So the banks really have to adhere to certain protocols like know your customer and anti-money laundering. And I guess I can give you an example. A couple of years back after the failures of some crypto banks like Silvergate and Signature, where crypto was not the best place to be, so regulators really cracked down on that, and the banks did as well as a reflection of the regulatory regime.
I'm a Chan there.
of Bloomberg Intelligence breaking it down for us, the situation, the tension between the president and some of the big banks on Wall Street.
And yesterday it was about their economist at Goldman Sachs. He didn't like this report coming out about how consumers may end up paying more of the tariff costs. And then, of course, he went on to make it a little bit more personal because David Solomon likes to DJ sometimes on the weekends. I would say everyone has their outlet. This president likes to golf whenever he can get out there on the course. David Solomon, on the other hand, likes to, DJ at parties.
Joining us now to extend this conversation, not that piece of it, but the broader conversation, Erica Najarian of UBS. Erica, welcome to the program. The stock for Goldman Sachs so far in 2025 has been absolutely flying. It's up by about 30%. Is it fair to say that David Solomon should bother running a bank?
Absolutely. He's doing a good job at it. Look, like Anne-Marie said, everyone has things they like to do on the weekends, but the thing that David Solomon does best on the weekdays, and I bet you some weekends, is run this bank well. And so as I think about the setup for, Goldman from here, right, we saw activity levels really pick up in the month of June after really nothing going on in April and in the middle of May, right, through the middle of May. And so, given some of the capital that has been freed up, and I'm sure we're going to discuss that, Jonathan, I think Goldman Sachs and its peers are, in pretty good shape for the second half of the year.
Erica, not to get too much into the personal issues here, but the president just met with David Solomon less than 2 weeks ago. From your point of view, how are the big banks dealing with this administration? Is this a good relationship between Washington and Wall Street?
Remember what Herman said, that they've been dealing with this in 2025? Let's just put this in perspective. The banks have been under a microscope really since 2008. And so a lot of these banks, and Brian was around during that time, clearly Jamie was around during that time. I mean, they have been really dealing with some sharp rhetoric from Washington, regardless of administration, for the past, over 15 years now. So I think this is nothing new to them. I think they just take it in stride, put their head down, and do the best for their shareholders, to be quite frank, and, lean on their Washington teams to improve relations.
When it comes to some of the policies coming out of this administration, you say the scope and the speed of regulatory reform is underappreciated. What's underappreciated right now?
Sure. So, look, the global financial crisis has essentially gave birth to a web of capital and liquidity rules, right? And so it's not necessarily enough just to untangle one, because then you have a different binding constraint, so to speak, that would disallow you from fully deploying that capital to your customers. So under this regime, what's been happening is they've been saying, okay, we have to fix all these things to make sure that the banks aren't getting penalized just because the U.S. economy is growing. So whether or not it's easing the stress test and not being super punitive there, it's easing leverage rules so that, you're not getting penalized for just growing the size of your balance sheet, for example, for deposit taking on riskless activities, or addressing the GSIB surcharge or the surcharge that is on top of, all the other capital rules for the largest banks in the United States. This regulatory agenda appears to be very much honed in on really driving change in all these components, which should free up capital for activity going forward.
So, Erica, not all banks are created equally. We've got different banks on the screen right now: Morgan Stanley, Goldman Sachs, Bank of America. You've got smaller players, regional names. What are the kind of business models that you think investors should be looking to get exposure to with regards to the changes you're anticipating?
The money centers of everything, right? So, we clearly are going to continue to see big activity levels, a pickup in activity levels in investment banking. I mean, look at our screens. This has to be a pretty good trading quarter, in the third quarter again, even though it should be seasonally slower. We just came back from a conference in Kohler, Wisconsin with a bunch of regional banks. And, after the big, beautiful bill has been passed, these, mid-sized businesses are starting to feel confident about, spending a little bit more, expending a little bit more in the second half of the year. And so while they certainly have, more premium valuations than, some of the regional banks, I think the biggest bang for your buck continues to be the money centers.
Erica, appreciate your reaction. Thanks for joining us. Erica Najarian there of UBS on the financials and what we heard from the president just yesterday.
It was so interesting, I think, what we heard about the president yesterday. He was clearly annoyed with Goldman Sachs' research team at that economic report. But this is less than 2 weeks ago. He sat down with David Solomon. And why, Jonathan? Potentially the bank might play a role for an IPO of Fannie and Freddie. So these banks, when it comes to maybe more M&A deals down the line, IPOs, deregulation, they like what they see out of policy out of Washington. But in lieu of that, sometimes they have to take, some mocking from the President of the United States.
Look, the jury's still out on the data. We'll get more of it. Tell me where we're going to be in a few months' time. I don't think anybody can at this point. And Goldman's making a fair and honest forecast about where they think we'll be, and we'll see if we get there.
They're putting some numbers into models saying right now the consumer is basically getting hit 22% of the tariff impact, but that is going to grow. But when you look at corporate America, and you've been talking about the margin compression we've seen, at some point, corporate America is going to have to pass that along somehow. They're not going to be able to consistently absorb this.
Up next on the program, we'll get the views of Tom Porcelli of PGIM Fixed Income following Treasury Secretary Scott Bessent's comments to us. The rate should be 150 to 175 basis points lower. Plus, Danny Berger with your morning movers and pressure in the energy space. From New York, this is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacroix in Sintra, Portugal, and this is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
The opening about 60 minutes away. Equities doing okay, up by 0.2% on the S&P with your morning movers. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. Starting with the LNG major Venture Global, those shares are rallying this morning, up more than 12.5%. It was in an arbitration battle with Shell. The accusation was that it was selling into the spot market at the detriment to some other LNG contracts it had with Shell and others. But Venture Global has won that, so those shares moving higher this morning. A little bit of sell-side action. Palantir getting Palo Alto Networks getting an upgrade from Deutsche Bank, saying that despite the more recent sell-off, that the business seems to be humming along nicely. This is actually the second upgrade it's gotten this week. It was Piper Sandler earlier, so those shares up just under 2%. Finally, wrapping things up with a little bit of earnings. After the bell yesterday, we heard from CoreWeave. This market will punish and reward others depending on what their business is with how much they spend on AI. And CoreWeave has been spending an incredible amount doing acquisitions, funding data centers. It is a market that did not like that spend, despite them talking about the immense amount of AI demand. Still, higher costs mean shares down 9 1/3% this morning, John.
Brutal. Danny, thanks for the update. Appreciate it. The opening bell about 60 minutes away. Danny, thank you. Another read on inflation still on deck this week. We're looking ahead to PPI with Michael McKee. Good morning, Mike.
Good morning, John. This should be interesting because we'll see if there are any kind of intermediate good tariff increases that are going to show up in the data. There is a feeling that we are going to see some inflation there compared with what we got in June when prices were flat. Small rise for both the headline and the core X trade, if you use that as your core, 0.2%, and that'll push the headline rate up on a year-over-year basis and leave the core X trade year-over-year flat. But we would show that there are more issues for the Fed to deal with. And inflation is still out there. I want to make that clear because if you look at, and this is compiled by the Atlanta Fed, if you look at the various different consumer inflation numbers posted by various Fed banks, you can see that their current rates are all up around 3% or higher. And if you try to benchmark that to the PCE-based 2% target that the Fed has, you can see how far they have to go to get there. So the Fed is not going to be a slam dunk for any kind of rate cut. One other note, the Cleveland Fed compiles the 7 rules that most monetary policy analysts use in terms of what the Fed funds rate should be. None of them basically under 4%. So the Fed is a long way from Scott Bessent's 150 to 175 basis points.
Mike McKee, thank you for the reaction. Appreciate it. I think we're joined around the table by another Yankees fan. Is that right?
I mean, as soon as I saw the mug, I said, why aren't you just...
I was trying to hide it because I'm pretty sure Scott Bessent, Treasury Secretary, is a Red Sox fan. So I didn't want to be total. I don't want to antagonize him, you know, during this entire interview.
Tom Porcelli of PGIM joins us around the table. Tom, good morning.
Good to see you all.
It's good to see you. Let's talk about the state of this economy. Yeah. Let's start with the labour market first. Yeah. Where are we?
I mean, you know, I've been on this program many times for many months saying there are all these cracks forming, and that is true today as it was, you know, sort of 6 months ago when we were driving that point home. So nothing has changed for us in that regard. In fact, what I would say is the payroll report, the much maligned recent payroll report, to me, that was just a manifestation of all of the other things that had been going on prior. So we weren't all shocked and bothered by it. I think it was just sort of revealing what was already in place.
Well, let's stay on payrolls. Yeah. Step down, clearly, very obvious. We've gone from a decent clip of gains to something closer to stall speed. Yep. I want to understand from your perspective whether you think that cements this idea that we've seen a cyclical turn, or whether it's more evidence of a structural shift, something developing on the supply side.
Yeah, so we think that things are slowing down, right? I mean, I think that's an important idea. Like, we don't think we're like cyclically we're about to slip into a recession. Instead, what we've been saying is we're in this sort of muddle through backdrop, and we would define that as sort of like, you know, 1%-ish kind of growth, 1 to 1.5% growth. And so that report is actually very consistent with our view in that regard. So when I think about Fed response function, we actually think the Fed, they are supposed to cut. I mean, I don't think that's for us, that's been our long-standing call that they would start cutting again in September. And so we feel good about that overall.
So how much?
Well, sorry, we feel good about the call overall. I mean, things slowing down is never obviously a good.
Understood.
You feel good about the call of the Fed cutting in September.
Yeah.
The Treasury Secretary is calling for 50 basis points.
Yeah. So look, do I have sympathy for that idea? The answer to that is, tell me what the payroll report's going to look like, you know, in a month from now, or whatever it is, a couple of weeks from now, because I think you're going to need evidence for that. If it's just a sort of another really soft report like we saw, I don't know if that's the evidence enough to go 50. But To me, it's sort of semantics in some way, because whether they go 50 or 25, I think they're pulling forward a lot of the cuts that they sort of that the Fed was pricing in over the balance of the next year and a half.
If they go 50, though, what signal does that mean for how the Fed thinks of the economy right now?
Yeah, I think it really drives home that, look, the Fed already, and I feel like a lot of us, me included, I feel like a lot of us forget this. The Fed already had cuts teed up, right? They already were expecting 2 cuts this year, so they were expecting a softer economic backdrop. And so I think in that context, it's just very in keeping with what they're viewing. Show me another really poor payroll report, and I'll give you the evidence for, hey, maybe they need to do more. But I think for right now, it's pretty consistent.
We get one more payrolls report. I've got no idea what's in it. We'll get that on September 5th, a week later.
You don't know? They don't tell you anything?
Absolutely clueless. The BLS shares nothing with me. A week later, we'll get the CPI report. I want to finish on inflation and turn to that side of the dual mandate. Limited tariff pass-through relative to what was expected. Do you think it remains that way in the months to come?
No, actually. I think you're seeing limited pass-through now because companies did a really smart thing. They built inventories in a really meaningful way. And so that's sort of buffering the sort of the flow of the tariff inflationary impulse into inflation. But I'll give you one really interesting thing to think about. It's funny, we're having this conversation about our payrolls calculator, right? Obviously, we can have the same conversation about inflation. There's so many flaws in the calculation of inflation. So if I look at, if I swap out something as simple, well, it's not that it's so simple because it's a big component, but if I swap out OER for, sort of a market measure of rents, like apartment list, inflation's running at a 1% pace right now. I mean, I think all of this, I think that to me is the right way of thinking about what the starting point for
but
inflation
isn't that
is.
giving you a lead on what you think ultimately is going to happen with service inflation down the road?
Yeah, so I think from our perspective, what it means is that you are going to get this lift higher in inflation, but so what? So you lift toward the target as opposed to being above target now and going even further above target. I mean, I think if you look at inflation with just making some very modest and I think very reasonable adjustments, you probably wind up getting back to target.
This situation then is not something that you think will constrain the Fed's ability to reduce rates and respond to softness in the labor market?
I don't. I mean, I think the Fed has the right line on this. I think it is going to be a temporary sort of one-time shift higher.
Well, you say the Fed has the right line. Some Fed individuals at the Fed have the right line.
Yes.
I don't know where the whole committee is. Where's the whole committee on this?
Yeah, I mean, and as you would expect, there's just a divergence of views, I think, seemingly at this point. But it does seem that the sort of the momentum is drifting toward people having the right line, which is to say cutting in September.
If we're not going to see the full tariff impact, say, till 2026, can you see a scenario where the Fed is cutting at the end of this year, maybe starting in September, and then having to think about hikes next year?
Yeah, so this is a really important idea in the context of this is not COVID, right? I mean, I think people are looking at this sort of this drift that we're going to see higher in inflation. And I think that, they're scarred. I think including Fed officials, specifically Powell, I think they're
scarred.
He
called it transitory.
100%. So I think they're scarred because of the whole, let's call it transitory mistake. But this is not that. We didn't ply people with mountains of cash through a helicopter drop of money. We didn't create a pent-up demand scenario by shutting down an otherwise really healthy economy and then turning back on. So I think the setup is so different.
Right.
Tom Porcelli, it's good to see you, sir.
Good to see you
Appreciate
all.
your time. Thank you for being here. Tom Porcelli of PGIM. Fixed income. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Let's cross over to Yahira, who has more. Hey, Yahira.
Hi, John. Treasury Secretary Scott Bessent says the U.S. is open to discussing the use of NVIDIA chips with China. Speaking on our show to you and Anne-Marie in the last hour, Bessent said Chinese tech is piggybacking on the U.S. and that revenue from the arrangement President Trump struck with NVIDIA will be used to pay down the national debt. Meanwhile, Harvard University signals it's willing to pay $500 million for workforce training programs as part of its settlement with the White House to restore $2 billion in frozen federal funds. Sources telling us here at Bloomberg the administration is open to having colleges pay for penalties in form of contributions. They have not agreed to a final deal. And Tropical Storm Erin is strengthening in the Atlantic and could become a Category 3 storm by the end of this weekend. Erin is currently moving south of the Caribbean, but is forecast to turn north and miss the Bahamas and U.S. coast. We'll see. That's your Bloomberg brief. John?
Fingers crossed. Yahira, thank you. Appreciate the update. Up next on the program, we'll set you up for the day ahead. Plus, we'll catch up with Subhadra Rajapra of SocGen, with Treasuries gaining as traders lock in
a September interest rate reduction. And this administration would like to see a whole lot more. Your equity market positive on the day, on the session, on the year. On the year so far, we're looking at a series of all-time highs again this morning. As we count you down to the opening, about 50 minutes away, equities higher by 0.26% on the S&P, on the Nasdaq up by 0.3%. From New York, you're watching Bloomberg TV.
I'm Alex Rodriguez.
And I'm Jason Kelly.
We're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows, up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We're working on the big list right now. They're going to be private sector names. So we had a series or a list of current Fed members. I'm going to cast a wide net, 10, 11 people. And then there'll be a group of us who are meeting with them. And we want to talk about monetary policy. We want to talk about regulatory policy, which is very, very important.
That was U.S. Treasury Secretary Scott Bessent joining the program a little bit earlier on this morning, making the case for a long list of people, a long list of candidates for the Fed chair job. Didn't seem like they're in a rush to pin that down to one name.
No, it doesn't seem like they're in a rush at all. And he's going to have this very long process with him and his team will interview these people on the list, about 10, 11 names he talked about, and then they're going to whittle it down and have then bigger conversations with those individuals and the president. I imagine it's only going to be 2 or 3 names. I have an idea that they know the 2 or 3 people they're putting in front of the president, but also remember, this is optics. This looks good for them to cast a wide net, even individuals that were promoted under the Biden administration.
We talked about this yesterday. You make the process look credible. I think the Treasury Secretary is doing a decent job of that right now because that's a very credible list of names. Stephen Myron is another name in the mix. We just heard from the Treasury Secretary that Stephen Myron, that term at the Fed, if he's confirmed, is going to be a short one. It's going to be temporary.
So this is different than what the Treasury Secretary has been saying the past few days even. It does look like Steve Myron is not staying at the Fed. So they potentially will have 2 seats next year. So they need to first decide who's going to be Fed chair. And as long as Powell leaves, then they're going to get that 2nd seat as well. So potentially some of these names you're hearing may get on the FOMC, but maybe not for the chair position. And you know what, Jonathan? If you want to get on that list...
50 basis points.
That's all you got to do.
I know the game. I know that if you want to get on that list,
yeah,
join the program, 50 basis points. Call for a 50 basis point cut, you're in the mix.
That seems to be the bar. Call for a 50 basis point cut, you're in the mix. Or potentially, I think Governor Logan is voting next year. Maybe they're priming her to make sure she lines up what the administration wants to see next year. Put her on the list.
45 minutes away from the opening bout, equities at all-time highs and adding to it. Up another 0.3% on the S&P, up by 0.36 on the Nasdaq 100. On the Russell, up by 0.8. Those calls for interest rate cuts, adding to the move at the front end of the curve. The 2-year down by 4 basis points, 369. At the longer end of the curve, we've had 6 consecutive days of slightly higher bond yields. This morning, lower by 3 basis points, 425.39 on 10s. That's the price action. Here's the trading diary for the week ahead. At 9 a.m. Eastern Time, a call between President Trump and European leaders and Ukrainian President Volodymyr Zelensky. At 4 p.m. Eastern Time, the president signing executive orders. Looking ahead to Thursday, PPI and another round of jobless claims. On Friday, President Trump and Russian President Vladimir Putin meeting in Alaska. Plus, we get some data in the morning, retail sales and UMich consumer sentiment. You'll be at that meeting going into the weekend. What can we achieve?
Well, I think for that meeting, the best case scenario, especially since the president has already talked down high expectations. He says, I'm trying to feel this out. Yesterday, the press secretary, Caroline Leavitt, said the president will be in listening mode. The best case scenario is that Vladimir Putin agrees to a process to end this war. And there are larger discussions to make sure Russia doesn't invade Ukraine again. Ukraine has long-term security guarantees. If this meeting does not go well, I got the sense from the Treasury Secretary that they are prepared to become much more aggressive when it comes to sanctions.
Can we talk about secondary sanctions? As that interview is progressing, had some pushback from people, I guess, with relations to what's developing in India. And their response to the situation in Russia is as follows. If we can't buy energy from Russia and we face secondary sanctions, why are the Europeans able to buy Russian energy? Why is it a different story for them?
Well, that's a great question. And also, I think even more importantly, the biggest buyer of Russian crude, forget India, forget the European Union, the biggest buyer of Russian crude is China. Why is China still allowed to buy Russian crude, Russian commodities in general? Basically, that is the only way Putin is able to fund this war. If you cut that off, of course, we will say time and time again, sanctions usually just create new markets and then it's harder to track. But if you really start going after the crude going to China, you can really put pressure on Vladimir Putin.
Big question. Treasury Secretary gave a nod to it. Can you get the Europeans on board to do the same thing?
It sounded like
tumbleweed.
No. It sounded like when he went for the hard questions with the Europeans, which are still buying Russian energy, even though, come on, they've scaled back a ton, but they've been enslaved to Russian energy. It's how Germany, you've been talking about for years, is able to have this manufacturing base, cheap Russian energy. He said they all looked at their shoes.
Went very quiet. Let's stick with the economy. Subhadra Rajappa of SocGen writing the following. While the rising goods inflation was muted, the broad-based increase in services inflation is concerning, though not enough to prevent the Fed from raising interest rates. Subhadra joins us around the table. Subhadra, good morning.
Good morning.
Let's just start with September.
Yeah.
You're looking for that cut, 25 basis points?
I think 25 basis points is fully priced, and the Fed never disappoints. So to me, that seems like a reasonable scenario. The thing that I'm just not on board with is that 50 basis point cut or 3 cuts for this year. To me, that seems like a lot.
You are not in the running to become the Fed chair. Continue.
I'm definitely not in the running, and I'm not trying to. But if you look at the comparison that's always been made is between this year and this September and last year when they cut 50 basis points. It's a very different environment in many respects. Last year, interest rates were between 5.25% and 5.5%, so policy was extraordinarily restrictive. Now it's kind of moderately restrictive, or modestly restrictive. And then you also have an environment where inflation is high and sticky, and it's not clear that inflation is actually, it's just, in my view, just starting to feed through. All of the tariffs are starting to feed through into inflation. It's going to take a lot longer for inflation to actually peak this year. So I think in this environment, the Fed is going to be somewhat careful. We're sort of in a stagflation-light environment, so I think caution is warranted.
Two words you used, inflation, high and sticky. High above target. What makes it sticky? Just take some time to explain to us, what is in inflation right now, the source of inflation that you think is sticky?
I mean, rents have always been sticky. That's been the case for the last several years. And now you're starting to see that it's not just goods inflation, because I think that the market was a little short-sighted in thinking that tariffs is going to feed through only to goods inflation. Now you're starting to see that that gains are much more broad-based. So it's not just goods inflation, but also services inflation. And in that sort of environment, it's not clear to me that the Fed should really jump in and start cutting rates aggressively. Also, it's not clear to me who's really absorbing the pass-through from prices. Is it corporations? Maybe initially it's just corporations, but over time, I think it's going to be the consumer that's going to bear the brunt of it. So we've yet to see that feed through into CPI in a meaningful way. And then there's all this noise around the tariff rate itself. You know, it goes up one day, comes down another day. We think that the average tariff rate is going to be somewhere between 15 and 20%. That's a pretty big number, and it's the consumer, I think, ultimately is going to bear a brunt of it.
Well, it was the service prices that propelled the core yesterday. Airlines, dental, medical, prices going up. Is that these companies absorbing some of the tariffs and then passing it on in services?
It seems to be that way. I think that there are certain sectors of the service sector economy where I don't think that the corporations are going to be able to absorb all the costs. Grocery, for instance, it's a very low margin business. I don't see that where grocers are starting to absorb those costs. And you're also going to see an environment where initially, yes, it's going to be the corporations. Corporate profit margins are still relatively healthy. They're going to be able to weather the margin compression. Over time, when corporate profit margins come under pressure, they can be a lot more careful about not just passing through those price increases, but also on the employment side. So that's when it gets a little bit tricky.
John and I were just talking about what is going on in Alaska, this meeting in Anchorage. That will have a lot to do with potentially the direction of travel for oil. How important is it for not just this administration, but this Fed to continuously see a deceleration in energy prices? Yesterday's CPI, 1.1 decrease in energy, 2.2% drop in gasoline.
I think it is important. I think we're energy independent. I'm not that concerned about these negotiations and the rise in energy prices feeding through to headline CPI. Headline CPI is actually surprised to the downside with yesterday's number. To me, again, it's the tariff impact and the delayed tariff impact that I'd be paying more attention to on the inflation side.
When do you think we'll have a fuller picture of that impact?
Probably in the next 6 to 8 months, even.
Wow,
given the fact that you're seeing a lot of back and forth. And, for the most part, it feels to me like, the consumers right now are well positioned to absorb the higher prices because they're employed. Once you start seeing a crack in the job market, that's when you're going to start seeing a demand destruction really play out in a big way.
Can you roll out hikes?
Pardon me?
Can you roll out hikes at this point?
I think so. I think we're just not in an environment where the Fed is going to be willing to hike, because you're looking at GDP for this year somewhere between, maybe 1 to 1.5%. So that's lower than what they had anticipated coming into this year. You're starting to see the job market slow down. I'm not saying that the job market's really starting to crack. A decline in further deterioration, I should say, in the labor market. In this sort of environment, I think that the Fed is not going to be willing to hike rates.
It's an odd situation at the moment that a lot of people believe that we're going to get these aggressive interest rate cuts, 25 in September, others making a case for 50. And yet we've got this range-bound 10-year, just sort of going up and down between 420 and 475, whatever the upper end of the range might be. How do you explain that at the moment? What's going on further out along the curve?
I think that between the 2-year and the 10-year, I think yields are actually going to be quite range-bound. The 2-year is fully pricing in 5 cuts for the next year. So the front end is probably going to be by the front end, I mean the 2-year is going to be somewhere between 3.5% and 4%. the 10-year probably stays between 4 and 4.5. The 30-year is much more of a global instrument at this point. And to me, my concern is that if the Fed cuts rates or even cuts rates aggressively, the yield curve is going to steepen and the long end yields are actually going to go higher.
It's exactly what I spoke to the Secretary about. Why keep issuing a 30-year Treasury at the moment? Because you're outsourcing a lot of the borrowing costs of America to what's happening in Japan, to what's happening in Europe, to deficit spending in Germany. What's the purpose of issuing that long bond at the moment?
Actually, that's why they're not increasing coupon issuance sizes. If anything, the tariff revenues are delaying the timing of when they will need to potentially increase coupon issuance sizes. To me, that increase in coupon issuance sizes is going to come mid next year. So they could continue to keep coupon issuance sizes stable, continue to increase bill issuance sizes, and that'll put a lid on the rise in long end yields. Term premiums are going to be contained because of that.
When does this become a buy for you at the long end of the curve?
I think that the long end of the curve is a tough call. To me, the steepener seems like a much more of a convincing trade. I know it's a very consensus view.
Super consensus.
And the other trade that's been somewhat disappointing as well is that inflation expectations are very, very contained. So it's not like the market is thinking that tariffs is going to mean higher inflation expectations. The survey-based measures are coming down. Break-evens are staying very range-bound. So to me, in this sort of environment, it feels like a bit of the 10-year as well as the 30 is going to be somewhat stuck in a range.
Subhadra, good to see you. Thanks for dropping by. Subhadra Japa there of SocGen with bond yield to lower across the curve this morning. The 10-year down by 4 basis points. Coming up tomorrow, we'll catch up with George Goncalves of MUFG, Son of Desire Franklin Templeton, Tracy McMillan of Wells Fargo, and Scott Kroner of Citi, who recently upgraded his target on the S&P 500. From New York City, thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Day 6 at the Cincinnati Open. Carlos Alcaraz fought through the heat and Hamad Medjedovic to reach the 4th round. A single break in each set was enough for the Spaniard, while 38 unforced errors told the story of the match for the Serb. Alcaraz is now on a 13-match win streak at Masters 1000 events after lifting the trophies in Monte Carlo and Rome.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico this way or that way. It will benefit Mexico.
Mexico for VVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good Wednesday morning. Massive gains in futures today. 30 minutes until the start of trading. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
All right, not massive, but we're up a little after that interview with Scott Bessent this morning. The Treasury Secretary says go big or go home, pushing for a 50 basis point rate cut at the Fed's next meeting. And as the search for Powell's replacement expands, we'll speak to one of the contenders, former St. Louis Fed President Jim Bullard. Plus, on the corporate front, there's a ton of news today. CoreWeave, one of the big winners this year from the AI boom, is taking a hit in the pre-market, and we'll tell you why. Katie, you're watching CoreWeave.
I'm watching CoreWeave because that was a disappointing outlook. Remember, this stock has pretty much quadrupled since it went public, and as such, you can see the shares dropping 9%. Margins being squeezed by its rapid AI data center expansion. Matt, you have to spend money to make money, but still, you can see that disappointment.
No one wants to spend money at Kava, right? Because it just costs too much to get whatever they sell there. It cut its sales outlook as it struggles to keep up with the explosive growth it had seen in recent quarters, and diners spend less eating out. You can see the shares are down another 24% in the pre-market, and they already took such a big hit, Katie.
I know, really looking forward to digging into that story and what's going on in the restaurant industry broadly. But let's get back to our top story. Treasury Secretary Scott Bessent says that interest rates should be decisively lower as data shows softening in the labor market with inflation under control. He joined Bloomberg TV earlier today.
We should probably be 150, 175 basis points lower. So, I think the committee needs to step back. I think probably one of the most politicized governors just went off the board.
Let's bring in Anne-Marie Horder, Bloomberg's chief political correspondent and co-host of Surveillance, and he's talking about Adriana Kugler there, who went off the board. They've filled that seat temporarily with Stephen Myron, but he told you he's really expanding the search for her replacement and for the Fed chair.
Yeah, what's interesting and different than what the Treasury Secretary said this morning, what he's been saying, and the administration has almost been lefting out as an open question mark going forward, is whether or not Steve Myron, who's now the director of the National Economic Council, or head of the CEA, one of the top economists the president has around him, he's moving from CEA to the Fed as long as he gets confirmed. And people were thinking, is this temporary, or potentially is this a tryout period for Steve Myron? It looks like, according to the Treasury Secretary, there's no plans for him to stay at the Fed. So not only are they
looking... He straight up told you.
Yes, so it's not
he's
only...
out.
Well, things can change, though. We are living in the Trump administration. So things can change, but at the moment, it looks like they have about 10, 11 names, the Treasury Secretary said, in terms of who they're looking for a chair.
I thought that was surprising. That's a big number.
It is a big net they're casting. There's private sector names now that have been brought out as well. I think the quickest way to get on that list is to call for a 50 basis point cut as soon as September in terms of what they want to see out of these individuals. But to be fair, it is credible, this list, because individuals like Philip Jefferson are on the list. This is someone that was promoted to the Fed and promoted on the Fed, even giving a higher title under the Biden administration. So it is not just names that are coming from the Republican Party in economic circles. It is a whole host of people. The Treasury Secretary is running the search. He's going to be the one to then, with his team, have conversations with these individuals. They'll probably come down to 2 or 3 names, and they'll put those people in front of the president.
Yeah, absolutely. And CNBC reporting this morning that Rick Reeder from BlackRock, friend of this program, potentially on that very
called for 50 basis point cut.
He did on this program, too, after Jobs Day. But let's also talk about NVIDIA. There was a lot to cover with the Treasury Secretary, including that arrangement for NVIDIA to give 15% of its revenue on Chinese chip sales to the U.S. government. What did Scott Bessent have to say about that?
He's calling this unique when the Wall Street Journal editorial board did say the other day, this is basically the U.S. government putting their hands in the pockets of the private sector. It is not just tariff walls going up, but it is actually telling companies, if you want to export, when it comes to this specific instance, it's high advanced chips, the H20s and the MI308 from AMD to China, you're going to have to pay us a 15% basically profit. Some of those shares you're going to have to share with us. And what I thought was interesting is the Treasury Secretary actually insinuated that maybe more companies are going to be doing this as well. They said this looks like it's going to be a tool in a toolbox that they might use in the future. Take a listen.
We would not sell any of the advanced chips. So the H20s, I don't know whether you'd say they're 4, 5, 6 levels down the chip stack. What we do not want here, Anne-Marie, is for Huawei to have a digital Belt and Road, right? So we do not want the standard to become Chinese across the world or even in China.
Jensen Huang will listen to that and say, this is exactly what I've been saying. And this has been his argument to the administration. We want to make sure we have a foothold there. And at some point, China is either going to have their own at our level, or they're going to, the Treasury Secretary used the word piggyback. I use the word maybe China IP, you know, some theft there. They will be very advanced when it comes to AI and this technology. So they're basically saying, we should have them buy our chips, because the whole question right now facing the national security community, individuals who are China hawks in this administration, is, are they willing to sell export licenses in lieu of national security? And what they're saying is this isn't the highest level chip, so it's fine. What is interesting about this, what they call unique structure, is that they're telling companies to do so, you have to give us 15% back. I'm really curious who else they try to do this with.
Yeah, we'll definitely be watching, and I recommend that people watch your interview. Again, Anne-Marie Horton there interviewing the Treasury Secretary this morning with John Farrow on Bloomberg Surveillance. You can check it out in full on Bloomberg.com. The next hour, we're going to speak with former St. Louis Fed President Jim Bullard here on Open Interest and get his take on not only the search for the next Fed chief, but also the export tax that the president is putting on NVIDIA. On the earnings front, CoreWeave shares are plunging after the cloud computing giant provided a wider than expected loss in the second quarter. The company spending aggressively to meet the AI demand that it sees. Bloomberg Tech co-host Ed Ludlow spoke with the company's CEO earlier this morning.
We continue to see massive demand for training, right? Like that hasn't abated in any way. But what you're seeing is a continual cranking up of the demand for inference. We haven't lost demand for training new models, but we have been incredibly pressed across the industry for compute for additional inference capacity.
Bloomberg Tech co-host Ed Ludlow conducted that interview, and he joins us now. Ed, as I said to Matt at the start of the show, you have to spend money to make money. They're really rapidly building out their AI data center capacity here, but it seems like the costs are just a bit too big for investors to swallow this quarter.
Yeah, they're not palatable in the context that this is a stock that went absolutely ballistic in the 2 weeks running up to earnings, right? They are what is known as supply constrained. They have a fleet essentially of 32 data centers, principally in the United States, where they cannot cater to all the demand that's coming in, hence the backlog. What he's hinting at, though, is really interesting, that we are seeing a shift in activity. More than 50% of the workloads they're running are inference, in other words, running models as opposed to training them. And what they've been able to do is unlock something that we've been worried about for a little while, which is they have loads of what were previously believed to be obsolete chips. You know, H100 is now old by 2025 standards because they have Blackwell. And the trend that Michael explained to me is that they're able actually to shift new customers on new deals to older chips for that inference side. But it's like a high bar quarter. I know the stock's down almost 10% in the pre-market, but just pull up a chart and look at it over the last month or last 3 months.
Yeah, it's obviously done incredibly well. Year to date, up 272%. Ed, I want to ask, I've been on vacation the last couple of days, so I was sitting on my back on a lake in New Hampshire, and I saw the Perplexity headlines cross the terminal. How serious is this bid for Google's Chrome business? It's, what, $35 billion, but the asset's not necessarily for sale.
It's an unsolicited bid, and the importance of that definition is clear. Perplexity does not have $34.5 billion cash on hand. They're saying they'll finance it through investor commitments. I'm assuming from the private growth equity and venture capital names that already back them, as well as some of the strategics. You're right that it's not definitively up for sale. We are pending the outcome of a DOJ antitrust trial where a judge is currently considering remedies, having already decided in the courts that they do have a monopoly in search. The problem is that what the government is pushing for is several different avenues of remedy for Google to do as a package, not individual pieces. And Google's arguing, you can't make us do all of these things, let alone divest the Chrome asset. What most people don't understand is that many browsers, Microsoft's Edge browser, for example, is built on the underlying source code of Chrome. It's called Chromium, and that's what Perplexity is bidding for as well. This is a PR stunt, and that's the reaction that we're hearing from Silicon Valley and actually across the world. I'm in London right now, right? The chances of this being resolved in the near term small because Google will appeal everything that happens next in the courts. It could take years for any resolution.
All right, Ed, great to hear that wrap up, and I'm glad you're in London because I thought doing that interview so early this morning from San Francisco would be pretty hellish. I know you would do it anyway, though. Bloomberg's Ed Ludlow will do anything to get the story for you. Let's talk about shares of Circle. They are lower after a group of shareholders, including CEO Jeremy Allaire, announced plans to offer 10 million shares for sale. The stock rose yesterday after earnings showed a healthy jump in revenue. You can see they're down today in the pre-market. Bloomberg's Bailey Litschultz is with us. He's been following the stock. So, Bailey, what do we know about this sale?
This is a planned sale, so it'll be a 2-day marketed deal that ends up pricing on Thursday. Most people would say, hey, this is a new company. This should be within the lockup period. That is true. This company and the insiders weren't supposed to be able to sell shares for at least 180 days or after their September earnings, but you kind of have an out with some of these lockup agreements. If the stock is performing tremendously well and if there is enough demand, you can kind of get through and make some of these deals. So we are seeing shares under pressure, but when you look at the company, you look at this IPO performance, best performing real IPO so far this year in the US, up more than 400%. So you talk to some investors and they say, wouldn't you take money off the table if you were up 5x? And
I absolutely would is the answer. Let's stay on the topic of crypto equity IPOs because Bullish projected to go public today. I believe its first trade. This is interesting because in 2021, it had plans to go public via a SPAC with a much higher valuation, about $9 billion. That's not the case in 2025.
No, pricing valuation right around, I believe, $5.4 billion based on outstanding shares. If you do see the performance in the aftermarket that we saw with a Circle or that we've seen with Figma or CoreWeave, you could see that number jump pretty tremendously. This is an interesting deal. They ended up raising about $1.1 billion. We saw it go out on the cover last week with a lower range, lower valuation, and really walking up to this pricing. So when I talk to buy-siders who have been kind of circling this company, there's so much pent-up demand for crypto. My colleague Anthony Hughes broke yesterday that there was more than 20 times demand for those shares before this pricing, so there's a lot of excitement. It's going to be another example of a deal that has BlackRock, has ARK, and will be an interesting open, and when it does open later today.
I feel like we should say that we're not talking about Sonali Basic's Bloomberg Originals television show. We can't just not say that, right? I mean, we talk about Sonali's show every day, Bullish. And this is a completely different thing.
This is a crypto
Unrelated.
exchange. This is the parent company of CoinDesk.
All right. That's
right.
important. That's an important detail to mention for viewers, for people who watch this show on the regular basis, you know?
Well, Matt Miller out there with the news that we are not talking about that. We are talking about Bullish, the company. Bloomberg's Bailey Litschultz, great reporting, as always, coming up.
Yeah, division within dining. Brinker delivering an upbeat outlook while Kava slashes estimates. We're breaking down the results and explaining to you where you can eat at Brinker when we come back. This is Bloomberg. case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
AI is definitely in the center of it, and we're looking for how do we spend time and which industries do you invest in. Investors becoming more and more digital or AI enabled that actually adds value to economic growth. And this, we think could be time because you have a strong hardware power and you have a strong software power as we see, and it's accelerating significantly. But a very important, another element, which is changes in demographics. More AI-enabled softwares and applications may improve the people's lives and actually increase productivity in times where demographics are decreasing everywhere around the world. So this, I would say, is a major theme. So digitalization and AI-related technologies, and we think of it technology, but in reality, a lot of the businesses coming up and claiming to be technologies that are actually cannibalizing a lot of traditional businesses.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Tehran, and this is Bloomberg. The Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Let's get now to high interest to look at what's making headlines around the world. Gildan has agreed to buy Hanes Brands for $2.2 billion in cash and stock. Gildan's CEO said he expects the deal to double the company's revenue. The transaction is expected to close before the end of next year's first quarter. And for me, this is exciting because when I buy a Grateful Dead t-shirt, I love it to be a Gildan. They're super thick, high quality. Amazon is expanding its same-day grocery delivery service to more than 1,000 cities and towns across the U.S. with plans to continue to ramp up coverage through the end of the year. The news is weighing on shares of Instacart as well as Walmart and Kroger. You can see all down in the pre-market, Instacart taking a 7% hit. Shares of Kava, speaking of taking a hit, falling again today in the pre-market after the company trimmed its annual sales outlook. The fast casual Mediterranean chain saw a sharp deceleration in the second quarter as diners spend less money on restaurant meals. And this is, for me, interesting, Katie, because I know how popular it was in the zeitgeist, but I've still never seen a Kava restaurant in the wild.
Yeah, there's not many near us, I think. We're more sweet green folks, you and I. But let's unpack the quarter that was for Kava. Joining us now is Bloomberg's managing editor for Global Business Americas, Shelley Banjo. And it wasn't just hot in terms of popularity. It was also hot in the stock market. In 2024, this was a company that moved higher by 162%. What went so wrong to the point where shares are down 22% pre-market today?
I think investors are just coming back to reality. I mean, this company is still doing well. It's still growing, which is a lot more than a lot of these other restaurant chains can say at this moment. However, there was such amazing growth and such amazing numbers. And the CEO is saying, you know what, our traffic is slowing. What has gotten us even to where we're at right now is price increases at the moment.
Oof.
I teased this story to our viewers, telling them we would talk about Brinkers. Never heard of it, right? But the restaurant they run, everyone's heard of, right? Chili's, I think made famous by The Office. And really? I can't believe, I feel like they always went to a Chili's.
I feel God in this Chili's.
I can't believe, but I'm looking at the BI research, Michael Halen writing for Bloomberg Intelligence saying that their multi-year same-store sales trends are accelerating. And they're boosting EPS forecasts. So people that aren't going to Kava or spending as much at Sweetgreen, they're heading to Chili's.
Chili's is a very big turnaround story for the year, and it's super interesting because a lot of their peers have gone out of business. They've gone bankrupt, and so not only has the market thinned out a lot, but they actually seem to be doing some things right, which is offering deals, offering things at bigger price points, and giving you something that you can't get at a Sweetgreen, which is, a warm, sit-down meal.
It's the fun, it's the collegial office. It's the flair, right? 17 pieces. You must wear 17 pieces of flair, Katie Greifeld.
You did say that this was a turnaround story. We did hear from the CEO specifically. This is a direct quote. Chili's is officially back, baby back. And you mentioned, too, that a lot of its peers have perhaps gone out of business. I think of TGI Fridays.
Hang on, is that a call out to baby back ribs?
Yes, it is.
Yes.
Yeah, okay.
Yes, I let the quote do the heavy lifting for me. But it feels like the distinction here is Chili's, you go and you sit down. It's an experience, whereas Cava Sweetgreen, you're in and out. It's like a salad factory.
Yeah, and I think some people do want that. I mean, there needs to be a place that people can go, but the issue is also around pricing right now. People are really noticing how high the prices are going to get. And if you're looking at a Sweetgreen salad or a Cava bowl for $20, and then you look at a baby back rib for $20, which one are you going to pick?
Yeah.
It's an easy answer from me, baby. By the way, I didn't know if you'd get the reference to baby back ribs, because do you get the flair reference?
I don't get the flair reference. I have seen many a commercial with the little song.
But not Office Space.
No.
With, what's her name from Friends? Jennifer Aniston.
But I did get The Office, so I feel like I'm,
Yeah, you're 2 for 3, baby.
Not bad, not bad. Shelley Banjo, great to speak with you. That is Shelley Banjo of Bloomberg News, unpacking those Cava and Brinker results. And coming up later this hour, we'll be speaking about the turnaround over at Potbelly with CEO Bob Wright. Let's take a quick check, though, on what's actually going on in the stock market right now. Ahead of the bell, you can see the S&P 500 higher by about 0.3%, extending that record rally. You can see that tech is doing its part with the NASDAQ 100 up about 0.4%. The small caps on a tear here, Matt. The Russell 2000 currently higher by about 0.8%.
All right, coming up, U.S. equities hanging out at record highs and maybe making a new high today while cross-asset volatility drops to the lowest level of the year. I think I heard Tom Keene this morning say the VIX is at 14. We'll ask Alicia Levine why from BNY. Well, this is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. In On Site with Haslinda Amin, only on Bloomberg.
Wall Street's so-called fear gauge is at a low point thanks to record highs for stocks and bets on interest rate cuts. The VIX now at the lowest since December, Christmas Eve to be exact. Volatility, meanwhile, in the Treasuries market is also down, with a measure of expected fluctuation in yields at the lowest point since January 2022. Let's discuss with BNY Wealth Head of Investment Strategy and Equities, Alicia Levine. It's great to see you in person.
Great to see you guys.
So this big sigh of relief that's happening across markets, in equities, in foreign exchange, and in treasuries, for example, do you think that fits with the actual backdrop that we're navigating through when it comes to trade policy, when it comes to economic uncertainty?
So the economic uncertainty is there, but I'd say this, like this was the uncertainty and the fear of what all these changes in policy and regimes mean was really priced in back in April. And what you're seeing now is the unwind of all those fear trades as the certainty becomes clearer and essentially the markets can navigate through it. And I think that while there are still a lot of unknowns, obviously, we still don't know if there's any future inflation or any growth impact from the tariffs. I think ultimately the market's moved on from that question, clearly moved on. You know, the market is essentially pricing in 100% certainty of a rate cut in September. I doubt the Fed, unless there's something major in the data that show up between now and then. We do have Jackson Hole. I mean, I think it's in the market. So you have the Fed cutting again into slower growth than last year, but an okay environment that typically is very bullish for risk assets.
So I was on Newfound Lake in New Hampshire the last few days. Bought a roast beef sandwich for $11, a pair of Reese's peanut butter pumpkins for $2.
Wow.
I mean, we got an inflation number yesterday. 3.1% is not nothing on the core, right?
Correct. I mean, I actually thought this number was not the nothing burger that the market took it to be, particularly on the services side. The Fed used to talk about the super core, you know, so core services, ex housing, that was hot. The heat came from the services sector, not the goods sector, which we saw in the previous month, which is what we're seeing actually as the tariffs have been implemented. The core goods had gone from deflation to actually some inflation. So that story makes sense. Yesterday's print didn't make sense, to be honest. And so the Fed's not worried about super core anymore.
Well, Alicia, hold that thought. We're coming up against a hard break. We're going to continue this discussion at the opening bell. Up next, this is Bloomberg.
Break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now
than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
We have just seconds to go until the opening bell. This is Bloomberg Open Interest. I'm Matt Miller, and we are seeing continued gains after a record high yesterday, despite a hotter inflation print at the core. We have S&P futures up 1/3 of 1%, NASDAQ futures up about 0.5%, Russell futures doing even better as Scott Bessent on Bloomberg TV calls for a 50 basis point rate cut, and a lot of people on the street are agreeing with him. You see and hear the opening bell. Tom Farley ringing the opening bell. He runs this company Bullish, which is not Shanali's TV show, but apparently it's a crypto thing. They own CoinDesk. Really cool for him to be back there at the NYSE. He was the president of the New York Stock Exchange, so a round trip for Tom. And then you've got, that looks like the Trump, it is the Trump kids there ringing the bell for World Liberty Financial, which is part of their effort to raise cash through crypto. Not hard to do when your dad's the president, so there are a couple of Trump Juniors. Stocks to watch today. CoreWeave shares are down following a disappointing outlook in the AI space. Margins are being squeezed by its rapid data center expansion.
And that's exactly what I want to tell you, because CoreWeave shares down 11.5% right now. Again, this is one of the most successful IPOs of the year, if not the most successful IPO of the year, pretty much quadrupling since it went public. So, of course, the bar was very, very high. And the fact, like you mentioned, Matt, that margins are being squeezed, investors just saw that as unpalatable at this point in time. So you add it all together, shares falling pretty mightily at the opening bell.
Yeah, but not as bad as Kava, right? That Mediterranean fast casual chain, I'm going to say, cut its sales outlook as it struggles to keep up with the growth that investors have been expecting. You can see the shares down another 22% at the start of trading, and they already had a pretty rough day yesterday. We just talked a lot about the restaurant sector. We don't need to go back there, but we do want to go back to BNY Wealth, Head of Investment Strategy and Equities, Alicia Levine. And Alicia, you were saying something during the commercial break, which we all know, I guess, in our hearts, but forget every day when we look at this market. It's not so much about the numbers they're delivering compared to, like, you know, the whole story, but rather compared to the expectation that's been priced in.
Right. So, I mean, that's the really interesting thing, and that's why the markets have been very tricky to navigate. Because when you think about where sentiment is on inflation, everybody's expecting higher inflation. That's been priced in. Those are the expectations. So if you get a data print that is essentially in line, there's asymmetric risk to the upside in risk assets because the expectation was for CPI to miss to the upside and to be much hotter. And so it's really what's priced in, and this is why we continue to think that the markets will continue to march higher, because pretty much every room we're in, there's doom and gloom about where these policies are taking the U.S. economy. So far, the data are much better than expected, and so therefore the market move higher, and earnings are moving higher. Like in the end, the S&P is not the real economy. Something really important to keep in mind. We say it to our clients all the time. I think this year has really shown that. Earnings are growing now. You know, earnings came in 2.5 times better than expected June 30th for the second quarter. That raises estimates for the rest of the year. That's moving the market higher. The multiple's staying at 22 times forward. Right. It's the earnings estimates that are moving higher.
I hear what you're saying, but you look at the specifics of this earnings season, it's not that corporate America is immune from these tariffs. There was some great examples in Peter Bukvar's note this morning talking about Elf Beauty, talking about their costs, Caterpillar, Colgate-Palmolive, Kimberly-Clark, Apple, the list goes on and on. So companies, it seems like they're content to sort of let it eat into their margins at this point, but do you see a scenario where these companies start to try to pass on these costs to these exhausted consumers?
So I think that's the risk out there. Part of the reason we're in a higher multiple world is that the margins on the S&P have marched higher over the last 30 years and really turbocharged in the last few years because of the top 10 stocks and the massive margin growth you've seen in the tech stocks. So the question is here, it's $370 billion of tariff revenue, and who's paying for it? So it's not the exporter, so it's either the importer, the company, or it's a pass-through to the consumer. I think that's where the risk really lies here, and that is the issue for the market. Who's paying for the tariffs? Because you're either hurting margins for corporates or you're passing it through to the consumer, which will be a very, very quick impact on growth, which is the argument for why the Fed should be cutting, because the impact to growth is probably higher than the impact on inflation.
By the way, I was listening to Damian Sassower this morning talk about the dollar versus EM currencies, and the outlook isn't great. We've seen the dollar obviously lose already 10% from a pretty high peak, though. Does that continue to weaken? Because that's problematic if you get these tariffs and a weaker dollar.
So our teams think that there's some room here for the dollar to weaken, but the velocity of the sell-off in the dollar is likely behind us. I mean, that first quarter was the dramatic, anti-trade that everybody was in, right? So it was dollar weaker, U.S. down, rest of world outperforming. The performance of the rest of the world is intimately linked to the performance of the U.S. dollar. Weaker dollar means rest of world outperforms. I don't need to know anything else. That's the one variable you need to know. So as we look forward, if you think there's some weakness in the dollar ahead, the outperformance of rest of world likely continues for this year. But unless you think that the dollar is really going to collapse here, I think the velocity of the move is behind us. So our teams throughout the bank really think we're looking at a few percentage points, but nothing like not another 10 or 11% going forward.
Well, when it comes to that relationship, the performance of the dollar and how the rest of the world is performing, I'm taking a look at the Bloomberg Dollar Index right now. We saw that collapse at the start of the year, as you described, but we've really been in a range for the past couple weeks, maybe the past few months. Does that mean that the U.S. can catch up here? Is it about the direction of travel or the outright level?
So that's a great question. As you know, markets trade on the second derivative, the rate of change. The rate of change is now less than what it was, right? Less than what it was. We think for the end of the year, rest of world will have an outperformance. However, if you go back to April 8th to today, the U.S. has outperformed the rest of the world by about 800 basis points. So the U.S. has outperformed since that cataclysmic day, April 8th, where the tariffs hit. The U.S. market was down about 19.5% before the open, and the U.S. has outperformed ever since. We think that actually continues through the rest of the year. From here, even though by year end, you'll still have the rest of the world outperforming the U.S. simply because the U.S. dollar will be down about 11 to 13% for the year.
So many moving parts, right? And so many, it's the second derivative point that I can't get my head around, but.
All these different cross.
Everybody talks about levels, and when this happens, this happens. That's not how markets move. It's on the rate of change, and whether it's slightly better than expected, slightly worse than expected, and that's the direction of travel. We raised our numbers on the S&P just yesterday. Earnings are moving higher.
All right, Alicia, really great to get some time with you. On the heels, of course, of that raise, that is BNY Mellon's Alicia Levine. Meanwhile, let's get a check on the stock market right now. We're just about 7 minutes into the session, and we're looking at a fresh intraday record high for the S&P 500, higher by about 0.4% at this moment. You take a look at the breadth here. You do have more green than red, 380 or so names gaining right now on your big benchmark, 121 in the red. You take a look at what is gaining. We're sorting by percent change right now. A little bit more interesting, if you sort by points, you can see that Apple is really driving this market higher in terms of its points contribution. There we go. Apple, Amazon, Broadcom, NVIDIA, AMD, tech doing the heavy lifting here to get us to a fresh record. Take a look at the downside. This is interesting. Walmart is your biggest loser, followed by Costco. You also have Kroger in the mix as well. We know that Amazon announced plans to expand same-day fresh food delivery. That is taking a bite out of some of these grocery names. And you can see that on the sector level as well. If we take a look at that view, a lot of green. Same with the individual stocks. You have 10 of 11 sectors in the green right now, led by consumer discretionary. A lot of that is tech in disguise. But down there at the bottom, consumer staples now down by 0.8%. That is your sole loser in this market right now, Matt Miller.
All right, yeah, not a lot of losers. We're at intraday record highs, no matter what index you look at right now. The one problem spot in today's market seems to be, at least in terms of the individual movers, food makers.
Yeah.
Fast casual is having a problem, except for the sandwich shop Potbelly. It continues its turnaround tale. If you look over the last couple of years, it's doubled the shares this year to date, up 36%. We'll talk to the company's CEO, Bob, right next. This is Bloomberg Open Interest.
Welcome back to the circuit. This time, we're taking you to the frontier.
Do we have a camera, or do we don't want to lose you, Emily, in all of this.
Stargate, put that name down in your books. What we're undergoing right now is sort of the largest infrastructure bill in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real.
How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
And a little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Welcome back to Open Interest. It's time now for our top calls. Some of the analyst action in focus this morning. And first up, Jefferies downgrading On Holding to underperform with a street low of $40, highlighting the stock's rich valuation and slowing sales growth. Next up, Deutsche Bank upgrading Palo Alto to a buy, expecting a strong set of quarterly results and calling investor concerns, quote, overblown. And finally, we have JP Morgan upgrading Capri Holdings to overweight, saying that tariff mitigation efforts and limited markdowns should help propel the company's earnings. The stock is up 6% net.
All right, so a big jump there at Capri. I want to get back, though, to the food sector. The turnaround continues for fast casual chain Potbelly. The stock far outpacing the Russell Index year to date. The company off of a second quarter, the company coming off, I should say, of a second quarter that saw same-store sales growth and accelerated expansion. And actually, if you look at the past 5 years, the shares have tripled. Let's talk to the CEO about how he did that. Bob Wright joins us right now from Potbelly. Bob, pretty amazing growth, especially on a day when we're talking about consumers pulling back. How have you driven these kind of gains in your shares?
Yeah, we've been really happy with our results in the quarter and really over the last several quarters and years. And the results, you know, I know it's not always exciting. It is for us in the restaurant industry, but our focus on the customer and the experience that we give them, our employees, and really being consistent with our approach to our strategy is the reason that we continue to win. We had positive traffic in Q2 in addition to same-store sales growth. I think a lot of it's rooted in our menu. We've worked a lot on menu innovation really since the beginning of my tenure, but especially with some new products recently. We just re-platformed our digital platform, our consumer-facing digital assets, the web and the app. And we've continued to lean into our digital advertising. We're not on broadcast television, so our digital game is really important to us. And I'm so proud of our teams in the field and franchisees. They just, you know, they try really hard to deliver for the customer every day.
Well, let's talk about your input costs, because we saw this with Cava a little bit, that it's just, things are expensive now, and you've seen a lot of your competitors try to raise prices, try to pull that lever. How are you navigating those different cross currents when it comes to, okay, how much can consumers actually take on, and how much of your margin can you afford to give up?
You know, if you go back to when I got here, we had really damaged the value proposition of the brand as a whole. In fact, we rebuilt the menu back in 2021 to correct for that. And so we've been very careful about pricing against that core menu. In fact, I talk about our 3 layers of value and how protective we are of those here at Potbelly. Intrinsic value, which is just the menu itself, what we sell, what we implement, and how we elevate quality there. Our everyday value with Pick Your Pair and some of our everyday items like our $7.99 skinny combo. And then we do a lot of promotional value work through our digital app and our web and our Perks loyalty program. So we're very protective. When we price, we only price to cover inflation. And we're stingy with that. In fact, last year in the fourth quarter, we pulled a planned price increase, and we've already shared with the analysts and with our investors that we're actually reducing the price increase that would have originally been planned for fourth quarter this year. There's a lot of work that goes into maintaining and managing those commodity costs, but our job, I think, is to be very, very careful not to hurt that value equation for the customer.
Bob, I've only been in your store on 52nd Street, but it's like a cool place to hang out, and you can eat there if you want. The restaurants that have had trouble, like Sweet Green or Cava, it's more like just a conveyor belt of salads. How do you, and the ones that have done well, like Chili's, are obviously, you know, dine-in meeting places. How do you strike the right balance there?
That's a great question. We get asked that a lot. You know, our digital business makes up 41% of our total business, at least it did last quarter. But that means that the in-shop experience is really important. You know, we're a 48-year-old brand that started in an antique shop in Chicago. So even the location you've been in New York's got that sort of older antique shop feel. We got a cool vibe, we call it. We're very particular about the music and about the smells and the energy inside the shop, because people do want to sometimes come in and order their food to dine in. A lot of people order digitally, pick it up off the shelf, and still sit down and dine inside the shop. And we want that balance of experience to be there no matter how the customer wants to use the brand. We're finding that as we build new locations, that vibe, that decor package, the real special nature and uniqueness of each of our shops is really important, especially as we're entering new markets. And I think we get a lot of praise from our customers for keeping that special nature of the overall shop experience and building a moat around it, if you will. That's a competitive advantage that we're not going to let go of, and we're certainly not going to give up, especially as we're expanding.
Well, let's talk a little bit about that expansion. I'm taking a look at the transcript of your earnings calls. I see that you have 364 signed deals in the pipeline on top of units that you have open right now, Bob. Is that a comfortable number? How much bigger do you want this chain to grow in terms of your footprint?
Yeah, I'm excited. When we set out with our current five-pillar strategy 5 years ago, we thought the brand could be a 2,000 unit brand in the lower 48. We rooted that in an assessment of all the markets and the market holding capacity. So to end last quarter with 816 open and committed shops means we're 40% of the way there with those that we have open and that we've sold through our franchising efforts. It was also our best quarter ever for adding franchise commitments to our roster of potential openings. We opened 8 shops last quarter, and we committed to at least 8 more this quarter. And I'm particularly excited about not only we opened 8 shops, they were in 7 different states. So we're getting growth around the country and in a lot of different markets with franchisees that have committed to developing units anywhere from 6 to 8 and some as high as 18 in one particular development deal. So it's broad-based, it's geographically dispersed, and it's successful. It's really a lot of fun to be expanding through franchising.
All right, Bob, really appreciate the time. That is Bob Wright. He is the CEO of Potbelly. Now coming up, grocery stocks falling as Amazon expands its same-day food delivery. We'll discuss the industry next. This is Open Interest.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Jumpstart your trading day with 2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Bloomberg Open Interest.
Every trading day.
Only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
This is Bloomberg Open Interest. Quick check on the all-time record highs that we're seeing in stocks. I'm talking intraday here, but we're there on the S&P 500, 64.78. We're there on the NASDAQ 100, 23,954. Are we headed towards Dow 50,000? I need to get that hat. We don't show the Dow here because no one cares besides me. Right, Katie, is that fair to say?
I think that's a fair assessment of the situation.
Take a look at the movers here. NVIDIA is unched, right? If it starts to rise, that'll just fuel more gains. If it drops, that'll hold us back. AMD up 5.5%. Circle right now down 1%. We were talking about that earlier, as well as Hanes Brands getting taken out by Gildan. And then Amazon up 1.33% and Kroger down 4.25%. We're going to talk a little bit more about that right now.
Yeah, for more, we're joined by Bloomberg Intelligence senior tech analyst Anurag Rana. So let's just recap this news. Amazon now offering same-day grocery delivery in more than 1,000 cities. It also plans to bring the service to 2,300 more by the end of the year. You can see grocery stocks, including Kroger, down sharply. This is clearly a big deal for them. How big of a deal is this for Amazon, though?
Yeah, you know, I just got off the phone with our grocery analyst, Jen Bartashis, and she told me that what they're doing right now is trying to gain more market share by undercutting prices. So for Walmart, the minimum is $35. I believe it's the same for Kroger. So it looks like what they're trying to do is use their existing logistics network and adding more capacity to it and then on top of that offering customers a lower price point. So looks like more of a market share gain ploy at this point. And you know, as you said, it seems like the market is responding to it.
Yeah, I was just in the car with my wife yesterday. She said, I have a same-day Amazon order going in. What should I get? And I said, Polar Seltzers and some Siggy's yogurt. And she said, no, it's not a grocery thing. It's like the stuff that you need, not the food, right? But it is increasingly becoming that, right? Are they going to offer the widest possible range of products?
So, Matt, one of the things that has happened during the pandemic was Amazon extremely invested to a point that they, changed their entire logistics network. And now when that's complete, or that you could say that's, mature, you can add more and more products on top of it because you obviously have the same trucks. You can add more bags to it, etc. So I think at this point for Amazon on the retail side, the logistics network is one of the most important factors, or the ability to get your products sooner. I think grocery adds up to that, and I think with changing consumer habits, I think they will gain more market share because of it.
So same-day grocery delivery, it's free for Amazon Prime subscribers on orders over $25 in most cities. For non-members, the service carries a $13 fee, regardless of order size.
Are there non-members? Is anyone not a member of Prime?
Well, that's exactly what I want to ask Anurag. Does this just tighten the grip, the dominance that Amazon Prime has?
I think so, because at the end of the day, it's very much like a Costco model, because that's where a lot of the profit comes from, is because of the Amazon Prime members. And I think, you get hooked into it. And again, we have seen this again and again. Amazon is no longer the lowest cost price product for all the things that are out there, but people go there because they are extremely in a habit of getting things faster. So logistics network is extremely important for them, and I think this also solidifies their ability to gain more market share.
All right, Anurag, great to get you via satellite. We need to get you back here in the New York office. Anurag Rana there covers tech for us from Chicago at Bloomberg Intelligence. Coming up in the next hour, Gabriela Santos of JP Morgan talks about the VIX at a 2025 low as we head to ever rising new highs. Axon's president discusses police technology moving beyond the taser success. And then Jim Bullard joins the show to talk about his potential as the Fed chair. I don't know if he's going to say much about that, but tell us also what he thinks the Fed should do here and give us his take on the U.S. economy. This is Open Interest.
cidade estava sitiada.
Nisso, ao começo, eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. President Trump takes part in a virtual meeting this morning with EU leaders and Ukraine's Volodymyr Zelensky on winding down the war with Russia. It comes 2 days before a planned summit between Mr. Trump and Vladimir Putin. Correspondent Weijia Jiang.
The White House press secretary says they do not expect the meeting between Trump and Putin to end with, quote, deliverables. The hope is that it will lead to a three-way meeting with those two leaders, plus Ukrainian President Volodymyr Zelensky.
The BBC's James Waterhouse.
I think the concern here is that they will talk about territory and the idea of handing it over in some instances, or the idea of some kind of compromise. And we've heard Zelensky say we can't hand over territory because it'll just allow Russia to build further attacks in the future.
Health officials and witnesses in Gaza say at least 25 people were killed trying to get to desperately needed food in Israeli gunfire today. It comes as a new round of negotiations begin. Reporter Linda Gradstein from Jerusalem.
A Hamas delegation arrived in Cairo for ceasefire talks after both Israel and Hamas said the talks had reached a dead end. In an interview with an Israeli TV channel, Prime Minister Benjamin Netanyahu was asked if a 60-day partial ceasefire was still on the table. Netanyahu replied that he thinks it's behind us, saying that Israel tried, but that Hamas was misleading them.
Word just in from Tennessee. Hamilton County's Office of Emergency Management says a mother, a father, and a child were all killed when a tree fell on their car during heavy rain and flash flooding in a suburb of Chattanooga this morning. Several people were rescued from homes and cars in East Ridge yesterday. There's more rain and flooding expected there today. News from a major appliance maker this morning. GE has plans to bring more jobs back to life in the U.S. CBS's Stacey Lynn explains.
The company's investing more than $3 billion to expand its U.S. operations and plans to shift production of refrigerators, gas ranges, and water heaters out of China and Mexico. The investment is the second largest in the company's history and is expected to add more than 1,000 jobs.
Sometimes the dread of going to school is too much. CBS's Michael George has those details.
A survey of parents by the Kids Mental Health Foundation found while the #1 reason was being physically sick, nearly a third of parents say their child missed school due to fear or anxiety. Mental health reasons keeping kids from school included bullying, not fitting in, worrying about a test, or having to speak in public.
The Dow is up 373 points in early trading. This is CBS News.
Talk.
A top site will use AI to check underage users.
YouTube is the latest tech company to say it intends to use artificial intelligence to detect whether a user is under the age of 18. CBS News tech contributor Ian Scher.
Artificial intelligence is very good at identifying patterns, and having an AI effectively try to find people who are lying about their age on social media is a very effective use of it.
Initial AI testing has just begun today on a limited number of YouTube users. Steve Kathan, CBS News.
And other videos teasing Taylor Swift's first appearance on today's New Heights podcast with her boyfriend Travis Kelce and his brother Jason.
Taylor Swift!
After the big crescendo, Swift admitted,
I think we all know that if there's one thing that male sports fans want to see in their spaces and on their screens, it's more of me.
Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're also streaming live on YouTube as well. Norman Linda and Paul Sweeney here with you. A red headline just crossing the Bloomberg terminal. I want to get to that right away. Trump wins court fight to withhold billions in foreign aid. So we'll have more reporting on that coming up. Coming up today on the Bloomberg Intelligence Program, we're going to kick it off with Michael McKee, Bloomberg International Economics and Policy correspondent. Get his thoughts on some of the economic data we've had over the last couple of days. Secretary of Treasury Scott Bessent on Bloomberg Television and Radio earlier today calling for a 50 basis point rate cut. So we'll get Mike McKee's thoughts there. Wayne Sanders, Bloomberg Intelligence Senior Defense Weapons Analyst, give us a little preview from a military perspective on this summit between Presidents Trump and Putin in Alaska on Friday. What's happening on the battlefield in Ukraine and how that might impact the talks. Tatiana Darye, strategist for Markets Live, on the latest M Live Pulse survey. Lower rates emerge as secure for Sell America 2.0. How about that? So rates secure all. And we're going to have a simulcast around 10:45. Former St. Louis Fed President Jim Bullard speaks with Bloomberg Television anchors Matt Miller, Katie Greifeld, and Michael McKee. We'll bring that live to you. So lots going on over the next couple hours, some economics, some earnings, and some corporate news as well. We'll bring it all to you. Let's right now kick it off with Lisa Mateo. Get a Bloomberg Business Flash.
You got it in this Bloomberg Business Flash brought to you by IBKR. Will U.S. initial jobless claims exceed 220,000 for the week ending August 30th, 2025? At IBKR Forecast Trader, the yes recently at 50%. Start predicting today at ibkr.com/forecast. The last trading day for this contract is September 4th. We've got stocks rising to a record, yields falling, traders increasing their bets that the Fed will cut interest rates. Treasury Secretary Scott Bessent said we should go into a series of rate cuts here, starting with a 50 50 basis point cut in September. Let's start with the NASDAQ, up 0.3%, 74 points, 21,757. The Dow up 0.9% at 44,867. And the S&P 500 up 0.4%, 6,472. In the yield space, we have the 2-year, 3.68%. That's down 4 basis points. The yield on the 10-year, 4.24%, and that's down 4 basis points. The dollar falling against most major currencies. The Bloomberg Dollar Spot Index down about 0.2%. To earnings we go. Data center leasing company CoreWeave, one of the big winners of the stock market this year from that AI boom. Its shares are down about 12%. Reported a disappointing earnings outlook. Its AI build-out costs are widening its losses. Then shares of fast casual Mediterranean chain Kava Group taking a hit, down 17%. The company's been facing pressure to keep up with its fast growth. It says diners, well, they're just spending less money. Natalia will have more on those in Stock Movers. And finally, sticking with restaurant chains, Chili's owner Brinker International, ticker EAT, love that, reported a comeback. Its shares up 2% with a fourth quarter earnings beat. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Nora.
All right, Lisa Mateo, thank you so much. We appreciate that, as Lisa was just reporting stocks moving higher across the board. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Nora Melinda. And we're joined by Bloomberg's Natalia Kenijevic. And Natalia, what are you looking at today?
As Lisa mentioned, Kava is one of the biggest stock movers today. The ticker is CAVA. The stock is down by 17%. This is the biggest drop on record. It came after the company reduced its forecast for the full year. So, for example, now sales at established locations will expand at 6% for this year. Previously, the company expected an increase of as much as 8%. So the message is very clear. Customers here in the U.S. are spending less on restaurants. And it's interesting also that results come just a couple days after another restaurant chain, Sweetgreens, right, posted disappointing earnings outlook. And the stock also plunged at the most on record, if I'm not mistaken.
No, it's really interesting, especially thinking about the fast casual situation. I immediately think of a Chipotle, but I mean, Kava is the Mediterranean version of that.
Either of you guys go there?
I've been.
I've never been.
Yeah.
You? What about you, Paul?
No, I haven't. I'm not a big fan of the
not for me.
feta cheese, and feta cheese is in everything. Tom T and I were looking at the menu earlier. So,
but a lot of people are big fans, so, you know, really interesting. But you're watching On Holdings.
Right, so this is a retail space. The company's ticker is ONON. The stock is down by almost 3%. It came, this is a Swiss maker of sneakers backed by Roger Federer. So the move comes after Jefferies analysts downgraded the stock to underperform from hold. Also, they cut price target to $40 from $50. It's currently trading at $48. And this is also the lowest price target across all Wall Street analysts tracked by Bloomberg. So the main idea here is that Jefferies says that sales growth is already peaking. And notably, this downgrade comes just a day after the company posted better than expected forecast, and it boosted its sales outlook for the full year. Notably, when we look at sales across global regions, we saw that there was a 100% increase in revenue coming from Asian markets, about 17% growth coming from the U.S. But when we look at revenue breakdown, we know that Asia accounts for just 5% of revenue. And here in the U.S., this is the most important market. Revenue accounts for about more than 50% of total revenue comes from the U.S. So it's a big market.
Yeah, I mean, I'm looking at the street, though. We're seeing 87.5% of Wall Street has a buy holding, 28 buys, 2 holds, 2 sells. Hedgeye has a short call in it.
Okay. CoreWeave, what's happening there?
Right, so the ticker is for the stock CRWV. This is a big story we have been following this year. This is a company that previously went public. The stock is down by 11%. So first, let's talk about second quarter results. On the one hand, we do see that second quarter sales tripled to $1.21 billion, above expectations. However, net loss was wider than expected. And more importantly, for the third quarter, the company's sale operating income forecast came weaker than analysts expected. So the main message here is that on the one hand, the company has a really strong pipeline of orders even from new clients such as OpenAI, but as Bloomberg Intelligence is saying, it can come with the cost of pressures on margins and cash flow.
All right, Natalia, thank you so much. Appreciate that. Natalia Kenijevic, equities reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Brokers studio. And for more conversations like this, Subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Well, earlier today, Treasury Secretary Scott Bessent, he's been calling for a 50 basis point interest rate cut after this week's consumer price data. In a conversation with Bloomberg television anchors Jonathan Farrow and Anne-Marie Hordern, Bessent says that could be the start of a rate-cutting cycle. Let's listen.
We should probably be 150, 175 basis points lower. So, I think the committee needs to step back. I think probably one of the most politicized governors just went off the board.
All right, that was Treasury Secretary Scott Bessent speaking with Bloomberg television anchors Jonathan Farrow and Anne-Marie Hordern, talking about not just a 50 basis point cut here in September, but maybe 150, 175 more over the longer term. Mike McKee, he does this stuff for a living, this economic stuff for Bloomberg. He joins us here in studio. Mike, does the data support the type of 150, 175 basis point rate cut that Secretary Bessent is talking about?
Well, the data don't support it, but the forecast does, in the sense that Fed officials think that you'll get down to 3.4% by 2027. That was their June forecast in the summary of economic projections, because they figure that inflation will continue to fall, and their forecast is that we'll get to the PCE, very close to the PCE target of 2% by 2027. They were forecasting 2.1. Now, this is all pre-tariffs, so we don't know what the Fed thinks now. We'll get a new forecast in September and find out if they would agree. But the data at the moment don't even support a 50 basis point cut. So I don't think that the secretary's wish is valid there.
I mean, when I listened to the interview, one of my thoughts was about the Fed's dual mandate. How are we balancing that right now?
Anne-Marie Hordern and I were talking about that this morning. If you add an inflation rate above 3% to a jobless rate at 4.2%, you do not come up with a sum that equals a big rate cut. And the Fed at this point is trying to balance both. We'll see where we are, and they're really going to need this extra data after we get the next CPI and jobs report in early September, because it's a very close call now. If the unemployment rate doesn't start to rise significantly, then the Fed would be justified in staying where it is, which is what the majority would like to do right now, because inflation, as we just saw, is above 3%.
It's interesting, boy, the political pressure there must be extraordinary. President Trump also out with a tweet today indicating that as he thinks about replacing Fed Chair Jay Powell next year, it seems like the list of potential replacements is actually growing. Is there any front runners? Do we know how that process may play out going forward?
Well, the process seems to be almost normal in the sense that they're compiling lists of potential names who would fit the president's criteria, and then Scott Bessent is leading a group who interviews each one, and they'll pare the list down and give the finalists to the president, which is all kind of the way it would be done in a normal administration or at any kind of corporate executive search. We don't know who the favorite is. Last week, Bloomberg reported to that point that Christopher Waller, the Fed governor, the current Fed governor, is the favorite. But now we've got these new names added this morning. The Treasury confirms that they've added some private sector names to the list. Rick Reeder from BlackRock, David Zervos at Jefferies, and Larry Lindsay, who runs his own economic consulting service now, but was a member of the Fed Board of Governors back in the George H.W. Bush years, have been added to the list. So we're up to 11 people now. One assumes that we get into September, they'll start paring that down.
And this has to be confirmed, Senate confirmed?
Yes.
So you presumably, if Powell leaves in May, would you like to have somebody by May confirmed?
Oh, absolutely. And there's no reason they can't do that. And the timing, the administration officials have told me their timing has been aimed at getting a name out in, say, October or November.
Okay.
It could be speeded up by everything that's happened in the meantime. Scott Bessent said today that he thought that Stephen Myron, who the president is planning to nominate for the open Kugler seat, would not stay on the Fed.
Yep.
So there would be 2 new names to come out. And so we have 11 people to choose from here at this point.
Lenny, all right, should be able to find a couple of good people from that, presumably. Michael McKee, thank you so much. Michael McKee is the International Economics and Policy Correspondent for Bloomberg News, joining us live here in our Bloomberg Interactive Broker studio. Stocks still higher on the day, not quite at their intraday highs, but the S&P still up about 0.4%. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. We've got stocks advancing. This is after yesterday's U.S. inflation data encouraged investors that the Fed can cut interest rates next month. Tomorrow, all eyes while they shift to the producer price index and initial jobless claims. The Nasdaq up 0.3%, the Dow up 0.7%, and the S&P 500, that's up 0.3%. In the yield space, we have the 2-year 3.67%. That's down 5 basis points. The yield on the 10-year 4.23%, and that's down about 5 basis points. To commodities, WTI crude $62 a barrel, down about 0.5%. We have COMEX gold up about 0.5%, $3,416 an ounce. The Bloomberg Dollar Spot Index now down 0.3%. Bitcoin just up above 121,000. Crypto firm bullish. Well, it raised $1.1 billion in an IPO, pricing its shares above the market range. Then Circle Internet Group, the second largest stablecoin issuer, and a group of shareholders, including the co-founder and CEO, they announced an offering to sell a combined 10 million shares. And finally, shares of Tencent. They're up about 7%. Those are ADRs, up about 4% in Hong Kong. That's after revenue for it's China's most valuable company. It beat estimates, and the company said it's stepping up its AI spend. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash. Paul and Nora.
All right, Lisa Mateo, thank you so much. We appreciate that. Nora Melinda and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well with Vladimir Putin and President Trump. They had the summit in Alaska, and President Putin, on Friday, thank you very much, President Putin is confident that Russia is in a dominant position on the battlefield as his military advances in Ukraine. Let's get the lay of the land of this upcoming summit from the perspective of what is happening on the ground. Wayne Sanders, Senior Defense Weapons Analyst at Bloomberg Intelligence, joins us here. So as this summit takes place here, Wayne, what do we know about the situation on the ground in Ukraine?
Yeah, thanks for having me. So one of the key pieces here, Russia has been able to advance into almost 1/5 of Ukraine on that eastern border side, right? That front line is about 600 miles long. And President Putin is looking for trying to annex 4 key regions as well as Crimea are some of the main areas that are really important strategically to Putin and his side of it, but obviously very important to President Zelensky as well. So Russian-occupied Crimea, it is huge from a strategic importance to trade and protecting military power. It's a stone's throw from Romania and Turkey. There's a Kerch Bridge in there as well from key logistic lines from military side. You look at some of the annexed areas in Ukraine right now, the Donetsk and Luhansk makes up that Donbass region. You have a lot of steel making and coal in that area, which obviously is key to some of the President Trump's his mineral deal that he's already penned. And Zaporizhzhia has a nuclear power plant. It's the largest in Europe. So these are key areas right now that Russia's been able to advance on, and these are key strategic area that Russia would like to be able to keep. But European leaders are also coming to the table saying right now that it is very important that international borders must not be changed by force. So I think these are some of the key ones that are out there.
Wayne, you spoke about the fact that Russia has really been moving more into eastern Ukraine here. Can you just speak to the significance of this happening prior to these conversations that are ahead?
Yeah, I think everything ends up being a bargaining position, right? When you come to the table and you're ahead by X number of points that's something that's going to be looked at, and it's going to be a position of strength. So President Putin is coming to the table right now. He believes he is in a position of strength to be able to say, I already have control over many of these regions. And for that reason, then these are areas that we need to look at. And if he declares, and if Russia declares that these are areas of Russia by their laws that were put out back in 2020, those areas cannot be rescinded. So now you're having both sides coming to the table and saying, no, these are my areas, and those are going to be the key areas. I know President Trump has talked about the potential for land swap, but what that actually looks like, not exactly sure at this point.
Wayne, these two sides have been at war for a number of years here. Can you give us a status of both of their military positions, relative strength at this point? Because boy, it's just they've been going at it for so long.
No, 100%. There are hundreds of thousands from a casualty perspective. Both sides have increased their recruiting capacity so that they can maintain force projection on that. They have doubled, tripled, and quadrupled their manufacturing capacity to maintain. You see a lot of that on the Russia side. They've actually created some of their ecosystem for the defense is tied directly into their economy. So Putin has a reason to kind of keep it going because you're actually seeing some profitability on the Russian side. Ukraine, obviously, they're dug in the areas that they are. They have battle-hardened drone systems that, are up for consideration as part of a mega deal with U.S. and where we would give them weapon systems, they would give us their drone technologies as consideration, but none of that's been penned yet. But I mean, they're both battle hardened, and you've seen a lot of on both sides. The military morale on both sides has really come down a lot, but they continue to push, both sides not wanting to give up anything.
Wayne, just what level of weaponry have we been supplying Ukraine at this phase in the war?
We continue with the Patriot the air defense systems, the Patriots with the PAC-3 interceptor missiles as one of the main ones that we do. We have NASAMS capabilities, a lot of air defense, as well as artillery. The 155 continues to be one of the biggest killers on the battlefield. At one point in time, it was over 70% of all casualties came from artillery, just standard cannons firing these 155 millimeter shells, to hit other people on the targets. And then the drone fight back and forth at that point has been pretty significant as well.
How about air power here? What have we provided Ukraine, and is there anything that's anticipated?
On the air front, not a whole lot. I think part of one of the reasons there is you see a lot of jamming capability as well as surface to air capabilities that Russia has. So you're not seeing a lot of whole lot of air superiority. Most of the air capability right now in Ukraine is being used through drones. Because at that point in time, you can, based off of the low cost, high yield capability of what you're able to throw, you can use a lot of them at the same time and cost the enemy from an attrition perspective a lot to be able to defend against those.
All right, Wayne, thanks so much for that. We appreciate it. Wayne Sanders, he's a senior defense weapons analyst at Bloomberg Intelligence. He's based down there in Washington, D.C. We want to get perspective of what's happening on the ground in Ukraine as Presidents Trump and Putin plan to meet Friday for their summit in Alaska. We will continue to report on that. Let's get back to these markets here. Tatiana Darrier joins us. She's a strategist for Markets Live. Tatiana, I know you guys survey participants in the market. What's the latest survey? What was your focus of the latest survey, and what did you learn?
Good morning, Paul. Happy to be here. In our latest markets polls, we asked about U.S. exceptionalism. I think the results here show the real dilemma that many investors are having out there on U.S. stocks. You do want to keep some exposure, but there's a lot of reasons that you worry about the market. So let's get right into the results. It shows that most participants think that U.S. stocks will suffer as a result of Donald Trump's trade war by the end of his term. However, the silver lining is that if he's successful to push for lower interest rates at the Fed, then U.S. stocks can maintain their edge and can continue to outperform global peers. So sort of like put it like, rate cuts will save U.S. exceptionalism if they come.
I see that 70% of respondents said that U.S. performance relative to global peers will suffer, as you mentioned, by the end of his term. What is really underpinning this sentiment here?
I think it's still caution on tariffs, right? And it sort of contrasts with what we're seeing in the stock market, right? A record-breaking rally, fresh highs. I think we're somewhere in the 22nd fresh record high this year or something like that today. But this is showing that there is lingering concern about the trade war, that we haven't seen the full impact yet. The economy is softening. Those concerns are still yet to spill over into earnings, perhaps. So I think that really captures those jitters. And if you look at the S&P 500, yes, it's up 10% on the year, but it's still lagging its global peers. MSCI World Index ex-US is up 20% actually. So despite what looks like solid gains, we are heavily underperforming the rest of the market.
So the American exceptionalism story as it relates to the economy, it depends on who you ask, but maybe it's not as strong as it was perhaps in the beginning of the year before the tariff discussions. How about the American exceptionalism in terms of valuation of the markets here? How do your respondents feel about the premium valuation that the U.S. market trades?
Well, valuations are certainly exceptional too. Just given that we are seeing valuations that are perhaps 90% or higher than 90% of the time, depending on which measure you look at. I mean, even if you look at the risk premium, that has almost completely faded compared to the 10-year bond. So valuation concern is there, but it's never a great market timing tool, right? We know that those jitters will perhaps stay in the market for a while, but as long as these tech companies keep posting growth and keep posting solid earnings, that keeps investors invested in this market. So for now, there's lingering concern, but you can't just stay completely out of the U.S. market because it's still the largest economy in the world and where some of the most profitable companies live.
Are respondents at all banking on Fed easing to alleviate any of those tariff-related concerns?
Exactly. I mean, that was one of the most interesting findings of the survey is that for investors, the silver lining is that Fed cuts could help U.S. stocks outperform peers, even if it comes at the cost of loss of Fed independence, right? Because we specifically asked them if Trump's pressure on the Fed results in lower cuts than might be otherwise expected, then what do you see? Outperformance and underperformance. And investors still picked outperformance, and that's not because they are not concerned, about the political rhetoric or attacks on U.S. institutional credibility, but I think rather it shows that there's a lot of investors out there who agree that lower interest rate cuts make sense at this juncture, and that will ensure that the Fed sticks the soft landing, and that could revive the economy that has lost some steam, as Paul mentioned.
All right, Tatiana, thank you so much. We appreciate that. Tatiana Darrier, she is a strategist for Markets Live, part of Bloomberg News. She's joining us live here in our Bloomberg Interactive Broker Studio. And again, the market's holding on to the gains, although off the highs of the day. But again, it kind of goes back to probably one of the oldest adages on Wall Street: do not fight the Fed. And if the Fed's going to be in a cutting mode, that obviously is good for stocks. And we've got some eco data coming up as well this week. Tomorrow we'll get the PPI, Producer Price Index, give us a sense, another gauge of inflation at the producer level. And then on Friday we will get retail sales, give you a sense of how the consumer is behaving out there. So we've heard from some of the restaurant companies like Cava today.
Right.
Maybe some people pulling back a little bit.
Maybe they're pulling back, but I just can't stop looking at the market. We're another record high right now that we're hitting. It's just relentlessly pushing into the green. Healthcare, the best performing sector right now. And consumer discretionary right behind it. Do we consider Cava discretionary?
I don't know. I think for a lot of people, they kind of go there. We'll see. All right, we're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. We've got some optimism on Wall Street over growing hopes of a softening rate stance. We have the NASDAQ up 0.2%, 43 points at 21,726. The Dow up 0.6%, 293 points at 44,747. And the S&P 500 up 0.2%, 13 points at 6,457. The two-year yield, 3.67%. That's down 6 basis points. The yield on the 10-year, 4.23%, and that's down about 5 basis points. The Bloomberg Dollar Spot Index, that's down 0.3%. And have to point out, Bitcoin is now above 121,000. A few companies making news. Air Canada's more than 10,500 flight attendants. Well, they say they'll be going on strike beginning Sunday if a deal is not reached. The airline said it's gradually suspending flights as a result of that. And it's official, Gildan Activewear. It's agreed to buy underwear maker Hanes Brands for about $2.2 billion in cash and stock. It's its largest ever acquisition. And if you need groceries in a rush, well, Amazon's got you covered. It's offering same-day grocery delivery in more than 1,000 cities. Plans to bring a service to over 2,300 more by the end of the year. Free for Amazon Prime subscribers on orders over 25, but $13 for non-members. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Nora.
All right, Lisa Mateo, thank you so much. We appreciate that. Norma Linda, Paul Sweeney live here in our Bloomberg Interactive Broker Studio in Manhattan. We're also streaming live on YouTube. You can head over to youtube.com and search Bloomberg Live Radio, and that's where you'll find us. Well, in just moments, we're going to bring you an interview simulcast with Bloomberg Television. Former St. Louis Fed President Jim Bullard speaking with Bloomberg anchors Matt Miller, Katie Greifeld, and Michael McKee. And again, the market's trying to discount here what this Fed is going to do given some of the recent economic data that we received over the last week or so. We'll see some more before we get to the September meeting. And what will the Fed do? And I think the market's got baked in. If you look at the WIRP function, or 25 basis points in September. Right. But again, I woke up this morning, I looked at my news feed, and it was more talk about a 50 basis point cut than a 25. And then we even had Secretary Besson on Bloomberg Television this morning saying, okay, 50 basis points, but don't stop there. That's just the beginning.
Right. He's
talking about 150, 175 basis points. So I don't know where we go here, but maybe President Bullard can give us some sense.
Absolutely. I mean, I think that a lot of people are really anxiously waiting, especially as we think about all the other concerns that have been going on in this environment. But it's really about whether or not, if they were to be that aggressive, what does that mean for all the other things that are at play here in the economy? And so I think that that's what people are really focusing on. But of course, you are seeing the market's still getting a lift. People are clearly celebratory right now as we're looking at people picking up stocks. And we see consumer staples, worst performing sector, industrials, worst performing sector. But the majority of the market right now in the green.
Giving up some of the intraday highs here. But still green on the screen there. And we've seen this market grind higher. And we got the S&P 500 year to date up about 10% here. So that's just extraordinary given where we started the year with that 20% move down. We've recouped all of that and then some here. And we've got more economic data coming this week. We've got PPI tomorrow. That'll be 8:30 a.m. Wall Street time. Tom and I will bring that to you. And then retail sales on Friday. Again, Tom and I will bring that to you at 8:30 a.m. Wall Street time. So some more data points for this Fed to digest to see where we go.
Do we still care about UMich sentiment?
I do.
We've got that coming out on Friday as well.
But it gets a kind of I do because it just gives you a good sense of kind of what people are thinking about in terms of their sentiment about the overall economy. Plus, inflation expectations are important. It gets the rap of being a soft data point, a survey as opposed to a historical hard data point like.
But so many good nuggets in there.
Yeah, and it's very interesting. So we'll bring all that to you, and that comes Friday around 10 a.m. Wall Street time. We'll have it for you. So just looking at these markets, pretty much well off the highs of the day, but still showing some green out there across the screen with the S&P 500 up 15 points, the Dow up 290 points, and the NASDAQ up 55 points. All right, right now, let's get to this discussion. We're talking Fed speak. Former St. Louis Fed President Jim Bullard speaking with Bloomberg Television anchors Matt Miller, Katie Greifeld, and Michael McKee. Let's listen in right now.
We welcome our radio and television audiences worldwide. Joining us now is former St. Louis Fed President Jim Bullard, one of the potential candidates President Trump is considering for Fed chair. Jim, great to talk to you, or Dean, I should probably address you by your title, Dean of the Purdue University School of Business. I got to first ask you your take on rates. Considering the shape the United States economy is in, do we need a 50 basis point rate cut at the next meeting?
I've said 100 basis points over the next, as we go into 2026, so I think we could get started on that path. I think 50 sounds panicky, sounds like the administration wouldn't be that confident in their economic program, which I don't think is the right stance to take here. I think they've got a pro-business program that will fire up the economy after we get through the initial phase of the new tariff policies, which is slowing down the global economy. But eventually, we'll have very strong growth in the U.S. economy, and monetary policy has to be looking ahead and anticipating that. I do think the policy rate's high, but the committee is going to probably lower in September here. You could speed up the pace of a reduction if the data cooperates as we go through the rest of the year and into 2026.
Well, tell us what parts of the economy need a rate cut at this moment. We were just talking with Mike McKee about how Fed officials, too, have been saying that rates look restrictive here. We're not at neutral necessarily when we're north of 4%. Where do we really need those rate cuts?
Well, I just think you would want to be at neutral if you felt inflation was coming down to 2%. That's why I've suggested that we can get 100 basis points lower. But you're looking through this inflation that's still CPI core is still up around 3%. You're looking through that, but still you want to get confirmation that inflation's actually coming down to target in the way that you would like, and so you don't want to be too aggressive because you might have to you might get burned by the data as the committee did last year. So I think you want to get on this path toward neutral, and you want to keep watching the data, especially on inflation. And if inflation comes in too high or starts going up again, that would be the main thing that would disrupt the growth agenda for the U.S. So I don't think you want to get into that hot water if you don't have to.
Well, Jim, we're talking to you because you are, of course, on the list of people being considered to be the next Fed chair, and you confirmed you had talked to folks at Treasury. I'm wondering what else you can tell us about the interview process and the process of choosing a new Fed chair. You obviously passed the first test, which is you say rates need to be cut. What else do they want to see in a new chairman?
I did talk to the Treasury Secretary relatively briefly. We did not go through, ideas about what was required or job requirements or anything like that. I was under the impression that the process is still under construction for interviewing all these candidates, and at that point, we can discuss in more detail. So I just said that I'd be happy to participate in that process.
I wonder what the process looks like. Can you tell us any of the details? Have you met with anybody? Do you have meetings scheduled?
I do not, but that's why I say that I think this is all under construction. So we'll see how they want to design it, and I'm sure it'll be a good process. I would say this is a credible list of candidates. I know almost all these people. I think this is a very sharp group, and many of these people would do a fantastic job.
Yeah, absolutely. A list of heavy hitters there, including yourself. Now, you said on CNBC this week that you would accept the job of leading the Fed if the institution's independence is respected. Plenty of people would say that what we're seeing right now is not respect. What did you mean by that? What does respecting the independence of the Fed look like to you?
Yeah, I mean, the Fed is where it is because of the Federal Reserve Act, and the committee does what it does because of the Federal Reserve Act. So if, you have to do all this under existing law, and if you want to change the law, the Congress can certainly come in and do that. But Congress has looked at the Federal Reserve Act 6 ways from Sunday, and they keep coming up with the idea that, hey, this is a pretty good way to do it. So it's a complicated system. It is done by committee. It is at arm's length from day-to-day politics, but that's the way it is. And I think that's the way it's going to be going forward, because I don't think Congress is in the mood to change that. So I think, we have to respect that, and we have to make these decisions under the law.
Well, speaking of changes, a number of people on the list that the administration is considering have suggested they want to make some major changes in the way the Fed operates, and the president has suggested he'd like to see major changes in the way the Fed operates. If you were to become chair, what would you change about the Fed?
Well, I've been outspoken over the years about various aspects. I do think that the Fed is a research powerhouse. I think we could make more use of the various ideas that are proposed around the nation from the Fed, and we could, break up the groupthink a little bit more than what it has been in the last few years. I think there's a lot of emphasis on Phillips curve type thinking. I've often said that I think that the evidence for that is not very good, or if to the extent there is even evidence, it's very muted. And so that story, that Phillips curve type story, gets emphasized too much in financial markets and too much in policymakers' minds. So I try to break out of that a little bit. And emphasize the role of expectations a little bit more. And so there'd be more forward-lookingness than probably what we have today.
Dean Bullard, does it concern you when the president and his allies disagree with Jerome Powell's monetary policy views, so they start looking into things like renovation costs at the Fed, or when the president disagrees with the numbers coming out of the Bureau of Labor and Statistics, and so he simply fires the chief statistician there? Does that concern you?
Yeah, I think the president put up a new candidate for BLS who I think will be pretty credible. So it looks to me like that issue's maybe behind us. I do think that the nation as a whole does not have as good of economic data as we could, even though we're better than most other countries. When you think about it, Walmart knows it's 1.6 million employees or something like that. They know their inventory in real time. They know their pricing in real time for all those stores all over the country and all over the world. Why are we getting a retail sales report once a month that's kind of sketchy? Why can't that all be done a lot better? So I think to the extent that information is important for how financial markets operate and how policy operates, we could do much better than we do today in making sure that we have the right information available so we make good decisions.
If you did end up in the chair, obviously you could be the target of the president's Truth Social account. When you look at what he has said about Jay Powell and others on the Fed, do you think the criticism has been fair?
Yeah, I mean, I think the president can espouse his views, as he often does, on monetary policy, just like all the other politicians that like to talk about monetary policy on both sides of the aisle. And so I just don't see any reason why you can say that the president can't do that. A lot of presidents haven't done that, but I don't think they maybe wanted to take that on, or they didn't feel that it wasn't their style, or they didn't feel as confident in talking about the economy as President Trump does. He's got a lot of experience and in a very interest-sensitive industry, and so he thinks, and all the people I've ever met in real estate always want lower interest rates because that's the way the industry works. It is a little different from a public policy perspective because you've got the inflation component there that you might feed into if you go too far, too fast. And so I think the role of the Fed chair is to guide that process and make sure that we've got good outcomes for the U.S. economy.
All right, Dean Bullard, we really appreciate your time. We're eager to have you back soon. That is Purdue University's School of Business Dean and former St. Louis Fed President Jim Bullard.
All right, good stuff from Bloomberg Television. Former St. Louis Fed President Jim Bullard speaking with Bloomberg anchors Matt Miller, Katie Greifeld, and Michael McKee. It has been a busy day.
Incredibly.
Talking Fed level. We had Treasury Secretary Scott Bessent on this morning.
Right.
We're going to play a cut of that in the 11 o'clock hour. From that fascinating discussion, again, Secretary Bessent calling for rates to come down.
Right.
Dean Bullard from Purdue and former St. Louis Fed President also calling for rates to come down. So there seems to be a consensus building there. So in other news, we had a little M&A trade here today, which I think is very interesting. We have Gildan, which is a Canadian company, buying Hanes brands, like the underwear company, $2.2 billion. Abigail Gilmartin joins us here, Bloomberg Intelligence footwear and athleisure analyst here. Abigail, thanks for joining us here in studio. Can you tell us who is Gildan? Because I don't think a lot of people know of them, and why are they buying an underwear company?
Yeah, definitely. That makes a lot of sense. I think a lot of people probably own Gildan and don't know it.
Right.
Because it's really a basic apparel manufacturer. So they create the T-shirts that then they sell to your favorite sports teams or to Walmart, and then they put the logos on it. So they're heavily in the printwear space. They do have exposure to innerwear, which is what Hanes is. Hanes is, the basics, underwears, bras, tees, and they used to be in activewear till they spun off Champion. So they're very complementary. Yes, they spun off Champion about a year ago.
Okay.
Interesting. And I definitely remember Gildan, as you mentioned, when you just start to look into the tags of your T-shirts, you'll start to see the name pop up there. But I mean, what's the latest with consolidation more broadly in your industry? I know you have a lot of names that you cover that are doing a lot of mergers.
Yeah, definitely. I think, it comes at a time with tariffs and costs looming, as well as, for this acquisition, I think it's been considered for a while. There was a whole proxy battle about it a few years ago where they actually ousted the CEO over it. And then he has returned since then, and they completely changed the board over. So this didn't come completely out of nowhere, but I think it makes a lot of sense just in terms of, Gildan's building out their whole manufacturing footprint. And it's, once again, really complementary. They already kind of make everything that Hanes does, but on a larger scale at a lower cost.
And Hanes brand's based in Winston-Salem, North Carolina.
Yeah.
Interesting. Talk to us about, you mentioned the tariffs. How is it impacting your world? Because I would think that would be immediate.
Yes, so it definitely is impacting my world with, the footwear brands. But for Gildan and Hanes, actually, Gildan is one of the largest users of U.S. cotton. Really? So, yes, they are probably one of the largest ones. And so that is actually going to help them not have to deal with as many tariff costs, just since the products are made with U.S. cotton, so they're subject to a lower tariff rate. So that's actually something that they can benefit from. They also are less exposed to Asia and more in Central America, as well as Hanes brands. Their manufacturing footprints are very complementary and overlap. So they'll be able to kind of mitigate that pretty well. But for Hanes brands, Gildan gives them a much more financial stability and opportunity for that.
I want to quickly move over to On Holdings. I know this is also a company that you cover, sneaker firm. They're basically seeing analysts at Jefferies that are saying that 2025 will mark the peak in the company's sales. And I want to know, what is your reaction to this downgrade here?
Yeah. I don't think we've seen the peak of On. I think they're just starting in apparel. They actually sold more units of apparel this quarter than they did footwear. It grew over 75%, and they're really just getting started with that. They're also really just getting started with their DTC expansion, opening stores, as we've seen in New York, a few pop up, but they're doing really well with that. So I think they have a long runway for growth.
All right, great stuff. Abigail Gilmartin covering us on this deal here. We appreciate that. As all the Abigail Gilmartin, she covers all the athletic wear stuff and leisure stuff for Bloomberg Intelligence. All right, folks, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. Right now, we're going to go to Charlie Pellet. We're going to get a Bloomberg Business Flash, get us all reset here. Charlie.
Hi, thank you very much. And here's what's going on, Paul and Nora. We do have the Dow, the S&P, NASDAQ all advancing in this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Lots going on, and we got you covered here at Bloomberg. Traders keep piling into bets that the Fed will soon be able to cut rates. Stocks rising toward another record. Bond yields falling alongside the dollar. Right to the numbers with the S&P 500 index. We're off session highs, but still at a record 64.55, up another 10 points, up another 0.2%. Dow Industrials up 249, up 0.6. NASDAQ at a record up 38 right now. That is a gain of 0.2%. Our Mag 7 index up another 0.2%. And the Russell 2000 index of small cap shares continuing its advance up another 0.6%. 10-year at 4.23% with a 2-year 3.67%. Gold up 0.4%. 33.62 the ounce, and West Texas Intermediate crude down 1.4%, 62.32 a barrel. Treasury Secretary Scott Bessent is calling for the Fed to execute a cycle of interest rate cuts, suggesting the central bank's benchmark ought to be at least 1.5 percentage points lower than it is now. He made the comment in a Bloomberg interview this morning, but what about a 50 basis point cut at the September FOMC meeting? Former St. Louis Fed President Jim Bullard was asked about that moments ago, right here on Bloomberg Intelligence.
I think 50 sounds panicky, sounds like the administration wouldn't be that confident in their economic program, which I don't think is the right stance to take here. I think they've got a pro-business program that will fire up the economy after we get through the initial phase of the new tariff policies.
Former St. Louis Fed President Jim Bullard. After earnings, shares of CoreWeave, they are plunging 15.8%. And after earnings, the fast casual Mediterranean restaurant chain Cava Group, that is down now by 16.2%. Cisco reports after the close of trading today. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. Norma Linda and Paul Sweeney, we are live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Green on the screen, as Charlie was mentioning. And Nora, this market, as Tom Keene likes to say, grinding higher.
It is grinding higher here. Healthcare and consumer discretionary, the best performing sectors right now in the S&P 500. But it's really interesting seeing the performance today coming off of yesterday, where we ended up more than 1%.
All right, let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Norma Linda. And we're joined by Bloomberg's Denitsa Sakova. Denitsa, what are you looking at today?
Let's start with Amazon and grocery delivery. Obviously, that's been a big news. That's not moving only Amazon, but quite a few names. Amazon is up nearly 1%. The news is that customers in more than 1,000 cities and towns can now order groceries with same-day delivery, and they're looking to expand this to double the cities by year-end. The ticker, of course, is AMZN. What we're seeing is a big reaction in Instacart. It plummeted as much as 11%. We're also seeing Kroger react to this, Walmart react to this. Obviously, Amazon is gaining, but the stock is actually up only 2% this year, so perhaps we're not seeing real euphoria there. So customers will have the option to order produce, dairy, meat, seafood, baked goods. They've been trying to do this for quite some time, but it seems like this initiative is moving forward. The same-day delivery will be free if you order things over $25. If not, you have to pay a $3 fee, and this is, of course, for Prime members. I don't know if that's a good price, but it seems like it's moving. It's moving the stock. The expansion of same-day delivery is obviously one way to take over Walmart. They've been doing this and expanding in that area. Of course, Amazon has Whole Foods as well. Yep. So maybe they have an edge, but we're yet to see. I don't know. Would you pay?
Do you guys get groceries delivered?
I do.
You do. You get groceries Amazon?
From Amazon.
Oh, here we go. I don't actually like to go and buy them.
Okay. Yeah.
And that's good.
I think it's a generational thing. I think younger folks are more comfortable with
I used to do it in Virginia. I used to go in person ever since moving to New York. I decided to do the delivery method.
Okay.
But you're also looking at another company here, Cava, which we've been talking about today.
Of course, that's one name that saw such a big surge after the IPOs. And IPO is so hot right now, so I think it's very relevant. But now we're seeing share plummeted after the company trimmed its annual sales guidance. Stock is down about 16% now. The ticker is CAVA. Of course, this is a fast casual Mediterranean chain. Now they say sales at established location will expand at 6% at most. They previously forecasted 8%. That says the company is not doing that bad. It's doing better than what we saw at Sweetgreen and Chipotle, which are obviously competitors. But it's definitely experiences slowdown compared to what they forecasted in previous trend. And it's just showing how difficult it is for restaurant chains to break through as Americans are worried about inflation, tariffs. And one thing I see people saying is that those takeaway places almost have prices as restaurants. Like it's like at $10, $15. So that's perhaps starting
these
to
places
weigh
are getting
in.
expensive.
Yeah, it's when you add the stuff, it's like $20.
You might as well cook at that point, right?
Yeah.
Capri Holdings.
Capri Holdings up 7%. It's Michael Kors is doing pretty well, and JP Morgan raised the target from neutral to overweight. Capri highlighted revenue improvements throughout fiscal year 2026. And particularly strong growth in their Michael Kors brand. The firm cited companies' product improvement, value proposition. The price target is pretty ambitious, $30, which implies a 53% increase from last close. Shares jumped as much as 40% when they reported earnings recently, and they had a very strong report. So the stock has had quite a few good weeks. It has 4 buys, 9 holds, and 1 sell rating, so some optimism there.
All right, very good. Denitsa Sokova, cross-asset reporter for Bloomberg News. And for more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, and anywhere you listen. It's been a busy day today for Secretary Scott Bessent. He joined Bloomberg television hosts Jonathan Farrow and Anne-Marie Horton for a wide-ranging interview earlier this morning. He discussed Fed policy and replacements, tariff deals, NVIDIA chips, and more. When asked about the Fed and Trump's appointment of Stephen Miran to the open Fed seat, Bessent said he sees Miran's confirmation happening quickly.
The president has great sway with Leader Thune. Leader Thune's been a great partner during the tax deal, and I think that he would like to see Stephen, who I've known for a long time, get on there as soon as possible. So I'm hopeful about the September meeting. And Jonathan, the president's concerned about the building and those massive cost overrun, which just tell you that there is no accountability at that organization. There's no oversight in terms of the spending, but the president and I are both concerned about the foundations of the Fed. The foundations of the Fed, and how did this happen, and why did it happen, and how did the leadership let it happen?
When it comes to Director Miran, do you expect him to stay on past the January term that expires from Kugler's seat?
I wouldn't expect that.
So who are some names you're thinking of the Kugler seat? Because everyone has been focused on who is going to fill the chairmanship role. Who are you thinking to fill that extra seat?
Well, Anne-Marie, we're working on the big list right now. I think there are going to be a couple more names revealed today. They're going to be private sector names. So we had a series or a list of current Fed members. We're going to have some private sector, very well respected,
like who?
Very well respected people, and then we will get to the second seat.
Can you give us some names, a little bit of a tease? Maybe people that have been on this program?
Well, I just did tease telling you there would be some private sector names.
Okay, when it comes to the Fed chair, though, can you give us a sense of how many names you're actually thinking about?
Well, I'm going to interview, I'm going to cast a wide net, 10, 11 people, and then there'll be a group of us who are meeting with them, and we want to talk about monetary policy. We want to talk about regulatory policy, which is very, very important because the Fed stepped, I think, big-footed the other regulators. The Fed's one of 3 regulators, Federal Reserve, OCC, and FDIC, and I think that they need to understand that they are one of three. And then the third is the institution itself, which I think is what President Trump has been focused on quite a bit too.
After you do this process, how many names are going to give to the president, and when does he start those in-person interviews?
Yeah, we don't have a timeline. By putting Stephen Myron in, that gives us more time. And again, I want to cast a wide net. The president's very open-minded. Before he chose Jay Powell, Janet Yellen was interviewed. John Taylor was interviewed. Two of them couldn't be more different. So, they were under consideration.
All right, that was U.S. Treasury Secretary Scott Bessent speaking with Bloomberg Television host Jonathan Farrow and Anne-Marie Hordern talking about interest rate policy as well as replacing members on the Fed, including a chairman going forward. We're going to bring in Ira Jersey, Chief U.S. Interest Rate Strategist, Bloomberg Intelligence. He's down there, safely ensconced in Princeton, New Jersey. Ira, Secretary Bessent in that interview this morning talked about, a 50 basis point cut in September, but that's just the beginning. Maybe 150, 175 basis points when all is said and done. Does the data anywhere suggest any kinds of moves like that at the moment, or do we have to wait?
Well, it doesn't yet, Paul. And but at the end of the day, if we continue to have this weak labor data and inflation doesn't accelerate at all, then you could easily see 150 to 175 basis points of cuts. In fact, that's what we have kind of penciled into our thinking. When it starts is less important than where the Fed ultimately gets to. And the market keeps pricing for the Fed to cut about 100 basis points, but if they cut 150 or 175 basis points, then you could wind up seeing a deeper market reaction, right? Because right now the market is priced perfectly for that 100 basis points of cuts over the course of the next year to 18 months. Again, they go down to 2.5% instead of 3%. That changes the dynamics of how the Treasury yield curve would react and quite frankly, how risk assets might also perform.
Ira, is that 175 basis point cut too aggressive?
Well, I think 175 basis point cut, it really depends on the economic situation at the time, right? So there is this worry and fear among a lot of market participants that if the economy stays okay but not great, as I can think that you can couch the current environment, if we stay in the steady state that we are today, and the Fed were to cut 150 to 175 basis points, that could mean that we might reaccelerate both the economy and inflation fears. That would potentially steepen the yield curve pretty significantly. So even though Secretary Bessent, he mentioned this morning about wanting to get 10-year yields lower, and that part of that is cutting the Fed funds rate, and historically that's true. But if the market expects longer-term inflation to go up, you could actually see what we call a twist steepening of the yield curve. So short-term interest rates go down, long-term interest rates go up. And in that situation, you might actually get something that the Treasury Secretary doesn't want, and that would be higher interest rates for longer-term debt. Because keep in mind, things like the 10-year yield are what affect mortgage rates. There's a lot of other corporate debt and CapEx that gets funded at those longer-term yields.
Yeah, mortgage rates, by the way, are not coming down as much as I would like here. Just personal opinion there. Ira, if September is 25, let's put it this way, would 50 be a mistake? Would it signal that, something might be wrong with this economy?
Well, we don't know yet. I think given all of the data that's come in, I would not be surprised at all. And in fact, we now have penciled in a 25 basis point rate cut. You would have to see, I think, the weak job number as well as a weak August CPI report in order for the Fed to cut more than 25 basis points. Remember, they did that a year ago, so it's not impossible, certainly. But I suspect that they would be a little bit more cautious this time. And because remember, last year they did that 50 basis point cut, and as soon as they cut, you started to see the September, October, November data, and it turned around, and the economy got better. So you had like this summer slowdown in the economy, which reversed very quickly, and I think they might be concerned about that. Interestingly, who's going to be on the Fed for that October, December, January meeting. So Steve Mirren obviously is the current nomination to fill the empty seat. But he might not be there beyond that, according to Secretary Bessent's interview this morning here on Bloomberg TV. And I think that's important. I'm not on the list, at least I haven't gotten a call from the White House yet, so it's not me. But if with all those 11 people, we could see a few new members for next year. Presumably they're more dovish, so I think you will have at least a dovish tone out of the Fed, even if they don't deliver on 150 basis points over the next year or so.
Ira, when we're looking at the data, tariff implications, tariff impact has not really shown up yet. Is there any concern that the impact of tariffs is still yet to be seen in the data, and that could affect how the Fed move forward in terms of their thoughts on easing rates?
Yeah, there is. A lot of us had been thinking that basically everywhere along the supply chain you'd see some impact of the tariffs. So and you have, right? So things like margin contraction. You've seen it's both suppliers as well as shippers and wholesalers all take a little bit of the pain from the tariffs. And keep in mind, some of the tariffs are only going to start hitting prices on the shelves now because we've just finished running through 3 months of inventory. So now you're in a position where the new stock is going to be the new stock on shelves is going to be what is going to have the tariff effect in their prices. So there is, but keep in mind, like even in the U.S., only 30% of CPI is goods at all, and less than half of those goods are actually tariffed. So in the macro sense of things, it's only worth a tenth or two to CPI probably on a year-on-year basis. It's not going to be worth 1 or 2%. That being said, we put out a piece this morning on the Bloomberg Terminal noting that one-year inflation expectations are still for inflation to be above 3% over the next 12 months, but then plummet back down to around 2.5% for CPI in a year's time. Mm-hmm. So, everyone's still thinking that this is very temporary.
Right, but Ira, if it's not really showing up in the CPI inflation report, where do you expect to see the impact of tariffs actually be shown?
Yeah, in margins. So, and I think that tomorrow's PPI report could show that, right? So basically, intermediate goods, import prices, those are the areas where you're going to start to see the effect. So even though it doesn't show up at the consumer level, which is really what the Federal Reserve cares about, right? They care about what consumer prices are, but you could wind up seeing margin contraction. So one of the things our equity team here at Bloomberg Intelligence is talking about is the difference between PPI and CPI, because that often is a driver of margins over the course of a couple of quarters. So watch tomorrow's number, and we'll have to compare the core goods prices and PPI versus core goods prices and CPI, and see if there's a widening gap there or a narrowing gap. And if it's a narrowing gap, then that means that margins are going to probably contract over the next quarter or two.
Right. Ira, thanks so much. Always appreciate getting a few minutes of your time. Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg from Princeton. Coming up, we're going to check in with Brian Hefty, co-host of Ag PhD TV and Radio. He's the CEO of Hefty Seed Company. We're going to get the latest on what's happening with the U.S. farmers out there. How are they doing out there? And what are the new trends that are impacting their business? So that'll be interesting. Anurag Rana is going to join us as well. Bloomberg Intelligence technology analyst on this CoreWeave rally. Sputters as AI build-out costs widen losses here. So we got to take it easy on some of this AI expectations. We'll have that all coming up this season.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, both advancing. We've got NASDAQ swinging between gains and losses, back in the green as of now. And this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. S&P right now higher by 11. That is a gain of 0.2%. We're trading at a record 64.57 on the S&P. We've got the Dow up 348, up 0.8%. The Dow, the Nasdaq Composite Index briefly turning negative, up 11 right now, up less than 0.1%. Our Mag 7 Index, though, does remain lower, down under 0.1%. 10-year 4.22%, with the 2-year 3.67%. Spot gold advancing 0.3%, 33.56 the ounce. West Texas Intermediate crude down 1.2%, 62.44 on WTI, and Bitcoin at 120,535 on Bitcoin, up now by about 0.3%. Treasury Secretary Scott Bessent says the U.S. is open to discussing with China the use of NVIDIA chips, saying revenue from the NVIDIA arrangement can go to pay down debt. Piper Sandler, meanwhile, raising the target on NVIDIA to $225 from $180. Current price on NVIDIA is $180 a share, down today by 1.6%. Coming up after the close of trading, Cisco down now by 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate that. Norma, Linda, Paul Sweeney live here in our Bloomberg Interactive Broker studio in Midtown Manhattan, streaming live on YouTube as well. Well, the only time I get to ask the question, how's a U.S. farmer doing? It's usually when we're talking to somebody from, like, you know, Deere or Caterpillar, something like that, the people who make all the equipment for it. But we want to go right to the source, and boy, do we have a source on the ground. Brian Hefty, he's a co-host of Ag PhD TV and Radio and CEO of Hefty Seed Company. He's coming to us from the Hefty Farm, which is located near Baltic, South Dakota, which is about 10 miles from Sioux Falls, South Dakota. And he sent me a Zoom map. Man, there is nothing but farm out there. Holy cow.
Look at his background. I'm loving it.
It's awesome. Brian, thank you so much for joining us here. We really appreciate you taking the time. You were referred to me as somebody who's just the expert on kind of give us a sense of how things are going out there on the farm. So give us a sense, Brian, how is the U.S. farmer doing these days?
Well, first of all, one of the things you didn't mention is we do farm. We farm about 3,500 crop acres. And I would just say right now, the farm economy is not real great, mainly because commodity prices aren't good. They haven't been good for the last couple of years. We've had rising costs as farmers, and so we're struggling a little bit. But the flip side of that is we're doing, as farmers, a phenomenal job producing food for our growing world. We might have a record crop this year. In the United States, I mean, a lot of people forget this. We have the cheapest, safest, most abundant food supply in the world. So, I mean, from that respect, farmers are doing great. But yeah, financially, not the best right now.
Brian, are tariffs filtering into any of those increases in costs that you're seeing that you just cited?
Not a lot, but I mean, there's so much going on with this whole trade thing. One day markets go way up, the next day they go down. So it's more impact on the markets in the short term. But as far as our costs, the biggest thing would be some crop protection products, maybe up just a little bit because of that, but not much. Fertilizer is really the biggest thing right now that's gone up a lot. But I mean, honestly, we source a lot of the phosphorus right from here in the United States, and we're at not record high or anything, but it's really high, especially in relation to the corn price right now. So no, tariffs haven't had an enormous impact to date, but obviously we as farmers are very concerned about international trade. It has a huge impact on our commodity prices.
Brian, Matt from New Jersey mails in with a simple question: till or no till? I have no idea what that means, but I suspect you do.
I definitely do. We've done both. We've done everything on our farm. But anyway, it's basically, are you going to run over your fields and stir in all the residue into the soil? So we as farmers often talk about turning the ground black. So basically tilling under, working under that residue that we have. And so years ago, we had no other way to control weeds, insects, or diseases other than with tillage. Oh, and prepare a good seed bed too. Thanks to modern technology, we don't have to do tillage, but the advantage to doing tillage is the soil warms up more quickly. The disadvantage is it's going to be more prone to erosion. Now, one of the things that concerns a lot of just non-farmers out there is they get worried about pesticides. And I would say, yeah, when we reduce tillage, we have to use more pesticides. But the good news is a lot of the dangerous pesticides, they're off the market today. A lot of things we're using now are what we call more natural alternatives. So, for example, the most popular herbicide in the United States, or one of the most, it comes from a tree. The most popular insecticide, it comes from the chrysanthemum flower. So we've got a lot of these things where they're derived from nature, much, much safer to human beings. And I feel great because we work with these things every day. People talk about safety to food and everything else. Well, don't forget, as farmers, we're the ones who have to work with pesticides. So we're not doing dumb things. We're not using products that are super crazy dangerous or anything like that. Just a lot of misconceptions out there.
Are there any concerns in terms of changes in the climate? Is that affecting you at all as a U.S. farmer?
No, we believe what's going on with climate is mainly cyclical, but I will say this. I'm from South Dakota. My dad was originally a farmer from Iowa, 50 years ago, moved here, and at that time, they weren't really raising a lot of summer crops. And what I mean by that is crops that grow all through the summer and all into the fall. There was a lot of small grain that was produced. Those are spring crops, and they get harvested in the middle of the summer. So then there was nothing growing for a while. Well, when you talk about climate change, the biggest thing a lot of people want is less carbon dioxide in the air. We can do that with more plants and having more stuff growing longer during the growing season. And because of that, we have more humidity now in our region than we've ever had before because of these summer crops. So, there's some little changes like that, but otherwise, no, I'm not worried about climate change as a general statement, not impacting farmers.
Brian, your top line obviously has depended in large part on just kind of where commodity prices are. Not much you can do there. How about on the cost side? How's the cost of running your farm and for the average U.S. farmer? How's that kind of changed over the years?
Well, equipment's a lot more expensive, but the technology is good to go along with that. Seed is a lot more expensive. I mean, way more expensive, but we have a lot better seed genetics. The cost of just labor in general, much, much higher. I don't like the fact that interest costs are as high as they are right now. Granted, historically, they aren't like the highest level ever or anything, but I loved it for a long time when we had super cheap interest because me, just like every other farmer out there, we borrow lots of money. So if we can get those interest rates down even another 1 or 2%, wow, that would make a huge difference on the cost side. So yes, our costs are dramatically higher than they used to be, but that's part of modern life.
All right, Brian, thanks so much for taking the time. Really appreciate it. We learned a lot there. Brian Hefty, he's co-host of Ag PhD TV and Radio and CEO of Hefty Seed Company. And he also farms 3,500 acres out there in Baltic, South Dakota. Appreciate getting a little bit of his time. Let's go from farming to technology. Why not? We can do that here at Bloomberg Intelligence Radio. Anurag Rana joins us here. He's a tech analyst for Bloomberg Intelligence. CoreWeave. Anurag, we've been talking about CoreWeave today. I need a better understanding. Just give me the DES function kind of definition, basic definition, what CoreWeave does and what's going on with the news.
So in the most simplistic way, they are renting out GPUs for people who are, looking for anywhere to run their AI workloads. That could be training of the models, or that could be, the inference workloads from the applications that you're running. So very simple business model. They are a partner with NVIDIA. NVIDIA is also investor there. They buy their chips, they put it in a data center, and people, rent it out from them.
So when I look at the stock performance for CoreWeave, of course, we know it IPO'd back in late March. We're seeing shares that are up about 200%. But I want to know, why is there this conversation about the rally sputtering out? What's really weighing on the stock here?
So when you look at it and you go back to March when the IPO was coming out, it was actually very poorly received. One could argue it was underpriced because not looking at the growth prospects of the company, but focused more on the capital expenditure and the expense and the loss, and they have to go out to debt markets to issue. So that was the sentiment back then. And suddenly within a 2-3 month period, all of that evaporated and the stock went up to 160 or so. What we are seeing as of last night is fundamentals are strong. They're still getting a lot of bookings, people using their cloud, but everybody's now suddenly again worried about interest expense and capital expenditure and so forth. And that's the growing pain I think this company will have to endure being a public in public markets, because you could do that as a private company, but very difficult. People will get excited and people will worry about one thing or the other at one point.
All right, I have to ask you, Anurag, just about what we saw yesterday about, refresh my memory on this whole Google Chrome thing. Who's put a bid out there?
Right.
Can you give us what's going on out there? I could just kind of jump
Please,
off the
we need to
screen
know.
What do you know?
Yeah, I
did a terrible job asking that question, so just tell us what the news is.
Well, so what's happening is there is, again, the DOJ case that's happening with Google and the whole decision, the argument of trying to break it up and why Chrome is a monopoly and the whole thing. Perplexity, on the other hand, as also a AI search product, and one way they can gain a lot of users if they have ability to control Chrome. But frankly speaking, I mean, if you look at, some of the paperwork that was filed as part of the DOJ case, that product is probably worth north of $50 billion. And I have no idea why a company that's probably valued at about 18 billion or so wants to buy this asset. And, it just sounds a bit, strange or a bit unusual for them to even be talking about it.
Am I the only one that didn't know that Google Chrome was up for sale?
Well, it's not. That's the
No,
point.
it is not.
It's not. It's
No,
one
no,
of the
no.
things that is this right, Anurag? It may be deemed a remedy that will be ordered by the judge?
It would be too harsh, but again, this is one of the hypothetical 20 things that can happen. But at the same time, I mean, I'm just making this up. Google may decide, shareholders, you can have this as a separate company altogether. That would be so much more powerful, with Gemini and all that stuff. But again, from our experts, we don't think that's going to happen or on the table. But yes, it is expected, or in the long laundry list of things that can happen, this is one of the things that people have talked about.
All right. I mean, we're going to, again, selling off pieces of Google, I didn't have that on my bingo card.
At all.
But we'll have to wait and hear what the judge has to say on the remedies there. Anurag Rana, technology analyst, Bloomberg Intelligence, joining us there. CoreWeave shares falling, like 18, 19%. Disappointing earnings outlook, margin pressures, rapid AI expansion, data centers, all that kind of stuff. It's, as Anurag suggested, maybe it's just growing pains for a company that's growing rapidly, and for a stock that's just skyrocketed since its IPO. Maybe a buying opportunity to see what the sell side comes back with in terms of their recommendations. Looking at the market here, holding on to some gains here, no doubt, but a little bit lower levels, but still S&P, we're higher here, about 0.2%, and NASDAQ's up about 0.1% here. Looking at the Bloomberg Dollar Index, falling here today, they're around 1,200 even there. So the dollar not rebounding, staying at or near its lower levels. We'll have more coming up. This is Bloomberg Good Morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We got the NASDAQ 100 index just turning negative. The Dow, the S&P, NASDAQ are all advancing. In fact, we're looking at records right now on the S&P and the NASDAQ Composite Index. S&P up another 9, 64.54. That is a gain of 0.1%. Traders kept piling into bets that the Fed will soon be able to cut rates. The Dow up 325, up 0.7%. NASDAQ little changed, up under 0.1%, but keeping it all in context, we got the S&P up 0.1%. The 10-year at 4.23%, with the 2-year 3.67%. Gold up 0.2%, 33.55 the ounce, and a retreat for West Texas Intermediate crude down 1.4%, 62.23 a barrel on WTI. Treasury Secretary Scott Bessent has been calling for a 50 basis point interest rate cut after this week's consumer price data. In a one-on-one conversation with Bloomberg Surveillance this morning, Bessent said that could be the start of a new rate-cutting cycle.
We should probably be 150, 175 basis points lower. So, I think the committee needs to step back.
And Secretary Bessent said he agrees with President Trump's too late nickname for Jay Powell because the Fed has been too data dependent. By the way, you can hear the full conversation with Treasury Secretary Scott Bessent on the Bloomberg Talks podcast. Tesla is looking to hire someone to test its driver assistance technology on the streets of New York City, suggesting the car maker could be looking to expand its ride-hailing services to the largest American city. A new job listing in Tesla's autopilot operation seeks a driver for a prototype vehicle that would gather data for as much as 8 hours a day. Tesla shares, they're higher now by just about 0.3%. Again, recapping, stocks higher, S&P up 11, a gain there of 0.2% for on-demand news 24 hours a day. Subscribe to Bloomberg News now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Norma Linda, Paul Sweeney live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. Well, you know what I'm doing? I'm finding myself doing more and more, which is just the self-checkout. Whether it's at the supermarket, going to the self-checkout line, scanning your thing, paying. Airports, they don't have cashiers anymore when you go get a snack and a bottle of water. So more and more, and I'm always wondering, who does that stuff? Who does that
Who's
technology?
behind
and
it?
I think the next guest is going to help us out here. Sagit Manor joins us. He's a chief financial officer. The company's name is NYIAX. It trades on the NASDAQ NYAX. Market cap about $1.6 billion. Stock's up about 47% year to date. They reported some numbers, I believe, yesterday or today. Sagit, thanks so much for joining us here. Tell us what you guys do at NYIAX. How are you guys in that kind of self-service space in the fintech space?
Good morning. So we are actually the global leader in payment and management solution for the unattended market. And what does it mean, unattended? It's really the vending machine, massage chair, EV chargers, when it's just you in front of the machine. There's no cashier in between. And in fact, if you bought a drink in a vending machine lately at the JFK, you probably used one of our NYIAX yellow devices. So we have more than 100,000 customers. We sell our product in more than 120 countries. And we have a very simple mission statement to help our customers grow their business. What does it mean? Increase their revenue, decrease their cost, and through loyalty, create that stickiness with our customers, with their customers.
How do you stay ahead in today's fintech landscape? Of course, there's a lot of players now.
So actually, in our area, there's not a lot of competition. I'm talking about the payment and in the unattended space. So, in fact, we are the only global, as I said, player in this unattended space. It's a very fragmented business and decentralized. So there's a lot of small players. And we are, with our global solution, basically integrated hardware, payment, and services all together, we can bring that to the local market. It's also a very highly regulated market, so there's a lot of barriers to entry. So whether it's a regulation on payment, whether it's privacy. And with our global solution and with us being there for 20 years, we were able to overcome that. We look at ourselves as a payment company, and what do you need as a payment company? You need basically three things. You need the trust, you need the scalability, and you really need the easy doing business. So from a trust perspective, we built that trust over the 20 years. We have a very strong brand. Look now for the yellow devices. You will see that everywhere. From an easy to do business with, it's a B2B2C. So we have a very, it's a high profile company. You go to, whether it's the car wash to the vending machine, and you see us. So B2B, it's all about regulation, and we were able to overcome that. When it comes to B2C, as I said, it's in front of us, and you want that in a nanosecond to get your snack, to get your coffee. So on the scalability, this is where we are focusing, right? This is what takes time to build. And we've showed that we are using more than 80 distributors all around the world, right? So we are selling our product straight to the OEM. So when the vending machine, the massage chair, the kiddie ride are coming from the manufacturers, it will also already bring that Nayax device.
Talk to us about the EV business, electric vehicle business. How are you guys approaching that? What is your expectation for how that business will grow for you?
So, great question. EV is definitely one of the three main growth drivers as we look into 2025 and even beyond. There's a few elements there. It can be as easy as any unattended verticals that we are already in. We're already working with the EVgo, Electrify America, Electrify Canada, where we are providing the payment device. But it can also be where we are developed the management suite, the electricity management suite that has a lot of regulation around it, and we were able to accommodate that as well. And then for small businesses, which I haven't mentioned that, but most of our customers are small and medium businesses. That's where we provide the whole solution, the hardware, the management, electricity, basically, as well as payment. So EV, we just signed a couple of days ago, announced the agreement with Hotel, which is a potential of 100,000 EV charging stations to be deployed in North America and also in Europe. And many other contracts like that shows the potential with the fact that we are a global company. So it can be done in France or in the state of California, and you have the same exact product all around the globe.
Mm-hmm. Are there any particular market gaps or audiences that are underserved that you're targeting right now?
So, from in the unattended space, which is the majority of our revenue today, definitely there's a place on the EV to grow. The electric vehicle charges, smart coolers is a very fast growing area, parking as well, micro market. So this is in the unattended. But we also are stepping into more of areas like, as I said, the EV charger that is beyond the payment, or even the retail. What we've learned over the 20 years that we're doing business with small businesses is that they're still in the attended, inside the store, inside, right, the whatever it is that you're selling. There's not a good product for those small businesses. And we are, as we speak, expanding that into other countries as well.
Sagit, thanks for joining us. Really appreciate speaking with you. Learned a lot there. Sagit Manor, Chief Financial Officer. The company's name is Nayax, and it trades on the NASDAQ. NYAX is the ticker. They're based, it's an Israeli-based company, so really cool. Stock's up 47% year-to-date. So when you swipe your card at maybe an EV, or you're going to buy something at the airport, or
vending machines,
boom, now you know
laundromats.
Some of the folks doing it, but interesting business. I always wondered what the technology is there. Okay, looking at the markets here, we are still higher, barely. The S&P's up about 0.2%. The Dow's up 350 points. That's 0.8%. NASDAQ's up about 0.1%. This is Bloomberg.
listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
All right, Norma, Linda, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Put up a chart of Cisco and do it to the max. So take it all the way back to like the 90s. The stock right now at $70.96 it's almost back to that March 2000 all-time high, almost back. And we're going to hear from Cisco after the close here tonight. Woo Jin Ho covers the stock. He's a senior tech analyst at Bloomberg Intelligence. Woo, give us in a nutshell what you're going to be looking for from Cisco here. And again, this stock, it's up another 20% this year. It's trying to get back to that 2000 all-time high.
I will tell you, I think some Cisco investors are partying like if it's 1999. Paul.
There you go.
So a couple of things. I do expect them to beat expectations going into the print, but the key to the call is going to be the outlook. Right now, there's a 4 to 6% long-term guidance range for fiscal 26 and 27. I do expect them to bracket that at the very least. If anything, quite frankly, there might be some room for some modest upside, at least from the first quarter, to give them a good start for 2026.
Well, I do know that you say that EPS risks still exist here, especially given the uncertainty on how rates will evolve. Can you speak a bit more about that and how that pertains to Cisco?
Yeah, so Nora, there is a couple of potential EPS headwinds, but I think they are somewhat de-risked. The tariff has always been an overhang for a lot of the hardware companies. A couple of things to keep in mind with Cisco, they're probably one of the better ones that handle the tariff situation as it relates to communicating to investors. A lot of the potential tariff headwinds were already baked into their guidance. And if anything, the tariff situation is a little bit better than we had anticipated. So there is some room for upside to EPS as it relates to the results as well as the outlook.
Wooch, what's the bull case? What's the bull case for Cisco right now?
Yeah, there's actually a couple of really good bull cases. I know everyone is very interested on the AI story, and the AI story is, it is going to be a tailwind. There are a couple of optical providers that have issued some positive outlooks, and Cisco is involved in that area, and that should drive a little bit of incremental growth. That's driving some positivity, but there's this massive upgrade cycle for their core networking business that's going to start ramping up over the next several quarters, and it's going to be a 2-year upgrade cycle. That could help drive some upward growth. The new products is going to also drive security sales, which is more software related and have incremental growth as well as margins.
Looking at some commentary from Barclays, the analysts there are saying that from this earnings report, they're really looking to management to speak more about customer spend. Is that a pressing issue for you as well? Is that something you need to see?
Yeah, and for a long time I've been covering these guys since 2008, and a couple of things from a Cisco perspective, we always look at order growth and small medium businesses order growth. Roughly about 50% of sales is exposed to the small, medium enterprises, and that is a barometer of the overall IT spending environment. Quite frankly, that hasn't let down based on some of the earnings that have already reported so far. And as the 800-pound gorilla, I do expect that Cisco is going to benefit as well.
So overall, stepping back, Wooch, what do you and the other folks on the BI tech team, what's your view of just kind of total tech spend over the next year or two? There seems to be some economic uncertainty out there, not in the stock market hitting all-time highs, but it seems to be some economic uncertainty out there. How's that get reflected in tech spending?
Yeah, I'll be frank with you, Paul. I've been back and forth on this and struggling personally in terms of how I should approach the second half of this year. My mid-year outlook was fairly muted, leaning more towards the negative in terms of IT spending potentially winding down because of the macro headwinds and cautiousness of the global economy. That doesn't seem to have materialized as of yet. I don't know if we've started to see that, or if the corporate IT decision makers have finally decided, hey, the macro is holding up better than we thought after all, and we have all these modernization projects, not directly to AI, but related to AI, that we need to upgrade our existing hardware to help support it. Now, there are pockets of weakness. Don't get me wrong. I'm muted on the PC market as it relates to some of the companies that I cover, Dell as well as HP. But at the end of the day, enterprise IT seems to be holding firm.
Is there, just super quickly here, are the current valuations justified here when we look at tech more largely?
Yeah, well, look, it's a tale of two worlds, Nora. If we back out AI, which are at astronomical levels, I mean, Arista's trading at about 45 times, and there are a couple of AI names that are trading around 50, 60 times. There are some valid tailwinds there because at the end of the day, the revenue expectations are fairly high, and you hope that earnings is going to catch up to it. But if we back out that AI area and just core enterprise, valuations are reasonable.
Woo Jin Ho, thank you so much. We appreciate that. Woo is the senior technology analyst, Bloomberg Intelligence, coming to us from Princeton, talking to us about Cisco. Going to report earnings after the close here tonight. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. Your top stories and global business headlines are coming up right now. For Norma Linda, I'm Paul Sweeney. We'll be with you tomorrow. This is Bloomberg.
This is CBS News on the Hour, sponsored by ZipRecruiter.
I'm Steve Kathan. Strong words from Ukraine's President Zelensky ahead of President Trump's Friday summit with Vladimir Putin.
I've told the American president and all of our Europeans, Putin is bluffing.
Zelensky holding a virtual call with European leaders and President Trump. German Chancellor Merz.
The American president knows that if he wants to reach peace in Ukraine, he can rely on his European and Ukrainian partners to work on that together. Ukraine has to sit at the table.
CBS News White House correspondent Ed O'Keefe.
He wanted to consult with Zelensky and the European leaders before he took the trip to make sure they were all on the same page and had an understanding of what should be discussed or perhaps broached with Putin. There's big concern across the rest of the world that the president might do or say something or negotiate something regarding Ukraine on their behalf without their permission or consultation.
At least 3 deaths are blamed on flooding in the Chattanooga, Tennessee area when a tree came down on a car with a couple and their child inside. More than 6 inches of rain overwhelming some places, prompting high water rescues. Well, President Trump has just named the new Kennedy Center honorees in his new role as chair.
The president says the honorees include
country music star, actor, and producer George Strait.
The others are Broadway and international sensation Michael Crawford, actor Sylvester Stallone, singer Gloria Gaynor, and rock band Kiss. President Trump, who fired the board of trustees at the Kennedy Center and later became chairman himself, has also teased a construction project restoring the Kennedy Center and possibly adding his name to the title. Lindy Kenyon, CBS News, the White House.
Educators and parents have been debating whether boys should start kindergarten earlier or rather later than girls. CBS's Allison Keyes says a man who's looked into it is weighing in.
It's known as redshirting, and experts like Richard Reeves at the American Institute for Boys and Men say starting boys a year later in kindergarten at age 6 is good for them.
There are huge gender gaps in education now.
Reeves says girls are more mature than boys as young as age 5, and
one way to solve that is just give the boys a bit more time. And in a way, it's leveling the playing field.
Reeves says that helps boys close the gap in high school.
A new Gallup poll indicates about half of American adults now believe moderate drinking is harmful. That's up from 28% 10 years ago. Wall Street. Right now, the Dow Jones Industrial Average is up 300 points. This is CBS News. A Kentucky mother has been charged in the death of her 10-year-old son.
Felicia Gross claimed her son, Jaden Spicer, went to bed last Tuesday night but was gone the next morning. After a 6-day search in Breathitt County, a tip led police to a wooded area where they discovered Jaden's body in a shallow grave. State Trooper Matt Gayhart would not discuss how Jaden was killed or his mother's possible motive.
She is charged with manslaughter in the second degree, abuse of a corpse, tampering with physical evidence, and falsely reporting an incident.
Prosecutor Miranda King.
Jaden is now in good hands, and we're going to take care of him.
Michael Wallace, CBS News.
A manatee has been spotted off the coast of Massachusetts for the first time in almost a decade. Those animals usually find habitat in warmer waters. Experts who are standing by to help if needed say the manatee could become sick, starve, or die in the colder New England water. It already beached at least once. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump goes showbiz. Welcome to the Wednesday edition as the president leaves the White House to visit the Kennedy Center today in Washington. He just showed up a short time ago to announce this year's nominees for the Kennedy Center Honors. Thanks for joining us on Balance of Power here on Bloomberg Radio, satellite radio channel 121. You can watch this right now on Bloomberg Originals or on YouTube. Search Bloomberg Business News Live because we're going to bring you there. The president just opened the floor to questions, already addressing news today in the New York Times that Russia is suspected in the hack of a federal court filing system, turning to politics and his decision to deploy National Guard troops to the streets of Washington. I suspect we'll learn a lot more. Let's put an ear on this together, live from the Kennedy Center, only on Bloomberg.
You said close the border, and they closed the border, and that was the end of it. I didn't go back to Congress. We're going to do this very quickly, but we're going to want extensions. I don't want to call national emergency. If I have to, I will. But I think the Republicans in Congress will approve this pretty much unanimously. Please go ahead.
Thank you, Mr. President. Would you encourage members of the press to do ride-alongs with the D.C. police to understand how serious this crime issue is?
It's okay to me if they want to do it. We're going to work with the D.C. police. A lot of very good people in there. Not all, but a lot of very good, very, very professional. And, you know, we have a big force. I think they said 3,500. They're always asking the mayor, who's a very nice woman, but got to do the job. You know, we've worked with the mayor for 6 months, and she's been here for many years. And the numbers are worse than they ever are. Don't let anyone tell you they're not. And the whole statistical charts that they made, the whole thing is a rigged deal. They got rid of the guy because he didn't want to do the numbers the way they wanted to, and they put their own numbers out. They said it's the best in 20 years. No, it's the worst in 20 years. But we're going to have... we're going to be very open about what we're doing. So if the media wants to ride with police, if they want to do it, if they feel it's safe, that would be okay. Yeah, please, go ahead.
Sir, with President Zelensky.
Thank you, Mr. President. Mary Margaret with Daily Wire. 2 questions on D.C., if that's okay. How do you feel about Mayor Bowser's level of cooperation and her choosing to advocate for D.C. statehood right now? And
well, the statehood, let me do that one first. Statehood is ridiculous. We want to straighten the place out. Statehood's ridiculous. It's unacceptable. It's the Democrats want it because the Democrats have, about 95% in this little area. Even I didn't get it very much. They want that. They want to pick up 2 senators, and it's not going to happen. It's not going to happen. And that's the least of the reasons why, by the way, but that's one of the reasons why. What we want to do is make Washington, D.C., the greatest, most beautiful, safest capital anywhere in the world, and that's going to happen. I mentioned the word bones before. The bones here, we have the greatest bones. When you look at that Supreme Court building, I think it's one of the most beautiful buildings. When you look at some of the buildings here, it's so magnificent, and everything's good, but it's just dirty and not properly maintained. It's not taken care of. Potholes in the roads. All of it's going to happen very quickly. We're going to seek a relatively small amount of money for fix-up, and we're going to put it out to bid. And we have great contractors here, great road builders, everything. And we're not ripping roads apart so they're closed for 4 years as they redo the concrete bases. And you don't need that. We need a beautiful topping by a very talented asphalt-type person. somebody that does the job. We go out, you know, when I get contractors, I use great contractors. To me, a great contractor is a very special, like a great surgeon, like a great teacher, like a great nurse. A great contractor is very important. We'll only use the best. And when you put a coat of asphalt on that 2 inches of asphalt, 3 inches of asphalt, it looks brand new. You take all the garbage off. They reseed it, as we call it, or different names, but they take the bad stuff off and they put the good stuff down. It takes not a long period of time. A matter of a few days, you'll have a beautiful, magnificent road. You fix up the curbs. You get rid of the medians in this town are just horrible. You know, you're riding around, I think to myself, leaders come from foreign countries. You see, with leaders all the time, differently. They came in from India recently and from everywhere. They came in from a war that we just ended, Azerbaijan, and you know that, and Armenia. We just ended the war. The 2 leaders came in. One of them said, "My country looks better. The roads are better than, you know, we were talking about." I said, "What do you think?" He said, "Well, the roads are better in Armenia than they are in Washington, D.C. It's embarrassing." And I was asked at the last press conference, they said to me, "How important is it? You're doing world peace. We're going to on Friday to Alaska, meeting with President Putin, Russia. How important it is that the capital is important?" I said, "Very, very important." I told my father, said to me, "When you see a restaurant and you want to go and you want to have dinner, and then you go up to the front door and it's dirty, turn around and go back because the kitchen's dirty." It's the same thing with the capital of the United States of America. If it's dirty and unsafe, it sets a bad tone for the rest of the world. So we're not going to do that. We're going to have this capital fixed up, safe, clean, and beautiful in a very short period of time. Go ahead, please. In the back? Yeah, please.
Yes, Mr. President, how were your calls this morning with European leaders, and was it your call not to invite President Zelensky to your meeting with Putin?
No, just the opposite. No. We had a very good call. He was on the call. President Zelensky was on the call. I would rate it a 10, you know, very, very friendly. I know the leaders because I was at NATO, as you know. I took it from 2% to 5%, 2% that wasn't paid, 5% that is paid, which is trillions of dollars in defense capability. No, it was always going to be, I was going to meet with President Putin, and then after that, I'm going to call the leaders and President Zelensky. I'm going to call President Zelensky, and then I'll call, probably in that order, the leaders. There's a very good chance that we're going to have a second meeting, which will be more productive than the first, because the first is I'm going to find out where we are and what we're doing. Again, this is Biden's war. This isn't my war. He got us into this thing, and it should have never happened. This war would have never happened if I were president. But it is what it is, and I'm here to fix it, and I'm here to stop 6,000, 7,000 people last week. 7,213 people last week were killed, mostly soldiers. But missiles being lobbed into towns don't exactly help either. But mostly soldiers, and Ukrainian and Russian. They're not American soldiers, but you know, if we can save a lot of lives, it would be a great thing. I've stopped 5 wars in the last 6 months. And on top of that, we wiped out the nuclear capability of Iran, obliterated it. It's turned out to be a correct word, by the way, because, you know, some of the press said, well, maybe it wasn't obliteration. It was obliteration. And we're going to meet with, I would say, the second meeting. If the first one goes okay, we'll have a quick second one. I would like to do it almost immediately. And we'll have a quick second meeting between President Putin and President Zelensky and myself, if they'd like to have me there. And that would be a meeting where maybe it could be absolutely work. But the first meeting will not work that out. Certain great things can be gained in the first. It's going to be a very important meeting. But it's setting the table for the second meeting. I think the second meeting, if the second meeting takes place, now there may be no second meeting, because if I feel that it's not appropriate to have it because I didn't get the answers that we have to have, then we're not going to have a second meeting.
Thank you, sir. Thank you, sir.
I didn't ask you. Go ahead, please, address.
I just wanted to ask you, thank you, Mr. President. How involved were you in the selection process of these honorees?
I would say I was about 98% involved. No, they all went through me. They came over, Rick and Sergio and everybody. They said, I turned down plenty. They were too woke. I had a couple of wokesters. No, we have great people. This is very different than it used to be. Very different. These are great people, and they're not. I don't have any idea the Republican, because I want people that the Kennedy Center has everything. Look at the Academy Awards. It gets lousy ratings now. It's all woke. All they do is talk about how much they hate Trump. But nobody likes that. They don't watch anymore. That used to have 45 million people watching. I remember The Apprentice, first season. The Apprentice had 42 million people. The Academy Awards had 41 million people. We were the second show to the Super Bowl. But since then, the Academy Awards have gone down to, I think they've gone down to numbers that are like a regular show, because it went woke. We're not doing it for that reason. We're doing it because we want the great talent. But these are great people. So I was just a very long answer, but I was very involved.
Thank you, Mr. President. The Biden administration was auctioning off border wall materials, but we're hearing now that the auctioneer is selling those materials back. Are you finishing building the wall?
Well, I built hundreds of miles of wall, and I was getting very close. I actually finished the wall, but then I added another 200 miles, because when you do the original wall that I said I was going to build, which I got built, and I got it to the specifications of the Border Patrol and ICE, the exact. They wanted steel, they wanted concrete inside, they wanted rebar inside that, they wanted it to have wires. We have the walls are wired for, all of the internet stuff and security things. And we built it hundreds of miles. We did great. That's one of the reasons, even now, we're able to have such good numbers at zero, or essentially very little people coming in. But Biden, I ordered for another 200 miles. I was going to do another 200 because it's the way it is. And we're all set to do it. Then we had the bad election result, the horrible, what happened to our country, what they've allowed to happen to our country. And we are taking now that wall back. They sold the wall. Now, this is expensive stuff. Hardened steel, very expensive. 9,000-pound concrete and rebar. Rebar is very expensive, the hardest rebound. No, it's very hard to cut. You have different materials. It's very hard to cut because they cut it down if they can. It's very hard to cut. And Biden sold it for pennies on the dollar, 3 cents on the dollar, 4 cents on the dollar. He sold it. And I said, these guys really don't want it. That was when I first realized, when I saw the wall was being put up, because we could have finished the rest of the wall in about 4 weeks, anywhere from 3 to 4 weeks. It was all set to go. It was laying down, ready to be put up. The foundations were, and they took over, and they said, we're going to sell the wall. And they sold it, as you know, for pennies on the dollar. Well, Pam Bondi's been working very hard on suing that company, and I think they reached a settlement where we're taking the wall back. But they stole the wall from us. That wall is so expensive to build, and we had it, as you know, hundreds of miles of it, and they came along and they basically sold it for scrap. And what a shame that is. But that was when I first realized that these people actually want to have open borders. And no country has who has it? Poor countries don't have open borders. No, we had open borders where people just walked in. It didn't matter what they looked like, who they were. They could have. We had 11,888 murderers, half of whom killed more than one person. Literally killed more than one person. And this is who we took into our country. So the wall is the least of it, but we're going to take the wall back. We're paying a small amount of money, as I understand it, to get it back, to get rid of the litigation. We'll take it back. We'll put it up. Yeah. Go ahead in the back, please.
Stay right there. I want to take it back to the Kennedy Center, if I can, just for a second, Mr. President.
Sure.
From what I understand, the Les Mis show exceeded everyone's expectations. Attendance, revenue, across the board.
That's great.
Do you anticipate future shows to basically do the same?
I like that guy. Now, that's called a question, okay? And he's a great reporter, actually. Thank you very much. I appreciate it. Yeah, it did great. Les Mis did great, broke records, and was sold out and beautiful. And we anticipate a lot of that happening. There's a thirst for it, and especially when the crime is knocked out. You know, when we knock out crime, some people probably stay away from places like restaurants and other things. It ruins your whole fabric. It ruins your country. And when somebody thinks they have about a 25% chance of getting mugged, they say, let's not go to restaurants tonight. We're going to make it so that they have no chance of getting mugged. And it's going to happen soon. And yeah, we think we're going to have a lot of very successful evenings here. Please.
Will Russia face any consequences if Vladimir Putin does not agree to stop the war after your meeting on Friday?
Yes, they will. Yeah.
What will the consequences
there will be
be?
consequences.
Sanctions, tariffs?
There will be, I don't have to say, there will be very severe consequences, yes. Yeah, please.
Can I ask you a question about the Fed?
Right next to you, please, yeah.
About the Federal Reserve.
Oh, Federal Reserve, my favorite.
Yes,
Too late. He's too late.
You're considering suing Jay Powell. Can you update us on your thinking about that and tell us where you are in your search for a new chair?
Well, he took a building that could have been painted and fixed, like we're going to fix this building for very little money. And that was in better shape. He took a building and what they did to that building, they built a basement under the building. It didn't have a basement. This is simple to understand. The building is right next to a thing called the Potomac River, the beautiful Potomac River. That means lots of water. And the water is right under the building. And they decide to build a basement under the building in the Potomac River. So in order to do that, you need the biggest pumps that God ever created. And they were pumping their hearts out, but as big as those pumps are, you can't pump it fast enough because it's the Potomac River. If the pump were bigger than this room, you couldn't pump it. But they tried, and they've been building a basement. And I said, why did you want to build a basement? I thought it would be a good idea, sir. A basement is the least valuable floor in a building. I know a lot about real estate. The least valuable thing is the basement. And you don't build a basement under a building that is 2 feet above the river that's right next door. You know, it's right near the river. People don't realize the river's right out their window. And that's the beginning. They did just a terrible job. Instead of, I could take a ceiling like this, they'd rip out the ceiling because they see a crack. Let's rip out the ceiling. And I would fix the crack and I would paint the ceiling. And under the ceiling, they put the most incredible protective material. They go out by 3/4 inch, brand new, gorgeous 3/4 inch plywood and sheetrock, hardened sheetrock. And they had it all over the building. So if a little piece of flake came down, but the problem is when they took the ceiling down and it would hit, they spent millions of dollars on protective material that you didn't have to spend anything. He could have done that job for $25 million, and they spent $3.1 billion. He said 2.7, but it's really 3.1. They just don't want to include one of the buildings in the deal. But it's going to be much more than that. And I think he'll be long gone by the time it finishes because they've got a long way to go. And then I hear they want to hire 3,000 economists. What are they going to do? And he got it all wrong. He's too late. We call him Jerome Too Late Powell. It will live with him forever. I believe that name will live with him forever, along with the name Pocahontas and some of the others. He worked closely with Pocahontas, by the way. She's another beauty. But we have a real problem there. They're way over budget, and they did a job that shouldn't have been done. It was unnecessary to be done. Instead of, I could have gotten the greatest wallpaper anywhere in the world from the finest stores in the world. I could have fixed up a wall a little bit. It would have taken about 2 hours. And covered it with the most magnificent silk and most magnificent paper for thousands of dollars as opposed to tens of millions of dollars. What a shame it is that they did. But they would take down areas of the building that shouldn't have been taken down. That could have literally been painted, and they didn't do that. So they've got a long way to go. And I think it's just grossly incompetent, but not quite as incompetent as his decision not to do interest rates, take down interest rates, because just like they shouldn't have taken down a ceiling, they should take down interest rates. Every point costs us $360 billion a year. Think of that, $360 billion for 1 point. And we should be down at 1% because we're the leader of the world. We were always the lowest interest rate until like a certain time ago, decade, couple. But we were always, because we were the United States of America. So even if the country was run badly, we were considered like to be super prime. And now he's got us in a bad place. So we're paying $360 billion a year for each point. Now, I believe we should be 3 or 4 points lower. So that's over $1 trillion we pay every year in interest. And it's really just a paper calculation. You sign a document and you save almost $1 trillion because that number equates very much to the bonds that we have to buy. But despite that, we're powering through it, and we have the greatest economy maybe we've ever had. But the housing sector, people aren't able to get good mortgages. They're paying too much because of Jerome Too Late Powell. He's truly incompetent, and we'll be making another. We put a very good man in temporarily in the one spot because one of the people that was appointed by the Democrats left early, and I heard left because that person wanted lower interest rates, and I heard quit, but I have no idea. I'm sure she won't say that. I'll be naming a new chairman sometime within the next. I think I'll name it a little bit early, the new chairman. I'm down to 3 or 4 names, all good, all great. The problem is you name them and then they turn out to be not good. That's happened to me a couple of times. You name somebody, they tell you everything you want to hear, and then they go in and they turn out to be not good. I mean, he told me everything that I thought was appropriate. He turned out to be a stiff, real stiff. But other than that, I think he's doing a very good job, yes. Okay, maybe 1 or 2 more. 1 or 2 more. Yes, sir, please. Go ahead.
Mr. President.
Looks like Scott Bessent. Are you the Treasury Secretary?
You don't want me for Treasury.
I don't know. You look like you could do a good job. Go ahead.
I keep my family budget okay. Sir, when you meet with Vladimir Putin Friday in Alaska,
yeah,
do you believe you can convince him to stop targeting civilians in Ukraine?
Well, I'll tell you what, I've had that conversation with him. I've had a lot of good conversations with him. Then I go home and I see that a rocket hit a nursing home or a rocket hit an apartment building and people are laying dead in the street. So I guess the answer to that is no, because I've had this conversation. I want to end the war. It's Biden's war, but I want to end it. I'll be very proud to end this war along with the 5 other wars I ended. But I guess the answer to that is probably no, because I would have had a good conversation with Vladimir. I knew him very well. I got along with him great, actually. We had I had to go through the Russia hoax. And it was actually, it was a strain on the relationship. I actually told him, I said, they got this phony investigation going on, Russia, totally phony, created by Adam Schiff, Shifty Schiff, and Hillary Clinton and the whole group of them. And it made it very dangerous for our country because I was unable to really deal with Russia the way we should have been. I'm looking at Pam because I hope something's going to be done about it. These people put our country at great danger. And Adam Schiff, it was all made up. It was a hoax. The Mueller report came out. They all hated me. They had 18 Trump haters. And they said I did nothing wrong. They couldn't believe, they couldn't find anything after years of investigation. It was all a hoax. It was a hoax created by the Democrats, but in particular Schiff and Crooked Hillary, the whole group. And now we've learned all the stuff that's come out over the last 2 months is incredible through intelligence, and hopefully something's going to happen with it. These are people that put our country in danger, in real danger. I want to thank you all very much. Thank you very much. Thank you.
President Trump live at the Kennedy Center in Washington, D.C., making his way off the stage following a news conference and an announcement. The whole reason why he was there was, in fact, to announce the Kennedy Center honor nominees, and, in fact, made some news right at the outset saying that he'd agreed to host the Kennedy Center honors this year, naming country music star George Strait, Sylvester Stallone, Gloria Gaynor, Michael Crawford among the first batch of Kennedy Center honor nominees under his leadership, of course, as the center's new chairman. Says he will, yes, host the awards program, and that will all coincide with a massive revamping and upgrading of the facilities, he says, at the Kennedy Center, as he calls it, the Trump Kennedy Center. Whoops. I mean Kennedy Center Awards in his Truth Social post from last evening. Of course, here at Bloomberg, and welcome, by the way, to the Wednesday edition of Balance of Power. Happens like this a lot at noontime around here. I'm Joe Matthew, and we did learn a lot more about the meeting on Friday. That's something that we want to focus on here with the president looking ahead to the sit-down one-on-one, as it has been described by the White House, with Russia's President Vladimir Putin. A lot of headlines here when it comes to this, saying that he spoke with Volodymyr Zelensky and European leaders earlier this morning. He said he rates the call a 10, and we can get into what they were talking about a little bit when we sit down with Nick Wadhams in a moment. He said, very good chance we'll have a second meeting. It was not my call, interestingly. He said it was not my call to leave Zelensky out of the meeting, suggesting that it was Vladimir Putin's call. Second meeting would be more productive, he said, which would presumably include Volodymyr Zelensky. May not have a second meeting if I don't get the answers I want, but if the first one goes well, he says he will seek a trilateral. This comes with reporting today and finally some new details on what's actually going to happen on Friday, as the president will be meeting Vladimir Putin at an air base, Elmendorf-Richardson Air Base in Anchorage, on Friday. We're still waiting for a TikTok from the White House, but we finally have a venue. And we also have an earful from European leaders who are very concerned that lines are going to be frozen in place without their input following the meeting on Friday. Glad to say Nick Wadhams is with us, and it's been a while. He runs our national security coverage here in Washington. Thanks for coming over. Great to see you now that we've gotten our way through the news conference. How is this going to look? Do these guys get in an airplane hangar? Will there be interpreters? How do we expect the room to be set up?
I think it'll probably be either one of two options: two chairs next to each other, or across the table with aides on each side. Elmendorf is a pretty big base. They've certainly got sufficient facilities to do this thing. And the big question we'll be trying to answer is, how long are they going to talk for? Is this going to be an all afternoon thing? Is this just going to be a quick meeting? Vladimir Putin's English is not good enough, and Donald Trump's Russian is not good enough for them to do this without translators, so they will be slowed by those interactions. Okay. And then we'll have to see. We are expecting I'm almost certain there will be a press conference from the president. Will he go up there with Vladimir Putin? Hard to imagine he would do that. But
well, there was a phone call this morning. I'd love to hear what you know about this with European leaders. I believe this was organized by the Chancellor of Germany, Volodymyr Zelensky, I should say, was on this call, and they actually appeared alongside the Chancellor and Zelensky after the call with Trump. They're worried about outcomes without their involvement. What's the message?
Well, the big one is the question of land, territorial swaps. So when you saw the readouts from this meeting from Emmanuel Macron, from others, there's a real insistence that they're saying, listen, what President Trump wants is a ceasefire, and we are not going to see any sort of agreement over land swaps, and that can't be done without Ukraine's participation anyway. When you sort of read between the lines here, it feels a lot like the Europeans are trying to stake the U.S. to a position it's unclear that President Trump has. He has openly said he thinks land swaps are going to be necessary here.
He sure has.
But what you're finding, I think, is that what they really don't want is Trump to essentially try to give away the store in this meeting. Whether he can actually do that with Volodymyr Zelensky not there is an open question, but certainly if he agrees to something like, I think land swaps are a great idea, I mean, that really is going to undercut Zelensky's position.
There are reports today that Donald Trump told Zelensky and the leaders on this call that one of his goals is to get a ceasefire out of this meeting. Is that where we're setting the bar here? Because it seems like White House was walking back expectations the last couple of days.
They have been walking back expectations, essentially, and you have seen this before in their sort of messaging where they say, President Trump is the only guy who can fix this. He needs to get in a room with Vladimir Putin, stare into his eyes, stare him down, and come out with the big deal. Then they come out and say, well, actually, no, this is sort of a feel-out meeting, which is the words that President Trump has used. And now you're hearing, as you mentioned, what he's saying today is, okay, we'll do this meeting and then we'll do another meeting. So it's really unclear what he can actually get from this. Whether that bothers him is another question. You remember back when he met Kim Jong-un of North Korea, he was perfectly willing to walk out of that meeting and say, no deal, we're done. But I think right now, certainly the expectation is that this is going to be talks about future talks. And he is not going to be able to secure an agreement from Vladimir Putin on a ceasefire without extensive follow-up. We have had several conversations where Russia agrees to a certain type of ceasefire, a maritime ceasefire, a limited one, or one where, air defenses, things like that. But I think, he may hope that Vladimir Putin comes out of this and says, okay, guns are going to go silent. That seems extremely unlikely right now.
Really interesting. We've only got about 30 seconds left here, Nick. This is a day trip for the president. It's going to be a quick meeting, or do they go in there and come out hours later?
Well, I mean, I think he's likely to go at least for a couple of hours. He's got to do his press conference, though, and then, he does not want to spend the night in Alaska. So I don't think this is going to be one of those long, hard slogs you've seen sometimes in past meetings.
We're going to go into overtime with you for a minute because you're Nick Wadhams. And we have news from overnight. The fighting continues to rage here. Vladimir Putin is actually advancing as we walk up to this meeting here. Zelensky said at least 531 Russian troops were killed Monday. At least 18 Ukrainian troops confirmed killed. 240 wounded, 79 declared missing. What's actually happening on the ground right now?
Well, I mean, this is one of the big questions that hangs over this thing, which is what incentive does Vladimir Putin actually have to halt the fighting when things are going in his direction? His troops continue to advance as the U.S. has throttled back its support for Ukraine. Ukraine's position has become increasingly tenuous. In the long game, the expectation was always that given its greater numbers and larger military, Russia would, in a grinding war of attrition, win, simply because it has more forces that it can expend and that Ukraine doesn't have. So the question always has been, okay, you're going to get in a room with him. Why would Vladimir Putin agree to stop when things are sort of in his favor right now? And so far, that's just a question that President Trump has not been able to answer.
On top of the fact that he's not adhered to prior agreements, which is how we got here today, of course. What is Vladimir Putin's mood going into this? Because the reporting is that he feels like he's already got a win by sitting down in person, that he's being lauded at home. Is that true? Or the headlines?
Right. I mean, what he wants is to make this an argument or a standoff between the U.S. and Russia. He essentially wants to keep Ukraine sidelined. He's incredibly frustrated about this idea from the Biden administration of nothing about Ukraine without Ukraine. They always made sure that Zelensky took the lead. You were never going to see him sidelined. But when Trump gets into a room with Vladimir Putin, the concern from a lot of experts is, well, listen, he is essentially undercutting Zelensky's position and making it impossible, because if Zelensky does or says something that makes Trump mad, you can be darn sure that Trump is going to put a lot of pressure on Zelensky's. And that's exactly where Putin wants Trump's focus to be, sort of negative energy, pressure on Zelensky, and not necessarily on Putin.
There was a big headline a couple of weeks ago when the Netherlands stood up to be the first to buy or pay for U.S. weapons to be used in Ukraine. Have there been other nations? Is there another package coming, or was that kind of a one-off with this?
No, I mean, that is sort of essentially the arrangement that NATO is making now, that they're going to be trying to buy these U.S. weapons. But, the question you have, the concern from within the Trump administration is if they sell these weapons, yes, that could be advantageous for Ukraine, but they also don't want, in some ways, to upset Vladimir Putin. So they don't want to have a situation where, they have said repeatedly, hey, we don't want to boost sanctions. We don't want to keep antagonizing Vladimir Putin because we want to lure him to the table. So it's sort of a carrot approach with Putin, whereas the Biden administration used a stick approach. Okay, we're going to keep those weapons and keep the military pressure on, because they believe that was the only way to compel Putin to the table.
Remember when Donald Trump was at the Vatican and met with Zelensky? Famous picture of the two of them, two chairs knee to knee. I say they put two chairs right down on the runway at this airbase so they don't have to put them in a hangar, right?
It's cold up there. Well,
it's going to be in the 60s. I was just going to say this. We looked at the forecast. Nice time to be in Alaska, which I suspect he will comment on.
How many hours of sunlight? Yeah.
Maybe not too many, but he's going to be back by bedtime that night.
He will be. Right? So that, and that is the question we all have. How much can you actually do
on a day trip to Alaska?
A day trip to Alaska, especially when you don't really have a lot of subject matter experts. I mean, it's really going to be Trump in there. This is not going to be they're not going to come out of this with a detailed 50-page agreement.
Yes.
With all the T's crossed and the I's dotted and details on specific territory and and things like that. So it raises the question: is that in the offing next, or are we sort of headed down yet again another rabbit hole that just results in broken promises and continued fighting?
And a chance maybe for him to regroup.
Right.
We're going to have a late night, or at least a late afternoon here on Friday, and I hope you'll be with us on Bloomberg Radio. I suspect you will be in the newsroom with the full reporting forces of Bloomberg, and we'll have folks on the ground in Alaska as well. Bloomberg's Anne-Marie Hordern will be traveling with the president, so stay with us as we learn more about timing. We're going to walk you through all of this live coming up on Friday. Nick Wadhams, thank you, as always, runs our national security team here in Washington. We're going to assemble our panel next. There are big questions about whether Democrats are about to head back home in Texas. We'll talk redistricting and maybe take a look at this new lineup of Kennedy Center honorees. They say they didn't even know Trump was coming today at the Kennedy Center. He just picked him. Sylvester Stallone made out pretty well. So did Kiss. But we turn to Wall Street first. Let's get to the markets. We haven't heard from Charlie Pellet next. It looks pretty good with green on the screen. Charlie, what do you have?
Indeed. We got records for the S&P, NASDAQ. However, we are well off session highs right now. 4-point gain on the S&P 500 index on this Wednesday, up now at 64.50, an advance of under 0.1%. The Dow up 313, up by about 0.7%. NASDAQ also at a record, up 2 points now. Little change, though, has been swinging between gains and losses. Indeed, the NASDAQ 100 index in the red, lower little change, down under 0.1%. The 10-year 4.23% with a 2-year that's currently yielding 3.67%. Spot gold up $10 the ounce, 33.58. That is a gain right now of just about 0.3%. And West Texas Intermediate crude oil, WTI, down 1.7%, 62.11 per barrel of WTI. Treasury Secretary Scott Bessent has been calling for a 50 basis point interest rate cut after this week's CPI. In a one-on-one conversation with Bloomberg Surveillance this morning, Bessent said that could be the start of a new rate-cutting cycle.
We should probably be 150, 175 basis points lower. So, I think the committee needs to step back.
Treasury Secretary Bessent says he also agrees with President Trump's too late nickname for Jay Powell because the Fed has been too data dependent. By the way, you can hear more of that conversation, the full conversation with Treasury Secretary Scott Bessent on the Bloomberg Talks podcast. And speaking of Jay Powell, President Trump, you heard the announcement here on Bloomberg Radio saying he will be naming a replacement for Fed Chair Jay Powell a little bit early. Now, speaking to reporters at the Kennedy Center, he told us, quote, he is down to 3 or 4 names, adding, quote, all good, all great. We're keeping an eye open for shares of Bullish, BLSH on the ticker symbol. They are now indicated to open at between $85 and $88 a piece. That IPO price, $37 a share. Bullish, backed by Peter Thiel, it is a crypto exchange. Again, recapping, NASDAQ just turning negative, down under 0.1%. S&P up by 0.1%. I'm Charlie Pellet. Balance of Power continues now. Back we go to Washington. Once again, your host. Here he is, Joe Matthew.
Yes, sir. The showbiz capital of America today, Charlie. How about it? President Trump at the Kennedy Center a little while ago with the honorees as chosen, I guess, by him. He just came up with his own favorites there. It's good for Sly Stallone and a couple of others. Gloria Gaynor. We'll talk more about that a little bit later on. He says he's going to make the building look more beautiful than ever. And more importantly, let's not bury the lead. Donald Trump says he's going to host the awards ceremony himself. Back on stage here in Washington. I wonder what James Tallarico is thinking right now. He's been living up in Chicago for a couple of weeks, and I have to be honest, pretty nice place to be, right? They've been up there in Evanston, spending time with J.B. Pritzker instead of being in Texas, where a special legislative session was called by the governor to handle a number of things, including redrawing the congressional map. And if you've been with us here on Balance of Power, you've heard us talk a lot about this. Democrats said, no, we're not going to do this. In fact, we're going to break quorum by leaving the state, preventing Republicans from moving forward with the process. And everyone, including folks like Rep. Tallarico, who is a Democrat from Texas, talked to us about this, suggested that they realized the outcome may not change. They wanted to slow this process down, give Republicans a chance to back up, and maybe change their minds. That doesn't appear to be the case. And at some point, well, people need to go home. And so as I read on the terminal, Democratic lawmakers from Texas say they are considering their options today amid a report that they could return to the state as soon as this weekend. Republican Governor Greg Abbott has pledged to call session after session. He said, the day they get back, I'll call the next one for this redistricting proposal. And the whole point here, as endorsed by President Trump, is to create 5 new Republican seats in the state of Texas. And you don't need me to walk through this whole thing. Maybe you heard of Gavin Newsom, who's standing by in California to do the very same thing, essentially daring Texas to move forward. Look at this on Twitter from the governor of California. Final warning, Donald Trump. This, by the way, all caps, taking a page out of the book. Maybe the most important warning in history, exclamation point. Stop cheating, or California will redraw the maps. And guess who will announce it this week, question mark. Gavin Newsom. Many say the most loved and handsome governor and a very powerful team. Don't make us do it. Triple exclamation point. A little trolling going on there as we assemble our political panel today. Adam Hodge is back with us, Democratic strategist, managing director at Bully Pulpit, and Lisa Camuso-Miller, Republican strategist, former comms director at the RNC, host of the Friday Reporter podcast. It's great to see you both. Adam, did you tell Gavin Newsom how to speak to Trump online?
Well, he's certainly taken a page out of Trump's book there. And I'm sure his social media team also having some fun with it as well. Look, they are been very clear what the stakes are and what California is prepared to do. But I think what you've seen over the last few days is Democrats across the country saying we're not going to just wait for Texas to act, that we see the writing on the wall. We're just going to go ahead and move forward with the process wherever we can. And I think this race to the bottom is actually a real detriment to the broader democracy if politicians are just carving up voters the way they feel. But there's no question the Democrats have made the decision. We're not going to unilaterally disarm, that we have as much at stake in the shape of the democracy. And if this is the way the landscape is, we're going to play ball and look to take action regardless of what happens in Texas.
Well, here we are, Lisa. They're going to hold a news conference, I guess, 2:30 Eastern time, so about 2 hours from now, maybe a little bit less. The lawmakers who are in Illinois, and they're going to join up with their Indiana counterparts here, 2:30. I guess we might learn more. But there's reporting as well, ABC News reporting members are assessing strategies in a private meeting to make decisions about future plans currently. Texas Republicans say they're ready to go as soon as Friday with the next legislative session, according to the Washington Post. I'm just compiling everything that I see here. So are they going to caravan back to Texas this week or what?
I mean, it feels like they will because they're talking about vacating those seats, right? And so they all have an obligation. Yeah. And I certainly think that they don't want to be excused from the conversation. So what's going to have to happen is they're going to go back. And then I think Adam's point is very good. We have a two-party system in this country. And so thereby the Democrats have every right to get into the fight and figure out how to gain those 5 seats back in other places where this is a possibility. This, luckily, is the way that democracy works, in not the way that it was designed, but certainly the way that redistricting works, in that there are plenty of other states where seats can be picked up. Unfortunately, this is what has made the country so divided, is that we have taken these districts and turned them into places that can no longer be turned over. They continue to be historically Republican or historically Democrat, and not allowing for a wide voice and a wide opportunity for re-election or election of different candidates and different parties. And so to me, this is just another example of where redistricting is going to not only cause complication, but cause great confusion and real frustration with the voters.
Yeah, I was talking to my dad about this the other day, Adam. He reminded me of the old Salamander district in Massachusetts, and you wonder if there is an end to this. Once you start it, how does it end? And I wonder as well if there's a potential for overreach, if it's even possible in a state like Texas by Republicans, because Ken Paxton's ready to put Beto O'Rourke in jail. Have you seen this? The Attorney General actually went to a judge yesterday to request that Beto O'Rourke be put in prison for violating an order, he said, not to fundraise for Democrats as they denied quorum in Austin. Should Beto start to worry?
No, and just like they threatened they were going to send the FBI to track down these lawmakers, obviously that didn't happen. It's all a bunch of noise, a bunch of bluster that they can't back up. But I think it further illuminates for the rest of the country just how ridiculous the actions that the members of the Texas legislature and the governor are. And the voters in Texas are clearly understanding that they're actually doing this at the behest of leaders in Washington. It's not usual for Texans to take orders from other states. I know that's something they pride themselves on, their independence. So it is a bit rich to see the governor of Texas and Ken Paxton all of a sudden subsuming themselves to the whims of the president in Washington. But I think the thing we can't forget, that we're spending all this time talking about, and the Republicans are having to defend their actions here. They're not talking about the big, beautiful bill, so-called big, beautiful bill. They're not talking about the tax cuts in the bill. They're certainly trying to avoid talking about the Medicare cuts to their constituents. Their policies are unpopular. So what do you do when your policies are unpopular? You try to rig the game so you don't have to defend the policies and win on the merits. That's what I think Democrats are arguing. I think it's a particularly effective argument, and it certainly elevated this issue with a whole range of other voters that probably weren't paying attention to this issue going forward. So I think you're right. Careful what you wish for. This could very much blow up in the faces of the Republicans in Texas.
Is it possible to overreach in bright red Texas in this case, Lisa?
I don't know, Joe. I mean, there is something really special that happens down there in the Lone Star State, and I think there's a tremendous amount of loyalty to the party in a way that really maybe not going to tip the scales, but certainly will be the kind of thing that I think other states will pay attention to. And there are plenty of other surrounding states that don't necessarily behave and operate in that manner that very well could backlash against the party. Maybe not in Texas, but certainly in the midterm elections.
Joe, I think there's a gamble here that they're making, though. They've carved out most of these districts to now be a roughly 60% Hispanic, or they're banking on this well of support among Hispanic voters in Texas. That has not historically been the case. Now, maybe there's a realignment happening, but there's an equally good chance that it's not happening, and that the backlash to the policies of the administration that aren't actually lowering costs, that were seen as the highest rated issue among Hispanic voters in Texas last year, could boomerang back, and Democrats may find themselves in a more competitive landscape in the midterms in 2026.
Interesting. As we spend time with our panel, I know you're both excited about the Kennedy Center honors this year. Did you both hear Donald Trump is going to host this? He actually went to the Kennedy Center to make an announcement this morning. Remarkable. He will be the new host of the program. He is, of course, the self-appointed chairman of the Kennedy Center, what he referred to on social media as the Trump Kennedy Center. Whoops, I mean Kennedy Center. And he showed up today, guys, with his own roster of Kennedy Center honors nominees. George Strait, Sylvester Stallone, Gloria Gaynor, the rock band Kiss, and Michael Crawford, the actor-singer. He talked about his affinity for Broadway, his taste in music and stage performance. Lisa, he also says he's going to make the Kennedy Center more beautiful than it ever was before. The funny part here is the Kennedy Center didn't know he was showing up. So I guess Donald Trump just kind of picked these names here, and they're going to have a big show. He says Kiss is going to even play a special concert there before the awards. Are you going to be there?
I don't know that I'm going to be there. It may be a sold-out show for all I know, Joe.
No, well.
But there are so many things to unpack here. Look, here's the thing I do know. I do know that the Kennedy Center had some fundamental flaws and some things that were of concern. And for someone like Donald Trump, who was for a very long time in charge of the Miss America pageant, and he has been a showman his entire life, this is the crown jewel for someone who wants to be seen as a patron of the arts and seen as someone who's involved in these kinds of decisions. And so this is not surprising to me, and it ought not to be surprising to anyone else that he's going to have a hand in making those choices and making those decisions. But I also think, too, Joe, that I would like to know more about how those decisions are made, because as much as I'm sure that he had a say in some of these decisions, some of these are very well deserved.
I'm not arguing with that at all. And Adam, what do you think? What would the world of Camelot, what would Jackie O have thought of Kiss performing at the Kennedy Center for this honor?
Well, look, I think my invitation is going to get lost in the mail. Lisa, you may be more lucky.
You're a VIP. I don't know.
Yeah, she's very, very VIP. No question about it. I think, look, he's the apprentice president. He's a showman. He loves TV, and I think with each of these issues, with each of the people that were picked. Yeah, you can't really argue with a lot. I mean, Sly is a huge global star. I mean, I love his movies, love, from, Rocky and on, to, all of them. I mean, there's a real, Kiss is a global band. I mean, you can't really quibble with the folks who he's picked. I think the show maybe leave a lot of people to be desired. I mean, I haven't watched Apprentice recently, but it didn't quite do it for me back then. I don't know that the Kennedy Center honors with Trump as the chair are going to do it either.
Listen, they had the Grateful Dead there last year, right? Or they honored the Grateful Dead, whomever's left, Lisa, so why not Kiss? Last year was Francis Ford Coppola, Bonnie Raitt, Grateful Dead. Show will be broadcast later on CBS. That, by the way, is a whole other great irony that the president will be hosting this on CBS following the settlement. I don't know. I mean, rock and roll. It's going to be fun to watch. Lisa Camuso-Miller and Adam Hodge will be back with us in our second hour here on Balance of Power with much more to talk about. The president, while he was at the Kennedy Center, took a bunch of questions. He talked about Russia's war against Ukraine, the meeting with Putin on Friday. He also talked about the pick for the next Federal Reserve, not just the next board seat, but the chair. As we rock and roll all night and party every day here on Balance of Power. Stay with us. We've got a lot more to follow. Get your rock hands out. Hour 2 of Balance of Power is on the way, live from Washington, only on Bloomberg.
from Washington, D.C., this is Balance of Power with Joe Matthew.
The search for the next Fed chair reaches into the private sector. Welcome to the Wednesday edition of Balance of Power here on Bloomberg TV and radio as President Trump reacts to new names on the growing list, including his own, by the way, only hours after Treasury Secretary Scott Bessent weighed in right here on Bloomberg TV and radio. We're going to get into this straight ahead with Bloomberg's Michael McKee with insights later this hour from Republican Congressman Troy Downing of Montana, serves on the Financial Services Committee. We'll get into Friday's meeting as well, a high-stakes session, one-on-one between President Trump and Vladimir Putin. Coming up, Jennifer Kavanaugh at the military analyst at Defense Priorities will be with us here as well. And it's all after a look at Wall Street. Let's update the Wednesday trade right now with Charlie Pellet in New York. He's got the latest on the markets.
All right, thank you very much, Joe Matthew. Indeed, we've got NASDAQ in the red right now, down 19, retreating from a record, down 0.1%. S&P 500 index, yes, still at a record, but little change right now. The S&P 500 index up 2. That is a gain of under 0.1%. Emphasis on little change there. Dow Industrials up 300 even, now up by about 0.7%. Traders keep piling into bets that the Fed will be cutting rates soon. Bond yields sinking as stocks hold near records. We've got the 10-year at 4.23%, the 2-year 3.68%. Spot gold up $10 the ounce, 33.58, up 0.3%. West Texas Intermediate crude down 1.4% with a 62 handle at 62.27 on WTI, and Bitcoin at 121,518 on Bitcoin, up now by 1.1%. We are awaiting the start of trading for Bullish. The crypto exchange indicated now to open at $89 to $90. Keep raising that number. We are looking at the firm that is backed by Peter Thiel. Initially, the IPO price was $37 a share, but again, indications to open $89 to $90. Company announced back in 2021 that it was planning to go public with a special purpose acquisition company. Bullish, by the way, counts former NYSE President Tom Farley as its CEO. Again, recapping here, S&P 500 index up 4, gain there of 0.1%. Just getting word that Bullish has now opened by 151% as we watch that stock. BLSH on the ticker. Again, Bullish has started trading right now at $94 a share, up by 156%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, bringing us the breaking word as always. Charlie, thank you so much. Bullish off and running. BLSH on your terminal. This is the first minute of trading that's underway right now. Thank you for being with us here on the Wednesday edition, the early edition of Balance of Power on Bloomberg TV and radio. I'm Joe Matthew in Washington, now up 175% at almost $103 a share. Bullish opening at $90, remembering the IPO price was $37 a share. So this is a pretty remarkable move right off the top here. Another crypto name here, Bullish, a crypto exchange and news provider, as they're calling it, with an enormous amount of demand here. This had initially been a roughly $20 million share offer with an expected price of as low as $28. It grew to 30 million shares, and you've seen what's happened to the price here. 30 million shares set to raise about $1 billion at 37, and this thing is absolutely off and running. We're going to be talking with Bloomberg's Mike Regan when he gets to the studio here, because I'm guessing that his hair is blown back a little bit by this. This is the company that we've been talking about quite a bit lately that's had financial backing from Peter Thiel, as Charlie Pellet just mentioned. BlackRock and Cathie Wood's ARK Investment Management have shown big interest in this name as Bullish begins trading right now, following the incredible demand that we saw, for instance, for Circle, the stablecoin issuer, which saw its IPO take off in June. We also saw a very successful IPO from CoreWeave getting into the AI space, although that's been a bit lower today following CoreWeave's quarterly earnings here. Looking back to the tape just to watch this thing take off a little bit here, it looks like we've got a trading halt in Bullish. Are you seeing that as well, James? Trading halt at $102.44. This is something that's just happening only a couple of moments into trading here. So we're going to be talking a lot more about this with Mike Regan. Pretty remarkable to see the new issues market open up the way that it has over the past couple of months. And it brings us back to the whole conversation here in Washington at the beginning of the Trump term about so-called animal spirits. And just a day after watching Goldman Sachs hit an all-time high, it reminds us of how important this component of the market was that lay dormant for so many years following COVID and so on. If you're watching your terminal right now, BLSH with a trading halt, and Bloomberg's Mike Regan is with us from World Headquarters in New York. What do you make of this most recent news here? We got off for about a minute, Mike, and got halted at just over $102.
Yeah, pretty amazing, Joe. I mean, considering that, this IPO priced at $37, so almost tripling here from that offering price on the first print. It is kind of to be expected that there, no pun intended, a lot of bullishness for these crypto IPOs. I mean, we saw Circle, the stablecoin operator earlier in the year, jumping about 169% on its first day. Figma, not a crypto play, but more of an AI play. Its IPO, it was up 250% on its first day. So clearly, the market sentiment right now is just so risk on for the entire market, and that is really just getting put through a magnifying glass for these IPOs, especially in these sort of buzzy of the moment industries like crypto and AI. So pretty remarkable opening for sure.
Well, that is for sure. I was just mentioning Goldman Sachs while you were walking in the studio, Mike Regan, hitting an all-time high on the 12th of August, with the idea of new issues finally coming back to life. How real are the animal spirits in this market?
They're tremendous. I mean, when you look at this, more than a 30% rally from the April lows in the S&P 500, even better for the NASDAQ. Still waiting for the Dow to hit that record. But, especially quite a time to price an IPO and start trading after the CPI number this week really sort of let everybody exhale a little bit and get back to thinking that we'll get maybe 2 interest rates, maybe even more interest rate cuts by the Fed this year because that CPI, it was still a little hot, but not as hot as people maybe in their worst case scenario were worried about. And with that jobs report we saw for July, it's kind of all combining for this really major risk appetite in the stock market. You still have the AI theme really propelling the mega caps, and it's sort of a situation where it's lifting all boats now when you add in this prospects potentially for some interest rate cuts from the Fed.
Well, what does that mean for the pipeline, though? I mean, we've had a couple of really successful IPOs this season. What else could be coming? Who's Goldman Sachs meeting with right now?
Well, we're getting ready for MIAX this week. That's the Miami Options Exchange. That's the next one sort of, in the pipeline to price this week. I'm not sure if we'll see the exact amount of optimism given that is more of a traditional exchange. They do have a crypto element to it. They bought the old derivatives exchange from FTX. So that might get a little bit more excitement around that name. We'll have to see. Besides that, and here Bullish has just started trading again, so back up to 105 now. So
there we go.
Yeah, stand by for another trading pause, volatility pause, possibly.
But yeah, entirely possible. Look at this; it's up 195% here. We're going to hit $110 in a minute, Mike. This thing just keeps on rolling. We could see trading halts throughout the session, then, is your point?
I think so, yeah, quite possible, but certainly, this is a stock in the sweet spot for what this sort of risk appetite in the market is looking for this year with, President Trump embracing crypto. Bullish, not a real well-known exchange in the U.S. It does own the CoinDesk crypto news site, which it's probably best known for in the U.S., but I think there's a lot of optimism that its prospects in the U.S. could be improving under the much looser and very hands-off regulatory regime under President Trump for the crypto industry.
Boy, what a move! Now up 205%. Mike Regan, thank you so much. We'll get back to Mike a little later, maybe this hour, if the gains keep coming here. Now, gosh, at $107 here, bullish off and running on Wall Street. Thank you, Mike. At World Headquarters in New York, I'm Joe Matthew in Washington, where we're balancing a lot of names today. not just names of new issues, but names of candidates for the new Fed chair. Interesting, as the list keeps getting longer. The president was asked about this a short time ago by our very own Josh Wingrove when he was at the Kennedy Center talking about the likes of Kiss and Sylvester Stallone. He did get to this matter, suggesting that if I understood him correctly, when you get a short list, people start asking a lot of questions and think they know what's going on. And maybe there's a strategy here to open the conversation. So let's do that right now with Bloomberg's Michael McKee. He's with us live from New York with some pretty familiar names here. Mike, this is kind of like a party at your house. Rick Reeder, David Zervos, Larry Lindsay. On top of the names that we've heard, of course, the Christopher Wallers, Mickey Bowmans of the world, Kevin Warsh, Kevin Hassett. Is the White House trying to just keep us talking and looking in a different direction, or is the search actually widening?
That's a very good question. I have no idea, because Scott Bessent, the Treasury Secretary, who's nominally in charge of this process, came on Bloomberg Surveillance this morning, and he said, we're going to have 10 or 11 candidates. If you count up the names so far, you got 11. And the president came out at the Kennedy Center and said, I'm down to 3 or 4, which is something he's been saying for quite some time. Now, I realize that you told me there would be no math on this program, but let's just say it's kind of hard to know here exactly what's going on. I was talking with somebody.
Well, it sounds like you had the first 3 or 4 names we've been talking about, and then maybe somebody in the White House communications office said, give them another handful to confuse Joe and Michael.
We've all had that sort of HR experience, and you can't use the term anymore under the Trump administration. You can't say DEI, but perhaps it's a little bit of Bessent's effort to do that. We really don't know, because we don't know how seriously to take any of these people. We take the Kevins, who've been talked about forever, Hassett and Warsh, and Chris Waller's been talked about forever. He was talked up by the Treasury Department a week and a half ago as a top candidate, and he's obviously well known. But beyond that, these are all people who just keep getting added to the list, and some of them you don't think are really serious. Philip Jefferson, he doesn't bring anything to the Trump table, put it that way. He's a well-respected economist, Fed vice chair, but he's not an uber dove, and he's not somebody who wants to shake up the Fed. So I'm not sure what they're talking about there. You know, and it's kind of hard to know why you go back to Larry Lindsay, who was a Fed governor in the 1990s. He was actually, Joe, the first Fed official I ever interviewed when I came on the beat. But he's been around for a very long time. David Zervos, if you know David, he doesn't fit the image, shall we say, of a Fed chair. Rick Reeder is a good name, but I have no idea if he'd be interested in anything like that.
Right. Well, I'm sure they'd all take a pretty good pay cut with this job. Did I see that the name Donald J. Trump was on the list?
I have not seen that. It was floated by some in the administration, but
yes, it was.
The problem is the Federal Reserve Act says that that Fed governors cannot have any other job. So if the president would like to give up being president, he could name himself Fed chair.
Fascinating. You mentioned Scott Bessent. Boy, was that something. Every time he sits down on Bloomberg, we learn a lot. And he started talking, of course, about interest rates with the idea of inflation maybe warming up, if not heating up, following that CPI yesterday. And he still wants big cuts, maybe bigger than some would have expected. Michael McKee, here's what he said earlier today on Bloomberg.
We should probably be 150, 175 basis points lower. So, you know, I think the committee needs to step back. I think probably one of the most politicized governors just went off the board.
Presumably referring to Kugler. Talking to Anne Marie and John there, why should we be at least 150 basis points lower, Mike?
Because the president would like that. Okay. That's the argument. Now,
At some point, the Fed will lower rates to what they would consider neutral, which is neither holding back or stimulating the economy. But right now, with inflation above 3%, they're not going to do that. They want to lean against inflation, and that would mitigate against any kind of cut like that. Now, the Fed might cut rates in September, but if they do, it's going to be 25 basis points. It's not going to be 175. Now, over the course of the next year through 2026, you could get there if the economy keeps improving or it gets really bad, whichever one. But right now, that's kind of out of bounds. There are 7 models that economists and central bankers use to try to figure out what the interest rate should be, and none of them basically are under 4% at this point.
Always great to spend time with you, Michael. Mr. McKee, live from World Headquarters in New York, Bloomberg's international economics and policy correspondent. Always fun to play the name game. At some point, we'll get to the end of this road here with our eyes not only on what's happening with regard to the Fed, but Scott Bessent talked about a lot more, including Russia's war against Ukraine and the looming meeting, Friday's meeting, one-on-one between President Trump and Vladimir Putin. We just had a bunch of headlines just across the terminal a couple of moments ago. Following President Trump's conversation with European leaders that included Volodymyr Zelensky, Zelensky appeared after that telephone meeting with the Chancellor of Germany and made some news, saying that it was a productive conversation with President Trump and European leaders, coordinating positions ahead of the meeting. They're trying to get on the same page here. They discussed possible formats for future talks and meetings, and that's important. President Trump telling reporters today at the Kennedy Center that, in fact, the second meeting would likely be more productive, that this first meeting, as we heard yesterday from the White House, was more about a feeling out session to get a sense of what progress could be made as opposed to landing a peace deal in this meeting itself. Zelensky saying that President Trump proposed a call after Alaska. Scott Bessent did talk about all of this with Anne Marie and John Farrow earlier on Bloomberg Surveillance. Let's listen to the Treasury Secretary.
The president has been thinking about this a long time. He believes, as do I, that this war never would have started if he had been president, and he is committed to ending the bloodshed, but not at any cost. Not at any cost. I think everyone has been frustrated with President Putin. We expected that he would come to the table in a more fulsome way. It looks like he may be ready to negotiate, and we've put secondary tariffs on the Indians for buying Russian oil, and I could see if things don't go well, then sanctions or secondary tariffs could go up.
What about China? They're the main purchasers of Russian crude.
Again, I'm not going to get ahead of the president, but the president is the best at creating leverage for himself, and he will make it clear to President Putin that all options are on the table.
So sanctions can go up, or they can also be loosened.
Sanctions can go up, they can be loosened, they can have a definitive life, they can go on indefinitely. You know, there's this Russian shadow fleet of ships around the world that I think we could crack down on them. But Anne-Marie and Jonathan, the one message I would leave you with, it's that President Trump is meeting with President Putin, and the Europeans are in the wings carping about how he should do it, what he should do it. But the Europeans need to join us in these sanctions. The Europeans need to be willing to put on these secondary sanctions. I was at the G7 meeting in Canada with President Trump, and the Europeans kept talking about Senator Graham's bill to do the secondary tariffs. Yeah. And I looked at all the leaders around the table and I said, is everyone at this table willing to put a 200% secondary tariff on China? And you know what? Everybody wanted to see what kind of shoes they were wearing.
As opposed to raising their hands. Treasury Secretary Scott Bessent with Jonathan Farrow and Anne Marie Hordern on Bloomberg Surveillance earlier this morning, which brings us to our conversation with Jennifer Kavanaugh. He doesn't want to get ahead of the president, but we're going to try to get ahead of this meeting to understand exactly what might come from it. Senior Fellow, Director of Military Analysis at Defense Priorities and co-author of Truth Decay, an initial exploration of the diminishing role of facts and analysis in American public life. Jennifer, welcome back. It's great to see you. From your view at defense priorities, I'm wondering what you're expecting here, having just heard the Treasury Secretary speak about secondary sanctions. What's more likely, those sanctions to be put into effect or a peace deal to emerge from this meeting?
I think neither, actually. I think the most likely outcome here is that President Putin and President Trump spend the meeting feeling each other out, getting a sense of where each side's red lines lie. I think that the United States can learn a lot in this meeting from where Putin might be flexible in terms of making compromises. And my hope is that they come out with, number one, a plan to keep talking at high levels between Trump, Putin, and hopefully at some point Zelensky, as well as a concrete plan to have working level negotiations to start to hash out some of the details that will have to be addressed before any ceasefire or lasting settlement. So that's what I see as a really good outcome, and that's neither punishing sanctions or an end to the war.
Well, maybe it is, in fact, some half measure. The president apparently said on this call today that he hopes to bring a ceasefire from this meeting. Could a ceasefire with Vladimir Putin be trusted?
Well, it depends what the terms of the ceasefire are and what the deal looks like. I think a ceasefire, a full ceasefire coming out of this meeting would be unlikely simply because Zelensky isn't there to participate in the discussion. It's possible that they might agree to some sort of framework deal, like that Putin agrees in principle to a ceasefire on the condition that other issues are worked out, including territorial issues, as well as issues about Western assistance and other types of conditions that the Russians have already laid out and have stuck to throughout the war. It's also possible you might see a partial ceasefire. For example, some people have floated the idea of an air ceasefire, which would limit airstrikes between the two sides, and then the continued fighting would be on the ground. And that would help both sides. Russia has experienced some costs from Ukrainian drone and missile strikes on their oil facilities, and Ukraine is certainly suffering under Russian attacks on civilian infrastructure and cities.
We finally got some details on this meeting, as I'm sure you've seen. It will be in Anchorage at the Elmendorf-Richardson Joint Base. What kind of facilities should be provided here? Do these two meet in a hangar? I keep asking the same question. I'm just wondering what the optics will be, and the idea of Vladimir Putin on a U.S. military base, pretty striking at this particular moment, isn't it?
Yeah, I agree, and I had the same sort of thought. I mean, military bases are typically pretty Spartan and not what you normally see for these high-level meetings. However, it is also true that at the commanding general level, there are usually well-adorned conference rooms that are used for these types of high-level meetings, even among military leaders. So I'm sure that they'll be using one of these types of more high-level and rooms. But I think it is interesting that they chose the military base. Obviously, the choice of Alaska itself is an interesting one. So we'll see what it looks like.
Is this meeting flawed in its initial concept in that it's one-on-one? The president talked about maybe a trilateral the second time around, but the idea of President Zelensky waiting by the phone to hear what happened is also curious.
Well, I think that this meeting is really, as President Trump himself has said, and his staff has made clear, a chance for listening and understanding. And the United States and Russia have a bilateral relationship that is quite tense and that exists outside of what's happening in Ukraine. And I do think it's important that the two leaders meet on a bilateral at the bilateral level and try to work out some of these issues as well. I think that while the focus will be on Ukraine, it's hard to imagine that some of the bilateral issues between the two nations won't come up. And really, we see here that Zelensky has made clear he's ready for a ceasefire on acceptable terms, and he's willing to at least have negotiations and discussions. We have seen Putin has been much less willing to end this war. So if Putin is the party right now that is harder to bring to the table, it makes sense to have a one-on-one meeting and try to figure out what's required to change that. This is also the format that I think Trump is very comfortable in, these bilateral meetings with other world leaders. And so that's something that he gravitates towards. He hasn't shown in past phone calls and interactions with Putin over the past 6 or 7 months, he hasn't given any part of Ukraine away. He hasn't sacrificed Ukraine's security or its sovereignty. So I think the idea that he's ready to serve Ukraine on a plate doesn't match up with what we've seen in the recent past.
Well, what do you make of the European counter-offer, if I can call it that? A counter-offer to reports that the lines essentially would be frozen in place. I know the president's talked about land swap, and we don't really have a sense of exactly what that means, but Vladimir Putin wants the Donbass and he wants Crimea. The European leaders on that phone call have a different idea. 1 inch for 1 inch. And this doesn't sound like something that Vladimir Putin is ready to talk about, but any retreat of Ukrainian forces from Ukrainian-controlled territory would be matched inch for inch by Russia's withdrawal from occupied Ukrainian territory. Is there a world in which that could happen?
I mean, it's not out of the question. It just the question is, what are the other terms of the ceasefire, and what do those land swaps look like? I mean, in any sort of ceasefire, there are adjustments to the line. So even if the line is frozen where the front line currently is, and that becomes the new de facto border, it would be expected that there would be adjustments to that line to make sure that cities are on one side or the other, to make sure that geographic features, are taken into account. So I think that this idea of land swaps, we may not be talking about huge swaths of territory. And Russia has put forward a set of conditions. One set of conditions is this Ukrainian withdrawal from territory that it currently controls. But there's another set of conditions, another ceasefire option that Putin has put on the table, and that is freezing the conflict along the current front line. But then it comes with other conditions, including things like freezing of Western security assistance aid, limits or demobilization, which would shrink the size of Ukraine's military. So Putin has suggested some flexibility in setting out a range of terms. So we shouldn't fixate only on territory here. It's not the only issue that's at stake.
All right, really interesting, and appreciate your helping us get ready for this important meeting. Jennifer Kavanaugh, thank you so much. The insights from Defense Priorities. I'm Joe Matthew in Washington, and we want to assemble our political panel for their take on all of this. This is a remarkable political moment, and you could argue the most important meeting of Donald Trump's presidency in either term, for that matter. Lisa Camuso Miller is here, Republican strategist, former communications director at the RNC, and host of the Friday Reporter podcast, along with Bloomberg Politics contributor Adam Hodge, Democratic strategist, managing director at Bully Pulpit International. Adam, I'm going to start with you just on the nuts and bolts here. What do you make of the venue? There were questions about whether the U.S. should be a host country. Now we're going to have a U.S. military based as the venue for Vladimir Putin, a pariah on the international stage, and a man, in fact, who has an international warrant out for his arrest. How should the optics be cared for here? And when we talk about a one-on-one meeting, who's actually in the room?
Well, I think taking a step back to the president's first term, when he had his previous bilateral meeting with President Putin, shouldn't give us a whole lot of confidence that America's interests will be front and center. I think to your question about the optics, hosting the Russian president at a U.S. base sends a terrible signal to our allies, to our partners across Europe, to the Ukrainians, that we would meet and host President Putin on U.S. soil after what he's done to attack our democracy, to attack our allies and partners, and to unsettle democracies across the region. So it sends a terrible signal. I'm not surprised that President Trump, doesn't want to, doesn't really care about what that may mean from the, the chattering class or folks on cable TV. But I think it really will send a real red flag to our allies and partners in Europe, and that really matters globally.
Lisa, what's your thought on this? They're both going to meet at some point during the day on Friday at Elmendorf-Richardson Joint Base in Anchorage. You don't have a lot of options in Anchorage, by the way, to find venue for these two. Who should be in the room and who will be in the room?
Well, You know, Joe, I think Adam makes a really good point, and it's hard to know who'll be in the room. The truth of it is that the message and the visuals and all of the optics of this particular conversation are definitely one that are going to be very difficult. So I suspect that the president will be surrounded by his top leaders, and I suspect the same for Vladimir Putin. He'll be surrounded by his leadership, and this will be one that I think, regardless of how it goes, will be one that will have to be messaged very carefully, and something that I think that overall, while historic, also not incredibly encouraging, because I suspect that regardless of what happens in this meeting, Vladimir Putin is going to do exactly what Vladimir Putin wants to do, and it's been shown over and over again as the president has shared messages about how he thinks things are going to happen and what's going to happen in Ukraine, and then those change. I think the same will probably be true of this as well. I think Vladimir Putin will use it as a tool and a pawn, really, in how he messages, how he works with the White House and how he works with this administration.
Gaming expectations always a big part of this, Adam. The White House had been tamping down expectations the last couple of days, saying, hey, this isn't about a peace deal here. This is a feeling out session. The president wants to know where Putin's head is. And it seems like we have a pretty good sense of where his head is. But that does not sound like what we're hearing from this call today between Trump, European leaders, and President Zelensky of Ukraine, in which Donald Trump said his goal is to arrive at a ceasefire on Friday. Is that in the realm of possibility?
I have a hard time believing that Ukraine, after all they've been through, will agree to a ceasefire, given what they've seen on the front lines and what has happened across Kyiv. I mean, let's not forget, Donald Trump has multiple times told Putin to stop firing missiles into Ukraine, said he had a great call with him, and then less than 5-6 hours later, the missiles were launched again, and, people were killed in Ukraine. So I'd keep my powder a little dry on any expectations about it, grand breakthroughs, because Vladimir Putin has not shown any willingness to abide by whether it's norms or just to respect Ukraine's territorial sovereignty. So my expectations are as low as they can get, unfortunately.
Well, how about you, Lisa? What should we be looking for when these two men emerge from the meeting? We expect Donald Trump will hold some kind of a news conference or make an announcement to reporters. What will he have to say?
Well, the president likes to demonstrate wins, and so I suspect that that's precisely what we'll hear from him. But to Adam's point, I also think we need to pay very close attention to the movements that happen out of Russia beyond that conversation to see whether or not there has any progress that has been made. Also to the fact that the president is using this as an opportunity and will continue to use this as an opportunity to demonstrate he's willing to have hard conversations that Joe Biden and other presidents before him were not willing to have. I'm not so sure that matters if from that meeting nothing happens from there. But I think that, we've seen this president over and over again take a victory lap before the victory is ready to be celebrated. And I suspect that that'll be exactly what happens after this meeting occurs.
He's going to speak with European leaders afterward as well. And apparently he's going to do an interview, we understand. Adam, the rollout here is curious. It's a day trip to Alaska, so they're not going to be together, presumably, for all that long. Will you trust the readout from each side? Because they may not agree, as we've seen in the past, unless they hold a bilateral news conference, which I think after last time around, the White House would prefer not to do.
I mean, you're right there. I think given what happened the last time, President Trump, suffered from that press conference. It still haunts him to this day. But I think what you're seeing in this being a potentially one-on-one meeting without any other staff or people in the room for the course of that meeting it seems like an outgrowth of what happened during the president's first term. We know that he was deeply suspicious of the professional staff listening in on his foreign leader calls. We know they've taken steps from the beginning of this administration to shield any insight from calls within the National Security Council. And I think it leaves them at a detriment. I think it leaves the rest of the U.S. government at a detriment to have that sort of closed cloak around foreign leader conversations, because it is important for the entire government to understand exactly what was discussed and how they all then take marching orders and go from there if they all have a sense of how the meeting unfolded. So there's a real risk there, and I wish I had more confidence. If they end up in a ceasefire, great. We'll give him all the credit he deserves. But I'm deeply skeptical.
Well, you wonder who gets to the microphones first. Sometimes that's the way these things go on the ground. You both know about this, having run media operations like this, remembering Scott Besson couldn't get to reporters before the Chinese did following the trade talks most recently. So what's it going to be, Lisa? A listening exercise, as Caroline Levitt called it yesterday, or a peace negotiation?
Boy, I mean, I think it'll probably be a listening exercise. I think the way that the perception behind the way that Vladimir Putin views this relationship and the relationship that Donald Trump holds out as his connection with the Russian leader are two very, very different things. And I think, it really feels like Vladimir Putin has the upper hand here, and Donald Trump wants to make that not look the way that it is. But to me, it seems like Putin is using Trump as a pawn in this bigger game that he's playing with the globe. And so while it's a listening session, I suspect, too, as you mentioned earlier, that this is them setting the groundwork and setting really the tone for what will be just another meeting that has almost no outcome.
We're going to have special
Joe, if I could just
here, no matter what happens on Friday. Adam, I'm sorry we're out of time against a hard break here, but we really appreciate the insights. Bloomberg Politics contributor Adam Hodge, Bully Pulpit International, and Lisa Camuso-Miller, former RNC Communications Director. I'm Joe Matthew in Washington. We'll have much more ahead as we keep our eyes on bullish. Back open, up 149%. This is Bloomberg.
on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks trading mix. Got to begin with the bullish IPO. BLSH on the ticker. That stock right now up 150%. Went out the gate at $37 a share. Right now we got bullish at $93.99. Keeping an eye on bullish. We have been seeing circuit breakers. The Peter Thiel-backed firm rising as much as 217% from its IPO price of $37 a share. Bullish, of course, a crypto exchange. Again, BLSH right now up by 150%. Traders keep piling into bets that the Fed will soon be cutting rates. Bond yields sinking, stocks holding their records. In fact, the S&P right now at a record, up just 1 point, well off session highs, little change. We've got the Dow up 272, up 6 tenths. NASDAQ Composite Index lower by 7, a decline there of under 1/10%. Your 10-year 4.23%, but the 2-year currently yielding 3.68%. Gold little changed, up $6 the ounce, $33.54. West Texas Intermediate crude oil down 0.8%. WTI 62.65 a barrel, and Bitcoin 121,620 on Bitcoin. Right now, looking at a gain for Bitcoin of 1.2%. Recapping, bullish now up by 149%. First day of trading, and for on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. Back we go to Washington once again. Your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you as ever, live from World Headquarters in New York, watching Wall Street for us as we tackle politics here in Washington. Oh, they're going to collide again in our conversation coming up with Congressman Troy Downing, who's also going to be with us from World Headquarters in New York. As we're playing the name game here, we've got several new names on the not-so-short list for Fed. And when you look at these names, they're reaching into the private sector in some cases here. It's kind of like a cookout at Charlie Pellet's house. Rick Reeder, David Zervos, Larry Lindsay. On top of all the names that we had heard before, yes, Christopher Waller, the Kevins, Hassett, and Warsh. I see Mickey Bowman, Philip Jefferson, Mark Summerlin, and James Bullard all on this list, keeping the tongues wagging up and down the Amtrak corridor. By the way, kicking off that conversation today in the markets, the whole market stopped at 7:30 to listen to Scott Bessent in a fascinating conversation with my colleagues on Bloomberg Surveillance, Jonathan Farrow and Anne-Marie Hordern, speaking not only about the next Fed chair, but the man who was just announced only hours after he was on this broadcast, Stephen Myron, the White House chair of the Council of Economic Advisors, to fill on a temporary basis seems to be the plan here. The chair left vacant by Governor Kugler. The big question right now, can they get him confirmed in time for the next Fed meeting? Here's Scott Bessent from earlier today on Bloomberg.
The president has great sway with Leader Thune. Leader Thune's been a great partner during the tax deal, and I think that he would like to see Stephen, who I've known for a long time, get on there as soon as possible. So I'm hopeful about the September meeting. And Jonathan, the president's concerned about the building and those massive cost overrun, which just tell you that there is no accountability at that organization. There's no oversight in terms of the spending, but the president and I are both concerned about the foundations of the Fed. The foundations of the Fed, and how did this happen, and why did it happen, and how did the leadership let it happen?
When it comes to Director Myron, do you expect him to stay on past the January term that expires from Kugler's seat?
I wouldn't expect that.
So who are some names you're thinking of the Kugler seat? Because everyone has been focused on who is going to fill the chairmanship role. Who are you thinking to fill that extra seat?
Well, Anne-Marie, we're working on the big list right now. I think there are going to be a couple more names revealed today. They're going to be private sector names. So we had a series or a list of current Fed members. We're going to have some private sector, very well respected,
like who?
Very well respected people, and then we will get to the second seat.
Can you give us some names, a little bit of a tease? Maybe people that have been on this program?
Well, I just did tease telling you there would be some private sector names.
Okay, when it comes to the Fed chair, though, can you give us a sense of how many names you're actually thinking about?
Well, I'm going to interview, I'm going to cast a wide net. 10, 11 people, and then there'll be a group of us who are meeting with them, and we want to talk about monetary policy. We want to talk about regulatory policy, which is very, very important because the Fed stepped, I think, big-footed the other regulators. The Fed's one of 3 regulators: Federal Reserve, OCC, and FDIC, and I think that they need to understand that they are one of 3. And then the third is the institution itself, which I think is what President Trump has been focused on quite a bit too.
After you do this process, how many names are going to give to the president, and when does he start those in-person interviews?
Yeah, we don't have a timeline. By putting Stephen Myron in, that gives us more time. And again, I want to cast a wide net. The president's very open-minded. Before he chose Jay Powell, Janet Yellen was interviewed. John Taylor was interviewed. 2 of them couldn't be more different. So they were under consideration.
Fascinating. Scott Bessent, the Treasury Secretary, earlier today on Bloomberg surveillance, having a little trouble with the math. 10 to 11 names going to the president, but the president said a short time ago at the Kennedy Center when asked by Bloomberg's Josh Wingrove that in fact the search was down to 3 or 4 Fed chair picks. You saw the headline across the terminal. It says he will name a Fed chair a little bit early, which is interesting considering the timeline we're talking about here for Stephen Myron. Let's get into all of this with Troy Downing. What a pleasure to have the Republican congressman from Montana's 2nd District in the House. He's at World Headquarters in New York and joins us live from the Fishbowl. It's great to see you, Congressman. Welcome back to Bloomberg TV and radio. How do you feel about this idea of maybe reaching into the private sector for the next Fed chair?
I think we need more of that. I think we need more private sector understanding and experience to solve problems in government. I think this administration has identified that. I think this administration has been correct on a lot of these picks, and it brings a new perspective. And I think we need that in having somebody that has been in, I'm going to say, the real world and not, strictly as, a regulator or a political person. I think that's powerful. I mean, my background, I came from the private sector, and then I was a regulator, and now I'm a lawmaker. So I bring that experience from those different parts into what I do. And I think it's, I'm excited about this process, and I'm excited about seeing who makes it through this confirmation process.
Well, it's interesting. Some of the names that had been floated, when the president says 3 to 4, I'm assuming 2 of them are the Kevins. Hassett, Warsh, would you be happy with a Fed run by some of the names on the so-called short list right now?
Yeah, I think it'll be great. Obviously, we need to go through the process, and the president is being very thoughtful about this. His team is being very thoughtful. And then, the Senate, I'm sure, is going to, ask all the right questions to make sure that we're comfortable in that position to make that decision. But I would be very happy going through that process. I think this is a normal, necessary process, and we're going to get a big upgrade in that position.
Well, your view is important here as a member of the House Financial Services Committee.
Yes.
This list keeps growing. You're going to throw your hat in?
Oh, no, not for me. I've got work to do, and I'm excited about the work we are doing on financial services. But I am excited about seeing some change there and seeing what comes.
Jay Powell was a private sector guy at one time, as Ed Duffner reminds me.
There you go.
Look, I know you were not only in the private sector before, you were also in the military. You joined the Air Force following 9/11. You twice deployed to Afghanistan, and I think that your view on what's about to unfold on Friday is important to our viewers and listeners. Should Vladimir Putin be setting foot on a U.S. airbase in Alaska?
I'm not part of that decision process. I think it's obviously unusual, but I've got to give kudos to the president. The president, and you keep hearing the art of the deal, and the president knows how to get things done. And if this is the correct venue in him doing that process, I'm very supportive. We need to see this stop. We need to see this come to an end. We need to make sure that the killing, that the war stops, and that we can see peace there. And if this is the process that the president believes is appropriate, I'm supportive of that, and I'm really hopeful to see this come to an end, because it's just atrocious what we've seen happening in this now drawn out war, and we need to see it come to an end. And I really do believe that Donald Trump is the person who can bring this to a good conclusion.
As we always see before events like this, there's a gaming of expectations. I don't know what yours are here, if it's a ceasefire or just kind of an agreement to meet again, as we've been hearing from the White House. But I wonder your thoughts on secondary sanctions. They appear to be slowed down a bit and to make room for these talks to take place. But should countries buying Russian oil be punished for it if this goes nowhere?
You know, I think that sanctions are a powerful tool, and I think we need to, you know, personally keep our foot on the throttle on this. You know, there's a bill that I have out there right now to stop Russian market manipulation in critical minerals. We produce platinum and palladium in my district, the only place in the United States of America. And so we've got the Stop Russian Manipulation Act to make sure that they can't affect the commodities markets by dumping platinum and palladium into these markets. I think that that's incredibly important to, you know, continue to be very serious about these sanctions until we get, you know, the desired result out of Russia. And, you know, if there's a slight tempering of that during a negotiation to get somebody to the table, you know, I'm not particularly happy, but I understand why to get this done. And hopefully we can bring this to a conclusion, because one of our best tools right there is financial, and making sure that we do have meaningful sanctions to basically get the behavior that we want out of them.
I want to hear more about platinum and palladium in your state of Montana. This is really important stuff, and I suspect that you're talking to the administration about this. Is the federal government or the Trump administration specifically stepping up to help you protect those resources and, more importantly, harvest and process them?
Harvest and process, I like that. You know, that second part that you said, processing, is obviously a big issue with all of our critical minerals, our, you know, metals, everything that we're doing. Is we can pull a lot of stuff out of the ground that we don't have the capacity to actually turn into a usable material. So that's a big part of this equation, because we talk about being dependent on other nations, especially adversarial nations, on critical minerals, on all these things. But even the ones that we're pulling out of the ground, very often we have to send them abroad to have them processed. So I think that is something that we should be looking at in repatriating a lot of that processing. But I'll tell you, the critical minerals has obviously been a big part of the Trump administration's, you know, goals, making sure we're doing that right. And, you know, it comes down to a couple of things. You know, for my district, it's obviously a big economic issue, because it's jobs in Stillwater County and Yellowstone County. It's meaningful there, you know, to not be able to continue pulling platinum and palladium out of the ground. But it's also national security issues. We can't be dependent on somebody else, you know, anybody else in raw base material. And that's across the spectrum, from, you know, rare earths to critical minerals to copper, you know, everything that we need to continue building, you know, the future. We need to be able to source it, if not directly from America, then to close allies. And I think that's incredibly important, that we continue finding ways to solve those problems.
I'm really glad that we can talk about it, because it's the linchpin to a deal with China when we consider the importance of rare earth minerals and magnets that we're trying to get access to in this country. And I know that a trade deal with China could take some time. It's been rather elusive, and it's, of course, the biggest economy after ours. So it's been basically put into a different category. But, Congressman, I wonder your thoughts on the tariff program as it stands now. We saw reciprocals go into place last week, and there have been a lot of questions about the impact on prices, whether it's a one-time shift or an inflationary trend. How do Montanans feel about this?
You know, how
do your farmers feel about it?
Yeah, there's been so much fear-mongering in this space. And the truth of it is that it's working. I mean, you look at the CPI numbers that came out, you know, almost completely unfazed by tariff issues. I think it was 3.7 down to 2.4, you know, positive movement there, completely unfazed. You look at the money coming in from the tariffs and what that can do in bridging the gap in our everybody's talking about, you know, adding to the deficit, adding to the debt. You see that money coming in and bridging that gap. And I think the last part that we need to start looking at is, you know, you started this program talking about the Fed, and one of the biggest issues in growing that gap is debt service. And so really looking at interest rates, if we can start pulling that back, I think we can bridge that gap and start to see some positive numbers there. But one thing I want to point out is a lot of the policies that have come in this administration, you know, going, you know, to tariff issues, going to the One Big Beautiful Bill. A lot of this stuff has, set the foundation for really charging the economy, but hasn't really gotten up to speed yet. Those tax cuts, I always say that the biggest driver to economic prosperity is access to capital. The best capital you can access is your own. If you're paying less in taxes, you start having more money in your pocket to start putting into the economy. That's the driver that bridges this gap.
Looks like that's what Wall Street's betting on right now, Congressman. We appreciate the conversation as always. Troy Downing, Montana's 2nd District. Pretty cool to think about being in Yellowstone County. Thanks, Congressman. I'm Joe Matthew. I'll meet you back here on the late edition of Balance of Power. That's 5 p.m. Eastern Time here on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, live across Bloomberg platforms. Carol Masser, Tim Stenivek, we are back together again.
We are.
It feels like it's been a while.
It's been a while. This happens in the summer.
It does.
You go on vacation, I go on vacation. I go
take
somewhere
long
for work. You go
weekends.
somewhere for work.
Yeah.
It's good to be back.
We're a team, though.
You sounded great yesterday.
Thank you.
I was listening.
I did.
From Atlanta, where I was with the
What did
Business
you do?
Value of AI event.
And?
We'll talk about that a little later. It was pretty cool.
Are people still all in?
People are all in.
All right.
Oh, yeah.
We definitely have to talk about this. Hey, we're also going to talk about U.S. Treasury Secretary Scott Bessent stopping by Bloomberg headquarters. An in-depth conversation. We've got two of our best, Eric Schatzker and Michael McKee. We're going to talk about what the Treasury Secretary had to say against the backdrop of that Bloomberg Business Week cover story that Eric and Dan Flatley did on the Treasury Secretary. So we're going to get into that in just a moment.
Plus, another on-the-ground perspective when it comes to rare earth minerals with the CEO of U.S. Antimony joining us in just a few minutes.
Did you talk rare earths and AI?
They did not come up.
Okay.
But they should have.
Yeah, they probably should.
Yeah.
That's okay. Hey, we're also going to get into the upcoming U.S.-Russia meeting. That is another focal point for investors this week. First up, though, let's get a check on the trade. We've got bonds rallying, stocks not so much, but holding near record levels. Take it away, Charlie.
I got you covered. Reunited, and we all feel so good, especially feeling bullish right now with the Dow, the S&P, NASDAQ all advancing, but BLSH on the ticker. Got to begin with that IPO because that stock pushing higher now by 146%. Bullish up and running. We are seeing circuit breakers, have been seeing circuit breakers with the Peter Thiel backed firm rising as much as 217% from its IPO price of $37 a share. But bullish right now, again, advancing by 146%. Out of the gate at 37 right now, 91.32 on bullish. The Dow, the S&P, NASDAQ, they're all higher. NASDAQ 100 index is retreating, little changed, pulling back from a record. We've got NASDAQ, though, at a record, up 18, gain there of 0.1%. S&P keeping it all in context, up 7, up 0.1%. And the Dow up 303 right now, higher by 0.7%. Your 10-year at 4.24%, with the 2-year 3.69%. Gold little changed, up 0.1%, 33.52 the ounce. West Texas Intermediate crude oil down 1%. WTI 62.52 for a barrel of WTI. Bitcoin closing in on $122,000. Bitcoin right now at 121,844. Bitcoin up by 1.4%. Briefly after earnings, we got CoreWeave down 17.9%. Kava after earnings, that stock down 15.8%. And coming up after the close of trading, Cisco Systems. I'm Charlie Pellet. That is a Bloomberg Business Flash.
And another check on bullish. It is up about 148% in today's session. We know first day of trading, and it's moving around a lot. All right, folks, let's get to it because President Trump saying he will name the next Fed chair a little bit early and is down to 3 to 4 picks. Now, the subject of the Fed monetary policy definitely top of mind when the U.S. Treasury Secretary Scott Bessent stopped by Bloomberg headquarters this morning in studios. He made his most explicit call yet for the Fed to execute a cycle of interest rate cuts, suggesting the U.S. Central Bank's benchmark ought to be at least 1.5 percentage points lower than it is now. The Secretary of Treasury speaking on Bloomberg Radio and TV on Bloomberg Surveillance with Jonathan Farrow and Anne-Marie Horton this morning.
What if the BLS data had been the higher quality and we'd had those numbers, Jonathan? So if we'd seen those numbers in May, in June, I suspect we could have had rate cuts in June and July. So that tells me that there's a very good chance of a 50 basis point rate cut. And I think President Trump is very good at giving these nicknames. And I think the reason that the Jay Powell gets the nickname too late is because he wants to go into a series of rate hikes. He's not willing. He's not Alan Greenspan, who was very forward thinking. They try to be more data driven, which I think is a mistake, because I think we are going back into an economy like we had in the 90s. So, it's just very old fashioned thinking. But I do think we could go into a series of rate cuts here, starting with a 50 basis point rate cut in September.
A 50 basis rate cut in September, does that signal that the economy, though, is not doing well?
That signals that there's an adjustment and the rates are too constrictive. If you look at any model, that we should probably be 150, 175 basis points lower. So, I think the committee needs to step back. I think probably one of the most politicized governors just went off the board, and that she was very, very political, I believe. And I think that
what did she do that gave you that impression? I'd love to know.
Sorry?
I imagine you're referring to Governor Kugler. What did she do that gave you that impression?
I think there's a lot of inside baseball. And look, Governor Kugler, you read what she was saying when Kamala Harris was running, that we needed rate cuts, we needed this, we got to foam the runway, and then all of a sudden, it was hard to know whether, TDS, was it Trump dementia syndrome, or Trump derangement syndrome, or tariff derangement syndrome?
You get the opportunity to remake the Federal Reserve. The president gets the opportunity to remodel, reshape the Federal Reserve. And I'm not talking about the remodeling that maybe the current chairman's going through. We'll talk about that another time. I want to talk about the complexion and character of the committee. The changes that you're making at the moment. Stephen Myron, let's start with Stephen. How quickly can you get Myron confirmed?
We'll see. The president has great sway with Leader Thune. Leader Thune's been a great partner during the tax deal, and I think that he would like to see Stephen, who I've known for a long time, get on there as soon as possible. So I'm hopeful about the September meeting.
All right, that, of course, was U.S. Treasury Secretary Scott Bessent earlier on Bloomberg Radio and TV with the surveillance team of Jonathan Ferro and Anne-Marie Hordern here in our studios earlier. Hey, let's get to it, because there's a lot we want to unpack from what we heard from the Treasury Secretary. Bloomberg New Economy Editorial Director and Editor-at-Large at Bloomberg Businessweek, Eric Schatzker, is in the house. He, along with Bloomberg Treasury reporter Dan Flatley, wrote the BW cover story on their conversation with the Secretary. You can catch that on the Bloomberg and at Bloomberg.com. Also with us, Bloomberg TV and Radio, international economics and policy correspondent Michael McKee, both here in studio. A lot to get to. First of all, Eric, let me start with you. You sat down, you spent a lot of time with the Treasury Secretary. It sounds like, this is a lot of what is in the article that you guys wrote, but I'm just curious, how his role in the administration, what is it all about when he comes on an audience or a network like Bloomberg, or even some of the competitors? What is he trying to do, especially when he's speaking to a really smart investment audience?
Well, first and foremost, he is speaking on behalf of the president and trying to drive his agenda. That is his job and the job of every cabinet secretary working for President Trump. In theory, it's the job of every cabinet secretary working for any president. But there has, it would appear, been room for a little more debate and disagreement in previous cabinets than there is in this cabinet. So that's number one, right? It's a salesmanship job. He's out there advancing president's objectives, president's policies. And as we've seen, he's also a tool, if you will, for the president's style, negotiating style, or even the manner in which he shapes public opinion, which is to drive people to extremes and then ultimately pull them back a little bit.
I mean, that was a big takeaway that I had, Eric, from the cover story that you wrote with Dan, was the risk tolerance for President Trump and the way that the Treasury Secretary talked about President Trump's risk tolerance. With regard to
being higher than his.
Being higher than his, a hedge fund manager who spent years taking on big bets, working with George Soros and others. And that's the whole idea behind the tariff negotiating strategy.
To a degree, sure. There are clearly differences in the way you manage risk as a hedge fund manager who has a fiduciary obligation to clients, and the way you think about risk and reward and making bets on outcomes as the president of the United States or as a policymaker in cabinet. And there's no doubt that in Scott Bessent's mind, Donald Trump has a higher risk tolerance, but it's a risk tolerance, again, I don't want to put words in his mouth, but as explained to us with a purpose. In other words, let's see how far I can push people so I know where their limits are, and then I can pull it back to something that they're comfortable with, but only comfortable with because they felt what it was like to be scared.
So is he taking a risk, Mike? I want to bring into what he said. He talked about the Fed working off of data that's not of higher quality. Is he taking a risk in that I don't know what he's looking for. Like, we all think the U.S. data, the world thinks the U.S. data is the gold standard.
Until Friday, we thought that. Now the narrative is that wait, this data is lumpy. This data is not good.
Right.
It needs to be paused.
He's saying we should have had then cuts in June and July.
Which is the other Trump thing, is throw so much stuff out there that you confuse people and you get people to think that the truth is not the truth. I mean, these are the gold standard data around the world, and while they are somewhat less scientifically valid than they were because the response rates have gone down, they are still extraordinarily accurate. Revisions are a part of it. So this is, I mean, it's truly an effort. The whole BLS firing thing is an effort to confuse Americans about what's going on with the data, so that when the data look bad, Trump can blame the data rather than his policies. So for Scott Bessent, he has to go along with that. But what he wants from the Fed doesn't comport with the way the Fed is looking at it.
He also made reference to Alan Greenspan. He said he's not willing, meaning Fed Chair Jay Powell, he's not Alan Greenspan, who is very forward-thinking. They're trying to be more data-driven, which I think is a mistake, because I think we are going back into an economy like we had in the 90s. We heard that. Mike first, and then Eric. I mean, we've all been around since Greenspan, all of us. There's a lot been written about perhaps the actions that Alan Greenspan took as Fed chair in the lead up to the great financial crisis, the mortgage meltdown. Is that a good reference point, Mike, for the U.S. Treasury
Well, it's an
Secretary?
interesting question. I don't think most people listening these days anymore really remember a whole lot about the Greenspan years or Greenspan's role in it, other than those of us who were very closely tied to it. But he did, in the 1990s, suggest that inflation was going to be low because productivity was picking up because of personal computers. And that was the thing that got him the fame and the lionization in Washington and on Wall Street. And then, of course, he had the oops of, no, there's not going to be a housing crisis. And so, yeah, I don't know if it's a good comparison or not. The one thing you can say is that Greenspan, unlike his successors, was very forceful and basically kind of ran the Fed in the direction that he wanted it to go, which is not something that Jay Powell does, and it wasn't the way Ben Bernanke or Janet Yellen are.
Eric, are you, given the reporting that you and Dan Flatley did, the folks that you spoke to within the Treasury Secretary's orbit, they seem to express a little surprise that he has not just joined the Trump administration, but that his views seem so in line with the president's views right now. How do you explain that?
In two ways. The first is there's no question that Scott Bessent's point of view and the things that he says to back it up have evolved over the course of the past, at the very least 7 months since he became Treasury Secretary, and even before that. As of last year, I remember interviewing him a little more than a year ago, and he was talking then about the sense or sensibility of a 10% global tariff. And he was also then talking about the goal of getting debt to GDP ratio down, you know, as far as the federal debt is concerned, and also the percentage of, you know, the size of the deficit, the annual deficit relative to GDP, as a goal of under 3% and by the end of the president's term. The fiscal discipline has sort of gone out the window for the time being with the One Big Beautiful Bill. Bessent will tell you that if the bill is successful, and he believes it will be, in deregulating the American industry and thus supercharging some kind of domestic manufacturing renaissance, then you'll get a change in the relationship between the numerator and the denominator. And in fact, yes, deficits will start to fall as a percentage of GDP over time. So he hasn't totally walked that back. On the subject of tariffs, he now talks about how the president's maximum pressure strategy is what has allowed the United States to achieve these deals on paper with countries like Japan, for example, and South Korea and others. And we'll see if those terms stick and exactly how these novel terms unfold in the way of real substantive agreements. But, and again, this is not to sort of come out in his defense, that's not our job, but I would point out that at the moment, the global tariff rate is 14%.
Right.
Right? It's not that far off of 10%. I mean, 4 percentage points is 40% higher than 10%, but it's not 25% and it's not 39%, which is, of course, what the Swiss appear to be headed for at the moment. So it's shifted, but it hasn't shifted to an extreme place, if that makes any sense. Does that help to answer the question?
It does.
And of course, and I would just say that, yes, the reason that people around Scott Bessent are surprised by the fact that he has come out, that he's in the administration and that he went out for President Trump in the first place on the campaign trail and fundraising for him, is because they thought that he was a little closer to who they think of themselves as, which is a Reagan Republican. And the truth of the matter, as we demonstrate in our reporting, is that even over the past 10 or 15 years, he has held different points of view. He just hasn't shared them with everybody.
We're speaking right now with Bloomberg New Economy editorial director and editor-at-large of Bloomberg Businessweek, Eric Schatzker, along with Bloomberg Businessweek or Bloomberg TV and Radio international economics and policy correspondent Michael McKee.
You know, speaking of productivity, just a quick headline. Apple planning to come back in artificial intelligence with new devices, including robots, a smart speaker with a display, and home security cameras, according to folks in the know. This may be a little bit of what some say, maybe.
Does it do the dishes?
Not yet, not
But
yet.
it will be an AI Fed chair.
But exactly. Well,
Shadow AI Fed chair.
Okay, we only have a few minutes left here, and I guess every time I listen to Scott Bessent, I think about someone who understands the importance of an independent Fed, understands the role of the U.S. central bank in the world. Do you feel like, Mike, that he understands that, and that if it gets a bit wonky or gets very political, that there will be market implications, not just U.S. market implications, but global market implications?
I think Bessent knows that very well. I mean, he's not dumb.
But is he a guardrail around the president with that?
Well, no, there are no guardrails around this president anymore. He can tell him all he wants, but there is only one leader, and
Decider-in-chief.
That leader does not care about. Well, he may care about a market collapse, but he doesn't care that. The Fed is independent. He believes he's the boss.
Well, to that end, is it rare for the Secretary of Treasury to actually weigh in on interest rate policy from that position?
Well, of course it is. It hasn't been done in decades. I mean, we got officially into the government doesn't, the executive branch doesn't comment on the Fed during the Clinton administration under Bob Rubin, and it's been that way pretty much ever since. But
until first Trump term.
But this is not the usual presidency. This is Donald Trump's presidency, and it is completely different from anything we have seen before.
Eric, forgive, 35 seconds. Scott Bessent passed on being Fed chair, right? That's at least what we've reported. Do you think he understands the importance of an independent Fed, how important it is globally?
Yes, he talks about it being a jewel box. And by the way, the reason he passed on being a Fed chair is because he finds the job that he's got now way more interesting.
Head of the IRS?
I think he thinks of the job of the Federal Reserve Chairman, particularly if all you're really supposed to be doing is setting interest rates, as relatively speaking very one-dimensional.
Great stuff. Guys, thank you so much. So appreciate. Eric Schatzker, editorial director of Bloomberg New Economy, editor-at-large for Bloomberg Businessweek. Michael McKee, international economics and policy correspondent at Bloomberg TV. Check out the full Bessent interview, Secretary Bessent. It's on the Bloomberg. Next, rare earth minerals.
It's 2:21 on Wall Street. We do check markets all day long. Here at Bloomberg, we've got crypto exchange bullish shares surging up and running. BLSH bullish on the ticker. And right now we got bullish up by 135%, went out $37 a share, rising as much as 217%. But again, the Peter Thiel-backed firm now pushing higher by 135%. And a developing story is Apple said to be planning a comeback in artificial intelligence with new devices, including robots, a smart speaker with a display, and home security cameras. This according to sources, and that's reporting from our Mark Gurman. Apple shares right now up by 1.2%. The Dow, the S&P, NASDAQ all pushing higher. NASDAQ has been swinging between gains and losses. In fact, the NASDAQ 100 index is lower now, down under 0.1%, but NASDAQ up 13, a gain there of 0.1%. S&P putting it all in context, up 10, up 0.2%, and the Dow up 385 now, up by 0.9%. S&P, NASDAQ both at records. 10-year 4.23%, the 2-year 3.68%. Spot gold up 0.1%, 33.51 the ounce, and West Texas Intermediate crude down 0.9%, 62.61 a barrel. Help wanted at Tesla in New York City, looking to hire someone to test its driver assistance technology on the streets of the Big Apple, suggesting the car maker could be looking to expand its ride-hailing services to the largest American city. Tesla shares, they're lower now by 0.2%. After the bell, Cisco Systems. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Well, U.S. Antimony reported earnings last night. The stock selling off today, down as much as 10%, despite a second quarterly sales beat, and a jump from last year. So you might be scratching your head a little bit and wondering why we are talking about this company today. It's not a household name, got that. We do, though, talk an awful lot as of late about the race for rare earth minerals and the U.S. amping up its own access and supply. And it is companies like United States Antimony and its CEO that gives us an insight into the pursuit of rare earths, what's going on, and how the U.S. gets where it needs to be. We welcome Gary Evans. He's chairman and CEO of United States Antimony Corporation. It's a small cap miner, $432 million market cap. Shares have more than doubled this year, and he joins us from our Bloomberg News Dallas Bureau. Also with us is Bloomberg News economic statecraft reporter Joe Doe. He is our go-to when it comes to all things rare earths. He's here in studio. Gary, welcome. You're not a household name, but I feel like we need to know more about what you are up to. Tell us about your operations, the mines, what you predominantly do right now.
I'm sorry, we're having really audio problems. I can't even hear your question.
Okay. We're gonna fix that. In the meantime, we're gonna bring in our Joe Doe, because Joe, I do think there are these smaller names. We may not know about them. They're publicly held. Obviously, investors are noticing this company this year. Tell us a little bit about this company and kind of its role in terms of mining and potentially rare earths.
I think U.S. Antimony is a good example of this kind of microcosm of all of these critical minerals and rare earths companies that are suddenly getting attention from Donald Trump and the White House. I think bottom line, that's the first thing to know. Why would you care about a U.S. antimony company? Well, you probably wouldn't, but Donald Trump cares about critical minerals. Antimony is a critical mineral. What it's best known for, antimony, is a use in hardening bullets, ammunition. Antimony has always been important to the United States Defense Department, and that's why they are on the radar all the time, as particularly U.S. antimony.
So, Gary, my understanding is we figured out our tech problems. We are talking with Gary Evans, chairman and CEO of the United States Antimony Corporation. He's there in our Dallas News Bureau. So, Gary, tell us about your world. And I am curious, are you in this pursuit by the U.S. to amp up its rare earth minerals exposure and capacity if the U.S. government is reaching out to you?
So, first of all, it should be a distinction. We're in the category of critical minerals. There's critical minerals and there's rare earths. And so the public really needs to understand there's a significant distinction. Critical minerals, as an antimony producer, we're #1 on the DOD's critical mineral list. And the problem is there is no antimony today being mined in either the United States or Canada. It all has to come from international sources. We were all getting, every country in the world was getting most of their antimony from China. China controls 65% of world antimony ore, the raw ore in the ground, and they control 85% of the downstream processing, which is what we do. So fortunately, we're in a position of having a smelter in Montana and one in Mexico, which makes us the only two operating smelters for antimony in North America. And therefore, as you said earlier, we're getting a lot of attention from the U.S. government. They want us to expand our operation. I think I read a report in April. We only have like a 5% supply in our stockpile. So we're trying to ramp up our business to meet this critical need. And as Joe said, there's no question that antimony is needed by the military. It's used predominantly, as he said, in bullets, but it's also used in laser-guided missile, night vision cameras, night vision binoculars, and what have you. So it's a very necessary element for the military.
Hey, Joe, come on back in here. We heard from Gary just now that the antimony mining is not done here in the U.S. or in Canada. Is it possible to do it here in the U.S.? Do we have the material to mine it? It's just not done for environmental reasons. It's not done because we don't have the mineral rights to it, or the companies don't have the mineral rights to it. Like, why has this been moved to China? I understand from a processing perspective why that's happened with rare earths.
Yeah.
But with a critical mineral like antimony, why is that not happening here?
Well, I mean, I think you go to deposits, you know, how good is the deposit, and you can pull it out of the ground, and then who can process it. And this is a question that I have talked about now quite a bit with Gary over the last few months. And, you know, Gary, I think you're better positioned to talk about that to an investor class. I mean, you know, you talked to your investors yesterday on your earnings call, and they asked you about the potential of beginning mining in the United States anytime soon. And you effectively told them probably it's not going to happen anytime soon. So where is kind of the upside here?
We've been working on acquiring leases in both Montana and Alaska. We've acquired close to 30,000 acres of property in Alaska, and we've taken over the mountain area where our smelter is. It used to be an area that we mined some 20 years ago. So it's coming. Right now, we're held up by permitting. We filed permits in Alaska back in May. And so getting back to your question, why isn't this being done? The EPA and the federal government, whether it be the Forest Service, the BLM, Native tribes, everybody tried to stop mining in the United States. And unfortunately, our laws allowed that. And that's why you see mining occurring all over the world except the U.S. It's coming back. There's no doubt this administration is very pro-mining. And we have the resources. There's no question that we can meet the demand for the United States with just our Alaska properties. We have no doubt about that. And that's going to happen soon. I would think in the next 30 days, we'll be able to bring our first loads of antimony by truck from Alaska to our facility in Thompson Falls, Montana.
Gary, how would you describe the conversations now with members of the Trump administration with this government versus your conversations during the Biden administration? How are they different?
Well, we started talking to the Department of Defense back last September. This was right when China banned all antimony sales to any country in the world. And of course, our Department of Defense was getting all their antimony from China. So it raised a lot of red flags. And we've been negotiating various agreements and contracts with the Department of Defense and the DLA since that period of time. As we mentioned on the call yesterday, we're very close, we think, to announcing some things. It's not done yet. But there's definitely a mindset change addressing your question from the Biden administration to the Trump administration. For instance, we'll have to respond to a request from the DOD, and they say, can you have it to us by Friday? We give it to them Friday at 5 o'clock, and by 8:30 Monday morning, we have a red line response. It's not very often you see the government working over the weekend. So there's no question this is a high ticket item with our existing administration, and there's a fire been lit.
Gary, despite the fact that you're getting a lot more attention from the Trump administration and they seem to be speeding things up, I'd still ask, what is the holdup? And I know this was a big question you got on the call yesterday with investors. They kind of seem to be saying, when are you going to get some sort of announcement from the government? What's going on?
We're in a period where contractual changes are being made. There was an open comment period with respect to the DLA that ended actually yesterday afternoon. So I'm very confident we're near the finish line, but it has taken an inordinate amount of time. And there's been a lot of reasons that I can't really talk about today for that delay, but we have to make sure that whatever contract or whatever agreement we sign with the government is beneficial to our shareholders. In the first drafts, we're not. And so we had to make sure that we negotiated as best we could to maximize the value for our shareholders, but also give the federal government a fair trade. We pay taxes, we know, and so that was very necessary.
Forgive me if I missed this. But is the agreement that you might be working out with the government akin to what we saw with MP Materials, which has a $400 million equity investment by the Department of Defense into the company? And we know that MP Materials is certainly working specifically in the rare earths materials area. So could it possibly be that the government, DOD, makes an equity investment in you guys as part of an agreement so that you can do what you need to in terms of ramping up either production or your facilities?
So obviously that's on the table, I think, with us as well as a lot of other companies. I think we're in a little bit unique position in that we have a $450 million market cap. We have our own cash. We have our own capital. We need, more of a big brother than a huge capital investment. Now, as we ramp up this year and do the things that we've told the public we plan on doing and the DOD, I think there's a very good chance in 2026, if we want to do another smelter, if we want to do another project, we also are involved in tungsten and cobalt, two other critical minerals, then those type of opportunities exist. But what we're negotiating today and have been for the last 8 months is something different. It's very positive for our company, but it's not a direct investment by the government.
Gary, I want to kind of bring people into what's at stake here, or at least what is being said is at stake. As you mentioned, the Chinese officials put an export control on antimony, which came well after the germanium and gallium that so many people talked about a couple years ago. Have you guys experienced any of these effects of export controls on antimony from China?
Yes, unfortunately, we have. We were acquiring material from a company out of Australia, and we were taking that material, they're 55-ton container loads, to our smelter in Madero, Mexico. And that particular, this third load that we acquired was transloaded over in China in April. And the Chinese customs confiscated our container, took it off the ship, and held it for 90 days. Gave us no reason. All the paperwork was correct. It had been paid for. And we finally had to get the State Department and the White House involved. For some reason, finally, they released it. It showed back up in Australia, did not come to us. They sent it back to Australia, arrived there about 3 or 4 days ago. It's currently on a ship to Mexico now. So from now on, obviously, whoever we buy antimony from, we're putting in our contracts, it cannot stop in China because China did this for whatever reason. We know this company used to sell antimony to China. Maybe they were mad. The fact that it said U.S. antimony on it maybe ticked them off. I don't know. But they definitely made a statement with what they did.
We're speaking with Gary Evans, Chairman and CEO of United States Antimony Corp. Also with us, U.S. Economic Statecraft reporter Joe Doe.
Gary, a follow-up on that. I mean, what does this really say? Should people actually be concerned? I mean, eventually your antimony is getting to you here and at your Mexico location. Are we sounding too many alarm bells on this front?
I don't think so. I doubt in our lifetimes we'll ever see antimony coming out of China again. We know their largest mine was depleted last year.
Ever?
And so, ever. I don't think we'll ever see antimony coming out of China. There is truly a worldwide shortage of this product. It is so difficult for us to find product. That's why we went and started mining it ourselves. There's just not any supply.
Presidents love to talk about energy independence. It doesn't matter if they're Democrats or Republicans. Do we get to a point where they can talk about antimony independence and we can get 100% of what the U.S. needs from U.S. supplies?
I have no doubt that we can meet all the needs of our government as well as our industrial customers from Canada, the United States, and Mexico. We don't need to go anywhere else.
When will we be able to do that?
in the next 3 to 5 years. It's not going to happen overnight.
You know, in the last few years, you would have said Canada, United States, and Mexico, and I would have thought, okay, that could work. These countries can all work together. But over the last few months, we've seen trade tensions flare, especially with our neighbors to the north and our neighbors to the south. How does that affect the way you look at the industry and your own business?
No question that, you know, Mexico has a new president. She's very anti-mining. Fortunately, the mines that we have in Mexico are grandfathered, but, you know, there needs to be greater collaboration. Now, the DOD looks at Canada just like it was the United States. So any project we find up there, the DOD likes it and looks at it as a domiciled country.
Yeah,
Wait, is that as a separate country or because they want to take it over?
Well, you know, the 51st state, of course, is what I'm talking about.
No, I'm just, so you're saying relations between the two nations are comfortable, and they, despite what we have in the headlines, you're saying that they are working and cooperating because they understand they kind of need each other.
Yeah, well, Canada needs antimony just as bad as the United States needs antimony, and Canada is a very pro-mining country. So that's why we have a lot of activities, like I mentioned, in tungsten and cobalt in Canada.
Gary, these conversations you have with defense officials, how dire are they indicating to you that the antimony shortage is for them?
When you see the announcements we'll be making, you'll understand it's pretty dire.
Can you give us?
We have the lowest. Yeah. We have the lowest amount of antimony supplies in the inventory for our government since World War II. You got to remember, we're funding Israel, we're funding Ukraine, and we've dwindled our supplies. And at the same time, China cut us off. So it's a double-edged sword. People are waking up that, hey, we have a problem.
So what does that mean for national defense? Like, what would your message be to viewers and listeners right now about how critical this mineral is?
It's an extremely critical mineral, and there's you know, people that have tried to replicate antimony with other synthetic antimony and hasn't worked very well at all. In fact, it's 3 times as expensive. I do think there'll be continued upward pressure on the price because we can't come close to meet our customers' demands. We're changing that. Yeah. We have a substantial expansion going on in Montana that'll be done by the end of the year, but you know, it's just going to take some time. It's not going to happen overnight. It's not like there's a huge pile of antimony sitting over here in some country waiting to go to market. It's all depleted. So we're having to find new areas to find the ore.
Gary, how long has the dwindling supply issue been going on for? And I'm just curious if you had conversations with the Biden administration as well.
Well, because China was selling so much antimony around the world, nobody cared about it. China kept the price artificially low, less than $5 a pound. Today, the price is $25 to $27 a pound, and probably going higher. I really believe we'll see $50 a pound in the next year. So, you know, the fact that we were so dependent upon China and had blindfolds on that all of a sudden they cut it off. Had nothing to do with Trump coming in office. This happened last September. So it's been a year since they cut everybody off. It's not just the United States. They cut off every country in the world, the European Union, all other countries that were buying antimony. You can sell antimony to China, but you get nothing back in return other than cash.
Gary, what's the biggest hurdle U.S. antimony faces right now in getting more antimony production up and out the door?
If I had my permits right now in Alaska and in Montana, I'd have antimony in our smelters. I don't have those permits yet. And, you know, we're doing everything we can to speed it along. There's people in Alaska that don't want to see mining, and the group called Save Our Domes. We've done PR work. We're doing everything we can to grease the skids to make sure that people understand that we're trying to clean up. This is antimony left on the ground the last 100 years from gold miners in Alaska. We're picking it up, putting it in super sacks, and bringing it to Montana. We're cleaning up the place, and people are fighting that. So it's an education process. So we've got a lot of PR we're doing, and we're obviously working with senators, House members. We're working with the president. We're working with a lot of people. You'll see some other news about that next week.
Gary, would the Defense Department be your only customer?
No. We currently have 17 industrial customers. We have one particular customer it would take 100% of our supply. So that gives you an idea. The industrial side is much greater than the Department of Defense. And that's, you know, one thing in these contracts we've been working on, they've made sure that we don't take away the business from the industrial side. And that's why we're ramping up, because the government needs a stockpile, which they currently don't have. And we're the only provider. There's nobody else. It's China, it's U.S. antimony, and a smelter in Belgium. That's it for the whole world.
All right, we're going to have to leave it there. I got to say, this is one of those interviews. I know Joe knows this stuff, but I certainly take a lot away from it. Great, Gary, thank you so much. Gary Evans, Chairman and CEO of U.S. Antimony, joining us from our bureau in Dallas, and of course, our in-house expert on all things when it comes to mining, Bloomberg News economic statecraft reporter Joe Doe. By the way, shares of U.S. Antimony, Tim, they're up about 117% year to date.
They still had Apple's AI comeback. Speaking of stocks higher, the stock spiked after Mark Gurman's latest report. He's going to join us in just a moment. First up, though, a check on the trading day. Here he is, Charlie.
Hi, thank you very much indeed. Apple shares right now up by 1.3%. Let us talk bullish. It is the crypto exchange, BLSH on the ticker. It's a Peter Thiel-backed firm, rising as much as 217% from its IPO price of $37 a share. Right now, BLSH bullish, up by 123%. Stocks higher. S&P right now up 9, gain there of 0.1%. The Dow up 403, up 0.9%. Could see a record close out of the S&P. NASDAQ a little changed, up by 3 points. 10-year 4.23%. Spot gold up $4 the ounce, up 0.1%. And West Texas Intermediate crude lower now by 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, everybody. Thank you so much, Charlie. Hey, we want to get to Apple. Headline crossing just a moment ago. Apple plotting its AI comeback, artificial intelligence, with an ambitious slate of new devices, including robots and a lifelike version of Siri. There's a lot more. Let's just get to the guy who knows this company and put out this story. Here's our own Mark Gurman. He's Bloomberg News managing editor for Global Consumer Tech. He's out there on the West Coast. All right. Walk us through your exclusive. What did you learn about what Apple is up to when it comes to AI, Mark?
So the conventional wisdom is that Apple is lagging right now. It has no future. The product pipeline is, very limited. They're struggling in AI. The world is ending, and Tim Cook should be fired as CEO. I think I came on here a few weeks ago to tell you that there's no way Tim Cook is going anywhere. And it is true that they are struggling terribly in AI. But at the end of the day, Apple is a hardware company, and they have been planning this big new hardware pipeline. At the center of it is robotics, a push into smart home and home security, multiple new versions of Siri, and a slew of other devices from smart glasses to headsets to foldables. The centerpiece of the renewed AI hardware strategy is a tabletop robot. That's coming in 2027, sometime around then. This is a device that would sit on your desk, sit in your kitchen, sit in your living room. It would have an iPad-like display with sensors and a robotic arm. And the arm would be able to push the display around the room to follow people, to look at you, to summon you or be summoned by you, help you get work done throughout the day. The idea is to bring artificial intelligence to life in a way that hardware companies have not done so before, blending the AI with hardware manipulation and robotics. The company is also working on a HomePod with a screen for next year. This is a variation of that robotic device. This would not have the robotic arm, but would have a similar display and functionality. There's also several new versions of Siri in the works. There's a redesigned Siri visually for the iPhone, the iPad, and the Mac. There's new underpinnings to that Siri. We've talked about that. Apple has signaled that. This is a revamp to Siri coming in the spring. There's also a new visual version of Siri for home devices. It uses something similar to Microsoft Clippy from 20, 30 years ago, if you remember that,
Clippy.
that virtual assistant. Yep. And then you also, I know there's a lot, have a push into home security with a new home security camera system. Taps into a home doorbell as well. This would compete with Ring and Nest and ADT and other companies, and also serve as the sensors at the center of a home automation strategy.
So, Mark, you gave us a lot to think about. We have a couple minutes left with you. We don't have a crystal ball, but we have Mark Gurman, which is the next best thing. If there is sort of a single device in here that's iPhone-like in the sense of it being the center of the universe for Apple, does one of them stick out to you as that?
I don't think the iPhone in the next 5 to 10 years is going to go away as the center of the universe. What I do think is going to happen is the next generation of ecosystems, instead of being built around the phone and the cloud, it's going to be built around AI. So all the devices, right, including the phone, are going to get demoted a bit, and AI is going to become the center of the universe. And so you're going to have your phone, your home devices, your earbuds, your glasses, your watch, your computer, et cetera, and those are all going to be built around AI as the center, moving away from the phone and the cloud as the center.
So the prototype's all ready to go. They're getting up the assembly lines and they're going to hit the stores, right? They're all ready to go, or not yet?
In terms of these devices, everything that I'm talking about today, those are mostly forward-looking. We're talking about things coming out 26, 27. There's a mention in the story of a robotic arm for retail stores and manufacturing. That's probably 5 to 7 years away, so we're talking 2030s there. I mentioned the foldable iPad Mac device. That's going to be at the end of this decade. The foldable iPhone is going to be at the end of next year. This year in September, a little less than a month from now, Apple's going to introduce its first redesigned iPhone in several years. This is the iPhone 17 line. Also the slimmed down iPhone, new AirPods, a new Apple Watch Ultra with a slightly larger display and satellite connectivity for hikers. So in the near term, some good stuff. In the long term, some much cooler stuff.
The hardware that you've highlighted is nothing without the software, Mark, and you've documented the struggles that Apple has had when it comes to its own work with AI software, talking about potential acquisitions. Can Apple pull off this hardware with the way the software is now?
Yes. So as I mentioned in the story, they're looking at 2 directions for revamping the underpinnings of Siri. One is called Linwood, and one is called Glenwood. Linwood is using upgraded versions of the company's own internal foundation models. That's the team that Meta has been poaching a bunch of people from, including the head of the team. We talked about this a few weeks ago. Glenwood is using a third-party provider to rebuild Siri, so building Siri around models from a third party. And obviously third parties like Anthropic, like OpenAI, like Google, they've proven out their models. They work extraordinarily well. And so Apple's backup plan, essentially, is to go external till they're able to get their internal models up to snuff. And honestly, that makes a lot of sense.
All right, going to leave it there. Mark, thank you so much. Of course, Bloomberg's Mark Gurman joining us with the latest on his exclusive on Apple. Mark is Bloomberg News Managing Editor for Global Consumer Tech. He's out there on the West Coast. Shares of Apple have been as high as 2.3%, intraday high, rising on Mark's story. The stock still up, but now only a gain of about 1.4%. But we have seen Apple shares popping since August 5th. So we have seen a move in a big way to the upside for Apple over the last week or so. So interesting reporter. Check it out. It's on the Bloomberg and at Bloomberg.com. Also on the Bloomberg is what's going on out of the White House and about an upcoming meeting, Tim, between the United States and Russia. This hasn't happened in a long, long time, and certainly not on U.S. soil.
Yeah, with what to expect, we have Bloomberg News National Security Team Leader Nick Wadhams. He joins us from our Washington, D.C. bureau. Nick, I'm curious about not just the timing of this, but more importantly, the placement of this on U.S. soil. It's something that we've spoken quite a bit about in recent days, but I'm wondering if expectations have shifted with rhetoric that we've heard from President Trump just today, and also what we've heard and what we've reported about the president of Ukraine and what he would and would not give up when it comes to some sort of deal with Vladimir Putin.
Right. I mean, there's a big question about what we're actually going to get out of this meeting. I mean, when these sort of things happen, there's a lot of froth and ferment over the fact that, the 2 leaders are going to be face to face, staring each other down, adversaries or maybe not adversaries in the case of Putin and Trump, and the expectation is, they're going to come out of this with some big deal. But Trump himself has shown he's very willing to come out of these meetings with nothing. He walked away from a meeting with Kim Jong-un in Vietnam some years ago in his first term
And then obviously there was the Biden-Putin meeting in Geneva, Switzerland in 2021 that resulted in a document and some proposals, but really achieved very little. So I think what you're seeing is the administration sort of crashing up against reality, where in some ways they've portrayed President Trump to be the deal maker and the problem solver who's going to get this thing done. But then, given Russia's advances in Ukraine and President Putin's unwillingness to stop the war so far, you now see them trying to massage expectations a little bit, to make sure that this is not seen as a failure when, as seems likely, there is not going to be a major announcement from it. So you've seen the president describe it as a feel-out meeting. Marco Rubio echoed this words, and then President Trump again said today, we expect this to lead to another meeting between Vladimir Putin and Volodymyr Zelensky, and maybe Trump as well, where they may get down to brass tacks on a possible ceasefire agreement or some other deal that could lead to an end to the fighting.
All right, we're talking with Nick Wadhams, Bloomberg News National Security Team Leader. Here's just what President Trump had to say earlier today when it comes to the upcoming meeting with President Putin.
There's a very good chance that we're going to have a second meeting, which will be more productive than the first, because the first is I'm going to find out where we are and what we're doing. Again, this is Biden's war. This isn't my war. He got us into this thing, and it should have never happened. This war would have never happened if I were president. But it is what it is, and I'm here to fix it.
All right, that, of course, was President Trump earlier today. Nick Wadhams, isn't it President Putin's war? And isn't it just something that he is very clear about wanting to expand his territory? And what I have heard from most folks who follow President Putin, who are experts on President Putin, even folks like yourself, like that, he's not going to give up. He still wants a land grab, and he, I don't know, wants to remain president forever. And I don't know whether by having this war keeps him as president. I don't know. What's the intelligence?